This is India Market Open.
Very good morning. You're watching India Market Open, and I think the big action today is going to be all about Trump. Trump is beginning to dominate the headlines again as we open up.
And he's talking about world leaders in a very blasé manner. Not that anything has changed.
I mean,
Not
are you
that
shocked?
anything has changed.
I think he needs his attraction and attention.
So three things which stood out for me. One is, of course, the comments that they're going to take 50 million barrels of oil from Venezuela, which is being given by the new regime, and then the US is going to sell it. Second, of course, the statements that are coming from the White House on Greenland, saying that we have to have Greenland and military force is also an option.
And the statement from NATO or European leaders.
Yes, saying, okay, saying that no, please. And the statement also about Prime Minister Modi, saying that Modi is not very happy with me. I mean, what are you doing about it is the question. So yeah, it's all about Trump this morning.
And the one on Emmanuel Macron, saying Emmanuel spoke to me and said, "Sir, please, you can take these prescription drugs at 200% price."
Yeah.
Effectively that.
Yeah, so Trump's been busy. So a bit about Trump on the show, but also what you should prepare for as we get into markets. Here's what we have for you on India Market Open. Okay, let's begin with the global market setup. US markets jumped to new highs as investors have clearly shrugged off worries on US action in Venezuela and what could happen next. So far, the new government in Venezuela seems to have come about with what is relatively a peaceful transition, and that is why perhaps you had new highs hitting for the S&P 500, for the Dow, and for the Nasdaq as well. We'll pull up some of those indices for you. The Dow crossing the 49,000 mark for the first time and closing above it so emphatically, about 1% up. The Nasdaq also nearly 1% up, as was the S&P 500. I want to pull up futures as well, because futures have also continued to be largely in the same line, pretty much flat. Treasury yields were unchanged as markets are awaiting Friday's job report, the 10-year at 4.16%, and that is what is really going to be key as far as bond yields are concerned. Oil prices have dropped as Trump announces the US will take 50 million barrels of Venezuelan oil. Brent is at the $60 mark. I want to talk a bit about gold and silver. Gold spot is now trading around $4,474. Gold hit new highs and then has steadied after 3 days. COMEX silver has also opened with an upside gap and touched a new lifetime high of 82.548 per ounce. Copper prices have also hit another record. Futures rise above $13,000 a ton. So far in 2026, the trend of metals shining is definitely continuing. But what's going to be in focus is what is also happening with crude. And here's what Trump has said on Venezuelan oil. This is in a post on social media. He says, and I quote, "I'm pleased to announce that the interim authorities in Venezuela will be turning over between 30 and 50 million barrels of high quality sanctioned oil to the United States of America. This oil will be sold at its market price, and that money will be controlled by me as President of the United States of America to ensure it is used to benefit the people of Venezuela and the United States. I've asked Energy Secretary Chris Wright to execute this plan immediately. It will be taken by storage ships and brought directly to unloading docks in the United States. Thank you for your attention to the matter." Let me pull up Asian markets for you as well, just to see what the reaction there has been. And it's a bit mixed. The Hang Seng right now down over 0.5%. The Nikkei also trending in the red, while the Shanghai is just pretty much flat. But commentary from Trump on India as well. He's said that Prime Minister Modi is not happy with him after the imposition of tariffs. Not clear what he's going to do about it. Let's listen in.
I mean, I had India coming to me, sir, I've been waiting 5 years. We're changing it. We're changing it. India ordered 68 Apaches, and Prime Minister Modi came to see me. Sir, may I see you, please? Yes, I have a very good relationship with him. He's not that happy with me because, you know, they're paying a lot of tariffs now because they're not doing the oil, but they are. They've now reduced it very substantially, as you know, from Russia. We're getting rich because of tariffs, by the way. I hope everyone understands that.
All right, let's talk about some of these aspects, specifically the change in the oil treatment by the US and that acquisition of 30 to 50 million barrels and what the implications are for global markets. Richard Harris, Chief Executive at Port Shelter Investment Management, joining us this morning. Richard, thanks so much for taking the time and good morning from where we're at. The question to you,
thank you.
30 to 50 million barrels a day, one assumes that there was a dark market for some of these assets, for some of these oil assets that Venezuela was selling. What is the implication on oil supply, if any? Because ultimately we're talking about a country that was producing and selling only about a percent of global supply.
Well, my understanding is it's 30 to 50 billion in total. That's around $3 billion worth. And I mean, it's all rather confused and not joined up. So that, for instance, is that free? Is it coming without any encumbrances? What about the costs that it costs to get out of the ground? You know, who gets compensated for that? There is a reason for it, which is that the storage capacity in Venezuela for oil is now pretty well full. They're even storing oil on floating oil tankers. So that oil needs to go somewhere, or the Venezuelan production needs to slow down or stop. So there is an issue there, and there is oil, but you know, it's not necessarily free. It's got to be paid by somebody, and the whole thing just doesn't seem to fit together if you're talking about Trump himself having the ability to decide where that money goes. You know, that just doesn't seem right on a lot of different levels.
Richard, hi, good morning. So two ways of looking at it, and you said it doesn't seem right on different levels, and that really is a factor that markets don't seem to be looking at all. If you look at crude prices as well. In terms of what is actually going to happen to supply and prices, do you see crude prices trending lower if Venezuelan oil does come on board one way or the other?
No, I don't think Venezuela has much of an impact at all. We're talking about, at best, about 1% of world production, which is very small. There's plenty of oil around. I mean, that sort of amount can be just turned on off with the flick of a switch by Saudi Arabia. So there's not very much there. The other story that seems to be coming about that I think is quite interesting is that everybody's been talking about Venezuela having the largest proven oil reserves in the world. But those figures, as people are starting to indicate, have not actually been verified. And in fact, if you look at what the reserves were going back to, you can go back into the 80s, they were much lower. Now, of course, reserves are proved all the time, but we've had these reserves of something like 400 billion barrels now since 2010, and they haven't moved. You would have thought they would have moved. So I think there's now a lot of doubt about how much oil Venezuela does have, how much they can actually get out of the ground, and whether it can be produced. So I think the impact of Venezuela on the global oil markets at the moment is negligible.
Richard, good morning. Hiral on the side. So we're talking about oil, we're talking about US, Venezuela. Now, if you have to look at international markets as well, I mean, yes, probably there is that, you know, view of fear of missing out that does come in, which you've mentioned, versus the core fundamentals that are driving the global markets as well. From here on, would you say that there is little bit of fragility that is still there in the markets? And what is that catalyst that could break this fragility and the kind of impact that we could see on emerging markets?
Well, I've been saying the markets are fragile now for well over a quarter. They've been rising pretty substantially. 2026 has turned out to be a fabulous year so far. Would that continue? And I think we're in a situation of happiness in January and maybe misery and despair in May. It has all the hallmarks of a final burst up before something breaks. Now, obviously, your point about, what is the trigger that could cause the dam to burst, and that's the unknown. We just don't know. There are plenty of unknown knowns out there. What's going to happen to interest rates? What's going to happen to inflation? What's going to happen to economic growth? What's going to happen to employment? Private debt now is funding a lot of the AI debt and the AI bubble, and people have been concerned about private debt for a while, and that linking in with an AI bubble and lots of money going into AI research, much of which will just be burned away. These are all really big risks in the future. What trigger is likely to happen? Of course, we don't know. Otherwise, the markets would already have priced it in. But I think at the moment, markets are saying AI is good, liquidity is good, possible interest rates coming down, and maybe even QE if things get a little bit more difficult is good, and they just want to be optimistic.
Absolutely. All right. Richard, thanks so much for taking the time, and pleasure speaking with you as always. Guys, the statement seems to be, or at least the sentiment seems to be here in India, where global markets have started 2026 at record highs. Mujhko bhi thoda sa lift kara do.
Yeah.
It's absent. And that's what you saw in trade yesterday as well. Several large cap stocks took a pummeling. And the Nifty 50, in fact, actually, if you think about it, would have gained if not for a couple of those. Reliance Industries and HDFC Bank. The benchmark, in fact, lost about 70 points or thereabouts, and it did break below that 26,200 mark. Bear in mind that it was a weekly expiry as well, so increased volatility was really par for the course. The Nifty Bank, however, showcased resilience, holding on to that 60,000 mark. Reliance Industries, Trent, HDFC Bank contributed as much as 183 points on the downside. So you can imagine what kind of impact those three stocks had. Trent, of course, losing quite a considerable amount of ground in trade yesterday. ICICI Bank was a balancing factor, gaining close to 3% actually. And rotation, according to several market participants that we've already spoken to, seems to be underway between HDFC Bank and ICICI Bank, particularly because the view on the street, as Somit Sarkar pointed out to you in closing in our closing show yesterday in Heard on the Street, the anticipation is that ICICI Bank will post a strong Q3. Market breadth remained negative through most of that session. Broader markets kept pace with the benchmark and they declined. Those declines, though, were capped at just about 0.33% or lower for the broader markets. You had pharma stocks that gained ground and IT stocks that rebounded somewhat after the loss that they witnessed at the start of the trading week. A few key stocks losing ground or gaining considerably. I'll name them for you. Keynes Technology saw a sharp drop in trade yesterday. It ended off the low point of the day. Swiggy lost quite a bit of ground as well on the back of a large trade. IEX, on the back of that court or appellate hearing that was ongoing yesterday, there was no order at the end of it. But seemingly the street looking at any delays in the implementation of the new norms that will result in a loss of pricing ability for IEX in all probability, and that was seen as a significant positive. Nalco Crystal also saw a sharp move. So there were a few stocks, as we saw yesterday, Hiral, towards the end of trade as well, that were moving very, very sharply, but at the benchmark level, it was a little muted.
Yeah, benchmark level was muted. You had your top heavyweights, which were literally on the back burner, I think, and that will continue. Eyes will be on what happens to Reliance Industries today, what happens to a HDFC Bank as well, right? So watch out for these two counters pretty closely in trade, and what happens to IEX after that sharp surge that did come in, because now the hearing is on the 9th of January. Overall, yes, you're expecting some bit of consolidation that could continue, and there is that caution and constructive tone that we are hearing as well from a lot of analysts and traders right now. And what they're saying is that this brief consolidation that we are seeing as well probably could be used with a buy on dips approach. That's what analysts are indicating. So any dips that you're seeing in terms of markets could be a buying opportunity. Two aspects have picked up from global markets. Now, if you see in terms of nickel, that surged more than 10% on the LME, and this is the biggest gain that nickel has seen since 2022. Now, why this is important is, first up, why this kind of a surge? Now, this is mainly on the back of the supply disruptions that have happened in Indonesia, including a mining halt at PT Vale, Indonesia, and tighter government production quotas there. The impact that India could see will be on the stainless steel producers. Jindal Stainless, it is one of the major stainless steel producer, and 40 to 50% of its raw material cost is attributed to nickel. And that's the reason why you have this cost stock that will be in focus. Watch out for Vedanta as well, because it operates the Nicomet division, a domestic producer of nickel and cobalt, and rise in global nickel prices can be benefited for its realization. So two different reactions that could be coming in on both these counters. Tata Steel and SAIL also will be in focus, because both these companies are key players in nickel mate market, and they use nickel in their steel production, making them sensitive to any price changes that happen. So watch out for the metal pack pretty closely in trade. Another interesting commentary is that now it will be possible to cool racks containing new Rubin chips with water at temperature that does not require a water chiller, while the airflow is about the same as what's needed for racks containing Blackwell chips. That's what NVIDIA CEO Jensen Huang came out and said, that the company's upcoming chips could significantly reduce the cooling requirements in data centers. On the back of it, you had like a Johnson Controls and the other global players which did see pressure. In India, if you have to replicate a similar model, probably pressure on a Blue Star, Voltas, because these are the ones which actually manufacture chillers used in data centers as well. And it's going to be interesting to see a black box, because they have been innovating with liquid cooling systems to enhance efficiency and reduce energy consumption in Indian data center operations. So it could be beneficial if this kind of technology is used when you talk about a black box. But otherwise, I mean, I found this really interesting, right? That the entire sector which has been buzzing on the back of data center boom, that one chip which does not require that, if everyone innovates on that angle, that entire industry somewhere is going to be on the back burner.
Yeah. I don't know how soon the transition, if at all, is going to be to Indian companies yet, in terms of that technology.
100%, because it's still NVIDIA who's still working with it, right? But I mean, you know that this is the time where they will start strategizing then as to what next.
I think right now they're trying to figure out all the inventory they have stuck from last year, and you know, all of the changes that they have. But definitely a very interesting aspect to highlight. I found Rhythm's view on Indian markets also interesting enough to talk about. Is the Morgan Stanley India strategy. He's saying valuations, trailing performance, the macro positioning and the growth cycle all signal improving stock returns in the months ahead. Now, this was in contrast, I would say, to some extent to what CLSA was saying and some of the other global brokerages are looking at in terms of India. So this is definitely more positive and optimistic, as we often see from Morgan Stanley. Growth signals, he says, we are ahead of consensus and expect positive earnings revision. In terms of RBI policy, we think will support liquidity and loan growth. Policy reforms, several measures including privatization are likely underway. Forthcoming union budget could also contain capital market reforms. India-US trade deal and a lowering of US tariffs on India. FPI positioning remains near lows, but net FPI buying will need growth to recover. Downside risks arise from slowing global growth and worsening geopoliticals. He prefers domestic cyclicals, defensive and external facing sectors. Overweight financials, consumer discretionary and industries, underweight energy, materials, utilities and healthcare. Meanwhile, as far as markets are concerned, wait and watch phase following 2 days of profit booking from record highs. Long-term trends though remain intact. Technical setup suggests a buy on dip strategy near the 26,000 mark. The index slipped below the earlier support turned resistance trend line near 26,200, though it continued to trade above all key moving averages. Market experts maintain that as long as the Nifty stays above 26,000, the structural bull run is intact. A decisive close below this would be the first signal for a deeper correction towards 25,600. Supports at 26,100 to 26,050. Resistance 26,300 to 26,350. For the Bank Nifty, supports at 59,700 to 59,800. Resistance at 60,400 to 60,500. So watch out for some of those levels as well. But a bit of a rocky start, because look at the implied on your screen as well. 71 points down. is what we're seeing right now, and the F&O setup possibly reflecting this, Puneet.
Most certainly, and yesterday while the implied open did indicate an uptick in the trading session, as you rightly had highlighted that, we still slept in the red and continue to maintain that position throughout the day. A lot of contribution was led by Trent, Reliance as well as HDFC Bank. So these three counters will be back in focus yet again today. The Nifty 50 futures indicating, of course, about 26,200 as the future level that we'll continue to monitor, while of course it was the expiry, so the open interest is zero, but we'll start to build on positions. But 26,000 remains as a key support, at least in the near term. For the Bank Nifty, it has been an area of strength for the markets, while the open interest has been quite strong compared to yesterday's trading session. 60,300 has been the level on the premiums, on the futures, of course, and we will continue to monitor that as well. In terms of open interest gainers and losers, we've seen a bunch of stocks that were in focus yesterday. Swiggy, of course, because of the block deal, but the massive build-up in shorts yesterday could have some bearing on the stock today. We'll see if how it performs at the start. Waaree and Premier Energies also has been one of the biggest pain points for the markets over the last few days and has been dragging the overall sector down as well. While IEX, based on the regulatory hearing yesterday, was also in focus, a long build-up at the last hour of the trading session, and so did Trent with 21% increase of shorts in the system because of the Q3 updates. There's not too much to talk about in the open interest losers, so largely stock-specific action to watch out for in today's trading session yet again, and largely will have an impact on multiple sectors based on Q3 updates, amongst others.
Okay. Let's talk about stocks on our radar, and in fact there's a conference call on by Titan. We should see if we can cut into it, but that's going to be in focus. The management is talking about their lab-grown diamonds business, and they're saying the ground reality is different from the narrative. You're seeing some of those flashes on your screen. They're saying lab-grown diamond prices have eroded significantly in the last couple of years. We're adding all of those inputs for you on our flash. But meanwhile, business updates are also out from Titan, and it's been fantastic compared to what was expected. Domestic sales are up 38%. Domestic jewelry sales are up 41%. International sales are up 79%. All of this year on year. They've net added 54 stores in India in the third quarter. Total store count now at 3,399. Here's what Morgan Stanley is saying on Titan. They've maintained an overweight with a target price of 4,062. They're saying Q3 is a strong beat. 40% jewelry revenue growth was versus a 21% estimate. Buyer growth for domestic jewelry business was flat, offset by substantial ASP, that's average selling price increase. Citi is maintained a neutral with a target price of 4,125. On the Q3 update, they say robust growth in jewelry studded mix has declined. Revenue growth was driven by substantial increase in average selling price. Flattish buyer growth. Watch out for margin trajectory. Can we actually listen in to some of that conference call, and we'll try and get you some of those details just in a bit, if possible. Actually, let's just cut in and listen in.
A narrative, and there is an opportunity to, in a way, expand the market if we were to educate the customer in the right manner and make an accessible play which is making sense both for the customer as well as us. And therefore, we've evolved our own consumer value proposition, and we have come out with our brand Beyond from the house of Titan in this very exciting space. It is still very, very small. I continue to hold the view that it is not more than 2 to 4% of the entire studded market, though it has opportunity to grow. How big it will be, we will not know right now. It's very early stages. And we know that we can do this even while evolving and continuing to invest strongly in our existing precious diamond brand space, which is Tanishq, Mia, Carrot Lane, Zoya. These are brands which are doing particularly well. We have been growing very well, and we are continuing to invest heavily in this space in collaboration with industry partnerships as well as our own work. The House of Titan, as you are all aware, is a house of lifestyle, design-driven brands that have shaped the narrative across many lifestyle categories, especially in the adornment and serious accessorization space, be it watches, be it sunglasses, be it perfumes, handbags in the recent past, dresswear, and certainly now beyond. So I think the opportunity is there across many parts of the vast Indian consumer landscape, and that is what has prompted us to kind of make an initial foray and entry through Beyond House of Titan. So for more information on how we plan to do this play, let me introduce to you Mr. Arun Narayan. You all have heard about him, but this is probably his first interaction with all of you. He has taken over from me as CEO of the jewelry division. Please join me in welcoming Arun Narayan. And Arun, over to you to take forward the rest of what we have to share before we open it up for Q&A. Thank you.
Thank you, Ajoy. Good morning, everyone. Glad to meet you all and glad to also note.
Okay, that's the Titan management, and we'll get you the key takeaways of what he's saying in a short while from now as well. Our team is listening to that call. Okay, let me come to the next one and more business updates in focus. Jubilant FoodWorks is the next that we're looking at. Consolidated revenue was up 13.4% at 2,429 crores. Standalone revenue up 11.8% at 1,802 crores. These are essentially their business updates. Domino's India recorded like-for-like growth of 5%. 114 stores were added to the company's group network. Here's what Morgan Stanley is saying: maintaining an overweight, target price of 775. Q3 is in line, steady growth continues. Standalone Q3 revenue grew 11.8% year-on-year, slightly below estimate of 13%. That's why that thumbs down on the screen, in case you're wondering. Overall revenue growth of 11.8% was also sequentially lower than the 16 to 19% run rate in the previous 4 quarters, which is why you may see some pressure on the stock basis their Q3 updates. Now, Lodha Developers is quite a different story, isn't it? Pre-sales growth is back in line with expectations. Collections, that's the key monitorable, were also good. Pre-sales back in 20% plus growth trajectory post a muted first half. Management is maintaining pre-sales guidance of 21,000 crores on back of Q4. The launch pipeline in the first 9 months of this financial year is at 69.6% of pre-sales guidance. Collections are down 17% year-on-year on the back of one-off inflows last year. They've added 5 projects with a gross development value of about 33,800 crores. This is in excess of their annual business guidance. Jefferies has maintained a buy on the stock with a target price of 1625. They've said the pre-quarterly sales pace has risen and there's strong projects that have been added. Q3 pre-sales were 25% year-on-year, tad above estimates of 22% as well. So watch out for Lodha as a third stock, at least on my watch list.
An interesting set of stocks. I'm going to start with the jewelry company as well, and this is Senco Gold. Bear in mind that gold prices have actually gone up quite considerably, so some parts of that will reflect in the revenue growth, in the sales growth. For Senco though, that revenue growth in the third quarter stands at 51%, and this, remember, is the quarterly update. So these are not the final numbers. You will see that when the quarterly numbers are out. But this compares with the 6.5% growth in the second quarter, 28% growth in the first quarter. And this is because of the aid of a significant increase in the retail business, close to 50%. SSSG, or same store sales growth, has grown as much as 39%, and they've seen considerable growth in the jewelry, diamond jewelry sales as well, even though it accounts for a very small portion of their overall volume mix. They have added 4 new franchise stores, and that total store count now heading close to that 200 mark, which they aim to end the year with, and they will, according to the company, hit that mark in the fourth quarter. The context, as I was pointing out, gold prices have actually risen 23% sequentially in the third quarter and 65% on year. So some part or maybe quite a bit of that revenue increases on account of the gold price increase. The question that we'll have to ask is whether footfalls have increased to that extent and whether volume has also increased. The company has retained its goal of 20 store openings in FY26. That 200 mark is what I told you about. And it also targets a 25% revenue growth in FY26. Seems to be a pretty easy target to hit. They'll probably hit it at a canter in the fourth quarter. Reliance Industries, second stock on my list, one of the big laggards in trade yesterday, dropping as much as 4.5% and erasing as much as 1 lakh crore rupees, or very close to that mark in market capitalization. The company's actually sent out a notification to the stock exchanges post-market hours yesterday, but saying that there's no linkage in the stock price move and the Bloomberg article. That Bloomberg article had actually said that the company was receiving oil from Russian tankers, and the report had claimed that 3 Russian tankers with oil were heading to Jamnagar. The company denied that report before the start of trade on Tuesday, but that uncertainty led to the stock taking a bit of a pummeling. The company, in fact, has said in the evening notification that Bloomberg updated the copy or the report to change the facts. The updated Bloomberg report says that Russian oil cargo, which was linked to Reliance Industries, was discharged elsewhere. So bear that in mind. If you see a pop in the stock, you know why that is. Apollo Hospitals was the top gainer on the Nifty 50 yesterday, gaining 3.7%. And Citi has weighed in on the company, and there's quite a considerable upside that they see in the stock. They've maintained a buy and they've hiked the target price to 9,600 from 9,330 earlier. That implies a 30% upside from yesterday's closing price. They say that the near-term issues are priced in and the risk reward at this moment is attractive. They say that it remains a high conviction buy for them. The stock is factoring in near-term losses in new hospitals as well as the disruption that it has seen over the last couple of quarters in Bangladesh. The losses in new hospitals may keep the hospital margin flattish at 24%, according to Citi. They've also said that the ramp-up in facilities can drive an improvement in FY28. They say that the healthco is actually transitioning from a drag to value creation. This is on account of offline pharmacies. And they're also saying that the 24/7 business losses are narrowing, and the KeyMed merger is also, and eventual listing is also going to unlock a large growth potential for this company going forward. So watch out for Apollo. It was in focus yesterday, top gainer.
One of the top gainers, absolutely, which was supporting in terms of the kind of gains that we saw. On my list, you have 2 companies where the anchor lock-in actually opens up. First up is Tata Capital. It'll see the end of its 3-month shareholder lock-in. Around 71.2 million shares is what you're talking about, which comes up to around about 2% of its outstanding equity, which becomes eligible for trading. Now, the stock, which traded in a narrow range for most part of the 3 months, has moved above its issue price now over the last 2 weeks and gained over 6% since last Friday as well. So if you talk about the current levels, the shares unlocked, what is getting unlocked, could be valued at little over 2,500 odd crores. So watch out for a Tata Capital in trade. And you have a Meesho, where the e-commerce firm is set to see the end of a 1-month shareholder lock-in today. Almost 110 million shares is what gets unlocked, about 2% of its outstanding equity, which becomes eligible for trading. And at the current market price, the shares are actually valued at 1,973 odd crores. So watch out for both these counters when you talk about the anchor lock-in opening up. The other big story for the day is going to be Biocon Biologics. Now, that's a thumbs up as well, because they've introduced 3 new oncology biosimilars to its portfolio, and these assets target major cancer biologics that are scheduled to lose exclusivity within the next 5 years. In fact, this represents a combined market opportunity of over $75 billion for a Biocon Biologics, and the 3 newly unveiled assets are, Pembrolizumab, that's the first one that you're talking about. Nivolumab is the second one, and the third one is Trastuzumab. So all the 3 of them, you should be watching out for. In fact, we will be doing a conversation, hopefully today, with the management of Biocon Biologics as well, to understand what this would actually mean for the company. And the last one is a Godrej Consumer. Now, Again, on the this is on the Q3 business update. The consolidated growth, what they've said is expected to nearly be in double digits in terms of revenue. In rupee terms, I'm talking. EBITDA, they're expecting a double-digit growth as well in this quarter. So again, a thumbs up coming in on that front. If you talk about the standalone performance, the India business is positioned for double-digit revenue growth, supported by near double-digit underlying volume growth is what you're talking about. In terms of segmental performance, home care is anticipated to lead the growth with robust consumer demand and strong execution. Your personal care business is projected to achieve mid-single digit value growth, aided by a recovery in the soap category. So watch out for these three counters in trade as we speak. But very quickly, I think a quick mention in terms of IEX is what we should do as well, because the market coupling case that we spoke about yesterday, a 13 to 14% surge, Tamanna and Alex, in that last hour of trade. And now they've said it's moved to the 9th. So there is no clarity, but I think the way the stock is moving, it seems that IEX is going to be a beneficiary.
People are listening to the commentary in the court and the observations there, and then guesstimating, as market does, that there's going to be a positive one.
Though Axis Capital has come out with a note today on IEX, and they have a sell rating. Their target price is 120. Currently, you're at 148. So don't be surprised if you see the stock come back to normalcy today.
Because even the fundamental analysts and the technical analysts that we were speaking to yesterday, maybe the technical analyst said that there could be a bounce, but the fundamental analyst said wait and watch. I cannot remember who it was.
Rupesh Talungi.
It was, yeah. So they said that it was better to wait and watch till clarity emerges, and I think that's fair considering the kind of capital erosion that you've seen in that particular stock. But we have to slip into a very quick break. Before we do, though, there's an important statement that US President Donald Trump made, and this has to do with the potential that he will be impeached. Here's what he had to say.
You got to win the midterms, because if we don't win the midterms, it's just going to be, I mean, they'll find a reason to impeach me. I'll get impeached. We don't impeach them. You know why? Because they're meaner than we are. We should have impeached Joe Biden for 100 different things. They are mean and smart. But fortunately for you, they have horrible policy.
Co-presented by National Stock Exchange.
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with two major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. Use कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
नफीस जी 45 साल की उम्र में हार्ट अटैक से अचानक चले गए। टर्म लाइफ इंश्योरेंस के पैसों से उनके बच्चों की पढ़ाई में सहारा मिलेगा। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
Welcome back. You're watching India Market Open. Exciting times in our newsroom all through the week, and indeed from here on out in India Market Open. Why? Because we've got our regular panel on board. We've got Kush Pora, founder of kushpora.com, and Parag Thakkar, head of head fund manager at Fort Capital. Apologies, I've said that too often. I've messed that up. But having said that, let me come to you, Kush, first. Because yesterday was expiry, and you saw a couple of heavyweights that really spoiled the party, right? Or I wouldn't say party, but then we would have ended in the green for the benchmark if it wasn't for them. What are the cues at the start of this week?
First up, a very good morning, guys. And what do you think is going to be the accident for the day? We've had ITC, we've had HDFC Bank, we've had Reliance. Everyone coming and spoiling the party. Trent, correct?
Those were not accidents, those were train wrecks. Accidents too small for what has happened with 3 index heavyweights and one of them dragging down the Nifty 100 points.
Yeah, absolutely. And just imagine if it weren't for these moves, Nifty was anyway at 26,500, the level that we've been speaking about. But the quality of the downtick is not so bad, and I'll come to that in just a bit. But Alex, once again, the IEX call yesterday, the technical analyst, who perhaps gave that long call, is someone who's sitting at the table right now. So,
okay.
Yeah, so I mean, we did discuss that. 130, strong support zone, keep that as a stop loss and go long. I think if someone heard and played that trade, then kudos to you, must have played out really well. Now, as far as markets go, like we said, it's one heavyweight after another, making that dent in the market, which is perhaps holding it back. Otherwise, if you see the last 2 days pullback, it seems more like a profit booking rally in what is in a medium term an uptrend. So I would remain constructive. We have been speaking about 26,000, which is the 20-day moving average. And if you see the put option data, 26,100. So that zone, 26,000 to 26,100 becomes a critical support zone. But also, if you do get an initiation into a long trade around that zone, the risk reward ratio becomes favorable even for the target of 26,300, which is the first line in sand for Nifty, the first resistance, and then 26,500. So I remain constructive. Go long on Nifty within the zone of 26,000 to 26,100. Bank Nifty. Now, this is one index that we've been consistently speaking about, that this is the preferred index to go long on, despite what HDFC Bank did, and also the week breadth where 8 declines and 6 advances, the index closed higher, largely because of what ICICI and SBI did. I still maintain that if you want to go long, or if you want a slightly better certainty on the trade, Bank Nifty is still the trade to or the index to go to. 60,500, 61,000 I still maintain very much on the cards. For your stop losses, you could have 59,500 to 59,700, that zone as your stop loss. So even from the current levels, risk reward ratio is favorable on Bank Nifty.
Are you buying an RIL today?
From a positional standpoint, yes, I am.
Okay.
See, because
you think it's come to the levels that make sense.
Yes, just like ITC, just like HDFC Bank, you don't get such deep gashes in stocks like these every now and then, right? So if you are a medium to a long-term investor, these are not your quick trade plays. But if you're a medium to a long-term investor, I think this is a good idea to start nibbling into even an RIL, and same applies for ITC and HDFC Bank.
Okay, what's that base that you will see on the RIL? Because yesterday when we were talking to a couple of analysts, they are looking at around 1450 on a RIL to be a strong buy recommendation. According to you, what's that base case formation?
So look, 1500 itself is a good support zone. Now, the reason I'm saying we need to start nibbling into RIL and not go the whole hog and buy it today is because yesterday was the first big downside on the back of very big volumes. So yes, there could be some extension of that fall that could very much come about. 1450, in fact 1475 and 1500, that's the zone that I'm looking at. If it continues and comes in that range, it's not a bad idea to go out and start accumulating within that range. Again, don't go the whole hog, but if you want to start accumulating, these falls and these gashes are a good entry point.
What about you, Parag Bhai? What is the day looking like? Are you looking at equity or just looking at silver?
No, silver, so I am selling my own silver today.
Really?
Yeah.
Really?
After such a big rally, I don't want to be in a FOMO. Let others be in a FOMO, and I would advise others not to be in FOMO. It has already right 46% in a month, 163% this calendar year. What more you want? And it is overbought also, in my view. Of course, I don't understand technicals that Kush can say, but I would say that.
I think the technicals in the silver chart, no one can understand right now.
So it is uncharted territory, as they call it. But the second is, I will continue with my FMCG thing. Godrej Consumer, I've been saying since long. I think they have delivered a decent update, and I remember Mr. Sudhir Sitapati, the CEO of Godrej Consumer, telling in one of the conferences that ultimately GST cuts are the kind of reforms, or income tax slab increase, or interest rate cuts. These are the reforms which are required for FMCG consumption to go up. Finally, that has happened, and Godrej Consumer is one of the first companies after Marico, of course, to report that kind of numbers. Double-digit volume growth, double-digit revenue growth, double-digit EBITDA growth, and home care segment growing at very 15%. International business also, Africa and US has grown it very well for them, and Indonesia is also coming out of the woods. Plus, palm oil prices have dropped.
Yeah.
So I would say that I would go with my FMCG kind of theme, which is boring. Silver is very exciting.
I was just going to say that.
So it is completely opposite view.
But maybe it's a sensible one. Picks today, and are they going to be boring picks? I hope not.
Never, never. It's a mix of a financial as well, and since financials are doing well, so Max Financial to be precise. A good run on this, good consolidation on the verge of breakout, so a slightly preemptive trade, but with the kind of volume action and the relative strength compared to what the index has been doing. Max Financial makes the cut. 1775, 1815, these are your targets. 1695, that's your stop loss. RR Kabil continues as a trade. Yesterday the stock did end higher, slightly off the highs of the day, but considering what the markets did, I think a green close is still something that you'd welcome. So RR Kabil continues for targets of 1570, 1605, 1500 is your stop loss.
All right, guys, well, silver, no one knows where the price is going. But if you bought it in physical, then at least it'll still look pretty if the prices are dropping from here. You can take that, right? But let's take a look at the watch list today and see what's likely to be buzzing. We've spoken about a couple of these stocks, but they bear repeating before the start of trade. Right on top, Titan, on the back of its Q3 jewelry sales, which are up 41%. You've also heard some snippets from that conference call where they're talking about staying invested in real diamonds, and the fact that they think that the lab-grown diamond situation is a little overwrought, a little overdone. Lodha, Q3 pre-sales up 25%, positive numbers. Godrej Consumer, you had just heard Parag Bhai speak about this. He's positive on this, and he's given you more details than you see on the screen right now and reasons to be positive on the stock. Senco Gold, I spoke about this 51% increase in revenue, and this is on account of strong same-store sales growth as well. Hind Copper, Hind Zinc. Now, Hind Zinc in particular, if you believe that silver prices are going to come off, then this does not hold true. But then both these counters have actually been buzzing, Hind Copper in particular, on account of the copper prices. Britannia, take a look at this. Jefferies upgrades to a buy, but what is more interesting is the increase in the target price. It stands at 7,300 now compared with 6,350 earlier, and that is an upgrade and a half. Finally, Tata Steel, JSW Steel, primary steel mills have increased prices. This is positive for steel companies. Biocon, Hiral spoke about this, 3 biosimilars to be added in the US. Acme Solar wind projects are getting commissioned, so that's a positive. JD Cables has gotten a 244 crore order. And then on the downside, Jubilant FoodWorks posted a not so good business update. Lowest revenue growth in 7 quarters is something to worry about. And Credit Access Grameen, another situation where this MFI lender is not really out of the woods yet. A weak quarterly update has come through. So quite a few stocks to watch out for. I wonder which of these, Parag Bhai, apart from Godrej Consumer, and you've already spoken about this, and silver, because you've already spoken about that, are you most interested in?
Yeah, Parag Bhai.
So in my view, I am nobody to recommend to government, but in my view, government should consider selling their stake in Hindustan Zinc and Hindustan Copper.
This is the right time.
If you total up their value of their stake, it is around close to 90,000 to 1 lakh crores at current price.
Wow.
So instead of doing in spite of doing a 2,500 crore, 3,000 crore kind of OFSs, there's a big OFS we can start gradually on every rise, keep selling some shares. Market is hungry for that.
So right time for the government to sell their stake.
You should sell on rise. That is what we have been taught.
What about steel? There was this Reuters report yesterday that the Competition Commission of India, in an October order, has made some adverse observations on steel, and you might see a bit of an impact today, if at all, on some of the steel companies. Though not too much happened in yesterday's trade. Would you look at steel favorably despite all of this? Because underlying fundamentals for steel right now is very strong.
After safeguard duty, I was just waiting for safeguard duty. Now safeguard duty is there, so steel, flat is, at least on flat steel it is there. So whether it is JSW Steel, Tata Steel or JSPL, I would look at them closely and will try to buy them if there is a fall. I don't know whether there will be a fall, because today only there are reports of steel prices going up.
Hikes have come in. Primary steel price hikes have come in. So you might actually see the reverse coming in. Would you look at any of these steel plays on the charts, Kush?
So I agree on declines. The reason being that yes, a lot of these have had a good run, but that run has come on the back of gap up. So if you dial back the clock just a week, all of these stocks, because of that safeguard duty announcement, had a gap up. Now those gaps technically need to be filled before you can have a sustainable up move. So I will remain a little cautious. Volumes on Tata Steel in particular have been very exciting. So is the price action, but maybe on slight pullbacks close to the 177, 180 zone, the risk reward ratio will be favorable. The gap will be filled. And from there on, you could again hold it for the targets of 186 and 190 plus. So I remain constructive, but on mild pullbacks, these will make an exciting trade.
Okay, so this is going to be an exciting trade. In fact, we've also highlighted the kind of impact that nickel prices could have on stainless steel companies in trade because of that 10% increase that it saw on LME in yesterday's session. So the space is going to be very interesting. But it's that time of the day where we talk about all the chatter from the dealing room. My colleague Samit Sarkar joins in with what he has. Samit, what are you picking up? Because, a lot of buzz coming in, a lot of individual stocks that have been making moves.
Yes, a lot of individual stocks that have been making move, and dealers are focusing on stock specific action. Couple of stocks that dealers have highlighted. Firstly is ICICI Bank and Persistent System. Now there are buy flows is what dealers have indicated on the large HNI desk, and this is largely because for both these counters a strong Q3 is something that is expected. So it's a result play that we are seeing in when it comes to ICICI Bank and Persistent. For multiple stocks, that is Reliance Industries, Eternal, Adani Ports, SRF and HDFC Bank. All these counters were under pressure in trade yesterday, and what dealers have highlighted is that a large FII was a common seller in all these counters yesterday in trade. For Northern Arc, there are buy flows on PMS desk. Dealers are expecting that the Q3 would be quite strong for this for this counter as well. For Bliss GVS Pharma, there are buy flows on the large HNI desk, and dealers are expecting a positive corporate development to be announced anytime soon when it comes to Bliss GVS. In fact, they are expecting that there could be the company could be taken over by another listed entity anytime soon. So keep an eye out for Bliss GVS Pharma. It could there could be an acquisition by another listed entity is what dealers have highlighted. For Orient Pro Solution, there are buy flows and this is largely on expectation of a large order win that could come in for Orient Pro Solutions. And couple of names that we highlighted earlier was Titan and Kalyan Jewelers. On January 1st, we did indicate that there are strong buy flows on expectations of strong Q3 update, and that is what has come in for both these names. Titan has seen a Titan and Kalyan both have seen 40% plus growth for Q3. And when it comes to Britannia, we did highlight yesterday that there are buy flows on institutional desk and dealers were expecting some positive news flow, and today Jefferies has upgraded its rating and has also hiked the target price on Britannia Industries.
Okay, Britannia also in focus. There's a Jefferies note actually today which has upgraded it to buy from a hold and hiked the target price to 7,300 from 6,350. Britannia, any thoughts, Kush? Britannia and HUL, let me add both.
So not Hindustan Lever as much. Britannia, yes, it's on the cusp of a breakout. So 6150, that's the range, and it's respected that range for the last three and a half months. Once that range is taken out, it could continue, and it'll also have the tailwind of what Parag Bhai has been speaking about, that the FMCG sector is going to benefit in the coming quarter. But look at the Tata Consumer. That's the stock that we've been discussing. Even the price action on this one yesterday, fabulous. So if I were to pick something, I would still go with the Tata Consumer. Hindustan Lever is making that run up, but 200-day moving average resistance, a few supply zones, on the way up. So I would wait on Hindustan Unilever. But Tata Consumer, again, mind you, if you're thinking that the stock hasn't really not run as much, it didn't even correct as much the rest of the pack. So there is definitely strength, and now it will gain from here on. So Tata Consumer is just stock in this pack.
No, and it's very interesting when Parag Bhai is listening to some of these recommendations. There is a deep nod and a
you're nodding
so
to Tata Consumer.
Yeah, so basically I'll share, I have a lot of FMCG stocks in my portfolio, starting from Godrej Consumer, Tata Consumer, HUL, Marico, Pidilite. So I have a lot of FMCG, so I'm betting big on this theme. And I know it is absolutely contra and against what market likes, but I like to play these quality stocks when the earnings are at the bottom.
And have they hit the bottom?
So earnings, clearly Godrej Consumer has told you double-digit EBITDA growth. Tata Consumer is going to tell you. See, a lot of these guys have, first of all, some volume uptick has come, as Godrej Consumer has said, due to this whatever disposable income going up in the hands of people due to GST cuts and all. And there are margin benefits also. For example, palm oil prices are correcting, copra oil prices are corrected for Marico, for Tata Consumer tea prices have corrected.
But Parag bhai, in second quarter and post the results, we saw some of these margin improvements take place, right? But the volume was still the concern. You're saying that because there is an uptick in volume,
there was a volume concern because there was destocking also, na?
Sure.
Because there are many items of FMCG where, for example, Imami, 93% of their portfolio is now with 5% GST. So the dealers might have destocked in Q2, which they will restock in Q3.
Got it.
But then what about the urban and the rural divide? Because that anticipated urban recovery that everyone is expecting is still, the commentary is still saying that it's only at the cusp of start. It's not come there and it's taken quite some time. Would you still be a buyer of FMCG?
That is why I'm saying FMCG is my first choice. Trend or those kind of urban themes that I'm now trying to look at where I can see value. And of course, as I said yesterday, Trent is in my radar. Let's see. Up till now, I have not acted on it, but I'm
Titan. After the
so Titan again has rallied a lot, so it is not in my it is 54 times FY28 earnings, then that is okay. But I think, and the recent the excellent business update which we are seeing is also because of steep increase in gold price.
Prices,
Correct.
yes.
Correct.
65% on
it is more of the pricing than maybe.
So between it is all both Tata Group companies, both blue chip companies, both superb companies. But between Trent and Titan, definitely my choice, I would say tilt will be towards Trent, which has fallen. Titan is actually making all-time highs.
That's interesting. Trent versus Titan. Parag bhai is choosing Trent because
but I have not acted on it. Let us be.
That's okay.
FMCG I have acted.
Trent versus Titan. Kush.
Philosophically, where Parag bhai and I differ is this. He's a contrarian buyer and I go with strength. So, in fact, I'm glad you asked him about strength. Varna main offline पूछ लेता इनको क्या लग रहा है Titan.
Offline too. Everything is for our viewers.
No, I mean, if the conversation didn't come up, because I prefer Titan. Good momentum, good volume action, good price action. Risk reward ratio थोड़ा skew हो सकता है just because it's now close to overheated territories but not there yet. But in this kind of momentum, it could well get there. So I prefer Titan. अगर momentum play करना है from a near-term perspective, Titan looks good.
So in short term, definitely, of course, Titan has shown such an excellent business update. There will be upgrades also.
You've already chosen now. You've already chosen.
I have chosen. I am very clear. So it will go up, but it's okay. So, but I cannot buy it. Again,
fair enough.
My basic DNA.
Absolutely. And if you listen to Kush as well, he's very uncomfortable with the idea of averaging on the downside. He keeps telling you that if you hit that bottom, it starts moving up on the charts. Remember, this is on the charts. Parag bhai is talking about fundamentals and valuations. But we get you all of the perspectives right here on India Market Open and on NDTV Profit. We have to slip into a very quick break. On the other side, we've got Market Open to talk about, so do stay tuned.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right order decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. with a table thumping buy.
And when the street wants the levels, he brings the chart.
All right, welcome back. Just a couple of minutes to go for the pre-open session. What's in focus today? I would look out for steel stocks because prices have been hiked. The implied is showing you a fall at open, but this implied has been deceptive the last couple of days. So wait and watch what actually happens. I would watch out for Titan. Superb business updates and a con call on where they're talking about the lab-grown diamond foray as well. I would watch out for Senco, I would watch out for Lodha, all of them with good updates, and we can show some of those stocks in just a bit from now. Jubilant Foodworks, not that great. These are some of the things you should watch out for. Will there be a recovery in the stocks that fell yesterday? HDFC Bank, Trent, RIL. Is there a contrarian play there is something that we should also watch out for. But I actually want to come to you, Parag Bhai, on the real estate pack and the updates that we saw from Lodha. Of course, we'll wait for some of the others. Now, there is, I would say, mixed view on residential real estate going further. Some of the data that came in as we closed off the calendar year 2025 was that volumes are not that great. But then there are also positive views coming in terms of what this year is going to look like. Just wondering where you stand.
So my view is very clear. I have stuck with always two stocks, DLF and Oberoi Realty, in this pack. And these are the two stocks which I'll be a buyer on any dip. Because I feel that DLF is a fantastic rental business. The pre-sales number which market focuses too much on is, I think, of no use in DLF. Because pre-sales number just tells you that what incrementally they are doing. The inherent value sits in the rental business, right, which is going to do 6,000 crore rental income, where they have 68% stake.
But this is only for DLF, you're saying?
Yeah, and Oberoi also has an increasing pie of rental revenues now, right? Borivali Mall will generate so much of rental revenue. So I think both this, you cannot look at this company on a quarter-on-quarter basis because pre-sales number is not something which I look at so closely. In real estate, I feel that there should be inherent value in the business and the execution capability. That is important. And you should buy, of course, at a valuation which is comfortable.
And do you still see value in these two, DLF and...
Yeah. This continues to be my favorite stocks in the real estate pack.
Speaking about value, I'm just wondering, and this is something that we've spoken about, of course, but it bears repeating, ITC. It is, you've borne the brunt of selling ahead of the budget, and this often happens. This narrative gets created that the government is going to do something on cigarettes, and that's the low-hanging fruit if you are looking to bolster revenue. And then the stock has taken quite the tumble. The point is it's above 4% dividend yield. At this point, 20 or thereabouts is the price to earnings on a trailing basis. The signs are there, that value is there, but would you press the trigger? Yeah,
so basically it's a good gradual buy in my view. As you rightly said, above 4% dividend yield and 18-19 times earnings also. But one thing is that you cannot look at trailing earnings now. Because earnings are going to change. If this, whatever government has said, whatever notification came, is actually implemented in its spirit, then you are going to see a volume decline and so multiple will also derate. So if my target price was for ITC, for example, in my mind was say 450 or 500, it has definitely come down. That I have to accept.
To what?
Say 400, 420 or so. Because the multiples have to come down, because volumes are going to show negative growth.
Interesting.
Okay, first rates that are coming in this morning, and we'll just take a look at what's working and what's not working. Titan, about 2% up in the pre-open session. Hindustan Copper continuing to shine. I want to look at what Hind Zinc is also doing. Let's pull up Senco. Kalyan Jewellers not doing too badly either. Wellspun Corp in focus as well, amongst other things, and so is Godrej Consumer, 1.5% up. in pre-open session. Remember, these are just the initial rates, and we will see more details coming out once these rates settle. So keep that in mind. I wanted to pull up an IIFL as well. Reports today that TPG Group is going to come in and maybe get a majority stake. This is something that we had talked about on our segment Heard on the Street on the 1st of January. And that seems to be playing out. Mild negative downtick over there as well. I want to talk a bit about banks right now. And, you know, we've been speaking to some extent about what has happened in HDFC Bank. Is there a rotation to ICICI Bank? Prabhai, since you've been tracking HDFC Bank so closely, would you say that there is a case maybe if you're heavily invested in HDFC, if one is to spread out those risks a bit?
So, as I said, you know, based on the business update, when CD ratio went up, I also felt that HDFC Bank will underperform. But that time the stock price was say 1,000 and now it is 960. So between 950 and 960, I think one should look at HDFC Bank. Of course, but one should have a medium term view because market will closely watch for March quarter ending CD ratio.
I know you mentioned this earlier as well, so I think we will have to wait out for some time to understand how
But just historically what has happened is that March quarter they are able to garner good deposits. So if they actually execute it and or say market condition is favorable to them and they can raise some deposit growth significantly, then they can end with a decent CD ratio where again market will look forward for a higher growth than the system.
What is a decent CD ratio in your opinion?
So in my view, they should logically end at 96-97% or so. Now that they are already at 99% and above, I don't think it will go below 96-97% even in the March quarter.
Okay.
So 96,
but that's acceptable. That's
palatable. Then you can say again next year they will again grow in line with the system or little bit ahead of the system.
Okay, so watch out for the Q4.
But there is no asset quality problem in HDFC Bank. That much is so HDFC, there is no big risk as such.
It's a question about growth.
It's a question about growth, and banks with lower CD ratios will have a higher operating leverage and higher room to grow.
Kush, ICICI versus HDFC on charts.
Yeah, so I think it's a very clear trade. Momentum, ICICI, because it's taken out the 200-day moving average yesterday on the back of very strong volume. So I think that could still continue. Resistance is also coming at 1440 and then about 1470. So this momentum could well continue on ICICI Bank. HDFC, like Parag mentioned, like I've mentioned in the past, on such deep gashes, it's a good idea to start accumulating for medium to a long-term perspective. So different time horizons. So momentum, right now if someone wants to pick ICICI Bank, but within that pack, Union Bank, slightly different name, but that's got good momentum. That's something that you can consider for a short-term trade as well.
So not ICICI, not HDFC, it's a Union Bank that should be on your cards as well. But moving on to a big brokerage call for the day. InCred has actually maintained an ad on Camlin Fine. Now, what is the reason why Sharad has picked up InCred on Camlin Fine? Let's head across to him to understand the rationale. Sharad, an interesting company that you're looking out for on the big brokerage call today.
Hiral, amongst all the mid-cap companies which I checked in the brokerages, this is a very significant target price hike coming in from InCred. They have maintained ad rating, but the target price has increased from 425 to 480. Now, interestingly, this is a 236% upside coming in. Also, it's a tight vanillin markets and a high value blended portfolio. That augurs well, especially for the margins going ahead for the company. And interestingly, the prices are likely to drop to almost $32 per kg by H2 FY27 in the US and by almost $19 per kg in the European Union. So to put that in perspective, this aids the margin profile for this segment. Also, WinPi is a high value segment application. It's one of the key products from the company. And going ahead, the entry to barriers and a significant revenue potential is what making this broking house very bullish on this counter.
Camlin Fine in focus. I want to pull up IDFC first also. Interesting note from Nuvama on IDFC first is initiated a buy. That stock showing some action this morning. So that is going to be in focus as well. But right now, my eyes glued to what's happening in Titan. Because Titan is showing this 3% uptick. I don't know if you can get a split screen of Titan and Trent. Let me look at Trent as well. Because Trent showed that big dip yesterday. It was a slam dunk and maybe some recovery in today. So you might see some of that playing out. Let's look at RIL. Let's look at HDFC Bank as we are getting into the opening session, and as the pre-open wraps up, a slight uptick on an RIL. HDFC Bank continues to languish for a third day in a row, and like I said, this is only in the pre-open session. Tata Consumer, we were talking about Tata Consumer, also about 0.5% up, as are some of the IT stocks. Now, I'm just wondering if IT is something that we could look at favorably at this point, Parag bhai?
So I have said that I have actually lightened up my position in IT, but I have added on Coforge.
Only Coforge?
Only Coforge, yeah. After this, because Coforge fell significantly from 1840 to 1640 due to this acquisition news. And according to me, acquisition is not that bad.
What about you, Kush?
Yeah, I'd wait on this trade. These stocks, even the heavyweights and the preferred mid and small players like Persistent, they are consolidating. The volume's not really as great. The momentum indicator is also flat to mildly negative. So I'd wait on the IT trade, maybe from a positional standpoint. But even if I want to consider that, I'd wait for the results to come about. So close to the event, not a good idea to enter into some of these names.
Okay, in fact, interesting IT names that we're looking out for. Let's just pull up a walkout on the screens as well very quickly. They've just filed some combination right now. Let's see what that stock is doing in pre-open. No moves yet, but I think we'll get that flashback on the screens as well. But in an exclusive chat with NDTV Profit, Timex reveals its expansion plans, growth prospects and acquisition stand. Sharad is standing by to tell us more in terms of the exclusive information that he's picked up from the management. Sharad, over to you, because this Timex has been one of the stocks which has been very interesting after the OFS that has happened. A lot of conversation tit-tat-tat as to what happens next when it comes to further stake sales. What are you picking up?
Well, interesting counter. The stock is up already 80% in the last 1 year, and Deepak Chhabra, the managing director of Timex Group, spoke exclusively to NDTV Profit, and they have stated that on the recent OFS, they have stated that there won't be any further stake sales happening, and the parent company is intending to maintain the controlling stake in the company, and whatever the OFS proceeds has happened, they will be using it for expansion. The management also stated that they are confident of gaining market shares in the watch segment, and inorganic growth opportunities is also something which the company is looking at. Now, where the growth is coming in, that's the most important part of this conversation. The mid to premium segment, they have seen a strong growth in their brand Timex, where it's operating, and the growth coming in the premium and luxury brands, especially Guess and Versace, and they are planning for a significant expansion over the next 2 years. Overall, the consumption trends are also very bullish when it comes to the premiumization in India. And to get you all the other details also, please log on to ndtvprofit.com to see the entire conversation coming for this counter.
So Timex in focus, and that's an exclusive conversation that we've had with Timex. In the broader market, I want to just look at this a little more widely, because Timex, by the way, that's talk about 0.5% up. Kush, what are those sort of picks that you've been tracking and are on your radar from a broader markets perspective? Because from the last couple of days, we've been so focused on the heavyweights. We haven't really talked about, those opportunities that you can see in the broader markets.
So, look, I mean, largely the picks that I, suggest are from the broader market space. So the stocks like, RR Kabil and the ones that we've discussed, Max Financial, largely from that space. But if you ask me as a pack, Auto Anks is something that I'm still very constructive on. Maybe M&M has done what it had to. Maybe Maruti has done what it had to. A lot of these names have, run up quite a bit and will continue to do so. But if you want to make, higher returns or better returns, I think you have to consider the Auto Anks space. Jamna Auto, Samvardhana, Uno Minda, these are some of the names that are on my radar. In fact, the first two are something that we've recommended on the channel as well. Jamna Auto continues to gain strength. Mild pullback in Samvardhana, but the 20-day moving average support near the 118-119 zone is a good one. So see how this pans out, and this could well be a trade, but still constructive on the Auto Ank space. The three stocks, Jamna Auto, Samvardhana and Uno Minda.
I ask you this, and I have been asking you this practically every day, Kush, but specifically on Nalco. This is a counter that was up in trade yesterday. It's looking like it's going to have another day positive. If you're holding, do you continue? You've said metal counter, you won't enter at this point, but if you're holding, do you continue?
Correct, that's absolutely correct, Alex. the way to play momentum is to play it via trailing stop losses. Fab momentum on metal names, yes, from a risk-reward ratio standpoint, fresh entry is not warranted. But if you are already invested, or if you have positions in these, why would you want to miss out? Maybe you could book partially here or there, but you want to continue and see how how high the rally goes. So yes, you should continue holding on to Nalco. As I said, apply a trailing stop loss strategy. For Nalco in particular, you could have a trailing stop loss at the 343, 345 zone. If it dips there, perhaps you might take money off the table. But if it doesn't, then who knows where this rally could head.
Okay, and speaking of taking money off the table, you called IEX yesterday, you said go long. It might start off in the red today. So would you take money off the table at the start if it's in the red?
Definitely, because remember, Alex, IEX was a range play, 130 on the downside and 150 on the upside. Yesterday, the stock hit a high of about 153, just there, about the range, and it closed below that. So I would take that money off the table if I did trade IEX yesterday.
What about a Senco? Let's just pull up. It was on Alex's watch list, and clearly that stock is seeing some great momentum in pre-market trade right now. Senco Gold, if we can just pull up that one on the charts. Kush, what would you do? 8.5% up move is what pre-market is indicating.
So, not a big fan of the entire space, except for Titan, which has multiple angles to it, but not a big fan of the entire space. Agar hai position aapki, तो it's a good idea कि थोड़ा profit ले लो Senco Gold से. Titan, and I'll come back to Titan because we discussed this just a while ago. With this kind of a gap up, the trade is lost. If you have a position, take money off the table or hold it via trailing stop losses. Don't enter afresh.
Don't enter afresh. That's the word coming in when it comes to Titan. I mean, we have been looking at the defense pack also pretty closely over the last couple of trading sessions. Parag bhai, a very quick view. I know you've been looking at it, but not really very strong on it. At this moment, just ahead of the budget, are you seeing any play?
No, sir. I think the capex in the budget will go up for defense, considering the geopolitical things happening around the world. But in defense, you have to be very, very sure of earnings, because there can be huge delays in the execution. So I would,
Just about 15 seconds to go as we gear up for markets open this Wednesday morning. It's going to be a soft start. That's what we're indicating from the pre-open session. But will there be a scope for recovery, especially for the heavyweights, which got pulled down yesterday? Not really, maybe, but the start not as weak. Actually, quite as weak as the implied was indicating, about 0.25% down. Now on the Nifty, the Sensex, of course, mirroring this as well. The Bank Nifty also 0.25% down. You're seeing the broader markets pretty much flat. I want to pull up Nifty IT if I can very quickly and see what's happening there. If there is any action, well, a pop of green at least. But the Nifty heat map will give you a clearer idea of where the action is. My guess is Titan will be right on top. There it is, 3% up because of those business updates. This is a large company that has moved at speed in this quarter as per their business updates. Now, you can say that it's gold prices that have propped up their numbers more than actual growth, but if you look into the details, it has looked good. IT is having a relatively decent day. Indigo is going to get a large delivery, a large wide-bodied plane delivery, and watch out for the stock through the morning, because remember, there were reports and incorrect reports that said that there would be a delay in the schedule of planes that Indigo will get. We had in fact reported that that's not the case, and one of those deliveries is expected to take place today. ITC popping once again, but if you see much more red on the screen, that's why you're seeing the tilt completely the other way, about 60 points down now. Cipla about 2% down. HDFC Bank continues to suffer. Tata Motors PV had more updates overnight, and now in the domestic business, those aren't looking great either, frankly. It's not just Jaguar Land Rover, but other parts of the business which seem to have not fired at the same pace which was expected. 1% down over there. Shriram Finance, Bajaj Finserv, some of the BFSI pack actually seeing a muted opening, as are auto companies. I want to pull up the contributors and just take a look at what's happening over there. RIL actually in reverse. Watch out for this stock through the day, because this is a heavyweight which was dragged down yesterday and took quite a knock but Titan really holding up the markets today and shining through. So is ITC to some extent. On the losing side, HDFC Bank continues to be a pain point. L&T, Cipla also holding through. So I would say at least on the Nifty, it's not as bad a story as yesterday, but then again, it's one heavyweight which is really doing all the heavy lifting. In this case, it's Titan.
And indeed, the rate that Parag Bhai was talking about, 950, has more or less been hit for HDFC Bank. So that's something for you to watch out for. Let's quickly pull up the sectoral indices and talk about whether the picture is mirrored by them. And in fact, it is pretty much the same scenario there. Consumer durables up and about. FMCG is buzzing. It's just about 0.33% though. And IT continues its up move for a second day in a row. Narrow moves though, bear that in mind. On the bottom of the screen, let's see what's moving. Not too much in the way of big losers. The Nifty Defence Pack is losing about 0.4%. It had a pretty good start to the trading week, remember that. Financial services pack not doing particularly well. I would hazard a guess to say that the Nifty Bank will also be somewhere around here. There it is, down about 0.2%. And it's probably broken below that 60,000 mark as well. So that's something to watch out for. Remember, the range that was being penciled in for the Nifty Bank is pretty narrow. So we'll go across to Kush to see whether or not that is changing at all. But let's talk about individual stocks, and quite a few business updates coming through for the third quarter, and those stocks are front and center today as well. And Lodha is one to watch out for. 25% up move in pre-sales. It's up and about, close to 2% higher. Godrej Consumer, positive set of numbers coming through, indications of an up move in the fourth quarter as well. Senco Gold is probably the stock of the morning this far, and close to 10% gains on the back of a 50% improvement in revenue. But remember, 65% increase in gold prices might just have contributed to a lion's share of that revenue increase. The question is going to be about volumes. Let's talk about more stocks. Metal price increases. I'm talking about the commodity here. More updates. Jubilant Foodworks didn't have the best quarterly update, and Credit Access Grameen is not out of the woods as we've pointed out to you, but it's up about 1.5% despite a weak set of Q3 updates. There is a metal price improvement or increase, and this is reflected in Hindustan Copper, Hindustan Zinc. This is silver prices that are hitting new highs practically every other day, and that is something that you should watch out for. But remember, there is caution as well, considering the kind of run-up that these commodities have had. A brokerage upgrade has come through for Britannia, and what an upgrade that was. 7,300 from 6,350 for Jefferies, and changing to a buy. It's 1.5% up at 6,221 to watch through the day. Sometimes that catch-up happens in the second half. Price increase for steel companies as well. Let's see if they're reacting. Not too much. Just about 0.1% for Tata Steel, about 1/3% for JSW Steel as well. And finally, Pharma, there is Biocon, which has 3 biosimilars that are being launched. I'm not going to try and pronounce the names. Hiral had an attempt, and a pretty good one at that, but it's up about 0.8%. And finally, you have a couple more updates. Acme Solar, there's a wind project that it has gotten. It's not doing particularly well, up about 1.4%, down about 1.4%. And JD Cables has gotten a 240 odd crore order. Let's see where it's reacting. Let's pull that up if we can. If not, I'll hand it back all the way to Hiral to talk about. Okay, so we don't have that. Let's go to Hiral. Hiral, I've pointed out a few stocks, but I'm pretty sure there are more. The question is, are there any stocks that are moving more than Senco Gold?
So nothing more than Senco Gold, I would say, Alex. But few that we need to highlight is a Misho that we did mention on the back of the anchor lock-in opening up. That stock has seeing some bit of pressure. Moves. Misho, if we can pull up that one on the screens. Along with that, you have a Tata Capital as well on the back of the anchor lock-in that is opening up. Misho and Tata Capital, both of these counters that should be in focus, which are seeing some bit of pressure. IRB Infra, they've got a toll project win on the back of which some positive momentum on this infrastructure company. Cupid is also seeing some moves, so some bit of recovery coming in terms of Cupid, and it's been a very interesting week, I would say, or last couple of days. Indian Hotels is seeing some bit of pressure on the back of the Morgan Stanley downgrade that has come in, and Welspun Corp on the back of an order win. Bliss GVS Pharma, it was a part of Heard on Street that actually we got from Somit, and that stock is seeing some strong moves today. There has been a good volume build up that we're seeing in terms of Bliss GVS Pharma as well. So watch out for this one pretty closely. And Nalco, which sees a good momentum in trade. So interesting moves here. But Kush, let me come to you. You know, on the stocks that we're talking about as well, opening trade, anything that comes to your radar?
I think Nifty holding ground and perhaps gaining a little from the low point of the day for whatever 5-7 minutes the markets have been open is a healthy sign. Reliance also holding ground is adding to the fact that there could be some confidence on the street. Plus the 26,000, 26,100, that level being tested. I think it's a good test. This will perhaps form a base for the budget rally, if we can call one. There is a good base formation that's happening. So I remain constructive on Nifty, on Bank Nifty. Do I go out and buy it today or right now? Not yet. I just want to see some more upticks on my technical parameters. One stock that I want to mention in particular that Somit mentioned, along with Bliss GVS, was Northern Arc. Now, the reason I mentioned that is because there has been a 4.5 month long negative biased consolidation with the last 3-4 sessions of moves. The stocks crossed above that resistance. Volumes fairly decent, nothing to write home about, but fairly decent. But the price action is good. News flow seems positive. So this is something that I will keep on my radar.
Okay. Thank you so much, Kush and Parag Bhai, for joining us today. Remember, you will see both of them every morning on India Market Open. So don't miss their analysis on what you should do for the day. But big budget breaking coming in now on NDTV Profit. Deregulation and decriminalization are set to be the central themes of the Union Budget 2026-27. Sources tell us that the Finance Ministry is working on a broad reset of rules and procedures across sectors with a focus on simpler approvals, fewer inspections, and a shift to technology-driven oversight. Shrimi is joining in for more details on that story.
Well, as the Union Budget for FY27 approaches, the government appears to be gearing up for another big reform or deepening the reform push, and this will be Nirmala Sitharaman's 9th budget. And if officials to be believed, it could be one that doubles down on the changes set in motion in the current financial year and the announcement made in the previous budget. Now, inside government, two words are being repeatedly emphasized ahead of the budget. One is deregulation and decriminalization. Now, the idea, sources says, is to turn the FY27 budget a roadmap for faster economic growth over the medium term rather than just a one-year fiscal exercise. And to that end, every ministry and department has been asked to go back to the drawing board and suggest changes to deregulate laws, deregulate procedure, etc. And in fact, FinMin is actively considering some of the feedback and proposal, which includes, curtailing the routine business inspection and have more tech-driven oversight. In fact, criminal provision could be confined to serious violation with procedural lapses decriminalized, easing the overall enforcement burden of the government. In fact, a clear reform push is expected in the Custom Act by correcting certain duty on certain items, rates, streamlining the custom clearance, etc. And we have been reporting about that. But probably you will see two important bills amendment, one in the Companies Act, could be moved aiming at further improving the ease of doing business and reducing the compliance friction. And the another one is the changes in the Insolvency and Bankruptcy Code. It is also on the table for the faster resolution. So these are the discussion. Now, beyond the individual act, the government also looking at reforms across the sector as well as states implementing some of the recent big reforms with a clear objective of lifting overall economy and the productivity. Now, FM is expected to meet State Finance Minister in next few days to exchange views and seeks input on the budget. So put together, this definitely signaling that FY27 budget may go beyond the incremental tweaks and instead push for deeper changes in how businesses are regulated and of course to sustain the growth momentum which we have seen in the first 2 quarters.
All right, thanks so much, Srimi, for that. The theme that Budget 2026 will likely take, and you heard it first on NDTV Profit. The question is, what will the market take from this? And we've got Ajay Srivastav joining us, Managing Director of Dimensions Consulting. Ajay, you heard what my colleague Srimi pointed out, what the theme of Budget 2026 could well be, but what do you make of that, one? And two, was there anything missing from what she said that you would like to see in the document?
I think it's an excellent thing. If they're doing it, it's a great thing because our regulatory scenario has been pretty stringent, and if they relax it, it makes a lot of difference for the companies to work. But I think the main issue on the table at this point of time is the efficiency of government spending, including the capex. And I'm re-emphasizing that when we talk of FI coming in, FDI coming in, let's understand that how do the investment come in? Because environmentally, we have a problem in this country, right? At the end of the day, we all know about the AQI, the pollution, the problem, the water problem now. Now, how do you convince the foreigners to come and invest and come and live in this country if this is what we present? I think we are looking forward to see, is there a big agenda of making government capex, which is huge sums of money being spent, more efficient, more accountable, and in line with making the the living standard of this country going up. Rest is always fine. Economics and all will work if you're healthy. Otherwise, there is no point of having money in the bank if you can't breathe clean air. And I am a citizen, so I have no choice but to do it. But you have a discretion of FDI investment to come or not to come. And unfortunately now, this has become a big criterion as we talk to all the companies overseas to say, listen, how do we send people into this country where you've got a health hazard sitting out there? So I think we are looking at a lot more on efficiency of government spending and environmental impact and, this whole thing about the city's infrastructure going up more than anything else, because everything else is domestic. You got to get capital around the world and get people to stop taking money out of this country. That is the real dilemma and the challenge for this country and the markets in this year.
Ajay, very good morning. Tamanna here.
Good morning, Tamanna.
In terms of how crucial the budget is going to be, and reading between the lines when they're talking about the theme of deregulation, do you think that's something in store for capital markets as well, or would you hope?
I think let's look at deregulation in two aspects. One is respect to what happens with respect to the general law and order and the commercial guidelines and so on. And second is respect to the PSUs, which is the largest thing on the table, because that's where the big value sits the government. And the third thing is what the deregulation is going to do to our spending, because interest cost today is the biggest component of our budgets at the end of the day, biggest component of what's holding back growth. You've seen the yields and, interest rate reduction is all a cosmetic. You've seen the yields going up and at 6.6 in the yield and 7.5 for state government loans. This doesn't leave very much scope for Indian corporates to borrow and produce goods at a price which are globally competitive. So, deregulation, if it goes on to the fact that assets become better, the government PSU becomes better, as I'm saying again, I'm sorry, repeating myself, convenience of business is not a thing of the budget. It's a thing of day-to-day governance of people down the line. That will not come from the budget. What budget can give you direction is to say how in the fiscal space can the interest rates be controlled, how in the fiscal space government borrowing doesn't take you out of the private sector borrowing, doesn't come out of it. I think that's more important. And PSU banks and PSU companies deregulation, I think that should be more critical than anything else. Rest all is cosmetic because we have good laws. By and large, laws are good. The problem is implementation. The GST guy on the floor, the Factories Act guy, inspector on the floor, he is the impediment, and the labor inspector who comes to your factory, they are the impediments. It's not that the law is bad, it's the implementation is bad. So I'm not sure whether law is required so much as well as the fact that implemented. And for God's sake, please, interest costs have to come down. We can't, if state government borrows at 7.7, what do you expect the corporates to do?
Yeah, absolutely. So from that perspective and that last point, Ajay, is that going to be one key concern that even foreign institutions are going to be asking about, which is the health of the state balance sheets? At the center, of course, fiscal discipline, fiscal prudence is in evidence for several years now. But if you put the two together, is there a question mark?
Of course, there's a question mark. And I'm really questioning whether even the central one is very clear, because I don't know if many people realize that the way a central budget is accounted for, capital inflow is taken as a receipt at the end of the day, which is not what our companies account for at the end of the day. So even at the center, why is it that our 10-year yield is stubbornly at 6.6% even after 125 basis point RBI rate reduction? The reason is we're borrowing much more than the people can provide you money with it. And you've seen the stress in the banking sector. RBI can keep playing back and forth. And you saw the price it paid. RBI has paid the price by rupee being at 92 rupees, 90, 93 rupees now, literally, if you take a forward cover in it. So, there is a cost to everything. The biggest cost is rupee depreciation. You can play with interest rates and you'll have a rupee depreciation cost. 15% in euros and pounds and 5-7% in dollars. That's a hell of a lot of cost to pay. So, so I take a little different opinion to say center has got its act together. No, it doesn't have its act together. Otherwise, yield would not have been 6.6 for 10-year bond. So it is a major issue. All the institutions are looking at it. Globally, institutions are looking at it. And, you kind of wonder why 270,000 crore went out of this country last year. It's apparent at that point of time. Our valuations, people have been shoved into mutual fund because the interest rates are so low. People don't want to put money in FD anymore or saving bank account. They go and put money in mutual fund who are irresponsibly buying shares at a valuation which doesn't make sense. We don't have a choice. We invest in India, or partly so. The others have a choice. So they took 270,000 crore out of this country. So pain is lower interest cost at the retail level, high interest cost at the corporate level is something which is bothering the system. And that's why what you see very clearly is mutual fund flush with money, buying at a stupid valuation. Therefore, you don't get returns in mutual fund and our interest costs are high. So I think somewhere down the line, retail interest costs need to go up. People can make money for investment. Government cost has to go down. They need to borrow less. As simple as that.
Ajay, we will have lost an opportunity if we don't ask you what do you think should be bought right now. What do you think is looking interesting as we started off 2026? We've seen some updates coming in, business updates coming in, and it's difficult to really make a decision right now or come to a conclusion. But what are your initial readings?
No, initial reading is very simple, Tamanna. You don't change the model very much. Your autos are doing well. GST cut has made the huge difference. And the autos continue to perform quite well in the market. There's no need to worry about it. Thanks to the spiral in gold prices, gold loan companies will do extremely well in this year also. It's the best and the cheapest way to borrow money in the market is to pledge your gold, take your money for your business at the end of the day. And it's secured for the rent. So gold loan companies will do very well. Autos have a very clear path to it. The duopolies are very clear path to it. Whether it is stock exchanges or whether it is telecom, the duopolies will do very well because there is no competition of their metal mining. We already seen the resurgence of it because, you can't create metals and mines overnight at the end of the day. I can set up a scooter factory overnight, but I can't set up a bauxite mine overnight. So you've seen metal mining theme. And the last, what we're really investing is engineering and healthcare. Hospitals can't be taken overnight. Valuations are a problem in hospital sector, but eventually they'll catch up with you in terms of giving you returns. So hospital sector is absolutely fine at the end of the day. Engineering is doing well because exports are doing well. We have gone up the value chain. So those companies are doing well. So few sectors which make a lot of sense to everybody. What you don't want to buy is things like retail, etc. You already saw the massacre in the last week. More is to come. This year, anything with a P of greater than 50, Tamanna, if you ask me, is up for skimming at the end of the day. Anything above 50, which is not growing at that path, I think we'll see a derating in the current year. People are sitting on absurd valuation of shares. Look at the retail companies, 70p, 90p. Are you seriously talking that you're going to make a return out of 70p shares in an environment like this? It's serious. So I think it's not about just what buying, it's also what you should not be buying at the end of the day.
I think that's an important lesson there. Ajay, thank you so much. Always a pleasure speaking with you here on NDTV Profit. All right, KSH International in focus. They delivered a strong second quarter driven by high volumes and robust export demand. The company reported double-digit growth across segments. Before we catch up with the management of the company, Puneet joining in to set up that conversation.
Well, thank you for that. It's definitely a recent listing and a magnet wire company in that space has shown a very strong growth of over 50% in terms of revenue in quarter 2 of FY26. So largely H1 has been 1200 crores versus 1900 crores in the full FY25. What will be the growth of this year will be one key aspect. Second, on margins between 6.5 to 7%, what is the range that they can go to? Because at 7%, the EBITDA per ton increases materially. That will be the second key question. And finally, who they actually compete with in this space. These will be the three questions I'll be watching out for from the management today.
Thank you so much for that, Puneet. That was very interesting because this is one of the recent listings that we're talking about. In fact, Rajesh Hegde, MD at KSH International, and Amod Joshi, CFO at KSH International joins. And welcome to the show, gentlemen. A strong set of numbers that have been reported as well. If you talk about the second quarter, I think everyone's now eyeing the third quarter, but I know because of the IPO, it's the second quarter. A 1200 crore jump in terms of revenues in the first half of 26 versus 1900 crores is what we've eyed in 25. Where do you expect FY26 to then end basis this kind of a trajectory? Because it looks absolutely strong.
Yeah, thank you for having us on the show. So this year, a couple of things that are happening. One is, of course, we were at a utilization rate of almost 90% for the existing plants, and now going forward from October 1st, we have the second. We have a fourth plant, which is the Supa plant, which has come on stream, and that's about another 12,000 tons of capacity. So we expect, if you look at it from a revenue perspective, this same momentum should continue. Partly also helped because of the copper prices which are there, but there's also, of course, volume growth, and that's going to help us achieve this turnover that we are looking at. And what's your next question you had?
Yeah, my question was in terms of trajectory for FY26, because the growth is absolutely strong versus what you've achieved, in FY25, right? I mean, your first half has been stronger. So what is that number going to look like in terms of FY26?
I think what you see in quarter two, that's if you take that as the indicator, then I think we should be on point on that.
Okay. And when you talk about the EBITDA per ton as well, that has also improved significantly this year, Amod. Any targets for this year?
So EBITDA per ton, first, just to give a background, increase is on account of a couple of things. The special winding wire quantity per se has increased from last year, and within that also the higher kV transformer products have gone up. Now those tailwinds have continued and are expected to continue in future. So we don't really expect, what we've achieved in the first 6 months is something that we feel is sustainable going forward.
So therefore, you've got, and good morning, gentlemen, you've got margins at what, 6.5%. I'm just wondering whether they will stabilize at these levels, or do you anticipate further upside? You've indicated, and my interpretation of what you just said, Amod, was that the mix is what has contributed to the improvement in EBITDA per ton. So I'm just wondering whether that continues to take place. What is the upside for margins?
So I'll just sort of first explain in terms of the margin. See, what happens is copper plays a very large part in the revenue that we book. So LME, as you know, is prone to fluctuation. It can go up and go down. Whereas our EBITDA per ton actually may not really shift in the same direction as the LME and exchange rate goes up. So what happens is our agreement or negotiations with the customer is on a per kg basis. The fabrication rate or the conversion rates on per kg basis, which do not really increase if the LME goes up significantly. So what happens is that if the LME goes up significantly, the margin in percentage terms may come down or go up. But that need not really represent the true profitability. Our true profitability actually we measure in unit economics. So if you ask me the 6.21 or the margin that you mentioned, is that sustainable? That actually depends a lot on how the LME prices move. Like, for example, if you see the first 6 months, LME has been around $9,400 per metric ton. Today, LME is up close to around $13,000 metric ton. Doesn't mean the value addition per kg actually has gone up to that extent. So the way to measure our business would largely be on the EBITDA per metric ton basis.
It's a fair point, but the opposite is also true. Optically, at least, your margins will look incredibly good when the LME prices cool off. But having said that, Rajesh, I want to come to you on the timeline for capacity addition, and you've already alluded to the specialized wires. Will that be a continued domination in the overall mix, and what are the timelines that we're talking about?
Yeah, so specialized, if you look at our product portfolio, almost about 75% of our revenues come from specialized winding wires. And, with this capacity addition, the same, we would have the same capacity in specialized winding wires going forward as well. And this capacity expansion that has already happened, we have about 12,000 tons or 1,000 tons per month, which is, available now for use in starting October 1st till the end of the year. And then with the IPO proceeds, we are adding another 18,000 tons. The last of that 18,000 tons will come in FY27, Q4 of FY27. But yes, to answer your question, specialized winding wires would form a large portion of our overall manufacturing portfolio.
Okay, all right. All right, gentlemen, on that note, I'd like to thank both of you for taking the time for speaking to us on NDTV Profit. Wish you both a very happy and prosperous 2026 and look forward to speaking to you soon.
Yeah, thanks for having us. A pleasure being here.
All right. Well, another new listing, and let's see how their journey progresses. Let's talk about Cipla, though. It's in focus on account of its partner, Pharmathon, Greece, which has gotten a Form 483 at its Rhodope unit with 9 observations. The question is, how does this impact the company's operations? Varsha is joining in with the details. Varsha, what are the details of these observations, if you can tell us, and what are the implications?
Yeah, well, first of all, it's definitely a negative news, and that's reflecting in the stock price as well. Now, why I say this, because if you see, the Form 483 has been issued to its partner, that is Pharmathon, and the 9 observations were noted, which includes your microbiological contamination, your poor aseptic practices, and the data integrity concern. Having a data integrity concern is definitely a very, I would say a negative thing for any company. And the observation number 4 also indicates data integrity issues. Now, how this is going to impact Cipla? One is the Pharmathon is a partner for Cipla for one of its drug, that is lanreotide, which treats hormonal disorders and certain types of cancer. If Pharmathon faces problems, Cipla's lanreotide drug will actually face manufacturing issues and will impact the sales of this drug. Now, why? Because if you see, this drug is Cipla's largest or rather biggest US drug, so contributes majority of revenue when it comes to US. So overall, yes, a big negative coming for Cipla, and that's reflecting in the stock price as well.
Okay, so it's actually quite damning, or some of those observations, and Varsha's talked about it, but things like microbiological contamination of the gram-negative bacteria, poor aseptic practices, higher reject limits for particulates, rejected batches, inadequate investigations of some factors like OOS, data integrity concerns. That's why the stock is seeing that kind of pain. I just want to pull up Cipla for you so you can see the stock price on your screen while I'm talking about it right now. It's about 3% down. And we hope to hear from the management. We look forward to that. But meanwhile, Varsha is staying on with us because Waaree Energies is in focus after its energy storage arm raised 1,000 crores for a lithium ion and battery pack plant. Before we're speaking to the company on what their blueprint for expansion looks like, Varsha is staying on with us to talk about this move and what it means for the company.
Well, its subsidiary company, that is Waaree Energies Storage Solutions, have actually raised almost 1,000 crores of funds, now which is from family offices, HNIs and institutional investors, and this will support the capex plan of 10,000 crore for a 20 gigawatt hours lithium ion cell and battery plant. Now this the company has an aim to become fully integrated energy transition company. Onto the order book which stand at around 47,000 crore and has 100 plus gigawatt of order pipeline for overall Waaree Energies. Talking about the expansion roadmap that the company has, the module capacity is expected to reach to 26.7 gigawatt by FY27 with cell capacity of 10 gigawatt, and if you see ingot and wafer capacity, which is nothing but a backward integration that the company is going into, is expected to reach 10 gigawatt each plant. Talking about the battery energy storage push, 20 gigawatt hour lithium ion cell and battery pack has been planned, and the phase 1 will come online by FY27 and the balance capacity will come by FY28, and they target grid scale EVs and hybrid renewable project. Onto the guidance and outlook, FY26 EBITDA guidance has been expected around 5,500 to 6,000 crore, and they are expecting strong H2 FY26 expected with higher cell utilization.
Okay, Abhishek Parekh, Group Head Finance, Waaree Group, joining in for more on this. Abhishek, very good morning and thank you for your time to us here at NDTV Profit. We always appreciate our conversations. Just want to talk about this fundraise that the subsidiary has done of about 1,000 crores. It's, of course, within a larger capex plan of 10,000 crores. How does this fit in? Do you need to raise more funds? And what is the end use purpose or the end use plans of this lithium ion strategic outlay?
Good morning, and thank you so much for having me on the show. So our subsidiary, Waaree Energy Storage Solution Private Limited, which is the battery arm of Waaree Group, has raised 1,000 crore plus from clutch of investors. The objective here is to set up a 20 gigawatt worth of lithium-ion cell and pack manufacturing plant over next 2 years of time. So we are having this project in two phases. First phase is around 3.5 gigawatt worth of lithium-ion cell plus battery pack manufacturing plant expected to commercialize in next financial year, FY27. Another 16.5 gigawatt worth of cell plus pack manufacturing is expected to commercialize in FY28. So over next 24 months of time, we expect the utilization of the money. The total cost of project here is up to 10,000 odd crore worth of money to be spent over 24 months of time. The 1,000 crore raised from the investor set is validation of Waaree's commitment towards green energy transition. We have already picked up more than 600 crore of initial equity in this company we have put in from the holding company. We have also committed another 300 crore worth of equity from the holding company for this project before raising capital from the investors. So all said and done, today we have around 1,900 crore worth of equity commitment, 1,000 from investors and 900 crore from the holding company for this project, which takes care of around 20% worth of overall project cost. So since the project is happening in two phases, we also have debt planning in this company, wherein we will raise the balance of capital from debt for the completion of the project.
Okay, I'm just trying to understand how accretive on your balance sheet this ends up being, Abhishek.
So capital allocation policy for Waaree Group is very clear and very transparent, I would say. Our ROCs and ROEs have been to the upside of 20% plus historically, and we have been maintaining this range of ROCs and ROE. So our board is always committed to stay and ensure that we are committing the same numbers to the investors in the past. We should continue the same. So we maintain the same set of numbers and return ratios from the upcoming projects as well. Whatever we set up, be it module manufacturing, backward integration, our return ratios have always been in the same range.
Fair enough. Abhishek, morning, Alex here. I'm just wondering about, so you've spoken about the capacity and the trajectory and how that's going to be set up. But you didn't mention, is this going to be primarily to EVs? What is the product going to be sold to? And then I have a follow-up on that.
So our focus is very clear to start from the utility scale grid adaptable battery pack, so which will ensure the storage of power at the project site, primarily the solar site, FDRE sites, RTC site, which ensure 24/7 renewable energy. So that is the main product. But we also have fungibility even to move on to other product line, which also includes towards electronic vehicle manufacturing batteries. So battery which can actually be used for mobility as well, we should be having a fungibility towards that as well.
Initial plan is going to be BESS basically, and so therefore the question is, are you already in talks with some of the potential clients? What confidence do you have? Because the space, I think a lot of people are getting into this space, Abhishek. What I'm trying to get is that if there is so much capacity that is being created, is that going to be lapped up very quickly? Are you already in talks? What visibility do you have?
In fact, over the last few months, we have started bidding on projects for BESS. We have also announced few projects wherein your company has got orders for BESS as well. Our existing customers who are buying solar panels, who are buying EPC services from us, are the same set of customers you can expect to continue to buy BESS as well. Since the project has got 24 months of time, our objective is to keep booking the order book while we start the commercial operation of the projects. Not just in India, in fact, overseas as well, the demand for battery energy storage systems is going to the roofs. We really want this plant to be online and commercialized as soon as possible.
I'm going to actually double down on the question that Alex asked. There seems to be more and more people getting into that game. How do you see that competitive landscape play out? Do you think now it will impact pricing? Do you think that there's going to be some strain there?
So what is more important here is not the capacity build up or not the new capacity which are coming up at the pack level. what is more important to understand here is how much backward integrated the capacities which are coming up are going to be. For example, if battery energy storage pack manufacturing you talk about, that's a manufacturing process, but the capital required in those projects is very meager. While what we are talking about at Waaree is the full end backward integration up to cell manufacturing as well, which is highly technical in nature as well as very capital intensive. In fact, the current capital committed 10,000 crore, more than 80-90% of the capital is going to be for the backward integration, which is lithium ion cell manufacturing. And a smaller portion of capital will be going towards the pack manufacturing. So majority of capacity announced in markets are not integrated. That's a differentiation that we are getting to the market. And which is why the customers are more confident to work with Waaree, because our supply chain from day one will ensure transparent and upstream supply chain with the traceability up to the cell manufacturing.
Abhishek, good morning. Hiral this side. Now, with everything said and done, there are a couple of concerns that a lot of analysts are pointing out when you talk about the renewable energy space, where additions are expected to slow down in FY27, possibility that the government could pull back incentives as well, and the grid constraints also limit execution. Now, if all of this is something that you're looking at, is this already factored in the kind of trajectory that you're talking about right now?
But whenever we make our financial internal working for the projects that we are bidding for, one thing that we always ensure is to build the order book first before we start the construction of the facilities. And I think we are going to continue the same here as well. In past also, before setting up capacity, we were fully loaded with the order book. In battery manufacturing as well, our plan is to do the same and replicate the same with support from our existing customers in India as well as overseas. So you can expect the order book building consistently towards the rear end of the commercialization of the project of BESS.
Okay.
As long as your capacities are booked with orders, there's no such worry about the demand and about the capacities and supplies which are coming up in markets.
Okay. So tell me one thing now. The manufacturing capacity has been overshooting the demand, and this oversupply has actually resulted in correction when you talk about module and cell prices as well. What is that number that you're baking in when you talk about the pricing aspect and that indirect impact that could be coming in on the margins as well, Abhishek?
Since the pricing in the market are based on the reverse bidding mechanism, you expect the price to be competitive going ahead as well, right? So we have to be competitive enough to ensure that we are able to deliver to our customers on time and in the expected pricing required by the customers.
Okay, so pricing is something that we should be watching out for as well. But thank you, Abhishek, so much for joining us on the show. Always a pleasure to speak to you. In spite of this industry really being overheated, in fact, just a couple of days ago, you had a note that came in from a Kotak, if I'm not mistaken, and a Bernstein, which has categorically cut target prices on a Premier Energies and a Waaree, indicating concerns of oversupply and pricing issues because of the oversupply 100%. As well. And FY27 is where you will see all the negative action that could come in.
Because all of these BESS projects are going to be bid for. And if there is excess capacity, ultimately prices are going to fall.
I mean, I'm wondering, I think it's also going to come down to execution. Who actually manages to put out something that works at the right price?
And if you have solar capacity that you're already creating, backward integration as the management of Waaree was talking about is going to come into play as well. If you don't have to bid, then you're okay.
Yeah, but then that's where, the trick of it's a trick or a treat from here on is the question. Halloween comes in late for them.
More trick than treat for the markets. 0.25% down. Even now, not really seeing that kind of a move coming up. The treat really for IT stocks. Look at the Nifty IT. Nearly 0.75% up. That's the only thing that really is, maybe it's a contrarian play today, but IT is where all the action is as far as markets are concerned. We'll take a very short break, but on the other side, we get you an exclusive conversation with Keynes and their partners who have invested in the Semicon business. That from the ground when we return.
A very special moment for us as we announce NDTV Master Stroke the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined.
Welcome back to India Market Open. It's an interesting day of trade for all the jewelers, you know, from a Titan to a Kalyan Jewelers, Senco, TBZ, as well as PN Gardigal. You pick up any of the jewelry counters in trade today and you're seeing a very strong momentum that's been picking up, and that's the trend that we should be talking about as well. But first up, a strong business update that's coming from Titan, from Senco, though volumes have been a concern as well. But let's head across to my colleague Mahima, who's standing by, who's heard the conference call and understand what the Titan management actually highlighted when it comes to the rationale for foray into lab-grown diamond space as well, and how it will actually shape the market share and the industry as a whole, being market leaders, at least in the jewelry segment so far. Mahima, over to you. What have you picked up so far, which is absolutely crucial?
Right, Hiral. So, I'll start with the rationale that the company gave, justifying their foray into lab-grown diamonds. The management said that India is under-penetrated in terms of where the studded mix stands, and pricing of lab-grown diamonds gives opportunity for us to get more customers and to get our studded mix in place. Biocon is going to be a bridge between aspirational customers who want to buy diamonds and between that and natural diamonds. In terms of commentary coming in on LGD pricing, what they've said is that in the last 2 odd years, the pricing for lab-grown diamonds has significantly fallen. Overall, lab-grown diamonds right now is just 2 to 4% of the studded market. And, how consumers react to this is going to shape up the way lab-grown diamonds pricing also fares, and in terms of how the market share for lab-grown diamonds will also increase. In terms of natural diamonds, they said that they'll continue to invest in natural diamonds. The objective is to be leader in both lab-grown diamonds as well as natural diamond space, and they don't expect any kind of cannibalization happening as of now. In terms of store expansion, they've said that for the moment they're looking for 8 to 10 stores in the near future in Mumbai as well as Delhi right now, but they said that they're not just going to focus on metro cities, they'll also focus beyond that. In terms of pricing overall for the lab-grown diamond jewelry, they've said that they want to make pricing very attractive, and they've also said that their pricing is much lower than what the peers are doing right now. Now, for margins, they've said that right now they'll prefer, pricing to be attractive enough and not focus on margins right now, because overall the contribution of Beyond to the total jewelry sales is going to be very negligible and will have a negligible impact on overall margins. Lastly, in terms of where their channel presence is concerned, they've said that it's going to be omnipresent and they're going to soon launch it on e-commerce as well. So this is the overall key takeaways of what Titan management has said about the new foray into lab-grown diamonds for Beyond.
Okay, in fact, let's listen into what they've said in their conference call today, and also talked about their store expansion plans.
Our objective is to be a leader in both segments and be in the pole position of both. So it is a very measured play. We opened the first store. The second store will open in NCR, and we hope to open a bunch of stores largely around Bombay and Delhi.
Okay, so
all right. The other stock that we're talking about this morning is InfoEdge. Jobs peak December 2025 data indicates 13% growth led by hiring in non-IT sectors, while hospitality sectors has grown 29% led by Mumbai and NCR. In fact, Puneet joining in with more details. Look at how the stock has been moving. Puneet, what is it about the business updates that has been working?
Well, there are multiple key growth drivers, and as you rightly said, the headline number of 13% growth did signify a growth, but across sectors there have been actually a very strong performance in non-IT space as well. So hiring is up 13% in the month of December, that's the headline number. Insurance sector has actually grown by 34%, while there's been a 57% growth in the overall hiring for freshers. And that's probably one of the key reasons why the stock's reacting positively. Apart from that, hospitality also, as you rightly said, up 29%. Banking has witnessed a 7% growth. And while IT and banking are the leading indicators of growth, the growth in high single digits is still something that the street will take with both hands. 15% growth driven by the oil and gas space. And finally, non-metro cities like Kochi and Jaipur are starting to be hiring hubs essentially in the non-metro. So probably this could be a trend that we have to continue to monitor. But first signs of fresher hiring is probably one of the key reasons of the positive outlook on the stock today.
Okay, this is very interesting data that we are picking up so far. Thank you so much for when you talk about the InfoEdge. And Tamanna, when you talk about the jobs peak report as well, the hiring is happening in the non-IT sector, which has seen good growth, and that's an interesting trend that we should be watching out for as well.
I think that's why you're seeing that pop as well, Hiral, because there has to be a shift somewhere. The kind of growth that IT was traditionally giving is not going to happen as more and more AI adoption takes place. That's just a sad fact, whether we want to say it or not.
So that's on hiring, but the fact of the matter is that a lot of fund managers are still betting on IT as the sector of 2026.
But that's from a stock return perspective.
Yeah, but then again, will it be AI? Then it comes down to the game that will AI adoption in India be the key theme to watch out for?
Oh, 100%. Maybe we'll be late on the
we will be
train.
late, but at least in terms of the execution, I think it is going to be key as well when it comes to AI adoption. But now it's time for an exclusive interaction. Neeraj Shah, my colleague, visited Kaynes Semicon's Sanand, Gujarat OSAT plant and caught up with Raghu Panikar, CEO at Kaynes Semicon, and Vijay Muktamat, founder and CEO at Sensesemi Technologies, to talk about the company's semiconductor business growth outlook. And, this is a conversation that we're having ahead of the budget as well, to understand what are the expectations when it comes to budget 2026, what is the industry looking out for, what is their watch list going to look like, because it is budget for Bharat. Let's listen in.
We are at the Kaynes Semicon facility in Sanand, and it's a high-tech facility. But the more important thing is that on the conversation over the next 10 to 15 minutes, we have with us the CEO of Kaynes Semicon, Raghu Panikar, and the founder and CEO of Seal SQ, Carlos Herrera. And both the companies have entered into a partnership, a definitive agreement, whichever way you call it, for building out a cutting-edge semicon facility, if I can use that term loosely, in India. Raghu, can I start with you? What is it that you are attempting to do here with Seal SQ?
Sure.
Thank you. Welcome to NDTV Profit to our facility, and this is the first time that we are doing inside the plant. As much as you can see the investment that we have done, this is a $350 million project. We already invested $50 million. We intend to do all the cutting-edge technologies in the semiconductor assembly and test. One such partnership with SEAL-HQ is what we're trying to attempt in India. The first time we are going to bring in technologies from a quantum computing standpoint, from a standpoint to see how the various certifications that are going to come in, and we are going to do such kind of a products in the assembly and test.
Okay. Carlos, as I understand, you already work in India at multiple levels, maybe B2G, B2B both. How do you see the India semiconductor ecosystem currently as it stands? And what does this partnership with Keynes Semicon bring to the table for you and for India?
So India has always been and always will be one of the powerhouse on the fourth industrial revolution, right? The assets are here. Basically what we are doing is combining them, bringing them into one place, which is this location here. SEAL-HQ has become one of the leading quantum companies. Quantum computers are arriving in the next 3 to 5 years. A quantum computer will break all existing semiconductor security. So we need to upgrade the legacy systems into the next generation semiconductors. So basically, traditionally, semiconductor companies are not really much concerned about security. That was not their business. There was more like design and performance. Now, with the arrival of quantum computer, they need to change that mindset. That means that they need to invest in post-quantum technology. So SEAL-HQ is with Keynes. We are building a personalization center. So it will be a center where those chips that we are manufacturing here will be injecting keys, what you call post-quantum algorithm, that will allow that chip, when it's installed into a final object, let's say a connected car, a drone, a satellite, a smart meter at home, when that chip is embedded into that device, a quantum computer will not be able to attack. So that is something that needs to happen now. In the United States, now is a new legislation with the name CNSA 2.0 that says that by the year 2027, every single object needs to be PQC ready. And by the year 2030, if you are not, you will not be able to sell your object anymore. So imagine the consequences that will have if the entire semiconductor industry in India do not upgrade to the next cycle of development. We are entering, quantum is a new computational paradigm. A quantum computer will break RSA, triple DES, the algorithm that has been here for 50 years, right, that they were not able to be compromisable. Now they are with quantum computers. So the time is right. And it's a huge opportunity in terms of business for India, right, because the knowledge that you have already gained on everything which is satellite connectivity, launching, you're launching the rockets, you are now able to integrate AI into processes. If you federate that now with semiconductors, which is the final object that goes into the core of any security infrastructure, then you leverage the industry.
Yeah, interesting.
All right, that was an exclusive conversation from the Keynes plant in Gujarat. But moving to the big markets conversation this morning, we have Shailesh Rajban, CIO, Equity Investment at Nippon India Mutual Fund, joining in on Talking Point. Shailesh, thank you so much for your time to us, and always great to have you on NDTV Profit. I just want to get a sense from you on how you're seeing right now the entire, I would say, hesitancy that we've seen in Indian markets starting 2026. All said and done, nothing much has changed. Tariff concerns remain. The only positive in light is that the first set of Q3 business updates show that maybe you will have a good quarter. Does that become the most important factor in your view?
So, good morning. The clear challenge has over the last 18 months have been expensive valuations for the market, right? And I think we have seen that 18 months of, I would say, time correction in markets. And in select pockets, we have seen also price corrections, right? And expectations have actually become extremely low because last 4 to 8 quarters have been very weak in earnings. So I think the support from GST, support from the income tax cut, support from general better liquidity in the environment actually should allow for earning growth recovery, and that is our base case, or that is our critical expectations. So when you look at initial trends are just, it's too early to talk about because these are just headline numbers. We don't know yet on what happens to profitability in the quarter and thereabouts. But over a 12-18 month period, earnings from where we stand should get way better. Obviously, this is ex geopolitics and ex what happens in tariffs. But generally, there is a greater sense of earning recovery possibility given the fact that the base has been bad, given the fact that the support has come from policy and all that to enable growth recovery. And I think this will feed reasonably well from an earning point of view. Unfortunately for markets, there is no scope for PE multiple re-rating based on normal conditions. And you need really explosive growth for anything to happen. So earnings will and possibly will be the key source of driving for returns for investors over the next 1 to 3 years is what we think about here.
Growth is at one end, but I'm just wondering, Shailesh, are you right now looking maybe at geopolitical factors as the biggest concern? Are you looking at the budget as the next big trigger coming in, government capex maybe pushing the story ahead?
So all these factors will matter, but I think the most critical is with the low base of earnings where we stand, our earnings should start hitting early double digit. And that is what I think will give you all the drivers for returns in the market. See, budget, for example, a lot of things have always been done even outside the budget to support growth, right? And there is very little which is really left in the budget to really enable, it's more possibly easing more policy and things like that, but there is very little really led to give a push because there's always been a large support to infra. GST has already come about, which obviously has impacts on tax collections, but I think is a structural positive for India. So I think the most important outcome, yes, obviously a year out or so if geopolitical environment normalizes and global growth recovers, which enables our export to recover, it's a big positive or an extra positive. But the existing base is so low of earnings that we should start on its own hitting 10% type of earning growth and maybe feed into 12-13% earning growth the next 4 quarters. And that I think is the factor which will come from low base and all the factors I have earlier talked about.
Shailesh, good morning. Hiral on this side. Interesting take when it comes to the way your earnings is expected to catch up. Now, to add to that, which are the specific sectors or large caps that actually offer that kind of attractive valuation as well, if you have to look at 2026? I mean, you saw the kind of downtick we saw in stocks like Reliance Industries yesterday, HDFC Bank. I know you can't talk stock specific, but do you see opportunities emerge in any of these baskets?
Interestingly, many sectors will see increased base of earnings in the next 3 to 4 quarters, right? First, starting with banking themselves should be in reasonable better shape from where they have been in the last 12-18 months. So earning growth there should get better. Select segments of financials like insurance and all are already doing reasonably well, and their earnings after this impact of GST which is there should start getting into a better shape 6 months out, right? Then you have, we are possibly already in the phase of very weak earning for IT services companies. That should rebound a bit. We are recovering from a low power growth and power utility earnings have really been flattish. I think that is one space which will see an earning recovery which is possible. Even expectations in many sectors like pharma and all are actually very, very low from what is really possible in terms of the delivery of earnings which can come from them. So most of these sectors now expectations have come down to 7%, 8% in terms of earning growth, which I think is a lowballing of really the earning potential of these businesses. And I think as you start seeing some benefit and they start hitting that early double-digit kind of revenue growth, I think you should see that sector is also performing well. Even consumption today, consumption discretionary, for example, auto is doing reasonably well, right? But other spaces are not doing well and expectations are running very, very low. Some of these companies could start benefiting from the low base of the last 2 years and should start showing better earnings. So I think overall, there is a reasonably broader base construct of, at least in the large cap space, earnings starting to recover. And that should enable, and where valuation expectations, valuations definitely on a relative basis may not be, on an absolute basis may not be very cheap, but I think on relative expectation basis, in a lot of these cases, there has been compression for 3 years, 5 years and all that. And that creates a reasonable base for at least earning-led recovery in the large cap spaces.
So, you're talking about earnings recovery in the large cap space. Which structural themes are you looking at? Because, I mean, your view when it comes to specifically the PSU banking space or even the PSU space, do you think these are re-rating candidates from here on?
Yeah, so interestingly, PSU banking space has re-rated fairly significantly. In fact, in the last 1 year, if you see, they have been very strong performers, right? Our bias today, based on the relative outperformance of the PSU bank space, which has happened, I think, is towards large private sector banks, which I think have consolidated. Most of them are actually flattish on a 12-month basis and have consolidated enough, and their outlook only gets better as we move into the next few quarters. So I think the large cap bank private sector space is where I think there is a meaningful opportunity to look out to. Select PSUs, which are leaders in the space, have sensible valuation still, I think, and there is an opportunity. But the broad-based pack of PSUs has done well on the back of strong flows in the mid-cap segment of the market, which these guys generally are present in.
Shailesh, since we're speaking with you at the start of the year, it'd be safe to say equity investments overpromised and underdelivered in 2025 from the perspective of what we saw in other asset classes. And the start of the year seems like you're going to see maybe metals and a lot of other asset classes still promise even more. What are you mentally penciling in for the kind of year that we're seeing?
So interestingly, the market euphoria of the last 12-18 months, I think, has given away. So that's a reasonably better starting point, right? But it's clearly not that the markets are so cheap that, you know, you will surely have some aspect of a multiple re-rating in the market. I don't think that is still possible, right? So I think our base case is whatever earnings deliver, P multiples remain thereabout, because the geopolitics is actually, we are possibly in the worst of what's happening globally as we see. So I think over a 12-month period, you would get earning-led possibilities certainly exist in the market. You mentioned other spaces like, you know, metals and especially precious metals and all have done very, very well in the last 12-18 months. I think they have been compressed for a 5-year period. Some of those would have given minimal return in the first 7 years, and then they would have given 3 years return in a very, very short period of time. See, these kinds of bursts of returns are possible in any category, right? For equity markets, that's just been a 18 months of flattish market, right? And maybe if we see earnings surprise us maybe in the second half of the coming financial year, and then you might have some surprises or upsides possible there. But purely our base case would be more earning-led returns, especially for the large cap space, and the consolidating market in a mid and small cap space is what we see, at least for the next few quarters.
Consolidating market in the mid and small cap space. Now, among these, Shailesh, I'm wondering what you're finding exciting in terms of thinner slices of pockets, like cables and wires, for example. Within BFSI, is NBFCs now looking better, and maybe private banks will take a backseat? I'm wondering if there are any opportunities like that on top of mind.
So it is, you know, it's a very, very broad market in terms of wherever valuation corrections are happening, there are some opportunities coming out. So they're across different pockets. So today, one of the most underperforming spaces is the QSR space, right? Because haven't delivered broadly in terms of growth. Plus, excessive investment and rapid expansion has created, I would say, a weaker phase of earnings for them. So wherever we are finding weak phase of earnings, because stocks are only correcting where earnings are weak, I think that is where, if surprises come, you have large upside. So these are spaces which are there. QSR is one. Power utilities is another, where, you know, for various reasons, it's not been a great year from a power volume point of view. And but I think their valuations are sensible in that area where, you know, investors can look at. IT services is another which is there in, I think, where there is enough consolidation. Expectations of growth is 0 to 5%. So if there are some surprises there, you can have some reasonable outcomes. And large banks themselves. I think large banks have seen pressure on margins. And I think over a period of time from here on, I think they should get better from what we stand. So their earning visibility is strong, books are good. So these are 4 or 5 spaces where we think there is a better place to deploy capital related to the other aspects. Also, please understand, in the smaller mid-cap spaces, the corrections have been, I would say, only in pockets of the market. So, for example, maybe 10, 20, 30% of small-cap space has corrected, right? And I'm not referring to the below small-cap market, which might have corrected a lot more. And even in mid-cap, about 10, 15% of the segments have corrected materially to be able to worth a relook from a, investment point of view, right? So I think wherever these corrections are happening, they're happening on near-term bad news. So the whole idea is to get a few good ideas out of these type of businesses where valuations are in your favor, expectations are running low, and hence you have reasonable outcomes. You don't have a very, very strong growth also. You have a reasonable outcome. You have benefits coming to the investor. So I think these are four spaces which I would want to touch about. Very specifically, cables and wires or any specific very small segment of the market, you may have phases of recovery, but I think generally valuations everywhere have not come off.
Valuations have not come off everywhere. You could see opportunity. Shailesh, your view when it comes to IPOs? I mean, absolutely overvalued. The kind of valuations that the IPOs have demanded in the last couple of months of 2025, it's been exorbitant. People have lost money as well. People have made money. But it's become a tricky situation. How are you looking at 2026 with regards to a couple of big IPOs that could be slotted? And what would you advise investors to do?
See, there is generally a greater amount of interest when an IPO comes because there is a lot of media news flow, there is a lot of research at that point of time, and there is a lot of investment banking activity around that point of time, right? Our idea is to judge them versus what is available in the market for similar quality and similar growth businesses, and look at them from a 3-year kind of an horizon, whether they would be valuable enough for us to participate in. Wherever we are finding that near-term valuations, see, there will be good businesses as well, but if the near-term valuations are 1 to 3 year basis also don't offer any upside, it's very difficult to participate when you have alternatives which are available, which are attractively priced, because like I just mentioned, corrections are starting to happen. So our focus would always be to benchmark them with existing good quality businesses with similar growth potentials, and just make sure that you don't end up overpaying because something is new, right? Because for them, they still have to live the governance market, they still have to live the public market in terms of corporate governance and various other aspects. And any transition we have seen, from private markets to public market does take time unless they are sensibly priced in the market. Otherwise, you have extreme volatility because market needs that time to understand the variability in these businesses, the potential of these businesses, and as also the fragility or the strength of these kind of businesses. So I think our approach is very simple: benchmark them versus existing high quality businesses which we own and which are available in the marketplace today to participate in. And if you're finding better options in the listed space already, we prefer those over the companies which are IPOing. And when you have very good quality business in the IPO market as well, we do review them and take a call. But valuations are central to a lot of our decision
any major IPOs that you looked at in
over a longer term we benefit.
Shailesh, any major IPOs that you looked at in 2025? Now you can, in hindsight, tell us about.
So we would have looked at every single IPO. Yeah, no. So we could have looked at every single IPO in the last 3 years because we have a large pool of public capital which we deploy, right? And we have reviewed them, benchmarked them versus what is available in the market. And in some we have participated, in some we have not. And purely it's a judgment based on what the fund managers and the team and the research thinks about what is a relatively better available, attractive opportunity in the market.
So let me ask you.
And we are open to
let me ask you a follow-up.
Yeah.
Let me ask you a follow-up on that.
Yeah.
Were there any regrets or buyer's remorse in any of those IPOs? And was there any FOMO on the ones that were missed out?
So interestingly, because we go through a series of work internally, right? It takes maybe 1 to 3 months kind of an effort to really get some sense of any business, right? So we have enough and more benchmarking internally done to make sure which we let go and which we participate in. So I think, and also please understand there are 5,000 companies listed in the market, and something or the other we are missing daily, right? So if we live by FOMO or if we live by anything, it's about as a process, what do we want to follow? What do we want to own? What type of risk we would want to give to our investors? These we have codified ourselves to make sure that we work within a framework which is right or which is as per the promise to the investors which we are trying to service. So I think large number of issuers, a large number of companies coming for an IPO, I think it's not a bad thing. It's just that it takes away a lot of bandwidth, and second, within this there is a chance that good quality or poor quality businesses get invested in, and that is what we are very, very careful about to avoid them. And also we don't want to pay excessive valuations to businesses in anything. Even in the listed space, we are just careful, as valuation is an important central theme for us when we create or do sizing in our portfolios.
Okay, so you know that's where the large funds have an advantage, which retail investors sometimes don't. It's a bit of a hit and miss. So wanted to know that perspective. Shailesh, thank you so much for coming in and speaking with us. Always a pleasure to have you on. Shailesh Rajban there, CIO of Equity Investment, Nippon India Mutual Fund. And with that, it's a wrap on India Market Open. At least as we're wrapping up the show, there is some recovery in the markets. Gold is shining all the way. Even when you look at the stocks, Titan ke saath Kalyan is also running up.
Kalyan, TBZ, I think that entire pack is seeing good growth. But you know what will be interesting over here is if the value comes down in terms of gold, the negative, volume growth that they've seen right now, what will that do to the companies going forward? That's going to be a concerning area that we should be looking forward to.
Yep. So all that and more continues on NDTV Profit. But for this show and for now, from Hiral, me and the team that put the show together, thank you so much for watching.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on
Hello and welcome. You're watching NDTV Profit and this is Ask Profit. I'm Mahima Vachrajani and with me is Puneet Jhaveri. And before we move on to the queries that you have for us on the show today, let's take a quick look as to how the markets are doing. Well, let's try to pull up the Nifty 50 and see as to how the overall sentiment is. Right now, the Nifty 50 is completely in the red, down by about 0.2%. The Bank Nifty also in tandem with where the Nifty 50 is. Let's try to pull that up and see. The Bank Nifty, in fact, seeing further pressure as compared to where the benchmarks are. It's down by about 0.4%. The Nifty 50, let's try to pull the heat map up. I think something that's really topping the chart today is Titan for Nifty 50 and largely on account of the business update coming in. Of course, they also did their con call with regards to Biocon and gave a lot of insights as to what their plans are with regards to this counter. But the other space that's doing well is also IT. So Wipro is other counter which is doing fairly well, up 2%. Then there's Sun Pharma, which is up also 2%, and some IT names, HCL Tech, Infosys, Tech Mahindra, all up by about 1% each. Something like a Hindalco is also up by about 1%. But something that's not doing well on the flip side is Cipla. You have Tata Motors PV, which is down 2% as well. Maruti Suzuki down 1.3%. Max Health, HDFC Bank. HDFC Bank continues to be under pressure, down by about 1% today as well. Let's try to pull up the advanced decline ratio and see as to how that is faring, and then also the sectoral heat map to see as to what sectors are doing in trade. There you go. There is 1,255 odd advances versus that of 1,176 odd decline. So slightly in the favors of the bulls, and the chart throughout the trading session till now has been in that crisscross range. So it's a difficult day of trade, but broader markets doing slightly better. At least the mid cap 150 is what we are seeing right now, Puneet, and that's reflected in the advanced decline ratio chart as well.
Most certainly, and the broader market has actually been one of the key strengths for the market in this point of time. While there have been a lot of casualties over the last few days, when we pull up, the BSE 500, that will be a good picture because while we have seen something like Trend get hammered in trade yesterday because of the business update, you also had V-Mart, V2 Retail also taking the brunt of that pressure. Today, CSB Bank, post that quarterly update, was up. Now, second consecutive day where the stocks are under pressure. ZF Commercial is a surprising name there. That's also down 2.9%. But on the uptick, Kalyan Jewellers on the back of updates. Senco is also doing very well. We've also seen a very big move come on KPIT after a really long time. While quarter 3 updates and previews don't estimate too much growth, it's a positive session nonetheless for this counter. So overall, that's largely the rest. But Mahima, with the first query, what are you picking up?
Right, so the first query that we have is from Mr. Murli, who's writing us from Bengaluru, asking about TBO Tech. He's holding 200 shares, bought at the levels of 1626. And the current market price of the counter is 1578, so he's sitting on a loss of around 10,000 odd rupees. Wants to know as to what should be the next course of action. And of course, to answer these questions, we're joined by Avinash Gorakshakar, who's the founder and head research at Avinash Mentor, joining us now. Avinash, a very good morning to you and thank you so much for taking out the time. Your view with regards to TBO Tech?
So I think, good morning, Mahima. I think if you talk about TBO Tech, my sense is that, see, the business model is very robust. I think they've presented decent Q2 numbers. My sense is that, in these kind of stocks, you have to look at a compounding kind of, return and not a very short-term kind of return. The stock has corrected from its high, but I think if you look at the overall margin outlook and the business performance in Q2, I think the major revenue for this company comes in the second half of the financial year. So we are hopeful that Q3 will be much better as compared to Q2 and on a YOY basis as well as on a sequential basis. So I think, one should continue to hold. You have to give a time frame of at least 8 to 12 months here. Hopefully, I think the performance for Q3 should be better. Rather than looking at the short term, I think if the investor can give 12 to 15 months, he can not only recover his loss but make a decent risk reward here.
That's with regards to where TBO Tech stands. The next question that we have is on Piramal Finance. It's not every day that we get a question for this particular counter. And Shrikant from Hyderabad is holding 10 shares bought at the levels of 1081. Wants to know as to what should be the next course of action for him. Avinash, what's the view like?
No, I think he's made a very decent amount of profit, and I think considering the kind of tailwinds we are seeing in the NBFC space, I would not be surprised that the second half of this financial year, Mahima, should be very strong for Piramal Finance. My sense is that since he doesn't have any immediate emergency, he should continue to hold. I think he should expect a decent price post the March 26 number. So I think structurally it remains to be a good hold. I don't think he should book out at these levels.
Okay, all right. The next question that we have is on Chambal fertilizers. Govind Kumar from Hyderabad is writing in. He is bought at the levels of 570 and he wants to continue to hold this for the next 2 odd years. Wants to know if that's the right thing to do. Avinash, will Chambal fertilizers be your pick in that space?
Yeah, I think all the fertilizer stocks are going to be in buzz, considering that the budget is likely to present some concessions and benefits to the agri sector. I would say that he's purchased the share at a slightly higher level, but considering the fact that this year we had a good monsoon plus rural demand has been pretty good, I think the next 12 to 15 months should be reasonably good. But in these kind of companies, I think one thing is very clear, that in case the monsoon fails or there's a weather kind of problem, then the stock will underperform. So I think as of now he can hold on. I think he could expect some positive news flows in the budget, and that could be a near-term kind of trigger for the stock.
All right, so that's with regards to where Chambal fertilizer stands. The next question that we have is from the jewelry space, and every jewelry stock today is buzzing on the back of course, a lot of business update coming in. You have Titan, Kalyan, Senco, all of these counters buzzing in trade. But the next query that we have is from Shivani, who's writing us from Mumbai, asking about PC Jewelers. She's got 1500 odd shares and she's purchased at the price of 11 per piece. Wants to know if she should continue to hold this and what could be the next target for her. Avinash, the stock is currently trading at that 10.5 rupees. Her buying price is at 11 rupees. Do you think it can cross her buying price in the next 1 odd year?
Yeah, I think the overall tailwinds in the gold jewelry space is encouraging, Mahima. But I think, if you look at Titan, Kalyan, Senco, and then you compare PC Jeweler, I think one clear thing is that the management profile, in terms of corporate governance, in terms of, the balance sheet quality has not been great. Of course, PC Jewelers has now settled all their old dues with the banks. But I think this is one of those shares where you need to be a little careful. So I think, any rise, say to 11, 11.5, I think in the near term should be an exit. I think it's better to put your money in some quality names, where the institutional investors, the ultra HNI investors have got a high degree of comfort. So PC Jewelers would be a sell on rise.
Got the view, Avinash, and welcome to the show. But let's go across to the first caller for today. This is coming in from Mumbai, and Udit has a stock query for us. Udit, very good morning. Welcome to Ask Profit. What's your query?
Mahima and gents, good morning.
Good morning, Udit. Go ahead.
Okay, my query is on Dhanuka Agritech, Punit. I have 50 shares, 1,500 a piece, sitting at a loss. I know this company has got sound fundamentals.
Okay.
I just wanted to know from Mr. Avinash as to how long does he think, based on the valuation of the company, I should be able to cover up my losses in this, and can I add up at the present level?
Udit, firstly, when did you buy into this counter? And
24. I think when this shares was around 1,519 and it was at its peak at that point of time, I bought it and then I averaged it out when it was going down.
Fair point, Udit. Avinash, on Dhanuka Agritech, would you suggest Udit to continue holding on, and if also, is it a good time to average down on this counter?
Yeah, I think, if the investor can hold on for a slightly longer period, because typically, agrochemical companies, Puneet, the first half is supposed to be a much more remunerative quarter. Of course, the second quarter also revenues do come in, but April to September is the peak period. And after that, sales start tapering. But this time, I think one good part is that the monsoons have been very good. Rural demand has been great. And I think Dhanuka Agri has got a very large SQ kind of product kind of base. So to that extent, it's a well-established player, very strong geographical reach, has got a lot of patent for its products. So I would say that, if the investor can hold on for the next, say, 12 to 15 months, only then he can make money. And I think he should average out, because unfortunately he's purchased the stock at the peak level. And today, the stock is 1100 odd. So unless he averages, I don't think, the risk reward can get better. Only if he does that and holds for the next 12 to 15 months, he could get a better, decent reward.
Okay, all right. So that's with regards to where Dhanuka Agritech is concerned. The next question that we have is from Arvind, who's asking about Balu Forge and wants a long-term outlook on this. Arvind, a very good morning to you, and how can we help you today? Hi, Arvind, can you hear me? Okay, I think we seem to have lost the caller, but we do have his query, and he wants to know if this is the right time to make an entry into Balu Forge. Avinash, the stock is locked in lower circuit today, but according to you, do you think it makes sense to make an entry right now in Balu Forge?
See, I think first of all, Balu Forge is a engine component manufacturer. They make crankshafts, for the passenger car and the utility vehicle sector. So I think, the product is well established. A lot of marquee investors like, Ashish Kachole have also invested in the company. But I think today the stock is down, considering that some reports have come in that there has been some tax raid on the company, and that is why the stock is going down. My sense is, if the investor has a slightly medium to long term kind of, time frame, then I think he should look at it as an opportunity. This is a well-established company, but I think unless we get some more clarity on the tax rates, we'll definitely like to know that. But overall, I think if the investor has got a high degree of risk appetite, he can definitely buy in. But please remember that in the near term, the stock may underperform.
Review, Avinash, but let's go across to our next query, and this is coming in on Paras Defense. Our viewer, Sush Devani, is asking this question, holding at 673 rupees per share. And currently holding almost 660 shares. So sitting at a profit of almost 8,000 rupees. Not mentioned the time frame. So let me go across to Avinash yet again. Avinash, on the fundamentals, this company has done well for investors over the last few years. Your view on Paras Defense?
But I think Paras Defense, Puneet, the investor can hold on. See, because it operates in a very niche space and has a very healthy order book. And I think in terms of the positioning, I think it is one of those niche players. So my sense is that, at least over the next, say, 12 to 15 months, hopefully the budget is coming in February. There could be some announcements on the defense side. So I think, the investor has made a marginal profit, but if he can hold on for the next 8 to 12 months, I think he could definitely make a better, risk reward. So continue to hold.
Okay, so that's with regards to where Paras Defense stands. But viewers, time to slip into a very short break. We'll be right back answering all your queries on the other side of the show.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Welcome back to Ask Profit right here on NDTV Profit. We are also being joined by Ajit Mishra, the SVP Research at Relegated Broking at this point of the show. Ajit, before I come to you, let me go across to our next caller very quickly for the next query. This is coming from Chennai and Venkatesh has a stock query for us. Venkatesh, very good morning and welcome to Ask Profit. What's your query?
It's a very good morning to you, Pete, and your team. This is regarding the query of Mahindra and Mahindra Finance. Okay. I am holding 300 numbers at the rate of 349.
Okay, all right.
Okay. And, I've been seeing that for the past 2-3 days, stock prices are going down.
Yeah.
Is it the right place to stay on, or should I shift the money to Bajaj Finance, which I am holding from stock?
Okay, and so Venkatesh, largely I think the impact on the share price is led by the quarterly update for quarter 3 on Mahindra and Mahindra Finance. But apart from, I think you said you already have Bajaj Finance, right? And you want to add more positions if the recommendation is to exit. Is that correct?
Correct.
Correct. Got it. Then let me.
Can I hold on with the same thing, or should I add more on Mahindra and Mahindra Finance?
And you can hold on to this counter for some more time, so I can get you the long-term view on this, Venkatesh. Okay, you can hold on.
I'm a long-term holder. I would like to hold on for about maybe a year or so.
Okay, a year or so. Got it. Avinash, let me come to you on M&M Finance then. Firstly, because Venkatesh has bought it at 349. Stock's done well for investors, but of course it's at the higher point of the purchase price. Would you recommend him to continue to hold on to M&M Finance or switch to Bajaj Finance, which he already has? Your view on both stocks?
No, I think my guess is that, M&M Finance does a lot of tractor financing, commercial vehicle financing, and both these segments have been doing very well. In fact, tractor sales have been touching new highs. Most importantly, the parent M&M is doing exceedingly well. So to that extent, my sense is that, you should expect a decent performance in the second half. Hopefully, volumes grow in both the tractor and the commercial vehicle segment. That will benefit M&M Finance. And plus on the asset quality, a lot of homework has been done by the company. So I think, you need to give in some more time. Maybe, the next 6 months are going to be better than the first half for M&M Finance. And hopefully FY27 should also be a lot better. So I think, with agri demand picking up, agriculture production going up, you could definitely see, M&M Finance doing better. So I would suggest him that he should hold on. He should not worry about the volatility on a daily basis.
Okay, all right. So that's with regards to where M&M Finance is concerned. The next question that we have is with regards to where Camlin Fine is concerned. And this is from Satyan, who's writing us from Trichur. He wants to know, and this is a slightly long query. What he's asking is that Camlin Fine Chem, what he's saying is that he's advised to shift from chemicals and allied to something like Aarti Industries or Natco or something like, alkylamines. And he wants to know if he can get a perspective whether this is the right thing to do or not. Today, in fact, there was an INCRED note which has hiked the target price for Camlin Fine Chem, and they've tagged, the target price that they've given is 480 for this counter. So, Avinash, I'll come to you on this one. A very specific query. Do you think that's the right thing to do?
No, I think, my guess is Camlin Fine can definitely be held on. But one particular observation about this company is that it's got a very volatile track record. And I think chemical space is one thing where currently I would say that, we would prefer to observe the Q3 numbers, because second half is typically a stronger period for most of the chemical companies. Camlin Fine is a specialty chemical company, has a good growth trajectory. But I think once you get the Q3, I think a fresh review can be considered. But till that time, I think, they have a decent order book. The growth trajectory looks decent. So I think you should hold on. Wait for the Q3 numbers and then we can take a fresh review. So I think no fresh buying suggested, but continue to hold the position.
Okay, all right. So that's with regards to where Camlin Fine Chem is concerned. But moving on and taking a look at the F&O space, we have Sharad joining us to break that down for us. Sharad?
Well, it's a very range-bound day of trade coming in. The options data is that's what's suggesting. Sensex also, you might be seeing a sea of red in the back over here, especially from Trent and Maruti HDFC Bank. That's where the selling is happening. But if you take the jewelry, pharma and IT space, there is a strong buzz in the mid-cap space. The Titan, Tech Mahindra, HCL Tech, all of them doing well in trade. But of course, Titan is the stock which we are focusing on. Stock is up 4%. BankX also, we can say largely there is a kind of a diversion, but a very, very small range of trade is happening. Largely, the market is looking at Q3 updates and a lot of broking picks. That's where the variations or the range movements are happening. Let's pull up the BankX to understand where the important momentums are happening. Of course, the PCR ratios of Sensex are even Stevens for both call and put, especially 85,000, 8,500. That's the level where the congestion is there. Bankex, we are seeing some downtick coming in IndusInd Bank, Federal Bank, Axis Bank, and also the larger banks, if you can just pull out to see how overall the market setup is looking like in the banking space, and over there also there is divergence. Moving on to the stocks, are important stocks where the long build-up is happening is, of course, the jewelry space. That's trade. Looking at short covering, largely we see the tech stocks are there on the back of a lot of broking upgrades also which are there, and these stocks are in focus. Long unwinding for NBCC Counter and Chola Financial, and lastly short build-up is happening in Cipla and Indian Hotels as well, both of them reacting on the brokerage news. So this is the important developments in the F&O space.
Thanks so much for that, Sharad. But let's go across to our next caller. This is coming in from Gujarat, and Bharat has a stock query for us. Bharat, very good morning. Welcome to Ask Profit. What's your query?
Good morning to you all.
Good morning, Bharat. Go ahead.
I have 1,000 shares of Bombay Dyeing purchased at 152 per share. Should I hold on, add or exit?
And Bharat, did you buy into this counter with a long-term or a short-term view?
Yeah, long-term view.
Long-term view, got it. Let me go across to Avinash then. Avinash, on Bombay Dyeing, any quick view? Bharat is bought at 152, stocks trading at 126.
No, I think, Puneet, the real trigger for Bombay Dyeing is not from their core business, but from the real estate piece, which they hold. So I think for a very long time, the markets are expecting that real estate would actually trigger a big opportunity for Bombay Dyeing. So I think, if the investor can hang on for a slightly longer period, we feel that yes, the company does hold a very large real estate piece in Mumbai. And if that can be monetized in a big way, that could definitely be the next re-rating trigger for the company. So I think, the core business continues to grow at a steady pace, but that is not where the market is looking at. So I think you can hold on for the next 12 to 15 months. Hopefully, if something happens there, I think you could see a good re-rating happening here.
Okay, all right. So that's with regards to where Bombay Dyeing is concerned. The next one that we have is on Sonata Software. Now the viewer is saying that he's been holding 250 shares at the levels of 452 since the past 2 years, and the stock has not moved much for him. Should he sell this and buy something else? Ajit, what would you recommend on the charts?
So Mahima, yes, he's right that since the early 2024, the stock has been witnessing corrective trend, and of late, though the price action is more of muted from the last couple of months, but there's hardly any participation during this recent recovery in the IT pack. So in my opinion, he can consider switching to stocks like Persistent from the large cap basket, HCL Tech or Tech Mahindra from Sonata Software at current levels.
Got the view, Ajit. Ajit, coming back to you with another query on VA Tech Wabag. Now, Harjit actually from Mohali is writing to us. He's holding the stock and he's currently sitting on a loss. He's not mentioned. What he's mentioned, he's looking for a entry point for the stock. Is this it, Ajit? Because the stock has been in a correction phase.
So Puneet, yes, we are seeing correction. In fact, it's a fresh break that we are seeing this week. Means the stock is already down roughly around 9%. Volumes are slightly on the higher side. So this indicates maybe further pressure. So the next support could be close to around 1120 area, and then the major around 1000 mark. So as of now, it's in a void, but yeah, he can start accumulating the moment we touch level close to around 1120 and accumulating the staggered manner till 1000 levels.
Got the view, Ajit. But viewers, it's time for our first round of the rapid fire of this edition of Ask Profit. Ajit as well as Avinash, keep your answer on buy, sell and hold so that we can take as many queries as possible. The first one's coming in on Heritage Foods. Our viewer Lalita has bought it at 485 in October, asking if she can wait for another 3 months. Ajit?
Hold with stop at 440.
Okay, the next one is on Cummins India. DJ Rao from Hyderabad has bought it and wants a short-term view on this one. Ajit, your view on the charts?
Exit.
A view on TCS is what Mangaldas is asking. What would you recommend, Ajit?
Buy.
Okay, Dixon Tech is the next one. Ramesh from Bengaluru has bought 4 shares at the levels of 11,975. Wants to know as to what should be the next course of action for him. Avinash, your view?
Yeah, I think continue to hold.
IRCTC bought at 804 by Suresh. He's asking for a long-term view. Avinash, your view?
Yeah, I think continue to hold.
Keynes Tech is the next one. Jaya Krishnan from Kerala wants to know if she can continue to hold, considering that she bought at the levels of 5790. Ajit, on the charts?
Use rebound to exit.
HCC or NCC is what Suresh is asking from Visakhapatnam. Ajit, any stock you would recommend right now to enter?
Comparatively, NCC is better.
Okay, 200 shares of Trent bought at the levels of 6,500. Should we buy more or exit? Jayesh is asking this question. Avinash, your view?
Yeah, I think continue to hold, average at the level.
Bank of Maharashtra bought at 57 rupees. Avinash, should she continue to hold for the next 1 year?
Yeah, I think continue to hold.
Tata Technologies is the next one. Deepak from Dubai wants to know if he can average at the rate of he's average at the rate of 1058. Should he continue to hold or exit? Avinash, this question is directed towards you.
Yeah, continue to hold and you can average.
VA Tech, Wabag, a fundamental view. Avinash, we've taken the tech one. Our viewers bought it at 1563. Should he continue to hold? He's a retired banker.
Yeah, I think if the investment time frame is about 12 to 15 months, continue to hold and average at the current.
Okay, Rakesh has bought Bajaj Finance. He's already sitting on a loss of 54,000. Should he hold or sell? Your view on this, Ajit?
Hold with stop at 940.
All right, so that brings us to the end of first rapid fire round of Ask Profit. But viewers, we'll slip into a very short break, but we'll be right back answering your queries on the other side.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the world.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who's just tuning in, you can either call us or send us a WhatsApp on the numbers that are flashing on your screen up there. Moving on to the next question that we have. This is from Jassi, who's writing us from Vijayawada and asking about Ellenberry Industrial Gases. He's bought it since the IPO. Wants to know if this is a good time to add more for the next 3 years. Avinash, your view on this?
Yeah, I think they are definitely market leaders in their business segment. I think if the investor can definitely hold on for the next couple of years, I think definitely one could expect a decent upside. So it's a well-established player, a long legacy player in this business. So continue to hold, and I think even if you want to buy it, I think keeping a time frame of 2 years, it definitely can give a good risk reward.
Got the view, Avinash. The next one, Ajit, this is for you, and it's a very interesting one coming in from Umesh. He's asking 4 stocks that you could recommend in the large and mid caps for the medium term. Your view?
So yes, Reliance is one such name. So basically what we are seeing, Puneet, now that after almost 1.5 years of consolidation in the index, we are again back to the record highs. And some of the heavyweights wherein we were seeing almost aligned move, means they were witnessing consolidation during this period, and they have also reclaimed their record highs or trading closer to that mark is something that you should be focusing on. So Reliance Industries, Kotak Bank, M&M, and PFC. These are some of the names which one can look to accumulate even at current levels. And as a disclosure, we have recommended this to our client also.
All right, so that's the view with regards to where PFC stands. The next question is from, this is on Asian Paints, and the viewer has bought 200 shares at the levels of 29402 years back and is continuing to hold this. Should he continue to hold this from a long-term perspective? Avinash, now is the time where everybody is waiting for a turnaround for Asian Paints, and of course the quarter gone by has seen volume growth. This quarter also you would expect growth coming in on the back of low base as well. Would you recommend him to continue to hold?
Yeah, I think, considering the level of competition, but I think macro tailwinds have been quite positive. Crude prices are soft. Rural demand is expected to be good. My sense is that despite the fact that he's purchased at a slightly higher level, if he can hang on for the next, say, another year or so, I think definitely, prospects look definitely much better than what they were earlier. Hopefully, if the raw material prices are kept under control and volumes grow by 5-6%, then I think Asian Paints should definitely bounce back. So continue to hold.
The next one that's coming in is on Reliance Industries, and this is from Rishikesh from Pune. It's a stock that's been in focus over the last few days. Avinash, what do you make of the current move? Is it a good time to add given the correction that we've seen in the last 2 to 3 days?
Yeah, Puneet, looking at Reliance, I think normally one makes money in Reliance when, obviously the stock doesn't perform. And I think 1500 to 1480 is a good level to accumulate. Even at the current levels, if the investor can wait for maybe the 12-15 months, I sense that Q3 should be reasonably good. GRMs are definitely at good levels. So the Q3 performance for the oil and gas business should be pretty good. And plus, my sense is that next year, hopefully after March, the markets are expecting some value unlocking from the retail kind of unit. So that itself will also give a pretty good, decent return. But I think you need to take a slightly longer term view. In the short term, the stock may remain a little bit, volatile.
Okay, all right. So that's with regards to where Reliance stands. The next question that we have is from Siva, who is writing us from Toronto. He wants to know if it makes sense to make a fresh entry right now in Kalyan Jewellers or not. Ajit, would you recommend that, seeing the charts?
So yes, Mahima, means after this correction from the record highs roughly around 750 to 450, and now this phase of consolidation seems like that the stock is making decisive attempt to reclaim the major averages. Today we are seeing that the stock is up roughly around 5% with strong volumes. So probably we can see a level close to around 580, 600 in the coming days. So with stop at 490 on the closing basis, since the highly volatile counter, one can look to accumulate at current levels with 580, 600 as the position targets.
Got that view, Ajit. The next one that's coming in is on Waaree Energy. Now, our viewer, Sabu from Kochi, is asking a 2 to 3 month view on the counter. Ajit, what would you recommend? He's bought it at 546.
Sharda Corp, right?
Yes, Waaree Energy actually, Ajit. It's trading at 509 right now. It's up almost 1.2%. And he's bought it at 546, and 100 shares is what he's holding and asking for a 2 to 3 month view.
Sorry, Puneet, I'm unable to find this symbol for Sharda Energy.
Okay, all right. It's spelled SARDA. I think. Do you have the symbol?
Yeah, the ticker is SARDAEN. If you can try to pull up the charts and see as to how the counter is done.
Avinash, do you track this counter? Any view?
No, I think definitely, from the metal space, this is a very interesting bet. And most importantly, they've purchased an integrated power unit also. So I think, maybe my sense is that at these levels, most of the negativity is in the price. I think the investor should at least give 3 to 6 months. Hopefully, I think the December quarter is going to be quite good, Puneet. And to that, I think perspective, I think he should continue to hold. He could definitely expect, decent kind of price upside in the next 6 to 12 months.
Ajit, were you able to pull the charts up for this counter? Any technical view?
Yes, so basically, the long-term performance definitely looks promising, and now after almost this vertical rise, it's been almost 3-4 months now. The stock has been consolidating around the record highs. So it seems like a time-wise correction so far. But for any fresh momentum, we need a close above 540. So as of now, he can continue to stay put with 490 as an immediate stop.
Okay, all right. We've got our next caller then. Praneeth is calling us from Hyderabad. Praneeth, hi. A very good morning to you. How can we help you today?
Yeah, good morning. I'm willing to take a fresh position actually in Praj Industries or Teril for 2 years. So which one will be better for me for 2 to 3 years?
Okay. Okay, got your question, Praneeth. I'll take this up with Ajit. Ajit, where are the charts looking more attractive right now from a slightly long-term perspective? Is it Teril or Praj Industries?
So Teril is still like, we are seeing a bit of a recovery rebound, but Praj Industries, we have already seen noticeable damage from the record highs. Roughly around 70% is something that the stock has already retraced. We are trading at a very critical juncture where we have the major averages placed on the long-term charts. So I believe that the possibility of consolidation, because the stock also showed strong buying interest, of late with, price action also. So my opinion, possibly you can start accumulating at current levels, and 290 should be the lower base for this, and for the complete position, 270 should be a complete stop loss for the complete position. In case of rebound, the first hurdle could be close to around 360 and then probably around 400 plus zone.
Ajit, another one that's coming in on Laurus Labs. Now, Maddie is asking us a question if it's a good time to enter the stock. So he's asking for a fresh entry on Laurus Labs. Would you recommend the trade?
So Laurus Lab is trading at the record highs. Beneath a steady performer means there was hardly any participation on the downside while the market was struggling and the other counters from the pharma space was not performing. So definitely it looks promising, and in fact we are seeing fresh traction in the pharma space altogether. So with that as a support, 1100 is something that he can maintain as a stop loss and consider going long at current levels. Since we are at the record highs, the upside is open. So from the risk to reward point of view, 1190, 1200 should be his immediate targets.
Got the view, Ajit. Now the next question that's coming in is on ICICI Pro AMC. Now Gautam writing into us from USA, he's a regular viewer, so thanks so much for tuning in, Gautam, yet again today. Avinash on ICICI Pro AMC, he's got 6 shares. I know it's a recent listing, but what he's asking is if he should buy more right now for the next 12 to 18 months at least. Would you recommend this particular transaction, and should Gautam add into it right now?
Yeah, I think my guess is that he should wait for the Q3 numbers. Although numbers are going to be good, typically what we see, Puneet, is once the numbers are out, there is a little bit of selling which comes in. So my sense is that yes, the numbers are for Q3 are going to be very solid. It's one of the large players in the mutual fund industry. Definitely numbers will be better, but I think probably you could get some opportunity once the Q3 numbers are announced. Some profit booking happens, because longer term, if he wants to make value, then I think he needs to get in at a slightly lower level, which can give him a better alpha over the next couple of years.
Got that view, Avinash. But we have another query now coming in from Hyderabad, and Rajesh has a stock query for us. Rajesh, very good morning. Welcome to Ask Profit. What's your query?
Hi, very good morning. Good morning to everyone over there. I'm Rajesh from Hyderabad. My question is with regards to Greenland. I bought it at 140 rupees, 250 shares. Currently, I'm standing at a profit. My question is to know the long-term view on this. Can I accumulate more at this point?
And Rajesh, any other auto ancillary or auto company that you hold in your portfolio apart from Ashok Leyland?
This is the only.
This is the only one. Okay, Rajesh, you've definitely gotten at a decent price, or almost sitting at a decent profit, because you caught it at the up move. So congratulations for that. Avinash on Ashok Leyland, my question largely because, while of course on the long term, do you think that the move has been quite stark in the last few months. So do you think that it will continue, given that the government capex hasn't yet picked up for the CV cycle to have that macro factor yet?
No, I think my guess is, Puneet, the second half for Ashok Leyland, overall for the commercial vehicle sector looks to be quite strong. And I think, Ashok Leyland also has some exposure on the defense side. So I think he should continue to hold. My sense is the second half of FY26 should be significantly better than the first half. And hopefully, with the GST cuts, with the rate cuts happening, I think the tailwinds in the commercial vehicle sector are slowly improving. So I think, it's better to hold. He could expect a decent risk reward over the next, say, 6 to 12 months, even from the current levels.
Okay, all right. So that's with regards to where Ashok Leyland stands. Now, viewers, the next show generally that we do is Know Your Company. And, today there is a Gujarat-based power and distribution player that's forayed into battery energy storage space, down 35% from 2025 highs, and transmission industry orders are also drying up, and that's something which is a concern for the industry as a whole. Now, Sharad, who generally anchors the show, has put out a tweet. So it's for you to guess as to what this company is exactly from this tweet. Let us know what you think the next what would be this company, and we'll be discussing this company in detail with regards to what its financials look like, where are the return ratios heading towards, how much of a return the company has given, and what is the outlook looking like. And of course, we'll speak to the management as well to understand as to what the outlook of the company is looking like. So that's with regards to where the next show is live. But we've got our next question, which is, okay, before I take that question, my director is telling me to take a very quick break, but we'll be right back answering all your queries on the other side, so do stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape.
Welcome back to Ask Profit right here on NDTV Profit. If you haven't, do start sending in your queries on WhatsApp. You can also call us, and both numbers flashing on the top of your screen. The next query is very interesting, coming from Vanita Bala. She's from Kuwait. So thank you so much, Vanita, for sending across your query and asking, if it's a good buy at the current levels for Sirma or Dixon. That's a query. And Avinash, let me come to you. Firstly, any quick view that you have on Dixon Tech? Because recently, Avinash, we've seen a massive sell-off, lows being hit on this counter. Largely, what started with Keynes has now been one of the biggest impact on this counter as well. Your quick view, firstly on Dixon as well, and Sirma, if it's on your buy radar right now.
No, I think, in most these companies, my sense is that valuations are fair to expensive. And I think, the markets are now looking at these kind of companies operating in this space with little caution. What happened with Keynes Technology was definitely an issue related to corporate governance, which the management later on clarified. My sense is, Puneet, in these kind of companies, it's better to take a pause. December quarter will be important. Markets will like to know what's the kind of growth outlook the management shares. Because typically, at these levels, if there's any small negative surprise, also the stock could get beaten down badly. So my sense is that, rather than buying immediately now, wait for the Q3 numbers. Some more clarity would come in once the results are out, the management commentary comes post the conference call, and that would be a good time to actually accumulate the stocks if the growth trajectory continues to remain solid. So I think not advisable to buy at these levels, both stocks as of now.
Okay, all right. The next question that we have is from Ashok, who's writing us from Sydney, and he's asking about Valor Estate, which was previously known as DB Realty. He's holding 1,700 shares, bought at the levels of 178. From a 3 to 6 months point of view, he wants an advice. Ajit, how are the charts faring?
This stock looks sideways to me. In fact, if you see that the entire basket in the realty space has not done much, even during this recent market rebound. But we are seeing early sign of recovery in some of these names like Godrej Property, Waaree Reality, and others. So as of now, the preference should be given to the outperformers within the sectors and avoid any fresh position at current levels.
Got the view, Ajit. We have our next caller now coming in, for a stock-related query as well. And this is from Jaipur. Raj has a stock query for us. Raj, good morning and welcome to Ask Profit. What's your query?
Yeah, good morning. My query is regarding the Mrs. Bector Food. I purchased 540 shares almost a year back and currently incurring loss of 20,000. So may I request you to have the technical or the fundamental viewpoint on this share?
Got it. And Raj, firstly, when you bought, can you hold on to this counter? Because since you said you are sitting on a loss, can you hold it on for some more time so then I can get you the long-term query, long-term view as well on the stock?
Yeah, it's a long-term perspective. Currently sitting at 14% loss.
Got it. Avinash, any quick view on Mrs. Bector? Do you think that it has any chance of revival given GST rate cut benefits on the FMCG space? Any view?
No, I think he can continue to hold. See, the investor seems to have purchased the share at a slightly higher level. But if you see the business model, the positioning of this company and the kind of product category it operates, I think these kind of products definitely enjoy a decent premium. There is a strong brand recall for these products. So I think, you need to give it little more time. My sense is over the next, say, 12 to 15 months, hopefully the FMCG market will improve, volume growth will kick in. And you're going to see a lot of consumption increasing in these kind of product categories. So I would suggest him that he can even average the stock, but keep a time frame of at least 12 to 18 months. Only then he could get a decent risk reward, from the current level.
Okay, all right. So that's with regards to where Mrs. Bector's is concerned. The next question that we have is from Reenu, who is writing us from Bengaluru, asking about Bank of Baroda. If this is a good counter and does it make sense to make an entry right now? Ajit, would you recommend that?
So yes, Mahima, in fact, if you see the entire PSU pack, interestingly, they have been maintaining their outperformance in this recent surge, while some of the private banking wages are sitting on the sidelines or witnessing correction. So Bank of Baroda is currently trading at the record high. So in my opinion, she should maintain a staggered approach to accumulate the stock, not to buy completely at one go. So around current level, let's say she can buy 50-60%. And in case if there's any dip around 300, she can add more. For the entire position, the stop should be at 280, the recent base. And since the stock is at the record highs, she can keep on trailing stop losses on rise.
Got the view, Ajit. And we got in Siddharth Chaturvedi actually sent us a message asking if the next company on KYC is Voltam. Siddharth, it's not, but I appreciate you trying to guess the company, and do send in if you have another recommendation as well. The next query that's coming in is on Ashapura Mindchem. Now, it's an interesting one because KPS Rao from Bengaluru is actually sitting at a 6x profit at this, because he's bought it almost 4 years ago at 120 rupees. So, firstly, Mr. Rao, congratulations on the gains. I wish you would have called us and told us what you saw in the company at that time. He's asking that if it's a good time to book some profits given the gains. Avinash, do you track this counter and any view for what Mr. Rao should do?
No, I think clearly Ashapura Mindchem looks to be a very strong investment call for the investor. I think they make a product called bentonite. And I think, now since the investor has made almost 6x returns, Puneet, I think it makes sense that, some profit booking is advisable, despite the fact that, the company's overall performance is expected to be good. I think in these kind of little illiquid stocks, it makes sense to take out your capital. So I think book at least say 25-30% of your profits, and I think the rest of the quantity can be held on. The company continues to do well, and our sense is that FY26 should be another record year for the company.
Okay, all right. It's time for our second rapid fire round. Avinash and Ajit, you both know the drill. Try to keep your answers as short as possible. The first question that we have is from Aparna, who's writing us from Singapore, asking about PVR Inox. She's holding 55 shares. What are the levels of 1138? From a long-term view, can she continue to hold? Avinash, your view?
Yeah, continue to hold.
Privy Specialty, is it a good time to enter the stock, Avinash?
Yeah, I think one can definitely accumulate at the current level, but keep a time frame of 12-15 months.
Zentech is the next one. 13 shares bought at the levels of 1560. Hold or sell? Your view on this, Ajit?
Exit.
La Opala bought at 256 by Kishore. Ajit, would you recommend him to hold for the next 6 months?
Hold with stop at 190.
ITC is the next one. Shahid wants to know if he can accumulate at these levels. His average price is 384. 30 shares is what he has. Avinash, your view on this?
Yeah, I think he can average.
Cummins India, long-term view, Avinash?
I think Cummins can definitely be held on. If you've got the share already, continue to hold.
Okay, Bharti Airtel, is this the right time to make an entry into this counter? Shivakumar from Bengaluru wants to know. Ajit, your view on the charts?
Buy on dips around 2050.
Excelsoft Technologies, Avinash, your view?
I think continue to hold for long term.
So Zlon Energy, from a 3 to 4 months perspective, is this the right time to make an entry? Ajit, your view?
Yes, with stop at 50.
Tata Steel, Hind Copper, or BEL or Cupid. Ajit, any view, any stock that you would recommend right now for a swing trade?
Tata Steel for sure.
Okay, SJVN, is this a good time to buy from long-term perspective? And Avinash, your view?
No, I think if you have, hold it, but no fresh buy.
Grow or Lenskart? Avinash, I know it's a recent listing, but any view that he can enter right now for the long term?
I think Grow would be a better bet.
Okay, LG Electronics, should I enter right now from a long-term perspective? Avinash, your view?
Yeah, I think if you have a 12 to 18 month time frame, you can definitely buy at current price.
JSW Infra bought at 278. Ajit, a 1 to 2 month view if you can.
Hold with stop at 270.
Okay, Urban Company holding at the levels of 155. Should I average, sell or hold? Avinash, your view?
So I think avoid. If you have not purchased it, avoid.
Satvik Green, Avinash, any view?
Continue to hold. I think because it's a large solar player, so continue to hold. Good long-term prospects.
Okay, Eternal bought at the levels of 300. 450 is the quantity. From a 1 month perspective, can the viewer continue to hold? Ajit, your view?
Hold and use recovery to reduce position.
Banco India, Ajit, if you track this counter, our viewers bought at 800. Should he continue to hold?
Hold.
Okay, Biocon is the next one. 250 shares purchased at the levels of 350. Venkatramani wants to know from a 15 months perspective, can she continue to hold? Ajit, your view on the charts?
Yeah, and she can buy more with 370 as a stop.
Alright, so that brings us to the end of this round of rapid fire segment. Ajit and Avinash, thank you so much for taking us through those queries and of course giving your expert insights. With that, we're completely out of time on this edition of Ask Profit. But if we have missed your query, you have another chance at 2 p.m. because 2 p.m. is the afternoon edition of Ask Profit. So do tune in and ask all your queries. But Completely out of time in this edition. Do stay tuned. KYC on the other side.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. So let's start the show, but I want you to guess the company which is coming at KYC today, where we'll dissect the company and also ask the management about the outlook ahead. Now the company is a Gujarat-based power and distribution player. That's the first hint for you. The second hint, recent announcement in a very big sector where a lot of interest is coming. That's the BESS segment, a battery energy storage space. That's what we'll be looking at. Company also is down 35% from 2024 highs. That's a lot of concern from the investors coming in, and they have written a lot of questions to us, and we will be asking that with the management as well. Recently, they've won the GUVNL project as well. Now let's give you the company's name. what's the concern coming? That's also a very important thing. The transmission industry orders are dying up as well. So we will be asking the reason, will this continue or not? But to give you the perspective, the name of the company, it rhymes. The first name is with a Bollywood's big superstar as well. And no doubts for guessing, it is Rajesh Power. This is the company which we are talking about, Rajesh Power Services. But why are we calling this company? The stock has, given very dismal returns in the last 1 year or so. But what are the concerns coming? The first is a very major announcement has come in. What's the rationale for foray into the BESS space? Already the transmission and distribution space, there are some kind of headwinds already there. The second reason why we are calling this company is there's a rising competition happening in the distribution space. So where does the company stand? What's the moat here? Also, another reason why we are calling this company KYC is the industry is witnessing a slowdown in the transmission projects. And will this continue going ahead or not? That's a key concern where we will be asking the management. Also, another thing is a 3,500 crore order book. Where is the execution timeline? How will the company actually go about it? That's something we will be asking the management as well. Apart from this, going ahead, these are the key reasons why we have taken Rajesh Power here, and any kind of execution of B2G risk. That's one of the largest questions we get from our viewers regarding companies like this, especially what's the private and the overall kind of momentum to look at for the governments. And joining us would be Utsav Panchal, the Director and CEO of Rajesh Power. He will be answering all of our queries as well, which we'll be putting it up. But apart from that, let's look at about the company, what it is all about, and then Utsav will also come in to explain us what's the overall rationale going ahead. But first key reason, of course, is going to be overall you're looking at about the company, like what the company is actually doing. It's a Gujarat-based transmission and distribution player, and largely the company is transferring from an EPC veteran player which is already there. It's a company, it's a turnkey EPC solutions player, and now it's going into the newer areas as well. Let's understand more about this company going ahead. And apart from this EPC solutions player, the company is established in 1971 and specializes in power transmission and the distribution segment as well. And largely we see there is a good momentum coming in the stock. The stock made its debut in December 2024, and since then the stock has tripled. But last 1 year or so, the stock has taken a lot of patience of the investors. They are executing turnkey power sector projects in the transmission and the distribution space. And also looking at the other operations, they offer comprehensive OEM services as well. So that is an important thing. OEM services are for the solar plants, substations and the distribution systems for the business operations. Apart from the business operations, they are offering strategic consulting for the substation and the cable ecosystem design as a whole. If you just imagine a grid structure, that is where Rajesh Power is an important component player, largely regional player, but definitely we are going to look at that. Unexecuted order book and L1 positioning is at roughly 3,500 odd crore rupees, and we'll be looking at the outlook, what Utsav will say. Will it be that 5,000 crore mark in some time? The order inflows was roughly 2275 crores in H1, and largely the industry gets better numbers in H2 as well. Apart from this, let's look at the order book positions. Transmission and distribution, that is it. Almost you could say 76% comes from the power distribution segment, and the 24% comes from the remaining in the overall transmission segment. So this is the overall order book position coming in, but there are ongoing projects which should be important. 130 kV GIS project in Jodhpur. Apart from this, there are other important projects also which are going ahead by Rajesh Power. If you could just show the important projects. Yes, going ahead, one is there in Jaipur. So largely we are seeing there is a kind of a move happening apart from Gujarat as well, and large power kind of orders are also which is there in the company, and a big supply arrangement. The recent announcement has come in for Waaree's BSS project as well. So a lot of developments are happening in Rajesh Power. You can just look at these important ongoing projects, and going ahead, of course, the focus will be in the new business sector, the BESS. But why have they entered? That's also a big question, because already two of these segments, they are facing already headwinds, and the third one they have taken again. So that is something which we'll be watching out for. So this is the important developments which have come in about the company. But let me explain you the overall KYC setup. How do we rate a company in our KYC show? If you could just show the important ratings, that will be very much important in our show. First of all is of course the income statement which comes in, the balance sheet, the cash flow, the return ratio. These are the four basic financial ratios which are there. Apart from this, there is the shareholding, the street cred, which is nothing but the stock price movement which is happening across various periods, valuation, especially if we compare that with the peers, and last but not the least, the outlook of the company. So these are the important 8 KYC rating parameters where we will judge the company. So the first rating parameter I would like to talk about, that is the income statement. How the income statement has actually panned out over the next 3 years. We have taken the 3-year CAGR numbers. H1 numbers have also been there in our analysis, and rightly we see the revenue and EBITDA numbers. Let's move ahead and see how they have actually panned out. The 3-year CAGR numbers, the revenue is at 94%, EBITDA coming in at 125%, but the PAT numbers, they are also very decent. And you look at it, there has been a significant growth coming in, and of course it's expected to go past that 100 crore mark in FY27 as well. So net income statement prima facie looks very strong, so I've given a thumbs up for this. But let's look at the second parameter, and that is the balance sheet parameter. Balance sheet is also pretty much important. Largely it seems stable. To look at the overall borrowings, that has actually crept up around 82 odd crore rupees. But remember, this is a very capex heavy industry. There is always a B2G and an execution risk also involved to it, and that's what we'll ask Utsav as well. And the cash bank balance, that's decent, that's around 60 odd crore rupees. Remember, this number has gone up, and it's been almost, you could say almost September 2024 onwards, or just before that the listing was there. But net it's decent, so I would be giving a neutral rating. The third one is the cash flow segment, and that's where my concern starts coming. I had earlier mentioned you about the B2G risk, the execution risk, and the cash flow segment, because the company is having a significant government exposure also in terms of revenue. And look at that, the operation cash flows and net cash flows, that's where my concern lies. This is just the numbers of H1 FY26, and that's the way where the concern is coming in. And because of that, I will be giving this cash flow segment a thumbs down. So we spoke about the cash flow segment. Another number comes is the ROC and the ROE numbers. Generally for these companies, you could expect 20 to 25% to be a healthy one, and the company has been doing well. FY25, this number has gone up to 44%. This is the ROE numbers. Let's pull up the ROC numbers. That's also decent. That's also going up. It's an upward trajectory which is there around 35. But will this be a bit of pain going ahead, especially when they're going into the new industries, BSS and stuff like that? So because of that, I will be giving a neutral rating, because the history has given a very strong up move, but the future, will this plateau or not? And that's a concern which analysts and some of our viewers have written to us at our KYC show. They have stated for this company, and that is why I've given a neutral rating when it comes to the return ratios. But I'll show you, apart from the return ratios, what else is very much important. We spoke about 4 rating parameters, and all of these rating parameters are on the numbers. But apart from numbers, there's other stories also which say important aspect, the shareholding segment. Promoters are holding it very decently, 73 odd percent. In September also, this ratio was around 73%. But my concern starts coming is, even if there is a very little institutional participation, be it FIs or DIs, it is starting to reduce. Look at that, it's around 1 odd percent, and now it's going down, and almost you could say virtually not there. DIs also, they have reduced their holdings from 5% coming down to 3%. That means institutionally also there is a sell-off happening, and because of that there might be a reason why the stock has down 35% from the corrections from 2024 high levels. Public, it has increased, the retail participation has definitely increased, it has come in, but of course because of this, the shareholding pattern I have given a thumbs down. The street cred, let's look at it, what has happened, what returns the investor have got over the last 1 month. Stock is down 9%, and also 6 months stock is down 23%. I have already mentioned a big fall happening in the stock, and that's why the concern is coming in, and viewers write to us about these companies. But since IPO, if you are holding it, because there was already a 90% listing pop, apart from that still the company is 3x from its IPO price. So on that basis, I will be giving this a neutral rating when it comes to the street cred. Also, the seventh one is the valuations, and the company itself is having different peers because company is having 2-3 businesses. There are wires and cables, there are project consultants and management companies also, but the nearest one I have taken is Kalpataru Power Projects. That's having a 35 times 12 month, you could say trailing P, but Rajesh Power, after a significant correction, is trading at 12x. That doesn't mean it's very cheap compared to its peers, because largely the corrections have happened because of the headwinds which are there and institutional selling also seen in the counters. So valuations front, because of that, I have given this a neutral rating. Also, let's talk about the last segment, and that is the outlook segment. It's very much important, and we have taken what the management commentary was there in the recent Q2 update as well. First of all, they have stated that 40% CAGR growth across all key parameters. That's what they are expecting. And the second one is the BESS entry. Now, this is from the Gujarat Urja Vikas Nigam Limited, and that is something which we will ask Ujjwal. Apart from this, the order pipeline, that's expected to touch 3,500 crore rupees in the coming months. Currently, it's at 3,500 crore rupees. So that's an important statement. And a slowdown, that's the biggest concern. Slowdown seen in the transmission projects. What happens next? Anything you expect in the budget? That's what we'll be looking at. But as of now, outlook, I will be giving this a neutral rating. So let's revise the KYC ratings for the company. The income statement, it's around coming positive. Balance sheet, it's neutral right now. My concern starts coming in cash flow, and that is where this type of business model has a very big risk. Return ratios, they have been decent enough, at least for the industry perspective. Apart from this, the shareholding, that's where my concern comes. Institutional participation is not there. Street cred, largely neutral. Only if you're an IPO investor or holding it very early, you have made good money. But over the last 1 year itself, nothing has happened as such. Valuations, decent after correction. And outlook, that is something which we are watching out. So final rating would be for Rajesh Power around 3.5 out of 8. Generally, these are the neutral ratings when we give the KYC ratings to the show as well. But joining us is of course Utsav Panchal. He's a director and CEO, and he has been associated with the company for the last 7 years. He's an MBA from IIM Kozhikode, and interestingly, he has a specialty in the Six Sigma belt as well. Very warm good afternoon to you, Utsav. The question is, first of all, is the BESS project you have entered in here. Already 2 businesses are there which, your hands are full. This third one, how does it make sense, and why is, Rajesh Power actually a good fit in this BESS setup? Yeah, Utsav, please unmute your mic.
Yeah. So basically, thank you for inviting me over here. I'll just answer a question, quickly go through what we exactly do. So we are a leading player in the underground cable laying space, as well as the transmission line and distribution infrastructure space, where we are also carrying out major substation projects up to the 400 kV level, where there is a specialized substation called GIS, gas insulated substation. We are also carrying out that. So coming to your question, I'll just briefly give you a snapshot of the energy storage industry. Yes, we have recently received the LOI from GUVNL for a very small 65 megawatt into 2 hours, which is 130 megawatt hour project. So as of 24-25, the installed capacity in India was 507 megawatt hour, and the installed capacity that became in 25-26 is 5 gigawatt hour. So in 25-26, 65 tenders, which were totaling 102 gigawatt hours, were issued. So 2026 is a crucial year for the industry, proves itself operationally. So energy storage and Rajesh Power, if I say, while tariffs have, yes, collapsed in the standalone BESS segment, taking into account the strategic role and energy storage is poised to play in power generation, transmission and distribution, it is crucial for Rajesh Power to develop its credential as an expert in the BESS segment. BESS is a low-hanging fruit for Rajesh Power in the sense that the core infrastructure is battery containers, which are largely plug and play in nature. They are all pre-assembled solutions with battery packs, battery management systems, and liquid cooling systems built by the OEMs. So what comes next is the AC side. AC side, we as Rajesh Power are building substation, transmission line and cables, which accounts to almost 30% of the value of the BESS project. So this makes us one of the best all-in-one turnkey solution provider in the standalone BESS segment. So I think, I hope that answers your question.
All right, and Utsav, some concerns are there, and investors of the company also wrote to me. In Q2 itself, the company was facing competition in the distribution space. Is that competition there also in the third quarter or even the fourth quarter we can expect in the distribution space?
So if I tell you, we are particularly working in the underground transmission, underground distribution space. That is the underground cable laying space, which is a very specialized, nature of work we are carrying out. Also, additionally, we are carrying out medium voltage covered conductor projects, which is roughly around, we are executing 50,000 kilometer of MVCC. It is just a traditional overhead conductor replacement to the new underground, the new type of conductor which carries more power and reliable power. So we are into specialized kind of work. So that is what makes us a little bit unique from our other peers, where we are having the technical experience, the expertise that helps us.
But the competition is still there, because in Q2 you had mentioned about it. So till now that competitive pressure is coming in the distribution space for you?
So there is competition, but what we are working in is a unique combination of projects where the competition is very limited.
All right. And interestingly, the transmission project, now this is an industry-wide problem, it's not company specific to you. But Utsav, the industry is seeing a good slowdown in this transmission projects coming in. Do you think after this budget, these numbers can move up? So there's a two-part question to it. The slowdown in transmission projects, is it still continuing or some green shoots are coming, and what would be your budget expectations?
So what I would like to give you some inputs over this. Recently, the Ministry of Power did announce a few slowdowns in the power, the renewable capacity additions. The main reason of the renewable slowdowns is the transmission grid is actually not sufficient to build the equivalent renewable. So the speed with which we as a country have grown our renewable generation, we are not able to generate the transmission speed at the same momentum. So in fact, I would look at the other way, that we are having very aggressive outlook in the transmission segment. Just if we say we are working in Gujarat and Rajasthan, we are having a very huge order bid pipeline, as well as the government has set up some very huge projects of substation, transmission lines and underground cable projects. So what we are seeing in Gujarat, the JETCO has given an outlay of 96,000 crore to be executed in the next 10 years, which is roughly converting to 9,600 per year. That is mainly because there is a 30 gigawatt renewable that is there in Khavda, and it needs to be evacuated in this part of the state. So we are seeing a very good traction.
Okay, so that's a good traction on that. But Utsav, you had mentioned 40% growth across all the key operating parameters, and that was a blanket statement you had given in Q2. I also mentioned, so give me what are the key top two metrics to track, and what are that 40% growth, and why you're stating that?
So basically, if we see our our order book as of September, we are having a 3,500 crore order book, which we just proved to have an order inflow of 2,200 crore worth of orders just in H1 up to September 26. So we are seeing a very, very good bid pipeline in place, and that is what has enabled us. So in case if we just see the order book of 3,500 crore, which is to be executed in a period of 18 to 24 months, we quite have a very good revenue visibility in that sense.
All right. Just one query on the financials front. The cash flows are not improving, and that is where the B2G risk, the execution risk comes in, and investors also get restless. The stock is also cracking. I won't ask about the stock price fall, but the concern remains is so operating cash flows, what happens?
So basically, if you see the nature of our company, we are EPC mainly. We are working with decent margin, but as well as utility specific payment terms. So the negative operating cash flow is primarily due to the retention money inherent to the EPC contract. So what is retention money? Retention money is contractually locked receivables with zero risk, where the counterparty is usually large utilities and governments, and it is fully recoverable within time. So it is the retention money that is locked. But if you look at our business, our EBITDA margins are stable, projects are not loss making, and we have no cost overruns or liquidated damages. So we are very much confident in that.
All right. There's an interesting phase. You have entered into the 400 kV GIS segment. Generally, you are into 220, 200, if I'm not mistaken. Now, this new entry segment, what does it actually mean, for this segment and this industry as a whole? How many other big players are there apart from you? Because this is a larger capacity, if I'm not mistaken, and you have entered into it. So, give us more details on that.
So with the recent, entry into the 400 kV GIS segment, the GIS is particularly gas insulated substation segment. Very, very few limited players, hardly in a single digit number, are there in the entire country to have capabilities to execute such kind of projects. And we'll be completing this particular 400 kV GIS project by around July, August, by which time we'll have some credentials to bid for very large sized projects, complex projects. So this will give us an edge over, other peers in terms of execution and bidding and winning ratio.
All right, let's just revise the numbers which we have given in our KYC segment. And of course, Utsav, stay tuned. I have one last question for you. But overall, let's revise the audience what numbers I have given from the research team desk as well. And largely, we see the financials, they are good, but the cash flows, that's where my concern is there. And largely, we see the street cred also. There is a kind of a positioning coming down from the FIs and DIs. So net, I have given this company roughly 3.5 out of 8 when it comes to Rajesh Power. But Utsav, one query for you as an industry spokesperson as well. What are your expectations for this budget 2026?
So in the budget 2026, what we are expecting is very, very aggressive outlay in the distribution segment, particularly where we as all utilities are constantly working towards improvement in power reliability. If you see, we have been by doing undergrounding of cables, we have been able to improve the power failure, power downtime by a significant amount in just this part of the country. So that is one point. And second point, we are seeing a focus on smart grids. Now that is where we have an associate company called HKRP Innovations comes into play, where we are providing IoT based smart monitoring systems and solutions to the utilities.
All right. Can you just give in some more details about this HRKP, because everybody is talking about it, and the future outlay, when the incremental benefits will start coming in from this arm, could you give us a timeline?
So basically, in the HKRP Innovations Limited, we are basically providing end-to-end solutions for IoT-based smart grid monitoring systems, where we as a country have witnessed smart metering projects, at the consumer end. So we at HKRP are everything before the consumer end, where we are providing solution to digitalize the assets and monitor and control the assets of all the grid parameters, including substations, transformers, and everything. So we have hardware as well as software solution, and the growth outlook of HKRP is also very promising in the sense the government focus on modernizing the grid. So that is where we come in, and in the immediate next 2-3 years, we are seeing a very good growth visibility in that company as well.
Thanks a lot, Utsav, for giving your views on the company and the industry. And it's very nice to chat with young, dynamic CXOs of companies at KYC. Best of luck for you and the entire Rajesh Power team as well. So that's the management of Rajesh Power. And of course, they have mentioned and they have defended that this is the way the industry works when it comes to their cash flow impact which has come in, but they are still bullish on the budget expectations for the power industries. And net, they're looking at the rating parameters, removing the financials. The outlook definitely seems like the worst might be over for the stock. Of course, the transmission part and the distribution part, that's where the concerns are there. But nevertheless, company wants to jump in the BSS segment, which is the battery energy segment as well. So that's all, folks, for the company for KYC today. Stay tuned to NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man.
Sustained pressure on markets, Nifty below 26,100, Bank Nifty aligns with benchmarks and broader market weakness continues. Silver and copper keep their sparkle in 2026. Sixth year of supply deficits powers the white metal. Copper extends gains after soaring past $13,000 for the first time earlier this week. Cipla in the soup as the company faces regulatory overhang as US FDA issues Form 483 flagging contamination aspects, aseptic lapses and potential data integrity concerns at its Greece facility. Stock cracks more than 5% in trade today. Titan sparkles after reporting a robust business update in Q3 led by strong festive demand and sustained consumer traction. across key categories. Company outlines ambitions to lead in both lab-grown and natural diamonds in the con call. Info Edge in focus as white-collar hiring rose 13% in December 2025, driven by strong non-IT demand as insurance, hospitality and seasoned hiring surged, while banking saw contraction and non-metros emerged as fresher hubs. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take it straight to markets at noon time. Well, it's been a weakish to a directionless day in the market. Just look at this choppy line graph of Nifty 50 and it's just 40 points of uptick and downtick that we have seen throughout the trading session in the first half of the session today. But the good news is that at least it's holding above the 26,000 levels and way above that comfortably even at the lowest point of the trading session. Let's also take a look at what's really happening in the internals. The broader markets have also been weak. Probably the festive season is continuing in terms of the lull that the market is seeing in terms of the traction coming in, and after the Venezuelan event, that has really cast some uncertainties into the overall market. When we take a look at some of the components, well, in sectoral indices today, IT is the one which has rebounded. It's shining in trade. Defense, which was doing well yesterday, that is on the flat line, and also Pharma, PSU banks are the ones which are really perking up in trade. In terms of the contribution coming in on Nifty 50, it's ICICI Bank and Titan. Those are the ones which are really giving as much contribution to the Nifty 50 as it is being dragged down by some of the big boys like HDFC Bank as well as Bharti Airtel and Kotak Mahindra Bank as the draggers for the day. So take a look at these particular snapshots in the market and to get more view on what's really lying ahead for us in this uncertain week of trade. Aditya Shah, who's the founder of Hercules Advisors, joins us now. Aditya, always a pleasure to welcome you on NDTV Profit. Of course, the market is now facing more factors which have come up as uncertainty. While crude, probably projections of that coming down may be a good news, but overall geopolitical tension globally is not a very good news for the markets. How do you see it?
So good afternoon. I'm positive on the market. We've always been positive on the market. Venezuelan crisis or the Indo-US trade deal, all of these are short-term concerns for the market. For a longer period of time, the market will continue to do well. So from my perspective, nothing to worry about. Domestic-facing economy stocks like the chemical stocks or the banking sector, which has reported solid set of numbers, or the capital goods sector, chemical sector, these are all places to concentrate on. IT is a contra pick as of now. As the US-India trade deal continues to move forward, IT will also come back. So from my perspective, short-term ups and downs are always there, but longer term, the market will continue to do exceptionally well.
So Aditya, as we really enter into the earnings season, that's going to be one of the most important factors for the market going forward in the month of January and then taking it forward for the year, setting the stage for this year. How are you expecting this particular earnings to really pan out, and which would be the most important factors as per your analysis?
So we've already seen that the loan growth, the systemic loan growth is at about 10 to 15%, which in my opinion is really very healthy for the entire system to grow with. In my perspective, the Nifty should grow at about 5 to 10%, somewhere close to 5 to 10% earnings growth will be watched out for. Commentary with respect to what is happening in the US and how businesses are performing in which have exposure to the United States will be a key thing to watch out for. I expect the small and the mid caps on a selective basis to continue to do exceptionally well. Stocks where valuations are extremely high, for example, Trent, which reported a solid 18% growth, but the valuations were extremely aggressive. There we could continue to see some bit of time correction. But from my perspective, there would be a steady earnings growth, 5 to 10% for Nifty 50 companies. and nearly about 10 to 15% for about small and the mid cap companies. So overall steady, nothing exceptional, nothing bad. Steady is what I would say.
All right, steady is not a bad word currently while so much uncertainty is taking place. How do you see the global factors really impacting India, Aditya? Because, FII outflows, FPI outflows had been a big concern. And if the US economy is really looking like it's probably going for a slowdown, as has been projected by some of the economists. And on the other hand, the Venezuelan oil coming into the market will put pressure on the crude oil prices. Some of these important factors, how are they going to really impact the market going forward?
So in my opinion, I have a contra view on the Venezuelan crisis. I think it's really positive for the market because good quality oil over a period of next 3 to 5 years will be available, which will keep the crude oil prices in check. For an economy like India, which is crude import dependent, this is really very important and positive for us as an economy. That's the first point. Second point is a lot also market in 2026. A lot also depends on how the India-US trade deal moves, not from an earnings perspective, but from a market sentiment perspective. If the deal is cracked very quickly, so from my perspective, the market will do exceptionally well. If the deal takes a lot of time, I don't think the market will do anything and it will be sideways. So from my perspective, the year will depend a lot on the geopolitical arena, what happens there. Basis that the stock prices will boom. But I said, from a stock picker's perspective, you need to be really very stock specific. There are a lot of stocks that are undergoing massive corrections. Those are the real opportunities to buy. So steady kind of a year as a base. Upside to it will be the Indo-US trade deal. If it happens, I think the upside to the market will then get opened up.
So as you rightly said, many geopolitical uncertainties and also our US tariff trade deal is something which the market is really waiting for, and we do not have any visibility on that. Given that, what is the investment strategy that you would suggest at this point, and any preferences of any sectors or stock picks?
So from my perspective, banks have continued to do exceptionally well. The loan growth that we have seen for many banks, they've been very good. For example, HDFC Bank reported about 10 to 11% of loan growth. Kotak Mahindra Bank reported about 14 to 15% of loan growth. So at the top will be the private sector banks, followed by SBI, which is also continue to do exceptionally well. Thereon, you can then look at the asset management companies. They will also do exceptionally well as financialization of the savings continues to move on. Then you can look at the consumer sector, where we've seen stocks like ITC continue to have a correction on the back of rumors of additional tax getting imposed on on cigarettes. Then you can look at the cap goods companies like Larsen, companies like Ahluwalia Contracts. They are continuing to do exceptionally well as the government continues to invest in the infrastructure side of the market. IT continues to be my contra pick. It has bottomed out. It will do well if the trade deal picks up. If it does not, if the trade deal does not pick up, I don't see any meaningful correction as well, because a lot of these stocks have undergone a time correction. So from my perspective, sectoral, sector by sector basis, you need to take a call, and from there on, you need to move.
All right, Aditya, always a pleasure to get your expert take on the market momentum and the perspective coming in. Thank you so much for joining us and giving your perspective and strategy on the market. Moving on then, let's take it straight to the top story of the day. Let's put the spotlight on some of the key commentaries really coming in from the US President Donald Trump. And the US, remember, is set to receive 30 to 50 million barrels of high quality Venezuelan oil, now sold at market price. Now, Trump says that the fund will be controlled to benefit both the nations, with Energy Secretary Chris Wright really tasked to execute it immediately. Now, the oil will be shipped and also delivered straight to the US docks, marking also the major energy move with geopolitical undertones. Not just that, remember, External Affairs Minister of India S. Jaishankar expressed deep concerns over the unfolding developments in Venezuela. A nation India shares strong ties with, he said, emphasizing a people-first approach. He urged all parties to find common ground that serves the interests of the Venezuelans. Against this backdrop, backdrop, let's take it straight across to Peter Maguire, the CEO of Trading.com Australia, to decode the roadmap for the oil prices and other commodities. Peter, welcome to NDTV Profit. What an interesting time to really get your perspective. My first question, how do you see this geopolitical tension that has really started the 2026 year with in Venezuela, that impacting the crude oil price? Is there going to be a supply glut?
Well, good afternoon, Nisha, and thank you for the invite. I'll tell you what, it's been extraordinary when we're looking back over the last week, what has transpired. Yes. And it seems to be structural weakness as far as price. And that glut, as you highlighted, I think it will come very much into the field of things over the first quarter. So as we roll this forward, one would think that we'll build on those big, drawdown as far as price. What we saw was a washout over 20% off for the year. And I think that that's going to continue as far as softness for energy prices, certainly leading into first quarter and second quarter.
All right, so you're saying first quarter and second quarter. Many of the economists across the world, Peter, have really brought down their projections for crude oil prices from over $60 per barrel to 58 or so on an average for the next year. Do you have any particular number?
Yes, I do, Nisha. I think that I'm keeping a very close eye on those high $52, $53 for WTI. I feel as though Brent will, I want to see it break 56. It's currently right on $60 as we speak. And that structural softness that I'm feeling that we could be under $50 by end of year. But it's a very long year, as we know. And I think there's going to be a year of much geopolitical concern that can always change the landscape as far as energy prices at short notice.
That's right, Peter. But, one cannot also, Venezuelan event probably has overshadowed what we dealt with in the last few years. That was the Russia-Ukraine war. And how are you seeing that really impacting the crude oil prices as well as the geopolitical tension in this particular year?
Well, it's been a protracted war, as we know, Nisha, and we're slowly getting, we understand, closer to some form of resolution between both parties, and certainly President Trump's involved in that as well, with President Putin and Zelensky. So there's the first part of it. If this was to materialize and there was to be a complete and utter ceasefire, I think that would strip a number of dollars as far as any form of war premium out of the crude market. It could be a couple of dollars, maybe 2 or 3, that would come and be taken straight out of that price point. So that's what we're sitting with at the moment. It's very much a work in progress. And I think for the long-term horizon, one would hope and think that there would be some form of resolution by either end of first quarter or certainly somewhere between that and the second quarter.
All right. And apart from that, any other factors that are on top of your mind when it comes to the crude oil price outlook besides these two geopolitical tensions, Peter?
I want to keep a close eye on US dollar. I want to see what happens with the other commodities, of course, being industrial metals and the overall theme of, tariffs and how that's all going to, how it's still very much a work in progress to see all of those moving parts come to some realization. This is the point forward. And I feel as though it's very early days from a tariff perspective. There could be hiccups and bumps along the road. So again, we have to work through that and just to get to a point of this is the final positioning and then, cheaper prices rolling forward from there into 26.
Right, Peter. In fact, well pointed out, the uncertainty regarding the tariff war globally is also an uncertain factor along with the geopolitical tension, which really defines the matters and the price movements for many of the commodities. But what about copper hitting record levels? What's your view on that?
Well, it hit 13,300 approximately overnight on the London Metal Exchange. I also noticed that COMEX initial was at $6 a pound. Now, it's up over 20% since late November. Now, That is quite incredible, up 20% in 6 weeks. So I'm forecasting probably up to 14,000 by end of month, and the velocity that we've seen over the last couple of, maybe the last week or two, has really started to gain even further traction and horsepower. So as far as a price point, yeah, maybe 14,500 to 15,000 over that first 2 quarters. And it's very hard to forecast out from there, but also keep a very close eye on some of those other industrial metals, Nisha, because it's their time to shine.
Other industrial metals also very important, but what really shone really in the year 2025 towards the end, Peter, was clearly silver. Silver has turned into the new gold, it seems. What's your projection for silver trade and the price movement?
You know, if we go back, today's Wednesday, we go back to Monday and it was at $71. Now it's at $81. Now it's had a huge, so that's up nearly 15% in 2 days. Now, our all-time high is $84. I'm tipping that it'll get to $92 to $95 by end of month. And the overall momentum leading forward from there, you know, through $100 sometime in end of first quarter. Let's just wait and see the momentum. But I don't think it's going to be just a straight, you know, upward tick. There will be valleys and peaks, and you'll see big price moves, but that's the market for you. And this is not unusual to see big pullbacks of 6 and 8% in a day, and then acceleration over a couple of days to the upside. So, yeah, they're dynamic markets to trade, Nisha.
That's right, Peter. In fact, all that glitters is silver, you know, in the last few weeks that we have seen. But thank you so much with all your perspective on the various commodities and the price movements. We'll revisit all of that when there are more certainties coming up and new factors that emerge. Thank you so much, Peter, and have a great 2026.
Thank you, Nisha.
Thank you. All right, moving on then, let's take it to the skies, because Indigo is set to become the first Indian airline to really induct the Airbus A321 XLR. Now, this marks, remember, a major milestone in its international expansion plans, and the aircraft is expected to land in India after 3 p.m. Danish Anand, our colleague who has been tracking the developments very, very closely, joins in with all the details. Tell us, Danish.
Well, that's correct. Indigo has become India's first airline to induct an Airbus A321 XLR. Well, this is a narrow-body aircraft, but this comes with an elongated travel range, as well as it is a little bit much more wider when it comes to the length, so it can accommodate more passengers. But this is special for Indigo because we know that Indigo's international plans are very big, and if they induct such more aircraft in the next few more years, then Indigo will be able to rapidly expand its international operations. And since this aircraft can fly up to 9,000 nautical miles, so if we look at India's geography, then Indigo can operate this particular aircraft not only to one particular section in Europe, but Indigo can also start flying to deep inside the African continent, as well as Indigo can further fly deeper into more Southeast Asian destinations. So from that perspective, from Indigo's international perspective, this is a big step that has been taken by the airline, and sources are also telling us that by the end of this financial year, Indigo is expected to induct another A321 XLR. And as we speak right now, the aircraft is already on its way to India. It has just departed from Saudi Arabia some time back, and it is expected to land in India in the next few hours. And this will give Indigo a much relief as far as its international expansions are concerned, because last month, NDTV Profit was the only channel which reported that Indigo's plans on international expansion is on track. And after this aircraft is inducted, we will soon get to hear announcement by Indigo that they will be deploying this particular aircraft on Delhi to Athens and Mumbai to Athens route. So all in all, if we see, it's a big day for Indigo, not only for the airline, but also for India, as this is the first A321 XLR that is expected to join Indigo's fleet very, very soon.
Thank you so much, Danish, for getting us all those details. And that's right, for Interglobe Aviation, this is a very important moment of show of confidence, and also reinforcing that confidence after the recent crisis. So all plans are in order and on track. Let's focus on another company. We are talking about Cipla, which is 4.5% down in trade and is in focus as its partner, Pharma Greece, got a Form 483 at its Rhodope unit with 9 observations. So that's an important US FDA observation that has been really coming in, and that has put pressure on this particular counter. How will this really impact the company's operations and also the performance? Varsha is here to break it down for us. Varsha, tell us.
Yeah, well, first of all, it's definitely a negative news, and that's reflecting in the stock price as well. Now, why I say this, because if you see, the Form 483 has been issued to its partner, that is Farm 10, and the 9 observations were noted, which includes your microbiological contamination, your poor aseptic practices, and the data integrity concern. Having a data integrity concern is definitely a very, I would say a negative thing for any company. And the observation number 4 also indicates data integrity issues. Now, how this is going to impact Cipla? One is the Farm 10 is a partner for Cipla for one of its drug, that is lanreotide, which treats hormonal disorders and certain types of cancer. If Pharma 10 faces problems, Cipla's lanreotide drug will actually face manufacturing issues and will impact the sales of this drug. Now, why? Because if you see, this drug is Cipla's largest or rather biggest US drug, so contributes majority of revenue when it comes to US. So overall, yes, a big negative coming for Cipla, and that's reflecting in the stock price as well.
That's right, Varsha. Thanks so much for getting us all those details on that pressure point building on Cipla. Moving on then, robust jewelry business driven by surge in gold prices aids to Titan's Q3. In fact, the company saw a 38% rise in the domestic business, even as emerging business grew 14% for the company, and that's now reflective on the stock price as well. Mahima is here to share the update and also what the brokerages are saying about Titan going forward. Tell us, Mahima.
Right, Nisha. So as you rightly mentioned, robust jewelry growth is what has augured, which has in fact triggered the stock price as well in trade today. And largely the bar growth was flat, but on the back of rising gold prices, we've seen a good growth coming in the top line. Domestic business saw 38% growth. Jewelry business, that includes Tanishq, Mia as well as Beyond, grew around 41%. Carat Lane grew around 42%. Even in terms of watches, it grew around 13%. Eye care at 16%, and emerging business, though a very small part of the business, also grew around 14%. In terms of where the commentary stands for each of these segments, jewelry said that the growth was backed by substantial average selling prices increasing. Gold coins nearly doubled as compared to Q3 FY25. Gold plain as a category grew strongly in late 30s. Studded also saw a healthy double-digit growth in mid-20s. So that means margins could now see some easing, and like-for-like growth was seen in low 30s. In terms of watch, premiumization trend continues in terms of strong double-digit growth, and smart watches, however, seen a decline. Eye care growth was largely driven by both international as well as in-house brands, and emerging business, different categories, fragrances grew by 22%, women's bag around 111%, but Taneira is where the pressure is because it declined by around 6%. Now, for as far as the brokerages stand, Morgan Stanley has maintained overweight with a target price of 4062. They're saying Q3 was a beat, 40% jewelry revenue growth versus their estimate of 21%. Citi has maintained neutral with a target price of 4125. Q3 update was robust growth in jewelry. Studded mix, however, has declined, and they're watching out for margin trajectory going forward. So this is the overall view of how Q3 business update is looking like for Titan.
Thank you so much, Mahima, for getting us all those details. Titan, the star stock for the day today, giving you 193 rupees of gains in a trading session. Meanwhile, remember, the company says that the objective is to lead in both lab-grown as well as natural diamonds, that they plan to add its next store in NCR, and emphasizes that its expansion strategy isn't really limited to metro cities. Let's listen in to the management.
Our objective is to be a leader in both segments and be in the pole position of both. So it is a very measured play. We opened the first store. The second store will open in NCR, and we hope to open a bunch of stores largely around Bombay and Delhi.
All right, so those were the important commentary coming in from Titan's management from the con call. With that, completely out of time on this edition of Markets at 12. But do keep it with NDTV Profit. Thank you so much.
India. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the level, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Hello and welcome to NDTV Profit. This is Hiral Dadia bringing you our all-new offering, which is trending stocks. And with me is Sharad Dubey standing right at the NDTV Profit market pit with all the action that's happening so far. Sharad, over to you.
Well, looking at the market pit here, the day is very choppy, but we are near the day's low level when it comes to the Nifty index. Look, it has been in a range, but now it's falling and it's in the day's low level. That's where the key concern comes in. However, on a positional basis, Nifty Bank still looks decent, but there is kind of a choppiness in that as well. Let's pull up the Nifty Bank. Not so much fall coming in, and they're trying to arrest, in the day's trade as well. So it'll be very much important to look at the key levels also. Speaking of the key levels, there are important triggers for the market currently which you should be factoring. The first is the Nifty index has fallen below the 10-day EMA levels, especially for the intraday traders. This is a very important level. What's the next level? That's more important. The 20-day EMA level is something where the support can come in for Nifty, and that is at 26,080. Focus on that number. Also, let's look at what are the other key factors for the markets remaining choppy. This is that Nifty bank setup that is positionally remaining strong as well. It's holding up its 10-day EMA levels. Nifty PCR that has jumped in from 0.7 to 0.9, slight, you could say a bullish segment coming in, but very slight. Sectoral buying coming in the pharma and the jewelry segments. We saw good rally coming in, very strong updates from Titan and even Senco Gold, Kalyan Jewelers. Apart from this sectoral rally, we are seeing the global risk-on sentiment still prevailing. That means just a technical pause. Overall trend remains positive. Apart from this, the stock are moving on Q3 updates and the broking upgrades. And lastly, I'd like to also point out that most of the sentiment is suggesting a very narrow range of trade when it comes to the options segment. There is but a strong, you could say short covering happening in the certain IT counters as well. Back to you, Hiral.
Thank you so much for that. Interesting day of trade. Markets at the day's low and IT stocks are rallying, and this is a rally ahead of the Q3 numbers that will start trickling in next week from Monday onwards with TCS reporting. So that's the first stock, first sector that is on NDTV Profit's trending stocks watch list today. Moving on, you have Tata Tech, where JP Morgan has actually upgraded the stock to a neutral. KPIT Tech, they've maintained an overweight. Both these counters seeing a good move in trade today. Tata Motors PV, now it's a weak Q3 business update, and that is what is impacting the counter. So that's going to be a stock that we will be discussing on the show as well. Elecon, again, that's surging ahead of Q3 numbers. So watch out for what Elecon Engineering reports in trade. A strong move coming in on that one. Cipla, a Form 483 has been issued to key partner, and that's the reason why there is some bit of pressure coming in when it comes with regards to Cipla. It is one of the top losers as well. Bliss GVS Pharma, now it's hit a 4-year intraday high in trade. It is one of Somit Sarkar's dealing room checks as well, where a lot of buzz happening with regards to stake sale or acquisitions in the M&A space on the Bliss GVS Pharma. Jewelry stocks are surging in trade on the back of the robust business updates that we've seen from names like Titan, Kalyan Jewelers. You talk about any jeweler, PN Gadgil are buzzing in trade. We're talking about HDFC Bank, third consecutive session of fall after reporting the business updates, and we'll talk about that one as well. Keynes and Dixon as well, the analysts are eyeing a weak quarter in terms of Q3, and there is pressure building in on both these counters. You have IEX, likely relief that could be coming in terms of the market coupling case. The hearing is next on the 9th, and there is some action happening on an IEX in trade as well. DMart gaining ahead of Q3 numbers. Apart from that, you have Camlin Fine, Info Edge, Precision Wires, Misho, all of these that we will be talking about in terms of the watch list. But first up, Sharad, let's look at the rapid fire.
Well, yes, Hiral, Gaurav Sharma is joining us from Globe Capital. Very good afternoon to you, Gaurav. First query is on the IT stocks. We have seen significant upgrades coming in from the broking houses as well. Even the mid-cap IT space is also buzzing. What would be your key picks over here in a fast way?
Hi, good afternoon, Sharad. So the key picks are the three. They have been always our favorites. That is Emphasis, Coforge, and Persistent.
And Gaurav, Tata Tech, there has been a JP Morgan's upgrade on that.
Little to talk about it. It has been an underperformer. I'll still take some more time to actually stick around with it. On technical front, 700, 720 is an important resistance zone. Once it surpasses that, then a decent up move can be expected.
And Gaurav, your views on KPIT Tech?
Again, not too encouraging. Still having multiple resistances around 1225, 1250. A struggling stock. Better to avoid.
All right. And Elcon Engineering, what's your view on that?
Elcon can be held. I think if a view is of 2 to 3 months, someone can hold Elcon.
All right. Any shorts developing for HDFC Bank?
Not at all at the moment. 940 is a very strong support. I'll first wait to see it holding around those levels.
All right. Precision Wires, volumes, that has picked up. What's your view on that?
Precision Wires. Not tracking the same very keenly. So I think still some more downside remains.
All right, what about Meesho? There has significantly correction already there, and now the lock-in also comes out.
Yes, some more decline is quite possible. 160 is on the cards.
All right, and IEX, yesterday there was a significant up move in that counter as well. What's your view now?
Looking positive, waiting for a break above 155. Thereafter, 165, 170 is pretty much possible. Take a stop at 145.
All right, that's the entire view coming in from Gaurav. Thank you very much for joining with us. Over to you, Hiral.
You know, that's an interesting rapid fire that we've had. We've almost managed to get views on multiple stocks that are buzzing in trade. But moving on, it's that time where we're talking about something which is really buzzing. You're talking about the jewelry counters, which are up and about in trade with robust business updates coming in as well. In fact, before we go across to Mahima, let me actually head across to Varsha to talk to us about one of the stocks which is in focus. You have Cipla, where its partner, which is Pharma Greece, got a Form 483 at its Rodopi unit with 9 observations. How will this actually impact the company's operations? Varsha is here with the details.
Yeah, well, first of all, it's definitely a negative news, and that's reflecting in the stock price as well. Now, why I say this, because if you see, the Form 483 has been issued to its partner, that is Pharma, and the 9 observations were noted, which includes your microbiological contamination, your poor aseptic practices, and the data integrity concern. Having a data integrity concern is definitely a very, I would say a negative thing for any company. And the observation number 4 also indicates data integrity issues. Now, how this is going to impact Cipla? One is the Pharma is a partner for Cipla for one of its drug, that is lanatrotide, which treats hormonal disorders and certain types of cancer. If Pharma faces problems, Cipla's lanreotide drug will actually face manufacturing issues and will impact the sales of this drug. Now, why? Because if you see, this drug is Cipla's largest, or rather biggest US drug, contributes majority of revenue when it comes to US. So overall, yes, a big negative coming for Cipla, and that's reflecting in the stock price as well.
Okay, so thank you, Varsha, for that. Let me get in Gaurang Shah, Senior Vice President at Geojit Investments as well. Gaurang, welcome to the show. Always a pleasure to speak to you as well. And I think this is the first time we are talking on trending stocks, which is a new offering that NDTV Profit has got. My question coming to you is your view when it comes to a Cipla on the back of the Form 483 that has been issued. What would you advise investors to do with the 4% fall? And in addition to that, the entire pharma pack is a buzz.
Thank you, Hiral, for having me on the show. Good afternoon to all the viewers of NDTV Profit. To you, a small disclosure, all recommendations that I'll be sharing this afternoon on your show, Hiral, are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we give advice to our clients on similar lines. They might have their investment interest. So we've been positive on Cipla for a very long period of time. And honestly, as Varsha was listing down the concerns, I think this is not the first time, first of all, Hiral, that Form 483 has been issued by US FDA on an Indian pharmaceutical manufacturing company. It has been there in the past also. The more important factor would be to look at how quick the resolution is of the issues that the Form 483 has highlighted. My sense is that maybe because of this short to medium term, there might be a little bit of concern. But given the track record and the performance and the credibility of the management, I don't think it's going to be very long before they can come out with the resolution. And remember one thing, Hiral, if you are in the business of life-saving drugs, manufacturing life-saving drugs, and if you want to compete at international level, you need to have your, backyard in place. You can't afford to have any shortfalls coming in.
That's with regards to where Cipla goes. Another stock that is in focus today is a Info Edge, seeing some strong moves, and this is on the back of the Jobs Peak December 2025 data, which is indicating a 13% growth led by hiring in non-IT sectors, while hospitality has seen a growth of 29% led by Mumbai and NCR. That's where you know where all the parties and holidays are actually happening, and who are the people who are actually making this happen. Puneet is here. Puneet, what do you have for us with regards to Infosys? It has cooled off slightly right now, but strong moves coming in there.
Well, there are multiple key growth drivers, and as you rightly said, the headline number of 13% growth did signify a growth, but across sectors, there have been actually a very strong performance in the non-IT space as well. So, hiring is up 13% in the month of December, that's the headline number. Insurance sector has actually grown by 34%, while there's been a 57% growth in the overall hiring for freshers. And that's probably one of the key reasons why the stock's reacting positively. Apart from that, hospitality also, as you rightly said, up 29%. Banking has witnessed a 7% growth, and while IT and banking are the leading indicators of growth, the growth in high single digits is still something that the street will take with both hands. 15% growth driven by the oil and gas space. And finally, non-metro cities like Kochi and Jaipur are starting to be hiring hubs essentially in the non-metros. So probably this could be a trend that we have to continue to monitor. But first signs of fresher hiring is probably one of the key reasons of the positive outlook on the stock today.
Thanks a lot, Puneet, for that. But Gaurang, I would like to get your views on Info Edge. What are your views on it, fundamentally?
So Sharad, again a disclosure, we have a fundamental buy call on Info Edge. Targets are approximately somewhere close to about 1600 from a long-term point of view on the fundamental side. And my sense is that, as economy recovers, as we move towards globalization, as we move towards becoming a large manufacturing hub, I think services and facilities and platforms which are provided by companies like Info Edge would be in spotlight for all the good reasons.
All right, so that's the view coming in for Info Edge. But one sector it is sparkling all throughout the day. Good Q3 updates are also coming in. No doubt, that's jewelry segment, and Mahima is here to give us the entire details about it. Mahima, this entire space is, sparkling.
Absolutely, sparkling and how, right? You have something like a gold, which is really zooming in trade. I'll start with the business update coming in on Senco first. With regards to where the growth is concerned for revenue, it's come in at 51% versus that of 6.5% in Q1 and 28% in Q2. So big one coming in, and they've revised their guidance also, and that is one of the reasons as to why the stock is zooming. Overall, there was the same-store sales growth at 39%, diamond jewelry growth at 36%, and gold prices, of course, have grown 65% YOY basis, but management is now confident of achieving 25% plus growth versus that of 18 to 20% earlier. The next one is Titan, again the top nifty gainer, largely on the back of the overall growth that has come in. Jewelry growth at 41%, Carat Lane at 42%, overall domestic growth at 32%. Overall jewelry growth, of course, is backed by the substantial average selling price increases. Buyer growth, however, is still flat, so that's still a concern. And overall, studded also saw double-digit growth, but margins is something that we'll have to watch out for, and like-for-like growth was in low 30s. And lastly, Kalyan Jewellers, here again, revenue growth at 42%, same-store sales growth at 27%. International business is really picking up for them at 36% of growth, and Candor at 147%. They've launched 21 Kalyan stores this particular quarter. And overall, so, I mean, of course, but the question really here is, Sharad, that, going forward, volume growth, whether that comes into picture or not, because right now it's all value growth.
So basically value versus volume, that's the key concern coming in. But Mahima, the Senco's management is also there. We have asked a lot of questions to them. What would be your view on that?
I think going forward for Senco, we'll have to watch out for, because first 2 quarters were completely muted for them. This quarter, they've really picked up. So that 25% plus growth that they've guided for, whether they'll be able to achieve by the end of FY26 or not, we'll have to wait and watch out for that.
All right, so it seems like there might be a top coming in for the jewelry stocks. Thanks a lot, Mahima, for that. But the action is definitely there in this space, and we can say the sectorally, a lot of movements are happening. Gaurang, I would like to get you on this jewelry space. Titan, of course, valuations at times, the questions are always there. But do you think this jewelry stocks, this juggernaut will roll on for the next quarter as well?
Well, Sharad, my sense is that firstly, I think all these stocks are driving you on the upside is purely because of the way gold, silver, and platinum prices are moving across the globe, including India. And the outlook for 2026 for all these 3 special metals remains extremely strong and robust. I would restrict my comments to a company called Titan Company, which is the largest player in this segment, and it also has a well-diversified business. It is not only in gems and jewelry, it has got wristwatches, it has got personal care products, it has got perfumes, it has got accessories, it has got eye care, They acquired a company, I believe, sometime back called D Damas in Dubai. Before that, they acquired a premium high-end platinum manufacturing company. And of course, the performance has been called CaratLane, of course, I forgot to name it. So the contribution comes in from all the different verticals to the balance sheet as far as top line is concerned. And along with that, I think the bottom line is also very, very strong. They recently acquired, I think, a lab-grown diamond manufacturing company. I don't recollect.
I mean,
the
yeah,
name.
that's the space. That's the space, Gaurang, which has been buzzing as well, lab-grown. But whether it works or not is anyone's question. In fact, to add more color to what's happening with the industry, we have Suvankar Sen, MD and CEO of Senco Gold and Diamonds, joining in. Suvankar, welcome to the show, and always a pleasure to speak to you on NDTV Profit as well. In fact, an interesting day of trade. The kind of growth that we've seen in terms of the business update, it's just something that no one could take their eyes off, right? Help us understand what has led to this growth. Is it value versus volume? And if it is only value and not volume, is that a concern?
It is not value versus volume. If you look at the Q1, Q2, and Q3, the Q2, because that was the quarter in which the gold prices just started moving up, and the consumers were in a wait and watch situation. They were trying to understand whether this growth was sustainable or not. But by the time Q3 set in, and it was the quarter for festivities, the Diwali, Dhanteras, the wedding season was at its peak. So I think that, the gold prices continued to move up. I think consumers became very bullish, and they had to whatever postponement of their decisions that they had done, I think by Q3, they were all there. They had to buy what they had to buy. And I think all of that put together, what we did from our side as a company is that trying to understand the pulse of the consumer at these high gold prices, what is the weight range that will be selling well and what the consumers will be able to afford to buy. That was very, very critical to fulfill those demands and needs. And also the good part was that while we have seen a 51% overall growth, the diamond jewelry sales also has been at about 39% growth, which is, I think, a very, very encouraging situation where we see that at these high gold level prices, consumers are also open to for gifting or for self purchases, buying 14 karat. 9 karat was one of the lower purity introductions that we did, and 18 karat with studded as well. So I think all in all, it's been a good festive quarter, and I think the jewelry industry, along with the value, is seeing this kind of growth. Yes, but to keep in mind the volume, we have seen about a 7-8% degrowth in terms of volume. And YTD 9 months, if we look at it, that we are seeing about a 12% degrowth. But in a year in which 60% is where the value has gone up, obviously for you and me, we are all consumers. It'll take some time for us to adjust and spend that much money. We have old gold exchange, we have all these facilities, but still consumers will take some time to buy that equal volume of products that they were buying previously.
All right. Hi, Subankar. This is Sharad here. Of course, we speak a lot about gold, but now the industry is talking about lab-grown diamonds as well. I suppose there is an arm for that also for your company. What are the growth and expansion plans looking like for the lab-grown diamond segment?
So see, if I take our strategy, our studded ratio currently is at about 12.5%. Over the coming 3-4 years, we want to take our stud ratio from 12.5% to 15%. That is something that we need to keep in mind, whether it be natural diamonds, lab-grown diamonds, gemstones, all kinds of products. So this is one thing. And with the gold prices going up, it is very important that we keep on focusing on this segment, because consumers will go for design, will go for utility at a lower carat. Second is lab-grown diamond. We have seen that the big players are also getting into it, and that means that this market is going to evolve and it'll get more organized. We had thought of the similar decision 1 year ago, and what we are seeing is that consumers are actually gradually, the awareness levels are going up, the curiosity, the demand. People are saying that if I have to fulfill certain desires, lab-grown diamond will able to fulfill those desires in terms of size of diamond or in terms of the design and the look that they want to get. So over a period of time, I'm quite confident. We have got 8 stores. Every year we'll want to open about 5-6 more stores of lab-grown diamonds. But the natural diamonds, the gold, those will also continue to remain. Overall, the industry will become highly diversified. And just the way for clothes, we have something for formal wear, something for casual wear, something for young, something for the, saris, ethnic. I think the jewelry is going to get segmented in that way as we move ahead.
So, Ankar, that's interesting. So, when you're talking about the strategic shift that's happening towards probably lightweight, budget-friendly jewelry as well, and this is in response to the record gold prices, does that have any impact when it comes to the margin side of the business? Because we're still talking about a 7+% kind of a margin guidance for a Senco Gold. Do you see that normalizing somewhere else now?
Normalizing somewhere else will happen when we will see that this kind of the stud ratio change happens at a very strong fundamental level. If we see that the consumer preferences are moving more and more from the plain gold kind of jewelry to the studded in a very strong, sustainable manner, I would be very positive on seeing that this margin change from a 7% would move up higher. But till that time, right now, it is actually a very volatile time. It is a changing time. And in that changing time, we need to keep on trying everything. But as you rightly said, that currently with this scenario, the 7% plus is something that I will keep guiding everyone and not unnecessarily take it up too much high for now. But 2 years later, the situation could be different.
Okay, so situation could be different. So, Ankar, my last question coming to you is, if you have to look at 2026 as a year, your target when it comes to gold prices, what are you envisioning? And 2, what are those 2 or 3 key monitorables that investors should watch out for from a Senco Gold?
The gold prices, what we would hope for, it is dependent on multiple factors. See, we all are opening the news, everything is up there, and everyone is talking of $5,000 per troy ounce and such targets. Now, macroeconomically, if we look at it, what happened in the last week with the US, Venezuela, and such situations create a lot of uncertainties in a global scenario. It could work in 2 ways. One is that, the trust on dollar will keep on going down. Countries will want to diversify out of it. And that is where gold and silver will have a big role to play. The EV story continues to stay strong, for which silver is seeing what kind of movement we are all seeing. So, and, the other countries will also get the encouragement of doing such aggressive actions, which again will help the gold to move up. So in this scenario, I would be strongly, still bullish on gold and expecting a 15-20% increase. But again, to the investors, we need to be cautious. There could be certain months of corrections, and those 10-15% corrections are always something market expects. So we need to be aware of those situations and accordingly plan ourselves. So this is one. And the second question that investors should look out for Senco is that, are we being able to open stores like we have our plans of 18 to 20 stores for the coming financial year also? And our effort and endeavor will be that we will open more and more franchisees. Own stores, company-owned stores will obviously be there, but franchisees is something that we also want to open. So are we being able to open all those stores in the coming year or not is something they should look out for. Expansion in a sustainable manner. Second is that the stud ratio that we have always been working on with these current gold prices, are we being able to diversify out of just, the gold and increasing our stud ratio, which will help us to, open up the doors for higher profitability. And thirdly, I think that not just for us, but for the industry overall, is how are we managing our inventory? How are we ensuring the cash flow?
So, Ankar, we've got the 3 points, absolutely, but completely running out of time. We will expand on this in our next conversation as well. But thank you, Gaurang. Thank you, Suvankar, for joining us on the show. Always, a happy discussion that we have on all of these topics. But that's all that we have on this edition of Trending Stocks. Lots more lined up on the other side. Please stay tuned. We have lined up lunchtime trades with Shreyansi Singh. Big stories of the day up next.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots. What is it that Warren truly did to impact my life? My top learnings from the deadly duo in word.
Choppy day of trade on the Lal Street. Nifty trades below 26,100. Sensex down over 200 points. Unlike yesterday, Bank Nifty mirrors benchmark weakness. Broader market pressure persists. Meanwhile, Cipla cracks more than 5% as company faces regulatory overhang. US FDA flags contamination, aseptic lapses and potential data integrity concerns at its Greece facility. And it's Titan that is sparkling bright after reporting a robust business update in the third quarter led by strong festive demand and sustained consumer traction across key categories. Company outlines ambitions to lead in both lab-grown and natural diamonds in the con call. Info Edge in the spotlight as December white-collar hiring rose 13%, led by non-IT demand. The stock trades higher as hiring momentum improves outlook. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets your power-packed news update from the world of commodities, markets, and lots more, all while you grab lunch. But let's kickstart the show by taking a very quick look when it comes to the entire markets as well. So you do have Nifty, of course, that is under pressure, Sensex as well. The similar picture is something that you're seeing coming in on a sectoral basis is actually realty, auto, oil and gas, and as well as energy that are leading losses exactly in that order that I mentioned. Other than that, there's IT that's quite resilient at this point in time, 1.5% uptick coming in for IT, the top sectoral gainer as well. Pharma defense doing okay for themselves as well, holding on to a tinge of green at this point in time. Let's quickly take a look at the top losers though from within the Nifty pack. So there's a bunch of counters that you have. Cipla, of course, is down at this point, 4% downtick coming in for Cipla, Tata Motors, PV, Max Healthcare, Maruti Suzuki, as well as Power Grid are some of the other counters that are under pressure, along with HDFC Bank. That's the heavyweight that is also under pressure. In terms of the top gainers as well, you're looking at Titan that is doing quite well, sparkling after that robust third quarter numbers as well. So 4.5% uptick coming in as far as Titan's concerned. Geo Financial Services, HCL Tech, Wipro, Infosys, and ICICI Bank, some of your top gainers as well. But let's also move on. Take a look at India's real estate market, because that is something that you should be looking at. And you do have India's real estate market also remaining resilient through 2025. So that's something that you have in terms of the background there, with fundamentals also holding steady despite a moderation in supply additions. You do have new launches that continue to tilt towards higher ticket segments, even as unsold inventory also rose due to supply consistently outpacing absorption. Before we go across to Ghulam Zia, Senior Executive Director at Knight Frank, to get you a little bit of an insight when it comes to realty, let's go across to Anushi to try and understand this a little better. Anushi.
Shanti, so Knight Frank has put out the first sentence very out clearly that markets have remained resilient in 2025. This is despite the overall talk about escalation in terms of prices, about supply, or the cycle of the market that we are in, that we are looking the statement coming from. Now they say that the composition of new launches have remained concentrated in these higher ticket sizes. In fact, this is where the overall contribution has also increased over the couple of years, and demand has remained resilient over here. But it's the supply additions which have moderated, with annual and half-yearly launches declining by 3% and 4% respectively. Even if you look at unsold inventory levels, while that remains on the healthier side considering they follow the quarter to sell metric, it has continued to see a subsequent rise since 2020 as new supply has outpaced absorption that is happening. So this is one key monitorable that we have to continue to see to understand the overall health of the real estate market as well. But coming to the launches and sales, in 2025, both of these metrics are about a 3% and a 1% of a downtick. Even if you look at all the real estate companies, they have seen a slowdown in terms of where the launches have been concerned, and the sales volume has also depleted. However, sales growth, if you look at that in the 2 to 5 crore of bracket, it's seen about a 20% of a growth. So you continue to see demand upwards in all of these high ticket prices. While in terms of residential price movement, NCR and Pune come out have seen noticeable declines in terms of where the price volumes are concerned, and this is due to higher price escalation also seen. Coming to the Indian office market here, 20% is the kind of growth that we've seen, and this is driven by GCC. So what are the key drivers that this office market will have is also interesting to look at. But this is the overall take that we have for real estate.
No, absolutely. Thank you so much, Anushi, for helping us out with that. So there you go. That's the update coming in on that front. New launches continuing to tilt towards higher ticket segments, even as unsold inventory also rises due to supply consistently outpacing absorption. In fact, let's also delve a little bit deeper when it comes to this one. We do have Ghulam Zia, Senior Executive Director at Knight Frank, in conversation with Anushi. Let's go across and listen into a slice of that conversation as well.
Your important report has come up for 2026. 2025, we saw, the residential segment, the realizations were on the higher side, but will this momentum continue and will the H2 be better than H1?
First of all, thank you so much for calling me on this platform, and very warm wishes to NDTV, its staff, and all your viewers on a very happy new year. I'm talking about the real estate, and your question is, will the way forward be as good as what we have seen? First of all, let me just put the backdrop. Year 2025, much against a lot of those noises created that real estate has already started falling, at least 2025 did not really come close to the expectations of those naysayers. 2025, barely 1% drop, which is hardly anything. So from our perspective, 2025 has maintained the position that 2024 had. So it's quite a flat or a plateaued market as far as the year 2025 was concerned. Your question, 2026, the next half yearly, well, a lot can happen. Because if we believe that real estate is a cyclical industry with a typical cycle period of about 10 to 12 odd years, last 4-5 years of a marathon run where the property, the whole market, whether it is prices, absorption, everything was moving up. Now it's already 4 odd years. So is it the time when it has peaked out and the last year's plateau, is that a signal to say that we have reached the 12 o'clock position on the clock? Well, the time will tell. But from where we see it, the stabilization, what we have achieved in 2025, so possibly 2026 would also continue, or there would be some amount of reduction in business, minute one. Because again, if you look at the clock, from 12 to 1 o'clock is not a sharp fall, but a stabilization with a nominal reduction in the business is what we may expect in time to come.
Yes, and launches and sales, despite being at record levels last year, there is a slight degrowth coming in as well. What is leading to it? Is it the accelerated prices, or is the supply outpacing the demand?
And the macro picture, while we're talking about sales numbers, about 3.5 lakh, 350 odd thousand units sold in the top 8 cities, the launches have actually shrunk much faster, like lesser launches have happened. The reduction in sales, if it was 1%, reduction in launches was 3%. So net, what we're talking about is that the typical terms that people use, inventory, overhang, etc. The inventory that is left in the market would not take more than 2 years to be completely absorbed. So industry health-wise, it is nowhere to worry. So the point then you're making is it the price points? Yes, of course. The price points have actually gone pretty high in quite a few markets. Like, for example, if I talk about NCR, in last 1 year, we have seen a growth of almost 19% in the prices of NCR average. On the other side, Hyderabad and Bengaluru were the second and third in position with 12 and 13 odd percent. Mumbai at 7.5, 8 odd percent. So except for these 4-5 markets, the other markets have actually behaved pretty much in line with the inflationary trend. 7-8 odd percent of a growth is very close to the inflations. But these 2-3 markets are really actually going completely unaffordable, whether it is NCR or Bengaluru, etc. So those price points are a lot to worry about.
All right, but what would be the key pricing trends in the ticket sizes in the key regions if you're talking about? If you could just give us more details, Ghulam.
So the trend, if I have to really try to foresee in future, the outlook seems to be pretty stable. The price rise in last 2 to 3 odd years has been spectacular. So if a stability or affordability is a question in a developer's mind, the price rise would not be as severe as what we saw in last year for sure. So what we are forecasting, or where we see it from, we would want to see the prices remaining stable. So if we have seen, say, about 15 to 20% of rise in a few of these markets, I would want to believe that at least in these markets, the price rise would come down to single digits, which will be in line with the inflationary trends. So overall, the growth in the coming year in prices will not be as spectacular as it was in last 2 odd years.
All right, and there you go. That's Sharad in conversation with Knight Frank's Ghulam Zia, and that's a reality check, if you will. But this, of course, viewers, as you know, is a show where we get you updates from the world of commodities as well. So let's take a look at some of the things that are happening on that front. You do have the US that is set to receive 30 to 50 million barrels of high-quality Venezuelan oil sold at market price. Oil largely looking away from Venezuela at this point in time, and copper also sparkling brighter than ever, well above those $13,000 a ton levels as well. Silver sparkling bright is also the story that we have even in 2026. Let's take a look at all of these and the factors that we have powering these sort of moves that we've seen coming in. And we do have Ajay Kedia, Director, Kedia Advisory, joining us this afternoon. Thank you so much for taking time out, Mr. Kedia, and a very good afternoon to you.
It's a very good afternoon and golden afternoon, we should say, because 2025 was a golden year for commodity, and still we expect 2026 is going to be a fabulous for commodity.
Well, absolutely. And, I'm actually quite confused if you should be calling it silver afternoon right now, given that, you're seeing those kind of moves also continuing for silver, even in 2026. And, if that's the first thing that I wanted to lead with, actually, because, when you take a look at silver, if you sort of saw the script, if you tried to write the script a year ago, you wouldn't frankly be able to, you would sort of laugh it off, given the kind of levels that we've seen. $80 an ounce is something that we couldn't have imagined back in COVID days when you were looking at like $20, somewhere around $20 to $30, that range-bound year that we had coming in. What do you make of the key tailwinds when it comes to silver?
Yeah, surely, because see, if we majorly, what is the difference that has made 5 years fabulous for silver? Last year, we have seen 180% gain. See, first side is total supply. Total supply was around 1,000 million ounce since 2015. That has never changed. And the capex was totally from the mining side was not been up to mark. Because of that, supply deficit was continuously there. From the demand side, there was a totally change because industrial demand has came from 450 million ounce to almost 665. Jewelry demand was consistently to be normal, but we have seen the investment demand, which was hardly around 20-25 million ounce in 2015-2016, has rapidly gained to the level of 200 million ounce. So that has created a structural deficit, and that is why we have seen prices move towards to the level of 80 and still counting, because metal is under particularly more squeeze over there. Maybe a level like 100 would be there, but gain like 180 and consistent linear gains never we have seen in last 15-20 years. So there might be a correction of 20-25%. That could be a good level to re-enter. But frankly, industrial demand and investment demand is totally holding from current level.
All right, and thank you so much for helping us with that outlook when it comes to silver. And that, of course, is something that is top of mind. But I'm actually quite tempted to try and get a sense of what you think when it comes to energy prices as well. Because, there's oil, there's a bunch of things that you're looking at. And that geopolitical risk premium, I'm not sure if we've seen that really baked in the pie. What do you think about that?
See, Venezuela is one of the biggest crude reserve we know very well, and we were also expecting the conflict between US and Venezuela will carry some risk premium and prices might go to the level of 65, 66. But on the contrary, we have seen prices is now on the verge of reaching 60 level for Brent, because we have continuous oversupply. Right now, Russian supply, OPEC plus supplies continue to be there in the market. And on the demand side also, we have never seen major changes. That is why prices seems to be trading with a slightly lower side. But don't expect a free fall like situation in crude oil. We expect for 2026, first quarter could be oversupplied to the support of $57 for Brent. But from the second quarter onwards, we can see the demand would improve. Supply side would be slightly leveling up. So the range could be $57 to $70 for 2026.
Right, and that's the take coming in as far as oil prices are also concerned. But Mr. Kedia, it's actually copper's day. If you look at it, the kind of levels that you've seen for copper maybe a week ago is something that, a lot of brokerages were not really penciling in. You do have bullish targets coming in from Citi as well. When it comes to copper prices, 14,000 is something that they're seeing in the horizon. What do you also think about some of these key tailwinds that we've seen as far as copper is also concerned?
Yeah, I think the holistically base metal rally should be there in 2026. We have seen copper prices move more than 60% in 2025, and then zinc, aluminum, and in fact, lead was the slowest metal up till now we have seen. But in last couple of days, prices has gained by more than 20 rupees on domestic side. Nickel has gone to 19 months high after the Indonesia had changes their strategy. So overall, I think the rally would be continue for base metal, but for copper, I think a level like 14,500, 15,000 is in front of us, as structural supply deficit is supporting the prices. From the demand side, we have EV, solar, everything has been supported. There is a report going on in the market that silver can be replaced by copper only, and that is why we have seen copper prices is chasing the silver rally. We can use silver copper ratio, which is extremely on very high side, that suggests either silver should correct or copper should run up this. So I am more bullish on copper for 2026. Maybe on LME we can test the level of 15,000, and followed by aluminium, zinc, and other metal also will follow the same because of rate cuts going on. Inflation are in normal case. So overall, I think the base metal prices should get good support.
Well, absolutely, and Mr. Kedia, the last question that I actually had for you in terms of copper, it's quite interesting what you're saying when it comes to copper, because, Citi, interestingly, actually sees copper prices peaking later this month. So what do you have in mind when it comes to the tailwinds? I'm quite curious about. Of course, this is known as the devil's metal, and we've seen that rally also come in. And that's quite interesting also. But in terms of the key tailwinds, are you looking at tariffs? Are you looking at that entire timeline in terms of June 2026 being key for copper? Is that something that is also driving this bullishness when it comes to copper?
So I think furious rally has been seen in last couple of months. Three things one has to keep in mind. One is the supply side, because right now the things have been very cautious according to supply. Second would be the tariff concerns. And third would be the China, because lunar year holiday has been there. Sales books are picking up. That is why we have seen consumption in all metals has shoot up. But once we are out of this lunar year holiday, might be from March and April, we can see some kind of profit booking. But overall, I think the demand from EVs and industrial demand is going to peak. So we don't expect any crash-like situation in copper because of fundamentals. Maybe price can little bit consolidate and have a time correction. Support could be around, let's say, 11,800 to 12,000 as of now, but higher side would be kept around 14,500 to 15,000.
All right, then we hope that your afternoon is as sparkly as copper and silver, Mr. Kedia. But before I let you go, I quickly wanted to try and get a one-word answer from you in terms of copper and silver. Which of these two metals are you more bullish on right now?
Looking to the ratio and looking to the performance, what we have seen and fundamental, I would be more bullish on copper rather than silver. No doubt, silver perpetually we are expecting $100 plus.
Right.
But with the rally of 180, I think some sign of consolidation is required for silver. But copper, I am more bullish.
All right, then thank you so much for chiming in with that outlook. It's quite the bullish outlook when it comes to silver as well. Thank you so much for joining us this afternoon as well. But let's also move on. So there you go. That's the entire update when it comes to the world of commodities. But let's move on. And Dr. Lal Pathlabs is the one to talk about marked its foray into premium preventive healthcare with the launch of Suvaka, a high-end wellness center in Gurugram. You do have Rishabh, who spoke to Shankar Banerjee and Ved Goyal, also from Dr. Lal Pathlabs at the location itself. Let's go across and listen into a slice of that conversation.
We're at the new center. We're seeing the launch of a new premium wellness brand to come out of the Dr. Lal Pathlabs house. Talk to us about the rationale, and also talk to us about the sort of short-term and long-term vision you have with regards to this.
So, Lal Pathlabs has always been a pioneer in terms of diagnostic testing. However, this is a venture which is moving from the illness space to the wellness space. Okay. What we see is, a lot of people are getting diagnosed with really life-threatening diseases early on in their lives. And for us, it is important to see not only you look how you are fit on the outside, but you need to get yourself tested on the inside, which really gives you a true sense of what your health is all about. So this is our kind of flagship store that we have started to really get into on the wellness side and predictive testing.
Interesting. Illness to wellness, Mr. Goyal. Talk to us about, what sort of a role you're seeing premiumization in this particular space, right? Your CFO, I'll talk to you about pricing bit as well.
So pricing, in this space, which is wellness and very different concept. It is not only testing. It is a 360-degree, your preventive check. And in that, premiumization, people who are ready to pay, who wants good services, who wants everything under one roof, and who don't want to visit some of these places like hospital where there is a chances of, where they don't like. So this is the place where they can spend. And on the pricing side, I think we are the best among the industry who can provide good services at affordable rates. And that's the idea where we have opened this center.
Interesting. Let's take a walk.
Add to that point, the concept is really not about premiumization. It's more about saying what is right and what is personalized to the individual. If you see the way the base packages are designed, they are at an age and gender level, and then basis risk factors, it gets curated to become more individualized. So the pricing is more related to the number of tests that get done. And actually, if you see from a list price perspective, they are discounted. So it's really not, the concept is really not premiumization, but we know that, there's certain type of people who will come who need the right kind of service. So that's the atmosphere we were trying to create here.
Got it. Beautiful. Moving on to the larger industry questions, sir, and let me know which one of you will take this one. What is driving growth today? Is it volumes or is it pricing? Which one is doing better for you as a growth lever at Dr. Lal PathLabs?
So at Dr. Lal PathLabs, I've been saying this for quite some time now. We haven't really taken a price increase. Okay. So what's driving our growth today is driven by patient volume and test volume, and a bit of what we call as a test mix improvement. So there's a mix improvement benefit that we are seeing. So for about 3 years now, we haven't really taken a price increase. So if you see from that point of view, it's primarily volume driven.
Yeah, I think the intent is to drive business through volume only. Price, as far as we are able to absorb the inflation, so we don't want to increase the prices. And such a scale and size, we are able to absorb the inflation, and that's why Shanko is mentioning that we are able to absorb that, and that's why we have not increased the prices for last 3 years. Yeah.
Got it. Talking about pricing, sir, this is one space where there's a lot of competition and there's a lot of undercutting that also happens. There's very aggressive discounting. Talk to us about the pressures there. You're saying there's no price hike that you've taken in effect, but competition remains. So how do you plan to tackle those two?
See, I think pricing is not the only criteria. To be honest, I mean, it is one of them. But, the services, the, accessibility and the, menu which we provide, probably that is not, and pricing, what you probably talking is, which is routine. People who are online, who are providing just, e-commerce kind of services where they have limited test menu. We have a full bouquet where we provide more than 5,000 tests, very, very high-end tests. And those are not very, very, available in the market, and they are not able to do those tests. But having said that, we are not getting into this price war ever. We believe in quality, we believe in services, and that's where we always provide quality and services at affordable price. We are not very off from the price which they are providing, but we are very competitive on that.
Interesting commentary, very interesting point of view, gentlemen. Also talk to us, you have a target of about 600 to 800 new collection centers that are coming up, and the focus is largely on smaller towns. Talk to us about the sort of revenue per patient that you're seeing in those regions versus your core markets such as Delhi NCR.
So, firstly, if you look at our markets today, Delhi NCR contribution is actually 1/3 of our revenues only, right? It's a core market, it's the legacy market, it's where we have kind of, evolved from. But 2/3 of our business is actually outside of Delhi NCR today. So if you look at, the pricing or price per patient or realization per patient is slightly higher in Delhi NCR versus the rest of the country. But that has actually become maybe more or less standard for us. What we see is that between, a tier 2, tier 3 market or a tier 1 market, our pricing for the patient is quite similar.
All right, and that's all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in. Small Cap Buzzers takes all of the action forward. Stay tuned.
All right, team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler to help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. But before that, let's go across and see what's on the show today. Firstly, we'll be speaking with the management of Sandhar Tech. Now recently, MK had initiated coverage on this counter with a buy rating and a target price of 825, which suggests a return potential of nearly 43% from the current levels. So what's the way forward is something that we'll want to know from the management of Sandhar Tech. Apart from that, all the small caps jewelry stocks like TBZ, RBZ, Radhika Jewel have been buzzing in trade, and this is after the fact that all the larger peers like Titan, Kalyan and Selco have reported a strong growth in the third quarter of FY26. So a rub-off effect coming in for the small cap jewelry counters as well. Camlin, that stock is up nearly 6%, but in the last 6 months the stock has also fallen nearly 50-odd%. InCred came out with a note where they are seeing a return potential of more than 200% on Camlin Fine, and will be also touching upon Silver Touch Tech. In fact, that counter is up nearly 110% in the last 1 month. So what's the reason behind this and what could be the way forward is something that we'll be discussing with our fundamental analyst and our in-house analyst as well. But if you look at the markets, the Nifty, that's down for the third consecutive session. In fact, from the record high level that we had seen a couple of days back, the Nifty, that is the benchmark index, has fallen by nearly 300 odd points. And today in trade, it's the Nifty IT index that's in green, up around 500 odd points, but the Nifty Bank index, that's losing some steam, down around 350 odd points in trade. But Mahima, when it comes to the small cap segment, what's been buzzing?
I think a lot of jewelry stocks, as you mentioned, right? So Amit, in the small cap space, you have counters like Shanti Gold International, which is up 12%, TBZ, which is up 11%. There is Radhika Jewel Tech, which is also seeing gains in terms of where the trade stands. You have Silver Touch, which is up 9%, but some other counters which are doing fairly well includes counters like IFB Agro, which is up 9%, Medicam and Bio, SG Finserv, Camlin Finechem, as well as Rajatan Global. All of these counters doing very well in trade today. On the flip side, you have counters like Systematics Corp, which is down 3%, Signpost, Kamdhenu, United Polyfab. All of these counters down by about 3% each. And some other names also include NDR Auto as well as Mindtech, which are down 2% each. So that's with regards to where some of these small cap names are concerned. But with that, you know, as promised, we're joined by the management of Sandhar Tech. We have Jayant Davar, who's the chairman and MD and Chief Executive Officer of Sandhar Technologies, joining us now. Mr. Davar, thank you so much, of course, first of all, for taking out the time and speaking with us at NDTV Profit. My first question to you is with regards to where, your overall financials are concerned. In terms of the overall growth, I mean, if you take a look at the past 3 years, in terms of compounded sales growth, you've grown at 19%. Profit growth has also been at that 35%. But just want to understand that, now that your capex is at its peak, you have a lot of, positive momentum coming in the PV space, considering the GST rate cuts come in. How are you penciling growth to be beyond FY26, let's say for FY27 and 28?
Thank you for having me. Well, the good news is that like you mentioned, our capex cycle is over. So we've invested a substantial amount of capital expenditure in the last few years. And the idea is to build a runway for the next few years. And we believe that the growth that you mentioned, we do have a highway for that kind of growth to be compounding itself over the next few years comfortably. So if you're asking for growth, whatever growth you've seen, I would say that that growth would continue, in fact, maybe exceed that number in the coming years.
Give us some idea of what has been your current utilization levels, and on the expanded capacity, what could this number look like, say, 2 years down the line?
Well, I cannot give you an exact forward consensus in that sense, but all I can say is that I see no reason that the growth that you've seen in the past few years, which is around 19-20%, will continue to have that growth, maybe get some even higher aspects to it, irrespective of the movement of the auto industry. So what I'm saying is that we've done some acquisitions in the past. They are well on their way to consolidation and stabilization. And it gives us a visualization of a 20% kind of growth for the next few years.
Right. If you look at your EBITDA margins, it has been quite volatile. In the second quarter, it was around 9-odd%. Before that, it was around 7.5 to 8-odd%. And last year, the number stood at around 10%. So say 1 year down the line, where should this number stabilize at? Any guidance on that front, if you could share?
See, the potential of our company to be able to emit EBITDA is close to 12%. However, we are a company which is very diversified. And from time to time, whenever there are growth pains that happen, for example, in this particular year, we did an acquisition of the die casting business of Sundaram Clayton in Hosur. And obviously, that has brought in the revenue of close to 400 odd crores. But in terms of EBITDA margins, those are very, very small. We are currently at about 3.5%. It will stabilize when we move to our own facility, which we expect to do at the end of this quarter or beginning of the next quarter. And then things will stabilize. So overall, I do believe that on a gradual basis, the EBITDA margin should go towards what our ideal potential of 12% is. You will see improvement in the quarter results now and in the subsequent quarter, where the margins that you had shown in your chart here are definitely going to improve. But I would say that on an averaged out basis, a good margin of 10.5% to 11% is definitely achievable in the coming years.
Mr. Dawar, you talked about acquisition, you talked about capex being at its peak now. Considering all of these factors, and you said that you'll be growing at that 19 to 20% mark, do you think that your ROC going forward is going to improve, let's say, from a two-year horizon point of time, let's say by the end of FY28, mid-teens is something that you'll be looking at?
Well, to be honest with you, if you were to remove some of the new capital expenditure, if you were to remove Sundaram Clayton, or you were to remove some of the setbacks we've had in some of our foreign companies, our margins even today are close to 15%. We do believe that, sorry, I said margin, I meant return on capital employed. We are targeting that we should take this number of 15% to be post-tax in the next couple of years. That's what we are targeting. So obviously, there is a huge room for growth, and we are slowly but steadily moving to that number.
So as you were speaking about your foreign units, I believe that a restructuring of the overseas unit is already underway. By when do you see the EBITDA break-even to come in here?
We are very, very confident that in this quarter itself, we should be able to eliminate all the losses, or the margins will be positive enough. So you will see break-even in this coming quarter, or in the quarter that we are sitting in.
Dawar, with regards to your JVs, you've shut down 2 JVs, but 5 of your JVs are still profitable but contributing in a small way. But considering your growth going forward, do you think that all of these JVs will start contributing in a big way? Because if they do, your top line is going to grow even further beyond that 20% mark. Is that possible?
So one, the revenue and the top line of these JVs doesn't come into the company because they're separate companies per se. Yes, the bottom lines do come into the organization. We do believe that there is potential because most of these joint ventures are in areas of new technologies. And as more and more adoption of these technologies happen in the Indian sphere, we should be able to benefit more from them. But the fact that all of them are stable, all of them are profitable, all of them are growing, is a matter of great relief for us.
Right, sir. Thank you, sir. Thank you for joining us and giving us the way forward for Sandhar Tech. Well, let's also welcome in the fundamental guest, CA Tapan Doshi, research analyst at catapan.in. Tapan, you heard the management. They are quite confident of turning around their overseas subsidiary. The growth going forward looks quite robust given the fact that the company is done with most of the capital expenditure. How are you looking at this count at the current valuations?
Good afternoon, Sumit. Yes, even I am positive. If you see, yes, management is quite hopeful, and even you see the automobiles data and all that, it is quite good. So auto ancillary companies will be benefited. Again, I hear from here also there is a margin expansion plan going on. Again, EV parts growth is already there, and it will, for a long term, it will be there. Again, if you see their ROC is improving over the time. I think the management targets, of course, they are targeting high, but there will be a higher utilization of their capacity also. So I'm quite positive, and looking at the current scenario in automobile sector, I think this stock may go up from here also. So yes, I'm at looking at the current valuation. Yes, someone, if they want to get in and buy on dips, they can also do that.
Well, with that, let's slip into a short break and we'll cover more small cap stocks on the other side.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town?
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. It's time to take a look at the F&O space, and we have Sharad standing by to help us understand as to what the F&O space is queuing right now. Sharad, yet another day of range-bound trade.
Exactly, that's the real point. It's a choppy trade, and options data is also suggesting that same movement happening. But bits and pieces, sectors, Q3 updates and brokerage takes is what's driving the markets. Look at Titan, all the jewelry stocks are doing well. It's the top gainer in the Sensex index as well. Apart from that, IT positioning is also, we are seeing some basket buying happening across the counters. But amongst the losers, there are higher numbers are there. HDFC Bank for third straight session, we are seeing selling pressure. Apart from this, Power Grid, M&M, Tata Steel and Maruti also, we are seeing significant selling happening. Apart from this, looking at the overall Sensex contracts also, it's likely even Stevens in both the spaces for both call as well as put options. Also, looking at how BankX is performing, it is slightly better placed than Sensex, but remember Sensex did dip to below its 10-day EMA levels as well, and BankX also some kind of divergence. SBI, we are seeing profit booking happening. IndusInd Bank, it's down 2% as well. Apart from this, the other banks also in focus, how they have actually moved. These are the important contracts, but stock specific move is something which we are looking at today. Strong long build up happening, especially in the jewelry stocks. You can just pull that up. And now, but the stocks have moved. The tech ones, Hitachi Energy has also made it to the list. Interesting names. Short covering, let's fire those stocks as well. KPIT Tech and Avenue Supermart moves in. Good volumes also coming in. It's up almost 5%. Long unwinding candidates, they are, let's just pull up the long unwinding candidates as well, where we get the perception of NBCC and Torrent Power coming in. And lastly, short build up. These stocks include Cipla on a broker upgrade, and Maruti, that's also seeing big cuts as well. So these are the stock specific and sector specific moves in the FNO space today.
Thank you, Sharad, for that FNO snapshot. But as you're with us, could you also take us through what's been buzzing when it comes to Silver Touch Technologies? The stock is up nearly 110% in the last 1 month. I believe they had won some order recently.
Interesting name of the company in the small cap space, and apparently it's not Silver Touch. It seems like there's a golden touch has come to this counter. Stock is up in the upper circuit of 10% today, and it has hit its all-time high levels. And the numbers, if you look at it, that has jumped up 110% in just 1 month. Curiosity takes us to what the company is all about. Company is a leading end-to-end IT solutions provider, has a strong footprint in e-governance, enterprise technology, and digital transformation, and also providing emerging technologies as well. Apart from this, there are recent news flows also which has aided the rally of the stock. This includes the Indian Navy order which has come in. They are the digital transformation partner for that, and also this mandate is for the iPad SVT initiative, and the company will be putting up with these digital transformations for this segment. Now, important board meet also coming up on bonus and stock split, and that board meeting will be held on January 16. More liquidity might be coming in this counter, and company's outlook going ahead is very bullish when it comes to the e-governance segment.
Right, thank you, Sharad, for that detailed link on Silver Touch. Tapan, have you tracked this counter after this 110% move? What's your take when it comes to Silver Touch Technologies? If anyone is at all invested in this counter, should they exit, or there could be more upside from the current levels given the fact that they have recently won an order from Indian Navy?
Yeah, it looks like it's like a golden touch because the stock has gone up a lot. Again, if you see the valuation now, it's almost 75 P. Now, for any IT company, this is too high when the IT companies are not performing as such. Yes, they have e-governance deals, which is helping that again from Indian Navy also. And also from here, the management is targeting a very good digital growth. Again, the AI related and the cloud related demand is there, which is helping this company. But as if you see the 5 years CAGR growth is around 17 to 20%. So at this speed, it's very difficult to justify this valuation. But I think if someone is holding, keep a stop loss 15% down, and you can ride in. Otherwise, new entry is not possible. They have to wait for an entry at a much lower level.
All right, so that's with regards to where Silver Touch is concerned. But shifting focus and moving on, Camlin Fine Sciences is in focus after Incred maintained its ad rating and raised the target price, citing a strong upcycle in global vanillin prices. Varsha is here with more details, who tracks this very closely. Varsha, what is the demand-supply dynamics and earning visibility looking like?
Well, first of all, 236% upside is what Incred is talking about, and the big trigger over here is the tight vanillin market, wherein if you see the global vanillin supply structurally has been tight when it comes to US and Europe, and the Chinese supply has been largely eliminated due to anti-dumping duties, and this has led to surge in prices. And why Camlin is in focus? Because if you see their vanillin plant is now stabilized and the initial issues have been solved, and the commercial sales are now back on track. Now, if you see the vanillin price upcycle, so the price has gone above $32 per kg, and the European prices have also inched up, and the higher prices means higher profits, direct benefit to Camlin. Now onto the demand supply gap, if I were to talk about the US and Europe demand, if you see, stand at around 14,000 tons per annum, and the local capacity is significantly lower than what is being demanded. And the Solvay's, which is the other company, their plant is also starting slowly, not enough to fill the gap, and hence you're seeing the rise in prices, and Camlin being the direct beneficiary for that. And Camlin is not just a commodity business now, because they also sell high value blends, not just raw vanillin, which means more rather higher margin for this company. And lastly, if you see, the Vinpai acquisition give access to clean label specialty products for Camlin, and which also opens new markets like dairy, cheese, nutraceuticals, and which makes Camlin a solution company. So these are all the triggers, which has led InCred to initiate, rather to hike the target price with 236% of upside.
Varsha, thank you so much for bringing those details to us. Tapan, your quick view on this one. Do you also think that 236% upside is justified?
No, I don't think so, because if you see last few quarters, these companies making losses. Again, yes, there are good news coming in, but no, as such, no, still the company has not performed at that level. And management is targeting, a lot of utilization from here. But I see still a lot of headwinds also. So still, unless a few quarters are good, I'll not get into this stock. So my take on this stock still will be avoid.
The other, stack of stocks that are in focus are the jewelry stocks. So you have your big names that have come out with the business update, Titan, Kalyan, Senco, etc. And that is having a ripple effect in these small names. You have something like a Tribhuvan Das, which is of course in the business of retail, sales of ornaments made in gold, diamond, silver. They've not come out with the business updates yet, but first half for Tribhuvan Das, revenue growth was at 12.7%, EBITDA growth at 45%, and PAT growth at 63%. The other one is RBZ, where of course they're engaged in manufacturing, trading and job work of jewelry, in the gold and silver space. For them, the first half revenue was up 11%, EBITDA at 47% growth, and PAT at 50%. And last one is Radhika Jewel Tech, which manufactures, trades gold, diamond and platinum jewelry. In terms of the large trends that we've seen coming in from all of these big jewelry names is that, first, of course, gold prices year on year have seen a growth of 65%. So on the back of that, a lot of revenue growth uptick is coming in. So largely, it's your value growth rather than your volume growth. Robust jewelry growth over 40% is seen in all of these three companies that came out with their business update today. Same-store sales growth is also coming in strong for a lot of these names. Studded mix has started to pick up a tad bit, but we'll have to wait and watch out for the earnings to see as to how that reflects in the margins. And international business is also picking up for something like a Kalyan Jewellers and Titan. Lastly, buyer growth is flat and volume growth is also flat. So all of these factors considered, we'll have to wait and watch out for as to how the earnings fine print suggests. But Tapan, I'll quickly come to you on these jewelry names. Any of these names that you are finding attractive in the small cap space?
The biggest positive for all these three companies which you mentioned, of course, they are small companies, and they are already beaten up, almost more than 35 to 40% down from their top. And if you see their sales and all that, it's modest, profitability also modest. The thing is, the valuation is going on their side currently, and at this level, that is what you can see the bounce back, a good bounce back. When big companies are performing such a level, very good updates. I think strictly expecting that for these companies also the result may be better. So yes, for all these three companies, if anyone is holding this company, please hold it. I think better times are coming, at least 1 or 2 quarters, because I think overall the jewelry sector is showing a good uptick from here.
Thank you, Tapan. Thank you for joining us and giving us the perspectives on the stocks that were discussed on the show today. Well, a lot of small cap stocks that we have covered today. But with that, it's an end on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots.
Agarwal Packers and Movers Limited. Man with the cap, not 300, 300, 300.
Welcome, you're watching NDTV Profit. I'm Mahima Vachajani and with me is Puneet Jhaveri, and this is the afternoon edition of Ask Profit, a show that gets all your stock related queries answered. For viewers who are tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen up there. But before we move on to your queries, a quick look as to how the markets are doing. The Nifty 50 trading below the 26,100 levels now, down 0.6 odd % at almost at its day's low point. It's been a range bound trade, but also a very topsy-turvy trade is what we've seen. The Bank Nifty also in the red, down by about 0.3 odd %. With regards to where the contribution to the Nifty 50 is concerned, let's try to pull up that and see as to what are the counters that are actually contributing well to the Nifty of ICICI Bank, Titan, TCS, HCL Tech, on the green side. And on the flip side, you have counters like HDFC Bank, which continues to weigh down on the Nifty. Maruti, Bharti Airtel and SBI are some other names with regards to where the contribution is concerned. But let's try to pull up the sectoral heat map to see as to how sectors are faring in trade right now. You have counters like the Nifty IT, which is doing fairly well after seeing a lot of pressure in the past couple of days, up 1.7%. Nifty Pharma also in the green, up 0.5%. But on the flip side, Nifty Auto facing pressure, seeing profit booking down 1.3%. Nifty Realty, Nifty Oil and Gas, Nifty PSU Bank, all of these counters continue to be under pressure. So that's with regards to where the sectoral heat map is concerned. But quickly, the advance decline ratio, because that at the start of the day today was almost even Stevens, but right now you're seeing declines more than advances, and that chart has flipped. More towards the bearish side is what we're seeing on the broader end of spectrum, and that's reflected in the mid cap 150 and the small cap 250 as well.
Well, most certainly. And what a zigzag kind of a day we in the broader markets, and all the outperformers of the last 2 days are under pressure. So Maruti Suzuki hit a high a couple of days ago, down today almost 4%, and it's almost puzzling as to why that could be. But the BSE 500, before we start the show and take all your stock related queries for the afternoon edition of Ask Profit, Tata Elxsi is one of the biggest gainers. So is KPIT Tech, and it's on the back of a note from JP Morgan, and we'll discuss that with our experts as well. While on the losing side, Maruti, as I mentioned, M&M Finance and CSB Bank are on the back of the quarterly updates a couple of days ago are down. But let me welcome in Mr. G. Chokalingam, the founder and MD of Economics Research on the fundamentals, while Aditya Agarwala will help us on the technicals, the head of research and investment at Invest for EDU. Gentlemen, thanks so much for joining in for Ask Profit, the afternoon edition. Let me start off with the first query, and it's on Rainbow Children Medicare. This query is coming in from Sriram Raghuram, who's from Chennai, and he's bought it at 535. So he's certainly done well for himself on this particular trade. Gains of almost 15,000 rupees as we speak. He's asking that, a long-term view on the stock. So let me go to Mr. Chokalingam for this. Good afternoon, Mr. Chokalingam. Your view on Rainbow Children Medicare, he's almost in gains of almost 100%. Should he continue to hold?
This healthcare industry, particularly hospital segment, has got a lot of long-term good prospects. More than 50% of the FDI within healthcare has been directed towards hospital sector. So the industry has got a good tailwind. And as far as the company is concerned, yes, it has done quite very well in the last 2-3 years. Valuation is slightly stretched at a P of around 50 on a trailing basis. So I would give a long-term hold call. With the investment horizon of minimum 1 year, one can hold for another 1 to 2 years.
All right, so that's with regards to where Rainbow Children Hospital and of course the entire space is concerned. The next question that we have is from Nagesh, who's writing us from Bengaluru. He's holding 372 IEX shares, as buying price is 244. Wants to know if he can hold or exit at the current levels. Aditya, very good afternoon to you. I'll come to you on this one. What are the charts indicating for IEX?
Afternoon, Mahima. Thanks for having the show. It's more of an up move that you're witnessing for the past two trading sessions on the back of good volumes. So my sense is there is some more upside in the stock for sure. Might not go to his buying levels, but at least can come to levels of 170 to about 185. That is the gap area for the stock. And I would recommend continue to hold at least till that area of 175, 185 and revisit the stock around those areas and see how the chart structure is placed around those areas. And then maybe you can take a call of whether to exit at a minor loss or continue to hold. But at current levels, I would recommend you can hold with the stop loss at 140 on the downside and look for a target of 175, 185 on the upside.
All right. Okay. So that's with regards to where IEX stands. Next question that we have is is from Mohit, who's writing us from Kerala, asking about Federal Bank. He wants to buy Federal Bank for the next 1 year. Wants to know if this is the right price or should he wait to reach the 250 levels or even below that. Aditya, what would your recommendation be?
Can wait it out. In fact, Mahima, I would recommend buying in a staggered manner because he's looking at a 1 year time horizon or more. Can buy some at current levels and on declines to levels of 240, 245. Can add on to the further positions and then hold on to it for at least a year and look for a target of 300 on the upside. On the downside, can place a stop loss below 220. So try and buy it out all the way down till 240 in a staggered manner. Look for a target of 300 on the upside. Place a stop loss just below 220.
Got the view, Aditya, but let's go across to our first caller for today. It's coming in from Bengaluru. Karthik has a stock query for us. Karthik, very good afternoon. Welcome to Ask Profit. What's your query?
Hi, good afternoon. I have a query on Anantraj. So I have around 40 shares plotting at the price of 581. And I'm looking for a long-term view. And is it a good time to add more or can I just hold on to what I'm having?
Got it, Karthik. And did you buy it from a longer-term perspective when you bought into this counter or was it a short-term trade?
See, when I bought it, it was for a short-term trade. But now I want to look for a long-term, maybe 1.5 years to 2 years.
Got it. Fair, Karthik. Mr. Chokalingam, on Anantraj, the stock's been in a sideways momentum for some months now, post 2024 and the correction that happened. Should Karthik continue to hold on to Anantraj? He's bought her at 587.
I would give a research recommendation of hold only for medium to long term. Stock has already corrected a lot. Of course, even after severe correction, it is still trading at a slightly stretched valuation. But then last 2-3 year performance has been good and there has been a lot of expansion initiatives and data center segment would definitely help the company in the medium to long term. So therefore, I would give a hold recommendation.
Okay. All right. So that's with regards to where Anantraj is concerned. The next question that we have is from Kunal, who's writing us from Chennai. And he's asking for an advice for the best bet that he can make in the IT space right now from a short-term perspective. Are there any of these IT counters that you're liking on the charts today, the top sectoral gainer for the day?
Quite a bit of them, Mahima. In fact, the first one on my radar is Persistent Systems continues to make high rise, high lows. As we speak, I guess stock is making is at day highs. So I would suggest can take an exposure in Persistent Systems from a medium to short term time horizon. Look at a target of 6,700 on the upside. That's an immediate short term target. Longer term target can be 6,800 on the upside. So 6,700, 6,800 on the upside. Plus at 6350 on the downside. From the large cap space, can look at an HCL Technology. That is also something which is looking quite interesting to me. On the upside, can test levels of 1850 with a support on the downside at 1550. So HCL Technologies and Persistent Systems, these are the top two bets in the IT space. And I would suggest buying stocks from the IT space and continue to hold at least for a year or so. You will see decent gains here.
And probably the first day where we've seen such a strong move on them. Probably on the back of a note, but still, yet again, the positive move on IT is definitely a key one because the momentum was largely lost in the first few days of the year, but definitely one to keep on your radar. The next query is coming from Sudhakar from Bengaluru. It's a very interesting one. He's bought into Ather Energy, the EV scooter maker, at 321, which is largely very close to the IPO price. He's sitting on a profits of almost 100% on this bet. He has 30 shares, asking if it's a good time to hold or sell this counter. Mr. Chokalingam, your view on the EV scooter space, because there's clearly preference for Ather over Ola Electric. Should Sudhakar book some profits or continue to hold for the medium term on Ather Energy?
I would give a sell call. Definitely, Ether has done far better than Ola. But however, the stock has rallied a lot. And two, ultimately, I believe that it is going to be very difficult to compete with traditional players like TVS, Bajaj, Hero, Asia, because these four top traditional players, they are making thousands of crores of profit from their traditional business. So they are in a better position to infuse more money and compete effectively. So therefore, considering also the rally in the price, I would give a sell call on Aether Energy.
Chokalingam, just one follow-up because, a lot of analysts, a lot of investors in PMSs also are taking a big bet on Aether. So and largely that's on the margin play because right now they are in EBITDA losses and effectively in the next 3 years is the expectation that it will be much in at least low single digits. Do you not think that as a play over the next couple of years until it reaches that stage, it could be a bet or your traditional preference continues to be TVS, Bajaj, Hero, largely on the back of the cash levels and the margins that they currently do from the ICE business?
It is absolutely possible that I may be wrong. I admit that. But coming from economics perspective, which has helped me to sustain in this field for 3 decades, that tells me that, it is going to be very tough to compete with, some of these traditional players are making even 10,000 crore of profit. So we have already seen certain businesses, how, the dominant players have built the new businesses by making profit in the existing traditional businesses. So therefore, it is fairly possible that I may be absolutely wrong. I admit that. But I have a strong view that it is going to be a tough journey for next 2-3 years. Yes, short term, it may do well, but long term, I have this view.
Okay, all right. So that's with regards to where Aether Energy stands. We've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning. Good afternoon to you. How can we help you today?
Very good afternoon. I've got Mostic Technologies, 50 shares at the rate of 267. I just want to know about the company in the long-term perspective.
Okay. Mohan, just want to understand as to what was the thinking behind buying Mostic?
This is a semiconductor company. They are doing a lot of chips and everything. So in view of that, I thought long-term view would be good. So it's a small cap company. So just I'm invested on.
Okay. Mr. Chokalingam, I'll come to you directly for this one. Any view on Mostic?
It's highly stretched, but one can hold it. One can give a chance for another 1 or 2 quarters to see whether they are able to make any success in Mostic, because on an annual basis, last 3-4 years, they have grown quite impressively. So I would give a hold for the short to medium term. Then after a couple of quarters, I would review the call.
And, it's we're still getting used to the afternoon edition of Ask Profit, of course. So that's definitely one.
That's where the good morning comes in.
That's where the good morning comes in. But largely on, in terms of the amount of queries that we've gotten on a lot of these stocks like Moschip, on Cupid over the last few days has been quite stark and quite important as well from retail investor standpoint that you take our experts' advice on these stocks. So do continue sending them and give us a call also if you want to speak directly to us. Next one's on Bajaj Hindustan Sugar. Now, our viewer, NKS from Mumbai, he's also a regular viewer, so thanks so much for that, NKS. He's bought it at 45 rupees per share, stock's trading at 18. So he's sitting at a massive loss of 13,000 rupees, holding 500 shares. Asking a quick view, Aditya, your view on Bajaj Hindustan, is it possible that NKS can recover and come back to his buying price on this one?
Doesn't look like immediately, honestly, because stock has been constantly making lower lows, lower highs. Immediate support on the downside is somewhere around 16.5 bucks. Might consolidate around these zones, but coming back to his buying price is something which is I'm a little skeptical whether it will come anytime soon. Instead, I would suggest if you're getting an opportunity to exit, book losses here, and maybe put that money in some other sector which is right now looking attractive, can recover his losses as well, because here most likely the money will get stuck for a prolonged period of time.
Okay. The next question that we have is from Satyan, and Mr. Chokalingam, this is directed towards you. He wants to ask this question to you. He wants a view on Sterling Tools. He's already sitting on a loss of 20% is what he's saying on this particular counter. It's a very small company, 967 crore in terms of market cap, basically into manufacturing of fasteners and MCUs. Do you have a view on this one?
Yeah, in fact, we used to cover it and we closed it, the day the company announced, quarterly results wherein the EV component business took a big beating. So that time we closed it. Of course, the stock also corrected from 2-year high of over 700 rupees to current level. I would give a whole recommendation now because the company again got tied up with a few foreign technology providers and getting into more new products in the EV space. And existing business also reasonably doing well, standalone business. So therefore, I would give a whole recommendation on the stock.
अगला सवाल जो है वो तेलंगाना से आ रहा है। नागेश जी हमारे साथ जुड़े एक सवाल के लिए। नागेश, वेरी गुड आफ्टरनून, आपका क्या है सवाल?
ये सर IOCL का अभी कम में है सर, अभी नया लेने वाले को अभी लेने का है, ले सकता है।
अच्छा ठीक है नागेश, और ये आप थोड़े टाइम के लिए होल्ड कर सकते हैं नागेश, या ये शॉर्ट टर्म बेट है?
लॉन्ग टर्म के लिए सर।
लॉन्ग टर्म के लिए। मिस्टर चोकालिंगम, IOCL पे आपका क्या व्यू रहेगा इन टर्म्स ऑफ स्टॉक पिक, एंड रिक्वेस्ट यू टू गिव द आंसर इन हिंदी सो दैट नागेश कैन आल्सो गेट थ्रू योर व्यू ऑन IOCL।
होल्ड कर सकते हैं, सिंगल डिजिट पी में ट्रेड हो रहा है अभी।
नहीं, ही इज आस्किंग मिस्टर चोकालिंगम अगर वो इस भाव पे घुस सकते हैं बाय करने के लिए।
बाई करने के लिए इंतजार कर सकते हैं। रीजन इज ऑयल प्राइस बहुत नीचे आ गया, नियरली 25% नीचे आ गया 52 वीक हाई से। सो बाइंग का दिसंबर क्वार्टरली रिजल्ट तक वेट कर सकते हैं, इंतजार कर सकते हैं, बट अदरवाइज मीडियम टू लॉन्ग टर्म होल्ड कर सकते हैं IOC।
Okay, so that's with regards to where IOC stands. The next question that we have is from Prasad, who's writing us from Hyderabad. Waaree Energies is the counter, and he's holding 291 shares, priced at 2894, and he's sitting on a loss of over 79,000 rupees. Wants to know whether he can hold or average at this point of time. In fact, we did have a conversation with the management as well today. You'll be able to catch that conversation on our YouTube channels, but recently, one of their subsidiaries have finished the fundraise of around 1,000 crores. But Aditya, I'll come to you on this one, because considering he's already sitting on a lot of loss, do you think it makes sense for him to continue to hold from a slightly long-term perspective?
Can continue to hold, I would suggest, but keep a tight stop loss close to about 25.50 on the downside, because we've seen this space getting a lot crowded, and stocks usually are not performing to its potential. The kind of euphoria that we'd seen in this entire space once is now getting beaten down. So maybe can continue to hold, do not average, continue to hold closer to about 25.50 should be your stop loss. If that is breached on the downside, maybe you can review the stock once again, and if required, exit and shift to some other sector. That would be a better suggestion.
Got the view, Aditya. We have our next query coming in from Sampath, and he's asking if it's a good time to buy into Kaynes Technology. It's another stock that we've had on a radar over the last few weeks. Mr. Chokalingam, your view on Kaynes Technologies, as well as I'm sure we've spoken to you about the EMS space, but is it something that you would recommend based on the cash flow concerns that have happened over the last few years and are now getting highlighted a lot as well? What would you recommend?
More than those highlights, my worry comes from a different perspective. Of course, after the fall also, it is trading at, P of over 60 times on trailing basis. But apart from this, the major worry comes from the fact that yesterday we all have seen in media, the government has cleared 46 new proposals in ECMS space, electronic component manufacturing space, and through PLI scheme. And the PLI outlay is estimated to be more than 45,000 crore. I think this is a massive structural change in the ECM industry, and which means the competition is going to be extremely high, intense. And let us not forget the fact that even L&T has proposed to get into this. So therefore, at best, I would give a hold recommendation. I would not, venture to give a buy recommendation at this juncture.
Okay. All right. So that's with regards to where Kaynes Tech stands. We've got our next caller. Vinod is calling us from Maharashtra. Vinod, hi. A very good afternoon to you. How can we help you today?
Hi. Good afternoon. Over last 2 years, I have accumulated 70 shares of Titan at an average cost of 3,400.
Okay.
And based on its value growth, today I see substantial rise.
Right.
Though the volume growth is muted. So is it good time to book profit, though I can hold for a longer period if we expect a good return?
Right. Vinod, I got your question and your point is valid and you've done your research well, I must say that. Mr. Tokalingam, what he's saying is not wrong, right? A lot of these jewelry companies are seeing growth on the back of value growth that is coming in from the gold rally that we've seen, but volume growth is still a question mark. Do you think that considering today's rally for Titan, it makes sense for him to book partial profits or should he continue to hold?
I agree with you. Apart from volume, the value growth has helped. And already there are reports of fall in the demand for jewelry in this country because of very high prices for gold-based jewelries. And I would give a sell call. I would look for opportunities from, totally new kind of stock in Nifty like Apollo Hospital. So I believe that stock has got a promising, consistent, steady growth than for the next 1 to 3 years.
Got your view, Mr. Chokalingam, but we have our next query and it's again on retail favorite stock, Vodafone Idea. Continues to have so many queries here from us, and this is from Sridhar from Karimnagar asking a view. Aditya, I'm pretty sure you lost count of the number of times we've asked you on Vodafone Idea, but your view on the counter yet again today.
It's a very tricky one to answer, honestly, because stock hasn't been doing much for itself. Yeah, there are occasional pops here and there, can test levels of 16.5, 18 on the upside, but again, it's a long shot. You don't really know when it's going to come there. If he can continue to hold, maybe he can do so with a stop loss at 10 rupees on the downside and look for a target of 16 to 18. That is where he can look to exit. The fact that some things are positive for the stock right now can see a pop at least till 15 to about 16 odd levels.
Okay. All right. So that's the technical view with regards to where Vodafone Idea stands. But Aditya and Mr. Tokalingam, it's time for our rapid fire segment. What we try to do is we'll try to throw as many questions as possible, try to keep your answers as short as possible to buy, sell and hold. The first question that we have is from Teja, who wants to know for ITC Hotels if he can hold this counter for the next 5 years in his portfolio. Mr. Tokalingam, I know you like Taj GVK, but ITC Hotels, what's the view like?
Yeah, stock also corrected a lot, so one can hold for a very long term.
Bank of Maharashtra, IDFC First or South India Bank? Mr. Chokalingam, your pick for the next 5 years.
Obviously, Bank of Maharashtra, the fundamental speaks for itself compared to other two stocks.
Okay, BPCL is the next one. Neha from Bengaluru is holding 140 shares at an average price of 302. From a 2 months perspective, should she continue to hold? Aditya, your view?
Continue to hold, look for a target of 400 on the upside.
Godavari Power and Ispat, Aditya, if you're tracking this counter, our viewer Raj has bought it at 199. Your view?
Can continue to hold, maybe look for a target of 290 on the upside.
Okay, United Breweries on the charts. How is it faring? Aditya, your view?
Quick one on United Breweries, doesn't look all that great to me. If you're looking for a fresh entry, avoid if you already have the stock. Place a stop loss somewhere around 1480 on the downside.
Aavas Finance bought at 1860. Aditya, should he continue to hold? He's been holding for the last 18 months.
Not really. Stock has just been into a narrow consolidation phase. I would recommend exit from the stock and look at other financial NBFCs which are doing better.
Okay, and MDC is the next one. Prabha wants to know if she can continue to hold. She's bought 930 shares. Mr. Tokalingam, your view?
I would give sell call on this stock now.
Hind Copper bought at 407 by Mayank. Should he hold or sell, Mr. Chokalingam?
Around 575, it's a sell call.
Okay, LIC Housing Finance already sitting on profits of 34%. Venkat wants to know if he can shift to HDFC Bank from a long-term perspective. Is that the right thing to do, Mr. Tokalingam?
I don't think so. One can better bank on banks like Bank of India rather than LIC Housing.
Hindustan Foods, Mr. Chokalingam, and do you cover the stock? Kumar's it has 40% of his holding in this one share.
Yeah, I am a little concerned about the valuation of Hindustan Food.
Maruti, Apollo Hospitals, between the two, Aditya, where are the charts looking more attractive?
At this point of time, Apollo Hospital is slightly better as compared to risk to reward favorable. Can test levels of 8,000 on the upside, support on the downside 73.50.
Nalco, Aditya bought at 317 by Aman. Should he sell out or hold?
Can book partial profits, sitting slightly at overbought levels. Not a bad idea to book our profits after such a big rally.
Okay, Vamsi has bought Swiggy at the levels of 380 for the next 3 months. Can she continue to hold? Aditya, your view on the charts?
Can continue to hold, though there is no immediate upside in the stock. The moment comes to 400 odd levels, look to exit.
Alright, so that brings us to the end of this rapid fire round of Fast Profit. Mr. Oklingam and Aditya, thank you so much for answering those queries for us. But with that, as I said, we are completely out of time on this edition of Fast Profit. Do stay tuned. India Market Close on the other side.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on
Good afternoon and thanks so much for joining in. You're watching NDTV Profit and this is India Market Close. My name is Alex Matthew and you'll soon see them. My co-anchors, I've got Sharad Dubey as well as Hiral Daria with me, and we'll take you through the last hour of trade. And it's looking quite interesting because it's more or less what we saw in trade yesterday, and a couple of the same culprits are at play today as well. 0.33% for the benchmark Nifty 50 lower. But today you have the Nifty Bank that's trading in the red, down about 0.4%. But you have the Nifty IT that's bucking the trend and it's up in the green. Let's showcase that if we can and talk about the Nifty IT. It's up 1.7%. A few of the stocks we're going to be focusing on. We're going to actually take that magnifying glass and look at it very closely for you. But let's take the Nifty heat map up for you, and there are more losers than gainers on the screen, and there you go, a lot of losers on the screen. Titan is the stock of the day, at least from the large cap space, up about 4% or thereabouts, and you see a number of those IT companies up and about in that top line. Techem, Wipro, Infi, HCL Tech, a number of them doing particularly well. You also have on the bottom of the screen Cipla. And this is another major talking point, 4.3%. This is on account of a partner that they have that has had a few negative observations, and that's having a bearing on their stock price and on sentiment right now. Maruti Suzuki down in the dumps, down about 3% or thereabouts. Tata Motors PV also reacting a little bit negatively for a second day in a row. Remember, it was Jaguar Land Rover first, and then it was a standalone business next. But really, it is a repeat of what you saw yesterday. HDFC Bank proving to be a laggard and contributing quite a bit on the downside. The question is, does that picture hold in the broader markets, and what are the stocks that you should watch out for? Hiral, what are you picking up?
Thanks, Alex, for that. A very similar picture to yesterday, as you're saying, in terms of the benchmarks. If you see the mid-cap 150, 0.3% higher is where that index is trading at. And if you pull up the small cap 250 as well, you'll see the kind of returns that are coming in, because a lot of individual stocks that are actually buzzing in trade. The small cap actually from the day's lowest levels has seen a good recovery, pretty much on the borderline right now. Apart from that, if you see...
All right. Yes, we are seeing that in the mid-cap indices. Hiral was just mentioning the Nifty Small Cap 250 index, and interestingly, we'll see that there is a strong case point happening. There's a value buying happening, and the advanced decline ratio, that is also improving. But let's give you the entire factors to watch, which are very much important today in the day's trade. As a trader, as a positional trader, what are the important levels to watch out for? And interestingly, let's pull out the Nifty index and let's see the key numbers. That has fallen below the 10-day EMA mark. 20-day EMA levels is something which is the next level, which will be important for Nifty. If you could just show that important level, and that it is 26,080. Now that from that level onwards, if it bounces back up, that means we can see a decent short covering in the closing session. Also, apart from this, moving on, the other key sectors to watch out for would definitely be Nifty Bank. That has the falling has intensified. The support is at 10-day EMA levels. That's at 59,700. Sectoral buying coming in both Pharma and the jewelry pack, but largely the stocks moves are happening. But remember, the global risk-on sentiment is still remaining there. It's just a small pause, but the setup is really strong. Q3 updates and operational updates, that is where the entire movement is happening, especially from brokerages. But the options data I checked just now, it's a very narrow range movement happening. VIX has again gone down below the 10 after the 2 sessions. So of course, it's not a great day for the option players, and even the European markets have opened on a mixed note as well. So a very narrow range of activities expected, but the magic is in the small cap index. Why? Because right now we saw a recovery happening, and every time in the closing session, the strength is coming in the small cap indices, and January 2nd and January 5th, we saw a strong up move coming in. So we might be seeing much more value buying in the small cap indices as well. Over to you, Alex.
Right. Thank you so much, Sharad, for that. In fact, interesting moves. We have Mr. G. Chokalingam, founder and MD at Economics Research, also joining in. Mr. Chokalingam, an interesting day of trade with the kind of moves that are coming in terms of today's session. A day which is very similar to yesterday, where the pressure, if you go to see, has continued when you talk about an HDFC Bank. Third consecutive sessions of decline that have come in. Let's see what that counter is doing right now as well, if any recovery on that front. But apart from that, you have names like Cipla, Maruti, Max Health that have been trading under pressure. How are you looking at HDFC Bank versus if you have to compare this to an ICICI Bank as well?
Yeah. So ICICI Bank also, the credit growth is not, extraordinary if you see in the recent quarters. HDFC Bank, yes, there is a concern that since CD ratio is very high, there may be a conscious decision to slow down the credit growth. That is why the stock is under pressure. But I believe that ultimately in 1 or 2 quarters, HDFC Bank should be able to resolve this issue and come back to the strong growth mode. So I would consider this correction as an opportunity for medium to long-term investors.
Would you purchase, Mr. Chokalingam, and good afternoon to you, Alex here. Would you purchase in a staggered manner, or would you utilize this? Is this a very attractive? Is this a table-thumping buy for you at this moment?
Yeah, there are 3 points I want to make. In the last 35 years, I never invested in the large cap. So personally, I buy only small caps. Of course, I recommend large cap for clients. I would recommend at this price to clients with a conservative approach. Definitely, I believe in 1 or 2 years it can play out.
Okay, so let me very quickly ask you then, if you were to, at this moment, it's an open-ended question, relatively speaking, Mr. Chokalingam, from the broader markets, give me 2 or 3 stocks that you are absolutely convinced are going to be in a fundamental upcycle, but the valuations still haven't caught up.
Yeah. So obviously in the short term, it is going to be only Sensex and Nifty where you can have a tremendous confidence. So, but then you added a rider valuation comfort. So that is an issue. So if you still, ask me in the large cap, I would go with Apollo Hospital, which is in the Nifty. And if you ask me in the small and mid cap space, I would recommend something like Bayer Crop, which is beaten down in relative valuation term compared to its own P in the past. I believe it is very, very attractive. And then OFSS, Oracle Financial Services Software, that also corrected nearly 35-40% from a 2-year high. A lot of cash, a lot of dividend, and it's a product company, not a service company. And it depends on US also only up to the extent of 1/4 of the total revenue. So these are the 2 MNC stocks I am highly comfortable on the basis of the valuation.
Joining us, Nilesh Jain, Head and AVPF, Technical and Derivatives at Equity Research at Centrum Broking. Good afternoon to you, Nilesh. Interestingly, Nifty has broken its 10-day EMA also. Kind of a very small intraday basis. There is a bearish sentiment coming up, and each day there is a very large company pulling down Nifty. But Nifty Bank technical setup still remains better. What's your view on both of them?
Very good afternoon to you. Absolutely. So you rightly pointed out. So every day we are witnessing some of the other large caps are pulling the index down, specifically the Nifty index. Today as well, we have seen a kind of a short-term breakdown below 26,100. Now it appears like Nifty is heading towards 26,000 mark, and that seems to be likely to be tested going forward. Overall, Nifty is still better place, although the close below 60,000 is not looking that great. But comparatively, I believe that we may see some bit of a rebound from here in the Bank Nifty specifically, which is likely to lead the pullback from here. As far as Nifty is concerned, 26,000 to 26,200, that's the immediate 200-point trading range. For the Bank Nifty, 59,600 to 60,200, that's the range for the Bank Nifty as well. Given the kind of a setup on India Weeks where we have seen further decline today, I believe going forward, there has to be some bit of a pullback in both Nifty and Bank Nifty.
Okay. All right, Nilesh, what are your technical picks?
Right. So I have a couple of recommendations. First of all, stocks that is looking promising is Solar Industries, where we have seen a fresh breakout coming in this counter. After multiple lower top and lower top formation, it has negated the bearish setup. Looks like it is heading towards 14,000 levels on the upside. So Solar Industries looks strong for a pullback move to continue on the upside towards 14,000. 13,200 should be the stop loss. Another stock that's looking positive is NMDC. So continuation of high bottom formation in NMDC. Good price and volume breakout today. So we can expect a follow-up move on the upside to continue towards 90 levels. Stop loss should be placed at 82.5.
All right. There are a few stocks that are reacting quite sharply to your quarterly updates. And I won't go towards Titan because we're going to actually delve a little deeper into Titan. I want to talk about Senco Gold because this is a stock that is doing particularly well. To a certain extent, it's also because of the kind of gulf that is there between the valuations of Senco Gold compared with some of the other jewelry companies. But the question that I want to ask is, Mr. Chokalingam, 50+% increase in revenue in the quarter gone by is what they've reported in that quarterly update. But they've also talked about the fact that gold prices are up 65%. I mean, that's for everybody to see. So therefore, the volumes have actually degrown. Would you still be supportive of something like a Senco Gold, or would you give it an avoid at this point?
Yeah, very tough question. You are absolutely right. The rise in the jewelry price is going to pull down the demand. But to some extent, to be fair, the stock price already reflects the correction from 52-week high. So therefore, I would give a hold, and also considering the fact that the P ratio is very reasonable, around 23 as compared to exorbitant valuation multiples for many other jewelry companies. So I would give hold. In case the stock continues to correct, then one can buy also.
Move today, 12.5%, is nothing to sneeze at. We spoke with the management, Suvankar Sen, who is the Managing Director and Chief Executive Officer of Senco Gold and Diamonds, and they said that they're planning to expand the lab-grown diamond segment as the big players in the industry are entering it as well, and it's starting to get more organized. Listen in.
Our studded ratio currently is at about 12.5%. Over the coming 3-4 years, we want to take our stud ratio from 12.5% to 15%. That is something that we need to keep in mind, whether it be natural diamonds, lab-grown diamonds, gemstones, all kinds of products. So this is one thing. And with the gold prices going up, it is very important that we keep on focusing on this segment because consumers will go for design, will go for utility at a lower caratage. Second is lab-grown diamond. We have seen that, the big players are also getting into it. And that means that this market is going to evolve and it'll get more organized. We had, thought of the similar decision 1 year ago. And what we are seeing is that consumers are actually gradually, the awareness levels are going up, the curiosity, the demand. People are saying that, if I have to fulfill certain desires, lab-grown diamond will able to fulfill those desires in terms of size of diamond or in terms of the design and the look that they want to get. So over a period of time, I'm quite confident. We have got 8 stores. Every year, we'll want to open about 5-6 more stores of lab-grown diamonds. But the natural diamonds, the gold, those will also continue to remain. Overall, the industry will become highly diversified.
That's the word coming in from the management of Senco Gold. In fact, we have the general insurance data that has come in as well. You have ICICI Lombard General Insurance, which has seen a growth of around 16%. New India Assurance, around 17% is the kind of uptick that they've seen in the month of December. Private sector general insurers, overall, the growth is around 15%. In fact, New India is seeing a spike as we speak right now at the day's highest levels with gains of 0.9%. You're talking about a 16 to 17% growth. Gold digit, again, from the unlisted space, strong numbers coming in there. ICICI Lombard, 16% growth, but if you see in terms of where ICICI Lombard goes, no major reaction on that counter. It's mainly New India Assurance, which is actually reacting to these kind of numbers overall as we speak. Very quickly, Mr. Chokalingam, any view when it comes to the general insurance space on the back of the data that has come in? Overall, you're talking about somewhere in that range of 16 to 18%.
Yeah, ICICI Lombard looks good. Last 3 years, consistently it has grown its operating profit. So it proven to be a strong growth stock. So I prefer ICICI Lombard.
Okay. All right. It's that time of the show, and this is non-negotiable for us most of the time, actually. It's nearly 2:45, and it's time for Heard on the Street. This is where Somit Sarkar brings you all of the chatter from the dealing rooms. Somit, good afternoon to you. A few of the stocks that you spoke about yesterday were absolutely buzzing. What do you have on your list today?
Well, a lot of stocks that have been buzzing on street today as well. Firstly, it's Sun Pharma. That's what is there on the dealers' radar, and dealers are indicating that there's a buzz of a potential acquisition that is in works when it comes to Sun Pharma. So keep an eye out for that counter. For Glenmark Pharma, multiple dealing rooms have recommended buy calls to their clients based on technical charts. So keep an eye out for that as well. For Sattvic Green, there are buy flows on the large HNI desk. Some positive news flow is expected is what dealers have indicated. For Hitachi Energy, that counter has been under pressure for the last 1 month, but right now what dealers are indicating is that the selling pressure is largely over and the stock could bounce from the current level some more. When it comes to PNB Housing, the stock was down in trade today, and this was largely because there was a buzz that the earnings could be on the weaker side. But what dealers have indicated is that despite this buzz, there are still buy flows that are coming in for PNB Housing Finance at lower levels. So keep an eye out for PNB Housing as well. For Bajaj Holding and Bajaj Finance, dealers have indicated a paired trade. They are expecting Bajaj Holding to outperform Bajaj Finance going forward, at least for the near term. And lastly, when it comes to Delivery and AB Capital, there are buy flows on FI desk on both the counters. Delivery volumes also could be on the higher side is what the dealers have indicated for Delivery and for AB Capital.
Thanks a lot, Sumit, for that. A whole lot of stocks we'll be tracking. But before that, I'd like to get in Puneet. Tata Tech, Tata Elxsi and KPIT Tech are in focus as the tech sector is buzzing in trade on back of broking upgrades as well. What's your total view coming in the IT space, Puneet? Broking upgrades and the entire sector short covering also in certain counters.
Well, most certainly, and this could be the first upgrade on the ER&D space, which is very centric to auto. And both Tata stocks, Elxsi as well as Technologies, is doing well in trade. Both have gotten upgraded today by JP Morgan. Target price increased now to 710 for Tata Tech and 4,800 for Tata Elxsi, while they've maintained an overweight rating on KPIT Tech. Now, there are three key points that are important. The first one, that the auto ER&D is overall seeing an improvement in demand, and could be the first time where we're actually seeing a brokerage note call out the demand improvement, while management had highlighted in the last couple of quarters of being in improvement, wasn't yet visible in the financials. The second one, that the OEMs are starting to kick off new research and development in this particular space, and that benefits the IT players. And the investments are actually being driven not by the EV space, but by hybrids, autonomous as well as connected vehicles, and does benefit all of these players. Finally, the EV rally, which was expected to be a key story post the pandemic, hasn't yet picked up, and hence there was a lull in demand over the last couple of years. Hybrids coming back is a key positive because products and platforms are already ready for these companies. Finally, in terms of stock performance as well as valuation, it's been a tough year for all of these players in the last 1 year. The most impact has been seen in Tata Technologies, and that's visible and this should be negative returns. So it's minus 23%. All three stocks are down, minus 19 for KPIT and minus 11 for Tata Elxsi. In terms of valuations, it's not cheap by any means, and hence they've seen a time-wise correction. But any signs of improvement in demand will lead to a better year of 2026 for these companies, and JP Morgan holds that view, which is why all these stocks are buzzing in trade today.
Okay. All right. Thanks so much, Puneet, for that. And bear in mind that those stocks have seen negative returns over that time period. They're buzzing in trade today, though. Gains of between 5 and 10% for the three of those stocks, which is why they make it to the stock of the day. But Mr. Choklingam, any positive view on any one of these? Far be it from them being, in the camp of stocks that have extremely high valuations but have missed the mark on fundamentals. These are actually beaten down stocks. So would you be positive on any of them?
Certainly not. I completely agree with you. Those who invested 3 years back still losing a lot of money. Both Tata Elxsi, Tata Technology, part of a great management, all of us know. But look at even Q2 numbers. You look at both the top line year-on-year growth and net profit year-on-year. Not at all impressive. I mean, it's stagnating or negative or very small single-digit growth. So I won't give this kind of valuation. KPIT is better, but valuation-wise, it is stretched. So within this IT space, I prefer Infosys in the Nifty Sensex basket. And in a small cap, I prefer Cyient. It is one of the cheapest IT stocks. And then, as I discussed earlier, I also prefer Oracle Financial Services company.
So that's with regards to where IT goes. It's interesting, DFT Nilesh. with the kind of moves that are coming in today's session with regards to IT, specifically, it's the broader names which are seeing a higher buzz, but the volumes are also pretty strong in the large cap names. Any momentum play that you would want to look at?
Right, so a couple of stocks that are on our radar as well, but not from the large cap space. It's from mid cap and small cap IT names like Coforge and Persistent System. Specifically Coforge, where we have seen a very strong rebound today. It has reclaimed its long-term 200-day moving average. So we may see a follow-up on the upside towards 1750 to 1800 with a stop loss 1650. Coforge is a buy. And apart from that, counters like Persistent, Birlasoft, both the stocks have already seen a surge of over 4%. So better to wait for some bit of a decline in both the stocks, but the major structure looks strong.
Birlasoft, the stock is also at the day's highest levels, 5.5% up move coming in there as well. Stay with us. We'll quickly slip into a short break. Up next, we'll do an entire detailed discussion where it's a clash between Titan and Trend. Where should your bets be? We're not really doing a bull versus bear on Titan, but it's between two companies that will be compared. Please stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to India Market Close, and two companies in focus are Titan and Trent. Both of these companies from Tata Group have been witnessing a diverse growth trajectory. What's working for Trent and what's keeping Titan subdued? Mahima is here with the peer comparison. Mahima, two different companies, same group, but stories are different.
Yes, absolutely. Stories are different, and how, right? You have Titan on the one end, with this shining in trade today and has been shining in 2025 as well. But Trent on the other side has been the top laggard on Nifty 50 in 2025. 2025, Titan saw an uptick of 20% in terms of where the stock performance is concerned, and Trent was down 41% in 2025, and in fact 45% since its inclusion in the Nifty 50 as well. And that happened in September 2024. But with regards to where Q3 update goes, Titan saw robust jewelry growth coming in, of 41% in terms of where the jewelry growth stand, 42% for CaratLane, overall 38% in terms of the domestic growth as well. But for Trent, it was the lowest growth in 6 quarters, 17% of revenue growth, and that on a rebased numbers was at 15%. So, Q3 was completely, in different ways for both of these counters. In terms of where the other metrics are concerned, with regards to where the overall reason as to why the revenue growth has not been very good, with regards to where Titan goes, revenue growth largely was on account of gold rally, which we've seen. So there's value growth coming in, but buyer growth was flat, and because of which overall, we've seen that, the overall impact in terms of where the volume growth goes is completely flat. But we'll have to wait and watch out for, because studded mix has picked up. So overall, we'll have to see whether that translates to margin improvement or not. The next one, with regards to where Trent goes, aggressive store expansion is the reason as to why, it is hampering the growth of the company. And of course, Trent has grown at that 50%, above that 50% mark. So on a very high base also, we're comparing Trent numbers to as compared to where it was last year. Next, with regards to where LGD's strategy goes, Titan has announced its new brand called Biocon. So they will be operating it completely separately in separate stores. But for Trent, it is a shop-in-shop format. In West Side stores is where they are selling LGD. But we'll have to see, with Titan entering into lab-grown diamonds, will that eat away the share of Trent completely in terms of where lab-grown strategy stands? In terms of store expansion, Titan right now is just ramping up and renovating its existing stores. On the other side, Trent is going big in terms of where store expansion stands. Aggressive store expansion in Tier 2, Tier 3 cities, which is also overall impacting their average revenue per square feet. Lastly, in terms of where ROCE goes, Titan at that 19% mark. But Trent is actually, in fact, better in terms of where ROCE stands. That's an upward of 31%. But overall, ROCE for both of them, if you see the trajectory, for Titan, it has been improving, but for Trent, it has been slightly coming down. So this is the overall view of how the two Tata companies stack up, and of course, one definitely shining in trade and one facing the heat.
Thank you very much, Mahima, for this detailed and a very wonderful analysis. Interesting graphics also being pointed out for both Titan and Trent.
First, before you go to anybody else, I want to know whether you bought a real diamond or a lab-grown diamond for your fiancé.
For my
putting
wife,
you on the spot.
No, for my wife, we have bought gold, but yes, LGT is something she uses for her everyday wear as well.
Yeah, but he is a firm believer of only gold. I've had this conversation with him multiple times, where he does not just deviate. It's only gold, gold and gold.
There is a resale value, and yes, it's appreciating right now.
You better not let your wife hear you say that.
Yeah, but before we go to the guests as well on Trent and Titan, I think we should be highlighting the Indian Gas Exchange IPO news that has just come in. You know, that's what they've said, that they're planning an IPO by December 2026. And what is interesting, and the reason I'm picking this up, is because Indian Energy Exchange, which is IEX, they will be diluting nearly 22% stake in the gas exchange, on the back of which, if you see IEX also, which is at the day's highest levels, 4.5%, this will be value unlocking for an IEX on the back of the Indian Gas Exchange plan for IPO by December 2026. 22% stake in Indian Gas Exchange is what they're looking to dilute as well. I think it's going to be interesting to see what is the total that they hold there, but an interesting one to watch out for. Very quickly, Mr. Chokalingam, I mean, IEX, on the back of not only the market coupling case, what I want to add over here is when you talk about value unlocking by December 2026 in terms of the gas exchange IPO that could be coming in, what would you advise investors to do?
I would sell using this opportunity IEX, because both NSE and BSE started joint venture in energy exchange platform. So no longer IEX is commanding a monopoly status. So I believe the growth momentum will take a beating for IEX. It may remain as a growth company, but the kind of growth it had in the past is difficult to replicate. So therefore, using this positive news flow, I would sell the stock.
Fair point. All right. And by the way, this morning, the technical call was to sell on rise for IEX, and there is a rise at this moment. Let's talk about Titan versus Trent, though. You've got the fundamental analysis, you've got the valuation picture and the return metrics. The question is, on the charts, for a Titan that's trading up about 3.8% and a Trent that is rebounding just a tad bit, Nilesh, what is the call on the charts? Would you play the momentum, or would you buy the stock that got beaten down?
Well, Alex, looking at the momentum in the Titan, this particular counter, I would like to go with Titan only because today we have seen a breakaway gap, and good price and volume momentum can be seen today as well. And this particular counter has been in a secular uptrend. So looking at the overall structure, looks like it is heading towards 4,400 to 4,500 levels on the upside. So there is still potential for further upside move to continue. So, but better strategy would be to buy and decline, keep a stop loss below 4,100. If at all you get any dip towards 4,200, that can be a good entry point. For existing, positions, I would suggest to remain invested, keeping a trailing stop loss, and there is still some more room left on the upside. Whereas on the trend, there could be possibility of a dead cat bounce because the counter has gone into extremely oversold territory. Purely to play this pullback, one can keep a stop loss below 4,030, but I don't see any major trend reversal here.
For that, and also let's move on to the real estate segment. This has been, a big pain, the Nifty Realty Index in 2025 itself. But 2026, is there any kind of a hope coming in? And what are the key indicators looking like for the realty space as well? Getting us all the details is Anushi. Anushi.
Right, thanks for that, Sharath. So it's not been such a great year for real estate in 2025, with the index correcting over 10%. And this is on the back of the sales volume and the launches figure that we've seen. So despite, there being rate cuts, there being talks about there would be improvement in terms of where the housing affordability is concerned, the real estate has not performed so well. So let's understand what has happened overall in 2025. So what we are seeing is that despite of these price corrections and price increases that have taken place, markets more or less have remained resilient. That is what Knight Frank had to say. In fact, new launches, if we say, have been concentrated in higher ticket sizes. It's a lower ticket band wherein, we are looking at overall increase in terms of where the supply is concerned, and wherein there has been a decrease in terms of where the demand is, with higher ticket segments now contributing to more. In fact, if you look at the supply side of the story as well, new supply has now outpaced absorption. Now, this is a key monitorable that we should be having, considering that if this is a continuing phenomenon that we'll see, what will this lead to the pricing trends is something that we should be focusing on. Coming to the year gone by, if we just look at the launches and the sales, both have seen a downtick of 3% and 1% subsequently, and this is on the back of a couple of price rises that we've seen in a couple of regions. Along with that, even if you see the ticket size growth, or rather the sales growth, you'll see that most of this is concentrated in higher ticket sizes, 164% and 55% of growth respectively. And in terms of regions, if you look at the breakup over there, in terms of what's the case scenario in terms of growth, you'll see that NCR has seen about a 9% or rather a 19% of a correction in this 1 year itself. So sales volume has been impacted on the back of this. Bengaluru is another market wherein we've seen a similar phenomenon playing in. 12% is the kind of uptick that we're looking at. So is this sustainable? Is the major question going forward. So that's in terms of the residential prices that we are seeing. Inventory levels also, if we see from the from 2020 itself, has seen a couple of changes. It's seen an uptick as well, but it's Knight Frank pointed out that quarters to sale, this indicator has remained healthier. So that's on the positive we are seeing. Coming to the other part of the market in real estate is the office market. While residential, we are talking about price increases, there being unsold inventory levels being some of the concerns that can emerge in terms of how the cycle pans out. Office market has remained on the healthier side with about 20% of an uptick in terms of where the transactions are concerned and 9% of completions. And a majority of this is also seen by rise in GCCs, which has seen increasing contribution. So this is the overall perspective that we have for the Indian real estate market for 2025 and the outlook ahead that we should be watching out for.
Thanks a lot, Anushi, for that. And earlier today, we spoke with Ghulam Zia, Senior Executive Director at Knight Frank, on the outlook for the office space market. Let's listen in.
Office sector is going completely berserk. 20% growth year on year is something spectacular. Last year we did 75 odd million of gross transaction in the top 8 cities. This year that number is going to 86, 87 million. 20% growth on such a huge base. So while at that level, we would want the base effect to come in and growth level to really shrink. But in stark contrast, at that higher base level itself, 20% of growth is something which nobody could imagine. So this year was spectacular, especially cities like Bengaluru. Bengaluru saw almost 60% growth over YOY number. Last year, 16.5, 17 odd million. This year, 27 odd million square feet of gross absorption.
All right, so that's a view on the real estate space and specifically commercial. And you got the perspective on the stocks as well. But we've got Shivangi Sarda, who's an analyst, equity derivatives and technical at Motilal Oswal, joining us to wind things down for India market close and indeed the market as well. Shivangi, quick view on where we're heading, because we've come off the low point of the day for the benchmark Nifty 50. And we might just head towards close to that 26,200 mark if the bulls are feeling a little bit of spirit at the end of the day. And what individual stocks do you like? I think you might just be on mute, Shivangi.
Very good afternoon. Thank you for having me. We've seen that profit taking has taken over the indices over the last couple of sessions, but then there has been a very smart recovery from the lower levels, which has kept the market afloat. Now, of course, we've seen that participation can be seen across the sectors, which is lifting the sentiments of the overall market, and we're recommending buy on decline to continue here, with a support of 26,000 levels for Nifty for an upside move towards 26,250 immediately, and then 26,350 marks. Talking about Bank Nifty, of course, resilience can be seen here. And we've seen that the dent was slightly lower here. But of course, global cues have kind of, made the indices to take a shift back. But then now we've seen that, the put call ratio has also improved. So call writers are somewhere unwinding their positions, and Bank Nifty looks quite positive for the next up move towards 60,500 marks, crossing its near all-time high levels, and with the support of 59,750 marks, which it had respected even today's session. So this is the take on the indices, but stock specific, we have been seeing that there has been a lot of good buying interest in the auto space stocks. So first up on my radar would be Bajaj Auto, which has consistently performed from the last 6 months. It has been making higher top, higher bottom, trending upwards with any minor declines being bought into. Of course, we've seen that, from the last few weeks, there has been, a price volume surge here, which is adding to the momentum for this one. And of course, auto space stocks are doing quite well. They tend to perform quite well in this quarter, seasonality-wise as well. So this one's looking quite positive, and we're recommending a buy here with the next target of 10,150 levels with a support of 9,590.
All right. There's one stock that we spoke about from the large cap space, and that's Cipla, that is probably the worst performer on the benchmark Nifty 50 right now, 4% lower. And that's because a key partner that they have, which is Pharma, has gotten a number of negative observations from the US FDA. But because it's reacting so much, it's the perfect contender for bull versus bear. And we've got Varsha joining in to tell you about the positives and the negatives as they stand right now. And you can take the call based on this information. Varsha?
Well, thank you so much for that. Let me just start with a negative point since the stock is under pressure. If you see the manufacturing issues at partners facility is actually a negative sign. Now, why do I say that? Because the drug that is lanitrotide is the top contributor for Cipla, and hence the observation in facility could disrupt the manufacturing process of this drug and hence would affect Cipla. But, onto the bull case, management is confident of achieving $1 billion US sale by FY27. Moving on, there are multiple upcoming US launches over the next 4 quarters, which will actually help, Cipla when it comes to the growth for, FY26 and FY27. But the margins are likely to soften in H2 FY26. This is on the back of lower Revlimid, that is cancer drug, and of course the increased R&D. But they've also entered into obesity market, that is anti-diabetic portfolio with Yorpic via Eli Lilly tie-up. But this the revenue potential from this we'll be seeing in the medium term and not in the near term. That's one of the the bearish point that the Cipla has. But the high growth segment, that is biosimilar, Cipla has actually entered into biosimilar, which is the next leg of growth for the company. But the Revlimid contribution will be virtually nil from Q3 FY26, which will actually impact the earnings in the near term. Then also, if I were to talk about but Cipla is actually confident when it comes to new launches to offset the Revlimid decline, which is again a positive thing. But FY26 margin cut guidance, so they've cut the margin guidance for FY26 on the back of weak mix and seasonality impact. So overall, the longer term growth, if I were to talk about for Cipla, is actually a stronger one. But yes, today the stock is under pressure because of the manufacturing issues at partners facility.
Thanks a lot for that, Varsha. Mr. Chokalingam, I'd like to get you on this Cipla. Of course, there is a negative news flow coming in. The stock is down 4% but fundamentally, how you're looking the entire pharma space, because the entire Nifty Pharma index, you see, that's on the other hand, it's going really strong. It's the top sectoral gainer also. So you need your views on Cipla and any other important pharma company which should be in focus.
I think Cipla one can consider at current price. I think it is fully priced in. The reason for recommending Cipla at current price is that its exposure to North America is not dominant. It is only about 27% of the total sales, and dominant source of revenue is from India. So therefore, the concern is it will have an impact, but I think it is not going to have a dominant effect. Whatever impact it will have, it is priced in today's correction. So I think it has become quite attractive at current price.
What would be your view on the other pharma stocks as well? I just like to point out the Nifty Pharma Index, where you see all the constituents, all of them are in green. Ipca Labs, Wockhardt Pharma, Torrent Pharma, all of them going up more than 5% in the trade. Any important risk-reward ratio where it's favorable right now? Yeah, Shivangi? Pharma picks?
So, talking about the entire pharma space, of course, you've seen that, dent has been seen over here. And talking about the risk reward, we've seen that most of these counters were consolidating. The good ones were, definitely consolidating near its exponential moving averages. But the diagnostic space stocks have comparatively done better than the purely pharma stocks. And now if you look at a DV's lab or Loris Labs for that matter, these stocks have caught the investors' attention and confidence. So these should be kept on radar. Of course, we're seeing that even after the dent today, Laurus Labs is trading in gains with over 1%. So overall, this stock has showed resilience despite the volatility, and it has actually been outperforming since the last 3 years. So from the pharma pack, if we extend it to the diagnostic space as well, so Laurus Labs would definitely be my pick here, and this should be a portfolio stock.
So that's with regards to where Laurus Lab goes. In fact, the entire pharma pack has been in the limelight as well. But moving on, Kaynes Technologies is back in the turmoil zone after crashing over 50% twice in the past year, and it has hit a fresh 52-week low as well. Let's understand what's happening with them, with all the fundraisers that they've done in the past, and what's the way forward. My colleague Puneet joins us with all the details. Puneet, what is the story looking like with the Kaynes Technologies, though that's mild recovery in trade today?
Well, it's been a tough 2025 for the company, and 2 times is what is corrected 50% in just a period of 2 months. So when you look at January to March of 2025, the stock crashed at that time, and it has hit a 52-week low yesterday in this trading session of 3,683 as well. It's a level that we almost didn't imagine the company could hit, with a high of almost 7,800 at the start of the year. When you look at the 2 time periods specifically, Jan to March 2025 is where it hit 7,825 as the peak price. The lowest was 3,900. It just took 66 sessions for the company to have the 50% drop. When you look at the second period, which is much more recent, between October and December, 3,711 is what the low was, and then it hit another low of 3,683. So another just 62 sessions where the story completely changed for the company, and this time it seems much more severe based on the cash flow concerns amongst others. Now, when you look at the time period of fundraisers and of the last 3 years, it listed in November 2022, raised 857 crores, out of which the fresh issue component was 530 crores. And you can see that over the last 3 fundraisers, the company has raised funds at almost 10x the IPO price in as early as June of 2025. Post that, the story has, for the sector as a whole, has been changed in terms of valuation as well as concerns for revenue recognition and goodwill as well. And largely that seems to be the play. Now, the reason we are discussing the fundraise is because the company's growth trajectory is quite strong. 61% revenue growth is what's estimated in FY26 alone. But over the next couple of years or so, they have some steep targets. Will they need another fundraise? That's the key question we are asking. Over the next 3 years also, the operating cash flow seems to, of course, go 10x from almost 40 to 50 crores in FY26. This is, of course, the average of brokerage estimates, expected to grow to 522 crores. Despite that, with the new ventures in PCB as well as the OSAT and the semiconductor facilities, this will lead to a pressure on the free cash flow, down 860 crores in FY26 itself, but doesn't get in the positive territory at all until FY28, and we're still waiting 29 numbers from brokerages, but that is the picture for the counter as we speak. What do you have to watch for in H2 of FY26? The Q3 results will be critical for the company in terms of reporting, cash flow management as well as working capital. Revenue of 4,500 crores is what's estimated compared to 2,800 crores they did in last year, 25. Second key point is guidance of lowering working capital to 7 to 80 days, and this is the most crucial for Kaynes Technologies, and a $1 billion revenue target that remains in FY28. What is our analysis though? There are investor concerns at the moment on the negative free cash flow which will be generated in the next 3 years, consolidated as well. The company had stated to NDTV Profit in the previous interviews that they will not need another equity fundraise, but with the growth capital as well as the worsening position of receivables, that seems to be one of the key aspects. And finally, if the company doesn't manage its working capital, it will need another fundraise. That will be something that investors will be a little wary of based on the company's current share price performance. So that's the profit intelligence segment on Kaynes Technologies. A lot more questions than answers at this point of time.
Absolutely, you said it, and what a comprehensive analysis that was. Thanks so much, Puneet, for that. I want to go across now, and we're winding down the day's trade. Shivangi, I want to go across to you, just in case you have any ideas for quick trades that someone might want to initiate at the end of trade today.
So for today, of course, we're looking at the financial and the NBFC space stocks. Manappuram Finance is one such space which has seen excellent surge in volume and price in the last couple of hours. So, positions it quite well for a good levels here, for a good momentum. It has surpassed its previous hurdle zones as well, trading at its, life high territory as of now. We are seeing that buying is emerging even at these levels. It did make a lot of attempts previously in the last 10 trading sessions. Twice it did attempt to cross these levels, but today the kind of momentum that we're seeing is positioned to take the stock higher to 333 levels with a support of 315.
Okay, so that's with regards to the BTST calls that we're talking about as we speak. Another stock that I want to talk about is even a Camlin Fine Science, and this is on the back of an initiation report that stock is seeing some smart moves today. I mean, Incred is very bullish, 480 is what their target is on the counter, 6% upside coming in on that one. Mr. Chokalingam, any view when it comes to Camlin Fine Science?
I find valuation quite stretched, so I would avoid it.
Sorry to interrupt, but they're talking about vanillin, which is essentially what you put in stuff to get the flavor of vanilla.
Correct.
Which, and you obviously know a lot about that because you know about the beverage space. But then it's an interesting play on that, right? Because their customers would be global, aren't they?
Customers will be global, and sourcing is also very much global when it comes to vanilla, right? Vanillin, and vanillin is one of the most expensive. I mean, we might not even understand the kind of rates that go around when you're talking about, the value of vanillin overall. But this is a very interesting play. In fact, Shivangi, what are charts indicating for this one?
So, of course, talking about this stock, we've seen that of lately there has been a lot of recovery that has been attempting from the lower levels. But then again, we've seen that on the monthly basis, this stock has consistently made lower highs, lower bottom from the last 7 months. So clearly there has been momentum that has been lacking here in Camlin. But again, we've seen that, the support levels have been, respected from the last 15 odd trading sessions. So definitely 143 would be an important support to watch out for this one. And upside still remains capped. We are looking at 155. Which it did kind of cross today, but it failed to hold at these levels. So it would be important for this stock to hold above 155 for the next fresh leg of momentum to begin.
Just correct myself on Camlin Fine as well, because when Alex just mentioned about vanillin, it was vanilla which was in my mind. Vanillin is the synthetic version of vanilla which people have started using, which cost around $32 per kg when you talk about the US market, whereas the cost of vanilla is very high. So that's where the use of vanillin has increased as well. And I think that's the play that you're betting big on, and that's what Incred is betting big on as well. But very quickly, a few of the other names which are buzzing in trade. You have Info Edge on the JobSpeaks data 2025 that did come in. Two things that caught my eye. Insurance, hospitality, good growth coming in on both these aspects, and it was the non-IT segment that saw good growth. The stock has cooled off slightly, but still trading in the positive. Shivangi, any trade with regards to Info Edge?
So, of course, Info Edge has been in kind of momentum, but, we've seen that it has been a highly volatile stock, consolidating within a very consolidative band. And from the last, 6 months, we've seen that this band has not been able to surpass. It's kind of forming a narrow triangle pattern formation on the monthly basis as well. So highly volatile, I would, recommend to, a little wait and watch and wait for this stock to stabilize. I think we have better stocks in this same pack, which one could focus on this time rather than this one.
Focus on Tata Motors PV, and there has been a kind of a downgrade coming in from the broking houses as well. And in the day's trade also it is down, trying to make a recovery as well. Mr. Chokalingam, need your views on Tata Motors PV. Yeah, largely we see, there is a kind of a momentum missing just because of the JLR impact which is there. Weak numbers came in, cybersecurity incident impact was there. How is the, fundamentals looking like to Tata Motors PV? Is there any value emerging right now?
No, see, ever since both listed after demerger, I have been favoring Tata Motor CV to Tata Motor Passenger. Now numbers also not favorable for Tata Motor PV. So I maintain the same stand. Apart from the core business, even if you look at their investee companies, Tata Motor CV has invested in Tata Capital, which is a domestic play. Tata Motor Passenger Vehicle has invested in a technology company, which is a global play, primarily on the foreign markets. So therefore, between these two, I continue to prefer Tata Motor CV to Tata Motor Passenger Vehicle.
Is going for a Tata Motors CV versus a PV, seeing the kind of CV upcycle that everyone is betting big on as well. And it's not only Tata Motors CV, right? Even other companies in the CV space are demanding the same kind of interest.
So, and it's not just, so when you say CV, of course, you generally talk about MHCV, you talk about LCV, you talk about ICV, but you extend that to tractors as well.
Yeah, absolutely.
Because there is a big play there, and which is why Mahindra and Mahindra is something you focus on, right? Because
so
SUV
from Mahindra to your Escorts, Ashok Leyland,
and your
all
financing
of them.
companies also make it the
picture. Shriram Finance, right, is coming. Chola is coming to play as well, and both of those counters have been buzzing in trade pretty much over the last couple
of years. Let's ask Mr. Chockalingam, quick view. We've asked you about specific companies, but we didn't ask you about M&M. Would you have a positive view on M&M? Because it seems that if that demand for auto, for SUV, plays through in the fourth quarter, heads into FY27 as well, and tractors are firing, then it's firing on all cylinders.
You are absolutely right. You know, one best way to see the merit of M&M is look at its performance in SUV, that is in automobile space. When all the competitors were stagnating or growing very poorly, this company has done phenomenally well. Now with the GST reform, I believe this should do better, continue to do better going forward. And second, unlike other automobile competitors, it has got a tractor segment, which is a dominant one, highly profitable, and which is growing in a strong double digit. And tractor also got a GST, benefit in the recent reform. So I completely agree. It's good to hold, even buy on declines for medium to long term.
Declines, yeah.
Yeah, absolutely. You know, one of the stocks that we haven't yet spoken about today, and we've been speaking about FMCG, but we haven't spoken about Avenue Supermarts, right? Because the stock is up and about 5% higher today. I wonder if Mr. Chockalingam would look at this, because let's face it, Mr. Chockalingam, it's not a stock that has been a favorite in the recent past, and investors have had to have quite a bit of patience. Would you say that now is a good time to start accumulating if that FMCG upcycle is supposed to take place?
I would hold it because the physical stores are not doing that well. The competition from quick commerce and e-commerce is hitting them. Yes, Avenue DMart also started, but I still believe it's a small percentage of the total revenue. So I would give a whole recommendation, probably wait for December results and understand better, and then I would review.
Okay, that's Avenue Supermart. Strong moves in today's session. Shivangi, a quick view when it comes to Lemon Tree Hotels. That stock is seeing some strong momentum and a spike in trade as well. Would you play the momentum on a Lemon Tree Hotels?
Now, of course, these stocks had been dampened because of the global issues. But then overall, we've seen that on a monthly basis, it is attempting a recovery, even though the longer term structure still remains little dampened. We've seen a good amount of short covering today, and it has recouped the losses of the last 3 trading sessions. But then again, we've seen that this stock is still trading below its 50 exponential moving average. So I would wait for it to cross 158 level, which is the next level. So if it crosses 158, then we could see an upside move towards 165. But this would be an important level to watch out.
All right. Thanks a lot, Shivangi and Mr. Chockalingam, for giving your time and giving your views on both fundamental and technical perspectives. But looking at the markets, a very range-bound move in the markets. But of course, in the last hour of trade, there was some recovery in the Nifty and actually closely defending its 10-day EMA levels as well. Roughly 26,140 are the levels. Nifty Bank also, the down tick is much more. Their recovery was a bit less, down almost 150 points. Let's look at the stocks in the Nifty, what has happened, the constituents, and likely the top gainer has been, you could say, Titan. The stock is up 4%, and the larger IT names, that's where the short covering is coming. HCL Tech, and even you could say like the other larger names as well. But as we move towards the closing, the important selling which has happened in the Nifty index, this of course are the stocks which are seeing a big selling pressure. They are including names such as Power Grid, Tata Motors, Max Health, Maruti, and Cipla. That's where the downtick is coming. Stock is down 4% odd. Sectors also, let's see how the movement has happened. And profit booking coming in, PSU banking, realty, as well as in auto space. But IT has been doing really well. We need to check the short covering data today. Consumer durables also doing well. India defense, also some momentum is there, but largely we are seeing a range bound movement with the sentiment turning a bit negative. Let's pull out the advanced decline ratio to see where the markets stand. There were gyrations throughout the day's trade, but eventually it's all even Stevens, 1:1, bulls and bears closing day's trade. And let's pull out, apart from this, the mid cap and the small cap index. We had given you an analysis also. Mid cap index also showing strong recovery. Let's pull up the small cap index. That's where the breadth is increasing for the last 5 sessions. We had told you at 230, and look at that. This has happened today also. That means value buying is coming in the small cap space. It's not a sell on rise market. Also, these are the important developments, but let's see the BSE 500 stocks where the contributions matter a lot. Broking upgrades coming in, Tata Elxsi, KPIT Tech, even the IT stocks doing well in trade, most of them they're a very value buy. Embassy Development, some blocks have started coming in. Avenue Supermarts also up almost 5%. Amongst losers, we have having some chemical names. CSB Bank, there's a profit booking in most of the counters. Interestingly, Rain Industries and Euroca, Forbes also make it to the list. So these are the important stocks which were in focus. That's all, folks, for today at India Market Close. Up next is Market Express by Himangshi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hello, good afternoon and welcome to Market Express. I'm Himakshi Bahugna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and the global cues that could really shape tomorrow's session. Let's get you straight to the top story. So let's see how the markets have fared today first up. So it was a choppy session on Dalal Street, if I may say, as Nifty has tested the 26,100 levels. If you talk about the benchmarks, they have, however, managed to erase most of the day's losses in the last hour recovery. And broader markets have outperformed the benchmarks today as both the mid-cap and small-cap index ended the day with modest gains. Talking about the sectors, so many of the sectors have shut shop in the red with auto and oil and gas leading the losses. Meanwhile, IT and Pharma have remained resilient. Now let's kickstart the show by talking about the Nifty's top losers. Cipla's Greece-based partner has come under US FDA scrutiny. So receiving a Form 483 with 9 observations, so the regulator has flagged serious issues, including contamination risk, poor manufacturing practices, and also unusually high particulate reject limits. So another key concern was inadequate investigation into out of the specification results along with data integrity lapses. Now this development is significant as pharmaceutical manufacturers, that is, the arm, the Greece-based arm is, Cipla's biggest drug in the US market, raising questions about potential supply chain impact. Next up, we have Tata Motors passenger vehicle that was under pressure after a tepid set of Q3 numbers, and production has seen mixed trends in December. Output of the Curve and Sierra models have fallen down sharply, 78%, while Safari and Harrier have and in fact Sumo, they have surged 81%. So despite these swings, CLSA remains bullish, maintaining an outperform rating with a target of 450 rupees. The brokerage also flags near-term challenges from a recent ransomware attack and also tariff concerns impacting FY26 free cash flow. However, it expects scale revival to drive the Jaguar Land Rover margin recovery, while the new launches should boost the India business. And JP Morgan is staying positive on the IT sector, maintaining an overweight rating on KPIT Technologies with a target price of 1,400 rupees. So the brokerage is noting that demand in the auto, ER and D segment is improving. And as OEM clients prepare to restart their R&D programs, Europe is leading the recovery, followed by APAC, while the US is also expected to take a couple of more quarters to bounce back. JP Morgan believes that KPIT is well positioned to benefit benefit, from this trend. And JP Morgan has upgraded both Tata Technologies and Tata Elxsi to neutral from underweight, signaling improved confidence in the auto ER&D space. And the brokerage has raised its target price for Tata Tech to 710 rupees and Tata Elxsi to 4,800 rupees. So this comes as demand recovery gains traction, and this is also led by Europe and APAC, while the US is also expected to, follow in the coming quarter. So this upgrade reflects optimism around the OEMs restarting R&D programs and also stronger outlook for engineering services. In fact, Titan has sparkled in trade after the company reported a robust business update for the third quarter. And this was driven by strong festive demand and also sustained traction across the key categories. So jewelry growth came in better than expected, aided by higher selling prices and also a healthy uptick in the studded pieces, which has seen mid 20s growth. So domestic business has surged 38% with like-to-like growth in the low 30s. And on the earnings call, Titan has outlined ambitions to lead in both the lab-grown and natural diamonds. So brokerages remain mixed. Morgan Stanley maintains overweight, while Citi stays neutral with a target of 4,125 rupees. And Senco Gold is shining bright after reporting a stellar third quarter update. Revenue has surged 51% year-on-year, while growth for the first 9 months stood at 31%. So same-store sales has also jumped 39%, with diamond jewelry up 36%. Gold prices have also seen a sharp 65% rise year-on-year, boosting the overall performance. So management remains confident of achieving over 25% annual growth and also continues its aggressive expansion strategy, launching 4 new franchise showrooms in Q3 and also staying on track to open 20 new outlets in FY26. And white-collar hiring in December 2025 has rose 13% year-on-year. And this is driven largely by non-IT sectors. So insurance led the surge with a 34% jump, and this is supported by a 57% increase in the fresh hiring. So hospitality has posted 29% growth, with Mumbai and NCR as key contributors. Banking, however, has seen a 7% decline, while the startups continue to hire actively. Hiring of seasoned professionals grew 15%, and this was led by oil and gas and also real estate. So non-metro cities like Kochi and Jaipur have emerged as strong, fresher hiring destinations, and this is signaling broad-based recovery in the employment trends. Let's look at some brokerage notes. Citi has reiterated its buy rating on Apollo Hospitals and also raised the target price to 9,600 rupees, calling it a high conviction pick. So the brokerage believes the near-term challenges, including losses from new hospitals and flat margins, are already priced in. So Citi sees attractive risk reward and also expects a strong ramp up in facilities to drive the margin expansion by FY28. It also highlights, HealthCo's transition from being a drag to becoming a value creator, reinforcing confidence in Apollo's long-term growth story. And let's keep it going with the brokerage notes. InCred has maintained its ad rating on Camlin Fine Sciences and has raised the target price to 480 rupees from 425 rupees. So the brokerage also expects the company to benefit from the tight, vanillin markets in the US and also Europe, supported by its high-value blend portfolio. So prices for vanillin are projected to top $32 per kg by the second half of FY27, and this is reinforcing a positive outlook for Camlin Fine. Let's look at more brokerage notes. Morgan Stanley has downgraded Indian hotels to equal weight from overweight, trimming its price target to 780 rupees from 811 rupees. The brokerage says that while Indian hotels remains a well-run business, its current valuation looks fair. It also expects limited upside surprises in the industry's RevPAR cycle and also notes that the FY27 EV versus EBITDA already reflects, the risk-reward balance. And Lodha Group has reported a strong business update for the December quarter. Pre-sales surged 25% year-on-year to 5,620 crores rupees, signaling improved sales momentum. However, the collections have dipped 17% to 3,560 crores. In a major development, the company has announced large project additions worth 33,800 crores in gross development value, further strengthening its growth pipeline. Now, Lodha continues to focus on expanding its portfolio while maintaining robust sales performance. And Inox Clean Energy has raised 3,100 crores through an equity funding round, diluting close to 6% stake to a mix of foreign and domestic investors. Now, the fundraise values the company at a pre-money valuation of about 50,000 crore rupees. So, the company has said that the proceeds will be used to scale the capacity across renewable power generation and also the solar manufacturing. So Inox Clean is targeting 10 gigawatts of installed power capacity by FY28, and the company is also preparing to file draft papers for its IPO for this quarter. Now on to the upcoming budget. Official sources indicate that India's finance ministry is finalizing budget 2026 proposals centered on deregulating and decriminalizing the business rules. Now, this is being done to simplify the operations and also boost the economic efficiency. Now, the key plans include streamlining registration and approval processes, scaling back routine inspections, and also adopting risk-based tech-enabled oversight. Now, the government is aiming to restrict the criminal penalties to serious offences, while procedural lapses will be decriminalized. Now, these reforms are part of a broader strategy to enhance the productivity, ease of doing business, and also India's growth trajectory. Now, the budget will be presented on February 1st with consultations underway with state finance ministers. And general insurance companies has reported healthy premium growth in December, and this was led by both private and public sector players. Now, Go Digit and ICICI Lombard have posted double-digit increases in the gross written premiums, while state-owned New India Assurance has also recorded strong growth. Now, so overall, if you talk about private sector general insurers have seen premiums rise by 15% year-on-year. Now, the data points to steady demand across the motor, health, and other non-life segments towards the end of the year. And Elon Musk's artificial intelligence startup XAI has closed a massive $20 billion funding round with heavyweights like Nvidia, Fidelity, and Qatar's sovereign wealth fund coming on board. So this funding, which has been in the works for months, will fuel XAI's infrastructure built out and also accelerate the rollout of AI products at scale. Now, what's interesting is that the deal structure, a large part of the money will be used to buy Nvidia chips, which XAI plans to rent out over 5 years, offering investors a new way to limit the risk. And it could also well become a template for future big-ticket AI financing. And staying with global expansion stories and Indian aviation first, this afternoon, now Indigo has officially made aviation history, becoming the first Indian airline to induct the Airbus A321XLR. Now, this marks a key milestone in Indigo's international expansion plans. The A321XLR will initially fly long-haul routes from Delhi and Mumbai to Athens, helping the airline tap medium-haul global markets more efficiently. Now, Indigo is planning to induct one more of these aircraft by the end of this financial year, underlining its ambition to significantly scale up its overseas footprint. Now, from expansion to a caution, a major global recall now grabbing attention here. Nestle has announced a precautionary recall of select infant formula products across multiple countries after detecting a bacterial toxin in one of its ingredients. Now, the affected batches contain arachidonic acid, oil contaminated with cerulide, a toxin that can really cause severe vomiting and diarrhea, while Nestle says no illness have been reported so far. Parents are being advised to stop using the recall products immediately, and public recalls have been issued in several countries, including France, Germany, and Hong Kong, with the company working closely with regulators and suppliers to identify the root cause. And back home now, and a big push for domestic manufacturing. Tata Power Renewable Energy is set to build India's largest ingot and wafer manufacturing facility in Andhra Pradesh with an investment of over 6,600 crore rupees. So the gigawatt greenfield project at Nellore will support solar cells, modules, and semiconductor manufacturing, aligning with the centre's push to cut the dependence on imports. Now, the state government has cleared the project and also allocated land along with support for a captive green energy plant. Once operational, the facility is expected to generate around 1,000 jobs and also significantly strengthen India's clean tech supply chain. In fact, China's Lenovo, the world's largest personal computer maker, has announced a partnership with US AI chip leader NVIDIA to help AI cloud providers rapidly deploy the data centers. So this announcement was made in Las Vegas as Lenovo focuses more into artificial intelligence, and the company also unveiled Kira, which is a personal AI system designed to work across Lenovo and Motorola devices, including PCs and smartphones and also wearables, while running in the background. So Lenovo also showcased concept AI glasses and an AI assistant wearable under Project Maxwell, offering users real-time support. Now turning to capital markets, another tech IPO could be lining up. Popular chat platform Discord has reportedly filed confidentially for an initial public offering, adding momentum to the growing pipeline of tech listings. So the San Francisco-based company, widely used by gamers and developers, has over 200 million monthly users. Discord is said to be working with Goldman Sachs and JP Morgan on the potential listing. Though deliberations are still ongoing, the company says that its focus remains on building sustainable business. Now let's look at some national news. The Supreme Court has raised sharp safety concerns over the presence of stray dogs in public spaces, saying that you simply cannot read an animal's mind when it's in a mood to bite. Hearing a clutch of petitions on rising dog bite incidents, the court has said that prevention is better than cure and stressed that roads, schools and institutional areas must be kept clear of stray dogs, not just because of the bites, but also because they can cause accidents. Now, the bench has rejected arguments that dogs are mostly confined to compounds, calling such information outdated. Now, the centre, meanwhile, has suggested allowing resident welfare associations to decide whether, dogs should be allowed in gated societies, underlining the need to balance animal welfare with human safety. Now, from safety on the streets to travel disruptions in the skies, Air India has issued a travel advisory for passengers flying tomorrow morning, warning that dense fog and poor visibility over Delhi and parts of North India could disrupt the flight operations. So the airline is saying that the weather conditions may have a cascading impact across its network, leading to delays, diversions or cancellations. Air India has assured passengers that ground staff will be available for assistance and also highlighted its fog care initiative, under which the travelers are informed in advance and also offered flexible options. Now, passengers are being advised to, check the flight status before heading to the airport. And that, fog is part of a broader winter chill tightening its grip. Winter has firmly set in across North India, with Delhi recording its first cold day of 2026. Snowfall continued in several hill states while temperatures dropped sharply across the region. The IMD has forecast more light rain and snowfall in Jammu and Kashmir, Himachal Pradesh and Uttarakhand. So in the national capital, maximum temperatures hovered between 13 and 16 degrees Celsius, with cold day conditions likely to persist. So the weather office, says a cold day is declared when maximum temperatures fall significantly below normal, and a trend now clearly visible across northern India. Now, from the cold weather to a worrying public health warning from Central Data. A stark report by Jal Jeevan Mission has revealed a serious public health concern in rural Madhya Pradesh. Now, more than 1/3 of drinking water samples in villages are unsafe for human consumption. Now, according to the government's own assessment, only 63% of the samples have passed the quality test, well below the national average. Now, the findings are even more alarming in the government hospitals, where nearly 88% of water samples have failed microbiological safety checks. Schools weren't spared either, with over a quarter of samples found contaminated. Now, the report is raising urgent questions about water safety, healthcare risk and accountability at the ground level. And India has voiced genuine concern over the unfolding crisis in Venezuela following the US military operation that led to the capture and detention of deposed President Nicolas Maduro in New York. Now, External Affairs Minister S. Jaishankar, speaking from Luxembourg, said that New Delhi is closely monitoring developments and has urged all the parties to prioritize the well-being and safety of the Venezuelan people. Now, calling for dialogue and a peaceful resolution, he also underscored India's long-standing, warm ties with Venezuela, saying that what matters most now is that Venezuelans come out of this turbulent period safely. Now, Washington's actions have sparked global debate, but India's focus remains on stability, humanitarian concerns, and peaceful engagement. In fact, Prime Minister Narendra Modi has spoken with the Israeli Prime Minister Benjamin Netanyahu, conveying New Year greetings to him and the people of Israel. In a post on X, the Prime Minister has said that two leaders have discussed ways to further strengthen the India-Israel strategic partnership in the year ahead. They also exchanged views on the evolving regional situation and reaffirmed their shared resolve to fight terrorism with greater determination. Now, the conversation underscores the continued strategic convergence between New Delhi and Tel Aviv, particularly on security cooperation and counter-terror efforts. Now, amidst upheaval in Venezuela, and the arrest of President Maduro, US President Donald Trump has announced that interim Venezuelan authorities will transfer between 30 and 50 million barrels of sanctioned high-quality oil to the United States at the market price. Now, Trump has said that the proceeds will be controlled by him to ensure benefits flow to both US and Venezuelan people. Now, the oil will arrive in the US via storage ships and be unloaded directly at US docks under Energy Secretary Chris Wright's direction. Now, valued at up to $2.8 billion at current benchmark prices, the deal underscores US efforts to leverage Venezuelan energy assets amid political upheaval. Now, more on this evolving story. The U.S. administration has informed Venezuela's interim leader, Delcy Rodriguez, that it must sever economic and strategic relations, with China, Russia, Iran, and also Cuba. Now, Washington also requires Venezuela to partner exclusively with the U.S. on oil production and also prioritize U.S. buyers. Now, the move follows U.S. efforts to control the Venezuelan oil output and also finance without deploying troops. Senior officials are saying that tankers are currently full, adding leverage to U.S. demands, and meetings with American oil companies on investments are expected within the week. And Trump's assertive foreign policy posture isn't limited to Venezuela. The United States has once again raised eyebrows globally by saying that the use of military force to acquire Greenland is always an option. Now, the White House said that the President Trump views control of Greenland as a national security priority to counter Russian and Chinese presence in the Arctic. European leaders and Canada have strongly rejected the idea, stressing that Greenland belongs to its people, and any U.S. attempt to seize the Danish territory would severely strain the NATO ties. Greenland's own leadership has repeatedly said that the island does not want to be part of the United States. And with that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could set the tone for the next trading session. Thanks for watching. I'm Himakshi Bhagna. Stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today.
Market ends lower for the third straight session after pairing early losses. Sensex recovers over 300 points from the day's low, while Nifty closes above 26,100. Pharma closes as a top sectoral gainer, while broader markets outperform the benchmark. Keynes Technology tells NDTV Profit that tariffs will not have a significant impact on the company, says the Semicon major invests in the US to avoid tariff. Budget 2026 will focus on deregulation and decriminalization. Sources say Finance Ministry is examining proposals from multiple ministries and departments to simplify the rules and procedures. Assochan President calls for subsidies for the MSMEs to aid the tariff blow during the budget, stresses on the need for process simplification to reduce imports and increase domestic production. ThyssenKrupp confirms that the company is in confidential talks with Jindal Steel International for the sale of steel business. Spokesperson tells NDTV Profit that both the parties will address all the relevant parameters, including valuation and obligations. President Donald Trump reiterates his good relationship with PM Modi, but underscores that PM Modi is not happy with him over the high tariffs US has imposed on India. Donald Trump also says Venezuela will be turning over 30 to 50 million barrels of oil to America, announces that the Venezuelan oil will be sold at market price and he will control the funds from the oil sales. External Affairs Minister S. Jaishankar says India is concerned about recent developments in Venezuela, urges all the involved parties prioritize the well-being and safety of the Venezuelan people. Prime Minister Modi speaks to his Israeli counterpart Benjamin Netanyahu. Both the leaders discuss ways to strengthen the strategic ties between their countries, reaffirm their shared resolve to fight terrorism with greater determination. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm Malika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Speaking on the latest, the Ministry of Statistics and Program Implementation, also called MOSPI, has released in fact its first advanced estimates of GDP. The government sees FY26 GDP growth at 7.4%. On a year-on-year basis, government sees FY26 GDP growth at 7.4% versus the estimated figure of 7.5%. I, in fact, have my colleague Shrimi Chaudhary joining us to understand the first cut of these numbers. Shrimi. As Shrimi joins us for helping us understand, remember viewers, this is an extremely important data point as it would give us some kind of idea as to how the budget would be planned. The union budget is going to be announced on February 1st. NDTV Profit also reported that to you. The GDP estimates, remember, comes at a time when India's consumption has picked up significantly, also bolstered by key policy reforms that have given it a good jolt. And remember, most economists were also expecting the GDP to be above 7%, and the latest data as released at this point in time, shows that the government sees FY26 GDP, that's GDP for this financial year 2026, at 7.4% versus the estimate of 7.5%. So there's a bit of a drop there, but we'll have to see what our experts have to say. We'll soon have our experts joining us as well into this conversation to help us understand the first layers of these numbers. But the big point here is the fact that we have the GDP numbers that have come in. We also have, as I was saying, Gaura Sen Gupta, Chief Economist at IDFC First Bank, and Radhika Rao, Senior Economist, Executive Director at DBS Bank. Thank you so much, ladies, for joining us in this conversation. Let me start with Gaura. Gaura, are these numbers to the tune of what you expected, and what does this mean for the budget?
So you'll have to tell me the nominal GDP. So real GDP has come at 7.4% for FY26. For us, our expectation is higher. We see definite upside risk. We are at a 7.6% in real growth rate terms. If you look at high frequency indicators, there is a broad-based pickup of growth in Q3 for both urban, rural, thanks to the GST cut. Rural, in fact, had begun to pick up in Q2 itself. We are also seeing quite a pickup in consumption, in production activity. You look at production indicators, freight movement. Also, there's a whole combination of monetary policy stimulus, fiscal support is showing signs, and especially in the Q3, and we expect Q4 also to be on the higher side. As per our estimates, you will also get the transient support of the deflator. The GDP deflator growth will turn negative in Q3 because WPI is negative. So that will further boost real growth rates. So we see upside risk to the 7.4 real GDP growth. For us, it's tracking at 7.6 versus the 7.4. For the union budget, the budget had penciled in an 8% nominal GDP growth. I'm not sure what the advanced estimate nominal GDP growth is, but we see some upside risk there also. Our estimate for nominal GDP growth is tracking at around 8.2 versus the budgeted growth of around 8.
Okay. Notice. So nominal GDP growth was seen at 8% versus 9.8%, and the GDP growth is being seen at 7.4% versus 6.5% on a year-on-year basis. Some other key data points that are kind of emerging at the moment is also the fact that FY26 agriculture sector growth was seen at 3.1% versus 4.6% in FY25. So there's been a bit of a drop on those metrics. I'd like to get in Radhika Rao on this. How do you see this particular drop, Mr. Rao?
Hi, Malika. I think certainly what we were looking for, obviously, the farm sector is very important in terms of where the overall growth grows, and it seems to show around the 3% mark. But if you look at the other breakdown, it's along what was the momentum, I think, in the first 2-3 quarters of the year. Of course, we have official data only for the first 2 quarters of fiscal 26. But the third quarter also, just like Gaura mentioned, is going to see quite a strong upside. In fact, our own estimate for growth is much stronger. It's at about 7.7% for fiscal 26 because it's taking in a strong Q3 and a slightly sub 7% Q4, which, overall average is giving us a quite high number. In terms of the drivers, I think investment and consumption would both be quite important. And I think both of them, at least the breakdown initially available, seems to suggest that that's what MOSPI is also factoring in. And insofar as the nominal GDP is concerned, it seems to be showing at 8%. I think the actual number will be a bit higher than that. But there's still a gap between what the budget number set at 10.1 and what the prevailing nominal GDP seems to suggest. But let me also add here that the pace of nominal GDP is one thing, but if you see the nominal size of the economy, truth be told, fiscal 25 was actually bigger than what was budgeted. So fiscal 26 need not be that much bigger. Even with that about 8.2, I think we will be quite safe in terms of the fiscal deficit numbers. So overall, I think the numbers for first advance estimate are more or less where the markets expected. But I think when the second advance estimate comes out late February, it will be affected by a couple of things. Firstly, of course, it's going to be a rebased data. So we will be talking about completely different set of, breakdown and numbers when we speak again on this. But even apart from that, if you had seen in the past as well, there usually is an upside bias to this first advance estimates, because this captures data from about November, a bit of December numbers, and there is still more, nearly a quarter to go. So routinely seems to usually has an upside bias to the actual or revised numbers.
All right. But you did mention that investment and consumption would be key influencing factors on this number. We have my colleague Shrimi Chaudhary also joining us to help us understand the first cut. Shrimi, what are you gathering from these numbers? What kind of a story do they tell?
Yeah, very clearly, if you see, there are two important headline numbers. One is, of course, the real GDP, which is more or less on the expected line, which is 7.4%. And the nominal GDP, which is 8%, market expected around 8.3 to 8.4%. Now, nominal GDP is, of course, very important, and that's the number to actually watch out. Government, how they're looking at the revenue, the spending, and overall fiscal deficit. So that's the key number we need to watch out, and that is coming at 8%. Now at 8%, if you compare that with the previous assumption, previous budget assumption for the current financial year, it was 10.1. So is it a kind of risk somewhere on the growth? Clearly no, because with 8% of nominal GDP, it's pretty clear that government is on the is on the track as far as fiscal numbers are concerned. However, there could be some changes you could perhaps see in the revision of the tax numbers, the revenue numbers in the upcoming budget. The another important factor which need to be watched out, that what is government going to have projection for the next financial year in terms of nominal GDP growth, because 8% is giving you that much of cushioning because of the broad base in the FY25, which is around 9.9%. So clearly that sort of cushioning is coming, but definitely the government will take a call on how they're going about their targets, the budgetary targets in terms of the revenue projection, in terms of their expenditure, as well as whether they are able to keep the fiscal deficit target at 4.4%. Is this first estimate which is going to decide? Malika?
Yes. As you mentioned, the fiscal deficit, and in fact, Radhika Rao was also talking about it. Ms. Sengupta, I'll get you in on the fiscal deficit number, because, the GDP figures is a very important factor when it comes to managing the fiscal deficit. How do you think, now that the numbers have come out, will the fiscal deficit for FY26 be impacted, and what direction is it going to take?
I just want to give one caveat. So the 10.1% nominal GDP growth that was budgeted, that was based on FY25 RE of GDP. So what happened was FY25 nominal GDP turned out higher than the RE. So if you put the implied budgeted growth rate of nominal GDP on FY25 actuals, the growth rate, budgeted growth rate is actually 8%, not 10.1%. So if the advance estimate is indicating the nominal GDP growth is at 8%, which is on top of FY25 actuals, then it's in line with the union budget. It doesn't add or reduce. From a fiscal perspective, this has been a very challenging year for the center as well as state governments in terms of tax collection. For the center, we see quite a shortfall in tax collection. Our shortfall in gross terms is tracking at around 2.5 to 2.8 trillion in gross terms from the budgeted target. And this is reflecting the substantial income tax cut, the substantial GST cut. On top of that, slowdown in nominal GDP growth from a 9.8 in FY25 to an 8% growth estimate for FY26. As per us, nominal GDP might be slightly better. So we are building it maybe at an 8.2. Versus the advance estimate of an 8%, or the budgeted estimate also of an 8%. So there is a challenge that has happened on the revenue collection front, but we still expect the center to meet the 4.4 target. Reason being, non-tax collections have been very robust. You have an RBI dividend, which is higher than budget estimate. The center is also earning more on excise duty collections because they had hiked petrol diesel tariffs in the month of April. They had hiked the duty on petrol and diesel. The other support is PSU dividends, especially oil PSU, coal PSU dividends, that will be higher than what is budgeted. So, and on the expenditure side, especially revenue expenditure side, we see sources of saving. One is the just-in-time cash management on the funds that the center provides to states for expenditure on schemes. There, every year, over the last few years, the government, the center has been saving money because of just-in-time cash management. The other source of savings is that interest cost for the center is tracking lower than the budget estimate. Plus, there are various other areas where certain ministries are tracking lower than the full year budgeted number. And now we are entering Q4, so they cannot spend, the full budgeted amount because there's restrictions that are placed in Q4. So overall, even though the tax collection will be weaker than target, the fiscal deficit is still met at 4.4.
Thanks for that clarity, Gaura. This is Shrimi from Delhi. I wanted to understand that with the nominal GDP coming at 8% for the current financial year, what's your expectation on the next financial year, that is FY27? Because clearly this will going to be the base for government to decide on the nominal GDP for the next financial year. So what's your estimation?
So as Radhika mentioned, we'll be getting the new base GDP. So our estimate is still on the old base, but it shouldn't make too much of a difference. Our estimate for FY27 nominal GDP is tracking at around 8%, is around 10%. So from an 8.8% around FY26, it picks up to 10%. The pickup is led by the deflator growth picking up, because next year you will have a base effect which will lift both CPI as well as WPI inflation. So we do expect the nominal side to pick up to around 10% in FY27, which should be a little helpful in terms of tax collections. In real terms, we expect real GDP growth next year to be around 7%. It actually could be higher, but for now we are sticking to a 7% for FY27.
Okay. Radhika, I want to come to you just for understanding, because as we all know that from February 27th, when you will have the second advance estimate along with your Q3 numbers, the base year will change. The base year will be now 22-23. So all these numbers, we have seen quarter 1, quarter 2 with 7.8% and 8.2%, and now this first advance estimates of GDP. All these numbers are set to change anyway. So what's your sort of view on that, where these numbers stands?
Thanks, Shrimi. Certainly, I think for all of us, I think there's going to be a big bunch of changes coming. GDP, inflation numbers are also going to look different. Of course, the base year for inflation will be, will be 24. And then you've got IIP, which perhaps will be released later in the year, April, May, where we're going to see another set of change because of the base year. Now, going with the past revision, I mean, if I were to look at the 2015 revision, of course, it's hard to pen at this point where exactly the number would be. But I would think there would be a slight upside bias rather than a downside bias to the numbers that have been released. In 2015, we also had the GVA series that was introduced. We moved from factor prices to market prices. So quite a bit of methodology changes also that happened back in 2015. And I think there would be more such at this point, because you will have more granular data, you will have more sectoral data that will be introduced as well based on what Mosby has been telling us in the past few weeks. So putting all these things together, I would say that fiscal deficit for FY26, to our mind, is safe to the extent that we do think that the 4.4% of GDP target will be met. But fiscal 27, the focus is going to change. Your nominal anchor or target for fiscal 27 is going to be debt levels and deficit levels, right? So the finance minister had mentioned in last year's budget that you're not going to be looking at just the deficit point target anymore. It could be a range, and you will be looking at in cohort with where the debt levels are. So from that point of view, I think with a 10% nominal GDP assumption, I think a 4.3 or 4.2% of GDP sounds doable. But I also add here that from here on, I don't think the space of consolidation is going to be very aggressive. I think from pandemic, we're already at less than half. But I don't think in the next 4-5 years, the idea is to pursue very strong fiscal consolidation. I think there is a very clear agenda, at least to our mind, that the government wants to back all its new and strategic priorities, so which means that we want to get a bigger piece of the supply chain pie. We want to focus more on infrastructure outlays. It's already been mentioned about deregulation and decriminalization. So I think the focus is more on supply side and demand side pressures, because truth be told, the global environment is extremely challenging at this point, from the trade front, from policy front, from security apparatus front, all of that, right? So I think the agenda will be to strengthen the domestic economy as much as possible. So on defense, on infrastructure, on support to states, as well as the supply chain bit. These are some of the priorities we think will come out of the budget. So coming back to your question, I think the rebase numbers, if anything, based on past experience at least, could be similar or have a slight upside bias, which essentially again plays back to the fact that the fiscal deficit targets, at least that will be set for fiscal, which have been set for 26 and might be set for 27. We don't expect a big overshoot or undershoot based on the kind of trend growth that we see.
So both of you actually, Radhika and Gaura, you're saying that the fiscal deficit target will be on track, and that is 4.4% for the current financial year. But one thing I wanted to ask, since we have seen the impact of income tax cut on the tax collection, we have reached around 73 trillion so far, and we have 1 quarter left. Do you see some sort of downward revision in the tax collection target for the current fiscal, and government would also sort of decide its next year target based on the nominal GDP?
Sure. Who is this question for?
Gaura, you
this
can
question
answer
is for whom? All right. Thanks.
Gaura,
as I mentioned, we've seen, we are seeing quite a significant shortfall in tax collection. For us, gross tax collection is tracking at around 2.5 to around 2.8 trillion lower than the target. And this is spread over income tax as well as the GST collections. Income tax collections there are two reasons for the miss. One is the target of the income tax collection in the budget was very ambitious to begin with. So if you look at the budget growth rate implied of income tax in FY26 based on actuals of FY25, it's a growth rate of almost 22% in a year where you are having a substantial income tax cut. Secondly, because of the nominal GDP growth slowdown, that further adds to the slowdown in income tax. Plus, last year, the income tax got a little bit of support from the equity market performance. That's missing in FY26. So that's another drag. So yes, definitely we expect that the target for tax collection has to be revised down in the RE number for FY26, which will get presented in the union budget. We see a shortfall in both income tax as well as shortfall in GST tax collection for the center.
Right. Thanks so much, ladies. Gaura Sengupta, Chief Economist, IDFC First Bank, as well as Radhika Rao, Senior Economist, Executive Director at DBS Bank, and as well as our Delhi Bureau Chief, Shrimi Chaudhary, for joining us in this conversation and helping us understand the various levers of the first advanced estimates of the GDP of FY26. Remember, viewers, it has come in at 7.4%. versus what was expected before. But let's move on and talk about how Indian markets fare today. The markets closed lower today as the Nifty ended in the red for the third straight session. Benchmarks underperformed the broader market indices, and Nifty Auto emerged as a top, in fact, the worst performing sectoral index, snapping its 6-day gaining streak. Most sectors ended lower except IT and Pharma. They had a good day. But let's get in my colleague Mahima for all the key highlights from today's market action. Mahima.
Well, overall for a market, it's been a topsy-turvy day in terms of where the benchmarks are concerned. They underperformed the broader markets, but well above the 26,100 is where we found the comfort zone. With regards to the broader indices, overall it was a good session. Both the mid cap 150 and the small cap 250 closed in the green. Nifty closed lower for third straight session. Cipla and Maruti were the top losers on the Nifty versus Titan, the top gainer on the Nifty today. Sectoral indices closed on a mixed note. Largely, Nifty IT was the top sectoral gainer, closed around 2% higher on the back of, ahead of its Q3 earnings. The Nifty Auto fell the most, saw the most profit booking, emerged as the top losing sector for the day. Tata Elxsi, KPIT Tech gained over 6% as JP Morgan upgraded its rating. You have Tata Elxsi and KPIT as the top gainers for the mid-cap 150. Biocon Engineering gained again 8% ahead of its Q3 earnings, and Biocon Engineering and Saregama were the top gainers in the Nifty small cap 250 space. The advance decline ratio also indicated almost even Stevens when it closed, because throughout the day there was topsy-turviness with regards to where the advance decline ratio stands. So this is the overall view as to how markets have fared in trade today.
So a topsy-turvy trade today, but viewers, that's all the time we had on this edition of Profit 360. Do stay tuned to the channel as we continue to bring you a lot more news and updates. This is Malika Mishra. Thanks for watching.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
For decades, Punjab has been celebrated as the food basket of India. But today, the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industries can thrive. The focus is clear: ease of doing business, robust infrastructure, and a skilled workforce.
इंडस्ट्री लग जाऊगी, साढ़े नौजवान मुंडे कुड़ियां नूं काम मिल जाऊगा। इंडस्ट्री तो ही असीं सुझाव लए ने सारे, बहुत सारे इंडस्ट्रीज बैठे ने। इंडस्ट्री तो इसी पुछिया भी की करिए, सरकारां तंग करन वास्ते जां सरकारां कोई मुश्किलां पैदा करने वास्ते नहीं बनदियां। सरकारां हमेशा सहूलतां देण वास्ते और लोकां दी तरक्की, लोकां दा जीवन पद्धर उच्चा चक्कण वास्ते बनदियां। सरकारां दा काम ही ये हुंदा, जिवें लोक कहण उवें सरकारां नूं चलना पैंदा और चलना चाहीदा भी, क्योंकि सरकारां लोकां ने चुणीआं ने।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise. A land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
नहीं भाई, कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इंपॉर्टेंट हो।
SBI कूलेस्ट है।
What?
किसान से NRI तक, Gen A से Gen Z तक, SBI सबके लिए है। Very good. SBI, the banker to every Indian. Truly.
Punjab government foremost in public welfare. Investment of rupees 1.5 lakh crores in 3.5 years. Punjab has seen an investment of 1.5 lakh crore rupees in just 3.5 years of the government led by Bhagwant Singh Mann. This has generated employment for 4.5 lakh people in the state.
Tata Steel is setting up a green steel plant in Ludhiana with an investment of 2600 crore rupees. This plant will produce 7.5 lakh tons of low-carbon steel per annum from recycled scrap to meet the growing demand for sustainable steel. Man-made fiber, power, packaging, food processing, automobile, IT, semiconductor, hospital and services are the emerging sectors for investment in Punjab.
ਰਾਈਟ ਟੂ ਬਿਜ਼ਨਸ ਹਰ ਇੱਕ ਕਹਿ ਦਿੰਦਾ, ਬਟ ਈਜ਼ ਆਫ ਡੂਇੰਗ ਬਿਜ਼ਨਸ ਉਹ ਤੋਂ ਵੀ ਜ਼ਿਆਦਾ ਵੱਡੀ ਗੱਲ ਹੈ ਕੰਮ ਕਰਨ ਦੀ ਸੌਖਾਈ। ਸੋ ਸਾਡਾ ਮਕਸਦ ਇਹ ਹੈ ਕਿ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਹਰ ਖਿੱਤੇ ਦੇ ਵਿੱਚ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਨੰਬਰ 1 ਬਣਾਉਣਾ ਚਾਹੁੰਦੇ ਹਾਂ।
In order to give new wings to industrial development in Punjab, the government set up 24 sector-specific advisory committees with prominent industrialists as members in August 2025. The recommendations of these committees related to steel, heavy industry, textile, IT, semiconductor, hospitality, healthcare, packaging, etc. are being implemented on the fast-track Punjab portal with priority.
पहले के जमाने में तो ऐसा होता था कि इंडस्ट्री वालों को पता ही नहीं चलता था कि मेरे को क्या क्या करना चाहिए और वो बेचारे काफ़ी अरसे तक तो उसी में जूझते रहते थे। आज वो स्थिति नहीं है। आज इन्वेस्ट पंजाब के थ्रू एवरीथिंग इज डन वेरी कोहेसिवली इन अ वेल कोऑर्डिनेटेड मैनर, ताकि इंडस्ट्री को टाइम टू टाइम सारी अप्रूवल्स मिल जाती है।
Punjab government foremost in public welfare.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. So let's start the show, but I want you to guess the company which is coming at KYC today, where we'll dissect the company and also ask the management about the outlook ahead. Now the company is a Gujarat-based power and distribution player. That's the first hint for you. The second hint, recent announcement in a very big sector where a lot of interest is coming. That's the BESS segment, a battery energy storage space. That's what we'll be looking at. Company also is down 35% from 2024 highs. That's a lot of concern from the investors coming in, and they have written a lot of questions to us, and we will be asking that with the management as well. Recently they've won the GUVNL project as well. Now let's give you the company's name. You know, what's the concern coming? That's also a very important thing. The transmission industry orders are dying up as well. So we will be asking the reason, will this continue or not? But to give you the perspective, the name of the company, it rhymes. The first name is with a Bollywood's big superstar as well. And no doubts for guessing, it is Rajesh Power. This is the company which we are talking about, Rajesh Power Services. But why are we calling this company? The stock has, given very dismal returns in the last 1 year or so. But what are the concerns coming? The first is a very major announcement has come in. What's the rationale for foray into the BESS space? Already the transmission and distribution space, there are some kind of headwinds already there. The second reason why we are calling this company is there's a rising competition happening in the distribution space. So where does the company stand? What's the moat here? Also, another reason why we are calling this company KYC is the industry is witnessing a slowdown in the transmission projects. And will this continue going ahead or not? That's a key concern where we will be asking the management. Also, another thing is a 3,500 crore order book. Where is the execution timeline? How will the company actually go about it? That's something we will be asking the management as well. Apart from this, going ahead, these are the key reasons why we have taken Rajesh Power here, and any kind of execution of B2G risk. That's one of the largest questions we get from our viewers regarding companies like this, especially what's the private and the overall kind of momentum to look at for the governments. And joining us would be Utsav Panchal, the director and CEO of Rajesh Power. He will be answering all of our queries as well, which we'll be putting it up. But apart from that, let's look at about the company, what it is all about, and then Utsav will also come in to explain us what's the overall rationale going ahead. But first key reason, of course, is going to be overall you're looking at about the company, like what the company is actually doing. It's a Gujarat-based transmission and distribution player, and largely the company is transferring from an EPC veteran player which is already there. It's a company, it's a turnkey EPC solutions player, and now it's going into the newer areas as well. let's understand more about this company going ahead. And apart from this EPC solutions player, the company is established in 1971 and specializes in power transmission and the distribution segment as well. And largely we see there is a good momentum coming in the stock. The stock made its debut in December 2024 and since then the stock has tripled. But last 1 year or so the stock has taken a lot of patience of the investors. They are executing turnkey power sector projects in the transmission and the distribution space, and also looking at the other operations, they offer comprehensive OEM services as well. So that is an important thing. OEM services are for the solar plants, substations and the distribution systems for the business operations. Apart from the business operations, they are offering strategic consulting for the substation and the cable ecosystem design as a whole. If you just imagine a grid structure, that is where Rajesh Power is an important component player, largely regional player, but definitely we are going to look at that. Unexecuted order book and L1 positioning is at roughly 3,500 odd crore rupees, and we'll be looking at the outlook, what Utsav will say. Will it be that 5,000 crore mark in some time? So order inflows was roughly 2275 crores in H1, and largely the industry gets better numbers in H2 as well. Apart from this, let's look at the order book positions. Transmission and distribution, that is it. Almost you could say 76% comes from the power distribution segment and the 24% comes from the remaining in the overall transmission segment. So this is the overall order book position coming in, but there are ongoing projects which should be important. 130 kV GIS project in Jodhpur. Apart from this, there are other important projects also which are going ahead by Rajesh Power. If you could just show the important projects. Yes, going ahead, one is there in Jaipur. So largely we are seeing there is a kind of a move happening apart from Gujarat as well, and large power kind of orders are also which is there in the company, and a big supply arrangement. The recent announcement has come in for Waaree's BSS project as well. So a lot of developments are happening in Rajesh Power. You can just look at these important ongoing projects, and going ahead, of course, the focus will be in the new business sector, the BESS. But why have they entered? That's also a big question, because already two of these segments, they are facing already headwinds, and the third one they have taken again. So that is something which we'll be watching out for. So this is the important developments which have come in about the company. But let me explain you the overall KYC setup. How do we rate a company in our KYC show? If you could just show the important ratings, that will be very much important in our show. First of all is of course the income statement which comes in, the balance sheet, the cash flow, the return ratio. These are the four basic financial ratios which are there. Apart from this, there is shareholding, the street cred, which is nothing but the stock price movement which is happening across various periods, valuation, especially if we compare that with the peers, and last but not the least, the outlook of the company. So these are the important 8 KYC rating parameters where we will judge the company. So the first rating parameter I'd like to talk about, that is the income statement. How the income statement has actually panned out over the next 3 years. We have taken the 3-year CAGR numbers. H1 numbers have also been there in our analysis, and rightly we see the revenue and EBITDA numbers. Let's move ahead and see how they have actually panned out. The 3-year CAGR numbers, the revenue is at 94%, EBITDA coming in at 125%, but the PAT numbers, they are also very decent. And you look at it, there has been a significant growth coming in, and of course it's expected to go past that 100 crore mark in FY27 as well. So net income statement prima facie looks very strong, so I've given a thumbs up for this. But let's look at the second parameter, and that is the balance sheet parameter. Balance sheet is also pretty much important. Largely it seems stable. To look at the overall borrowings, that has actually crept up around 82 odd crore rupees. But remember, this is a very capex heavy industry. There is always a B2G and an execution risk also involved to it, and that's what we'll ask Utsav as well. And the cash bank balance, that's decent, that's around 60 odd crore rupees. Remember, this number has gone up, and it's been almost, you could say almost September 2024 onwards, or just before that the listing was there. But net it's decent, so I would be giving a neutral rating. The third one is the cash flow segment, and that's where my concern starts coming. I had earlier mentioned you about the B2G risk, the execution risk, and the cash flow segment, because the company is having a significant government exposure also in terms of revenue. And look at that, the operation cash flows and net cash flows, that's where my concern lies. This is just the numbers of H1 FY26, And that's the way where the concern is coming in, and because of that, I will be giving this cash flow segment a thumbs down. So we spoke about the cash flow segment. Another number comes is the ROC and the ROE numbers. Generally for these companies, you could expect 20 to 25% to be a healthy one, and the company has been doing well. FY25, this number has gone up to 44%. This is the ROE numbers. Let's pull up the ROC numbers. That's also decent. That's also going up. It's an upward trajectory which is there around 35. But will this be a bit of pain going ahead, especially when they're going into the new industries, BSS and stuff like that? So because of that, I will be giving a neutral rating, because the history has given a very strong up move, but the future, will this plateau or not? And that's a concern which analysts and some of our viewers have written to us at our KYC show. They have stated for this company, and that is why I have given a neutral rating when it comes to the return ratios. But I'll show you, apart from the return ratios, what else is very much important. We spoke about 4 rating parameters, and all of these rating parameters are on the numbers. But apart from numbers, there's other stories also which say important aspect, the shareholding segment. Promoters are holding it very decently, 73 odd percent. In September also, this ratio was around 73%. But my concern starts coming is, even if there is a very, very little institutional participation, be it FIs or DIs, it is starting to reduce. Look at that, it's around 1 odd percent, and now it's going down, and almost you could say virtually not there. DIs also, they have reduced their holdings from 5% coming down to 3%. That means institutionally also there is a sell-off happening, and because of that there might be a reason why the stock has down 35% from the corrections from 2024 high levels. Public, it has increased, the retail participation has definitely increased, it has come in, but of course because of this, the shareholding pattern I have given a thumbs down. Street cred, let's look at it, what has happened, what returns the investor have got over the last 1 month. Stock is down 9%, and also 6 months stock is down 23%. I already mentioned a big fall happening in the stock, and that's why the concern is coming in, and viewers write to us about these companies. But since IPO, if you are holding it, because there was already a 90% listing pop, apart from that still the company is 3x from its IPO price. So on that basis, I will be giving this a neutral rating when it comes to the street cred. Also, the 7th one is the valuations, and the company itself is having different peers, because company is having 2-3 businesses. There are wires and cables, there are project consultants and management companies also, but the nearest one I have taken is Kalpataru Power Projects. That's having a 35 times 12 month, you could say trailing P, but Rajesh Power, after a significant correction, is trading at 12x. That doesn't mean it's very cheap compared to its peers, because largely the corrections have happened because of the headwinds which are there, and institutional selling also seen in the counters. So valuations front, because of that, I have given this a neutral rating. Also, let's talk about the last segment, and that is the outlook segment. It's very much important, and we have taken what the management commentary was there in the recent Q2 update as well. First of all, they have stated that 40% CAGR growth across all key parameters. That's what they are expecting. And the second one is the BESS entry. Now, this is from the Gujarat Urja Vikas Nigam Limited, and that is something which we will ask Ujjwal. Apart from this, the order pipeline, that's expected to touch 3,500 crore rupees in the coming months. Currently, it's at 3,500 crore rupees. So that's an important statement. And a slowdown, that's the biggest concern. Slowdown seen in the transmission projects. What happens next? Anything you expect in the budget? That's what we'll be looking at. But as of now, outlook, I will be giving this a neutral rating. So let's revise the KYC ratings for the company. The income statement, it's around coming positive. Balance sheet, it's neutral right now. My concern starts coming in cash flow, and that is where this type of business model has a very big risk. Return ratio, they have been decent enough, at least for the industry perspective. Apart from this, the shareholding, that's where my concern comes. Institutional participation is not there. Street cred, largely neutral. Only if you're an IPO investor or holding it very early, you have made good money. But over the last 1 year itself, nothing has happened as such. Valuations, decent after correction. And outlook, that is something which we are watching out. So final rating would be for Rajesh Power around 3.5 out of 8. Generally, these are the neutral ratings when we give the KYC ratings to the show as well. But joining us is of course Utsav Panchal. He's the director and CEO, and he has been associated with the company for the last 7 years. He's an MBA from IIM Kozhikode, and interestingly, he has a specialty in the Six Sigma belt as well. Very, very warm good afternoon to you, Utsav. The question is, first of all, is the BESS project you have entered in here. Already 2 businesses are there which, your hands are full. This third one, how does it make sense, and why is, Rajesh Power actually a good fit in this BESS setup? Yeah, Utsav, please unmute your mic.
Yeah. So basically, thank you for inviting me over here. I'll just answer a question, quickly go through what we exactly do. So we are a leading player in the underground cable laying space as well as the transmission line and distribution infrastructure space, where we are also carrying out major substation projects up to the 400 kV level, where there is a specialized substation called GIS, gas insulated substation. We are also carrying out that. So coming to your question, I'll just briefly give you a snapshot of the energy storage industry. Yes, we have recently received the LOI from GUVNL for a very small 65 megawatt into 2 hours, which is 130 megawatt hour project. So as of 24-25, the installed capacity in India was 507 megawatt hour, and the installed capacity that became in 25-26 is 5 gigawatt hour. So in 25-26, 65 tenders, which were totaling 102 gigawatt hours, were issued. So 2026 is a crucial year for the industry, proves itself operationally. So energy storage and Rajesh Power, if I say, while tariffs have, yes, collapsed in the standalone BESS segment, taking into account the strategic role and energy storage is poised to play in power generation, transmission and distribution, it is crucial for Rajesh Power to develop its credential as an expert in the BESS segment. BESS is a low-hanging fruit for Rajesh Power in the sense that the core infrastructure is battery containers, which are largely plug and play in nature. They are all pre-assembled solutions with battery packs, battery management systems and liquid cooling systems built by the OEMs. So what comes next is the AC side. AC side, we as Rajesh Power are building substation, transmission line and cables, which accounts to almost 30% of the value of the BESS project. So this makes us one of the best all-in-one turnkey solution provider in the standalone BESS segment. So I think, I hope that answers your question.
All right, and Utsav, some concerns are there, and investors of the company also wrote to me. In Q2 itself, the company was facing competition in the distribution space. Is that competition there also in the third quarter or even the fourth quarter we can expect in the distribution space?
So if I tell you, we are particularly working in the underground transmission, underground distribution space. That is the underground cable laying space, which is a very specialized, nature of work we are carrying out. Also, additionally, we are carrying out medium voltage covered conductor projects, which is roughly around, we are executing 50,000 kilometer of MVCC. It is just a traditional overhead conductor replacement to, the new underground, the new type of conductor, which carries more power and reliable power. So we are into specialized kind of work. So that is what makes us a little bit unique from our other peers, where we are having the technical experience, the expertise that helps us.
But the competition is still there, because in Q2 you had mentioned about it. So till now the competitive pressure is coming in the distribution space for you?
So there is competition, but what we are working in is a unique combination of projects where the competition is very limited.
All right. And interestingly, the transmission project, now this is an industry-wide problem, it's not company specific to you. But Utsav, the industry is seeing a good slowdown in this transmission projects coming in. Do you think after this budget, these numbers can move up? So there's a two-part question to it. The slowdown in transmission projects, is it still continuing or some green shoots are coming, and what would be your budget expectations?
So what I would like to give you some inputs over this. Recently, the Ministry of Power did announce a few slowdowns in the power, the renewable capacity additions. The main reason of the renewable slowdowns is the transmission grid is actually not sufficient to build the equivalent renewable. So the speed with which we as a country have grown our renewable generation, we are not able to generate the transmission speed at the same momentum. So in fact, I would look at the other way, that we are having very aggressive outlook in the transmission segment, just if we say we are working in Gujarat and Rajasthan, we are having a very huge order bid pipeline, as well as the government has set up some very huge projects of substation, transmission lines, and underground cable projects. So what we are seeing in Gujarat, the JETCO has given an outlay of 96,000 crore to be executed in the next 10 years, which is roughly converting to 9,600 per year. That is mainly because there is a 30 gigawatt renewable that is there in Khavda, and it needs to be evacuated in this part of the state. So we are seeing a very good traction.
Okay, so that's a good traction on that. But Utsav, you had mentioned 40% growth across all the key operating parameters, and that was a blanket statement you had given in Q2. I also mentioned. So give me, what are the key top 2 metrics to track, and what are that 40% growth, and why you are stating that?
So basically, if we see our our order book as of September, we are having a 3,500 crore order book, which we just proved to have an order inflow of 2,200 crore worth of orders just in H1. Up to September 26. So we are seeing a very, very good bid pipeline in place, and that is what has enabled us. So in case if we just see the order book of 3,500 crore, which is to be executed in a period of 18 to 24 months, we quite have a very good revenue visibility in that sense.
All right. Just one query on the financials front. The cash flows are not improving, and that is where the B2G risk, the execution risk comes in, and investors also get restless. The stock is also cracking. I won't ask about the stock price fall, but the concern remains is so operating cash flows, what happens?
So basically, if you see the nature of our company, we are EPC mainly. We are working with decent margin, but as well as utility specific payment terms. So the negative operating cash flow is primarily due to the retention money inherent to the EPC contract. So what is retention money? Retention money is contractually locked receivables with zero risk, where the counterparty is usually large utilities and governments, and it is fully recoverable within time. So it is the retention money that is locked. But if you look at our business, our EBITDA margins are stable, projects are not loss making, and we have no cost overruns or liquidated damages. So we are very much confident in that.
All right. There's an interesting phase. You have entered into the 400 kV GIS segment. Generally, you are into 220, 200, if I'm not mistaken. Now, this new entry segment, what does it actually mean, for this segment and this industry as a whole? How many other big players are there apart from you? Because this is a larger capacity, if I'm not mistaken, and you have entered into it. So give us more details on that.
So with the recent, entry into the 400 kV GIS segment, the GIS is particularly gas insulated substation segment. Very, very few limited players, hardly in a single digit number, are there in the entire country to have capabilities to execute such kind of projects. And we'll be completing this particular 400 kV GIS project by around July, August, by which time we'll have some credentials to bid for very large size projects, complex projects. So this will give us an edge over, other peers in terms of execution and bidding and winning ratio.
All right, let's just revise the numbers which we have given in our KYC segment, and of course, Utsav, stay tuned. I have one last question for you, but overall, let's revise the audience what numbers I have given from the research team desk as well. And largely, we see the financials, they are good, but the cash flows, that's where my concern is there. And largely, we see the street cred also. There is a kind of a positioning coming down from the FIs and DIs. So net, I have given this company roughly 3.5 out of 8 when it comes to Rajesh Power. But Utsav, one query for you as an industry spokesperson as well. What are your expectations for this budget 2026?
So in the budget 2026, what we are expecting is very, very aggressive outlay in the distribution segment, particularly where we as all utilities are constantly working towards improvement in power reliability. If you see, we have been by doing undergrounding of cables, we have been able to improve the power failure, power downtime by a significant amount in just this part of the country. So that is one point. And second point, we are seeing a focus on smart grids. Now that is where we have associate company called HKRP Innovations comes into play, where we are providing IoT-based smart monitoring systems and solutions to the utilities.
All right. Can you just give in some more details about this HRKP, because everybody's talking about it, and the future outlay, when the incremental benefits will start coming in from this arm, could you give us a timeline?
So basically, in the HKRP Innovations Limited, we are basically providing end-to-end solutions for IoT-based smart grid monitoring systems, where we as a country have witnessed smart metering projects, at the consumer end. So we at HKRP are everything before the consumer end, where we are providing solution to digitalize the assets and monitor and control the assets of all the grid parameters, including substations, transformers, and everything. So we have hardware as well as software solution, and the growth outlook of HKRP is also very promising, in the sense the government focus on modernizing the grid. So that is where we come in, and in the immediate next 2-3 years, we are seeing a very good growth visibility in that company as well.
Thanks a lot, Utsav, for giving your views on the company and the industry. And it's very nice to chat with young, dynamic CXOs of companies at KYC. Best of luck for you and the entire Rajesh Power team as well. So that's the management of Rajesh Power. And of course, they have mentioned and they have defended that this is the way the industry works when it comes to their cash flow impact which has come in, but they are still bullish on the budget expectations for the power industries, and net they're looking at the rating parameters, removing the financials. The outlook definitely seems like the worst might be over for the stock. Of course, the transmission part and the distribution part, that's where the concerns are there, but nevertheless company wants to jump in the BSS segment, which is the battery energy segment as well. So that's all, folks, for the company, for KYC today. Stay tuned to NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The nerve center of the maximum city. The BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation.
Hi, thanks so much for joining in. We're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, the selection of a mutual fund scheme is something that people often debate about, people often seek advice about. And one of the questions that is asked by those that have a little experience is, should you opt for a mutual fund scheme in the equity space that is beating the market handsomely during a bull run? Or should you opt for a fund that has relatively low volatility, that may not beat the benchmark or beat the market when things are good, but actually protects your money when things are not good? There are actually two measures that you can look at, and one is beta, the other is standard deviation. Beta actually tells you whether or not your fund is beating the market in the upturn, and standard deviation is a measure of volatility. These two metrics are what we're talking about today. Santosh Joseph, who is a founder of Germinate Investor Services, is joining me today. Santosh, thanks so much for taking the time. First question, beta, apart from it being a Greek symbol and a letter of the alphabet, what does it mean from the perspective of an investor?
Hi, Alex. Good afternoon. So I think you started with a great saying that beta is a Greek alphabet, and for many people it's still Greek. But I think for the viewers, we make it easy. That usually it's a risk measure that helps you understand how the fund performs in relation to the market. It's that simple. Now, for people who are using beta as a measure, they follow a thumb rule. That is, if the beta is equal to 1, which is the standard measure of beta, that means you will do as much as the market performs. Now, if the beta is less than 1, that means you will capture less than what the market captures. Now, remember, this capture or doing more or less than the market is connected to the market. So if your fund does as much as the market, then that will be the perfect beta of just 1. But if the fund captures less than the market, then you'll have less than 1, maybe 0.9, 0.85 or 0.95. But if the beta is 1.05 or 1.1, that means your fund will perform greater than what the market delivers, or maybe when in a downturn, fund will fall more. Now, generally, this is a great tool for investors to consider when they are putting their money in to align with their risk appetite they have. All of us are investing because we want to make money. Some of us are a little aggressive and therefore we want to make more money than just the benchmark market offers. And therefore, we use this tool to position our risk appetite while building a portfolio.
Interesting. So therefore, more than anything else, this is a measure of history, right? It's something that has occurred already. It doesn't necessarily tell you about what is to happen from this point on, but it's usually a measure of the tendency of a mutual fund scheme or the fund manager of the scheme. Now, you've very smartly and very adequately explained this, but I just have a question here, which is that if you have a down capture ratio and up capture ratio, which we've discussed on this program as well, which kind of tells you how a scheme is performing when the market goes up and when the market goes down. Is this different from that?
See, the beta is actually kind of indicative of the up capture ratio, down capture ratio, and that's why you consider beta. I think you also very clearly pointed out that beta is a indicator. It doesn't predict the outcome. So now let's talk about the up capture and the down capture ratio. If your beta is more than 1, which means that when the markets or the index does well, your fund will outperform that index too. Now remember, if you feel that you take a fund which is going to be less volatile or risky, you go for a beta less than 1. You would have protected your down capture. But what will happen is when the markets are doing well, you will feel missing out for not capturing the upside. So you have to go with what you're believing for the fund to perform, because the same thing that prevents you from up capture will protect your down capture, and the thing that protects you from down capture will limit your upside. So you have to be a little cognizant that beta should be used the right way. It cannot predict, it gives you a sense.
You know, that's very interesting. We'll get to a few examples, Santosh, because we've often talked about standard deviation. I think this is also not necessarily a derivation, but it's kind of connected to this, right? Generally, one would assume that a scheme that has a high beta, which is it is falling more than the market, it is rising more than the market, it will likely have a higher volatility as well, a higher standard deviation as well. How would you explain standard deviation?
Okay, first I'll explain standard deviation. That is the measure of movement of the fund's performance and how it performs. Whereas beta is connected to the market, standard deviation is just the range at which the fund performs. More or less, it's the kind of bumpiness of the ride that you will experience. Now, usually when the beta is high and the fund is outperforming, it just tells you that the fund will slightly have a higher standard deviation than normal. It's because it is outperforming. There will be a little more fluctuation in the probability of the way returns are generated, both on the upside and the downside. Now, there is a good correlation between a high standard deviation and a high beta fund. It's because of the way the returns move. In a way, it's not a negative aspect. It just tells you that it's not a straight line. There is a probabilistic change in how returns are generated. And therefore, again, it's a good tool to tell you, do you want a bumpy ride? Do you want a smooth ride? In both, remember, do you want higher returns or do you want lesser return? The market is the end goal.
Okay, so just to put this in an example and to make it very, very simple, if my return of a scheme compounded over a period of 5 years has been 10%, and if the standard deviation of that scheme has been 15, then that means that at any given point of time for me as an investor, that scheme might have been giving me 25 plus or minus 5%. Is this correct?
Absolutely right. So what it tells you is it won't give a straight line 15% return. There will be a degree of variability. It measures how much that variability is. Let's use an even simpler example. You're riding your car, and if your average kilometer is 60, to arrive at average kilometer 60, there'll be times you'll go at 85, 90, there'll be times you'll go at 25, 30. But still the average is 60. Now, if I tell you the average is 40, then those degrees of variability changes. So most people think that low standard deviation is good to select the fund, without forgetting the point that even slightly higher standard deviation but a better outcome of performance is also important to the decision we make.
Let's take a look at this from the perspective of examples. And here, Santosh, let's look at the diversified funds, which is your multi-asset funds and your flexi-cap funds. Let's talk about schemes that have a relatively high standard deviation in beta and relatively low standard deviation in beta, and how they've performed over the last 3 years. How does that data look?
So when you look at the data, and we've just taken very simple data, easy for everyone to follow, the last 3 years calendar year returns, since we're in the early part of the year, and we look at the data, we've sorted it just by the way standard deviation drops down and beta drops down. It's interesting to note, and also maybe this is with the impact of how 2025 year has been a largely flattish year. in both flexi cap and the multi-cap category, choosing a fund with a moderately good standard deviation and beta, which is a beta of maybe below 1 and a standard deviation of between the 13 and the 14 range, has actually given you good outcome. A classic example of this has been maybe Parag Parikh fund. On the other hand, choosing a fund like, let's say, a quant, which has got very high standard deviation and very high beta, is also giving you a very different outcome in the year like 2025. But just for the sake of representation of accumulating this data over a 3-year period, you would notice that if you're an investor, choosing a moderate amount of standard deviation with a beta closer to 1 actually helps you even overcome that variability of returns and gives you a smoother return.
There are exceptions to this though, because I'll talk about the scheme that you referred to, which is the Parag Parikh Flexi Cap Fund. And I mean, it is ultimately the exception to several rules, where you have a standard deviation of less than 10, you have a beta of 0.6, which means that it's only rising rising less than the market, it's falling less than the market, but its performance cumulatively over that 3-year period is 67%, which is just 3 percentage points shy of your best performing scheme in those that have relatively higher beta and standard deviation. How do you explain that, Santosh?
Well, that's the beauty of numbers. When you take a certain defined set of numbers, it throws up something that surprises most people, saying that how can a fund have a beta of less than 1 and have such low standard deviation, yet give you returns so close to the one that's taken the aggressive stance to make money work. It clearly tells you that this beta and standard deviation is not going to be indicative of performance or underperformance. It helps you realize that yes, you've taken a slightly lesser risk-adjusted fund selection to go for you. In markets like this, where especially the last 15 to 18 months where we made an all-time high and then we took really long time to come back to that, the tendency is to choose low standard deviation and low beta funds. The stance that you take, that is, number one, will the markets be bullish and tearing away? Number two, within that frame, do you want to be in a fund that is going to be aggressive? So the net outcome is that in general selection for an investor and for the benefit of the viewers watching, there is no merit in being in an aggressive standard deviation or beta oriented fund just because you have an aggressive stance. Aggressive stance doesn't essentially mean that you're in the risky funds. Returns can also be generated in well-managed funds where the fund manager and the scheme is able to deliver an alpha even though the risk measures are contained.
Yeah, it's a very good point. And I think to a certain extent, which is why you need to consult with an advisor, because they'll be able to help you based on their judgment what level the market is at and what the probability is of a broad-based rally. Because if there is a significant probability, Santosh, of a broad-based rally, then those schemes that have a slightly higher beta might actually be better off and might perform better. Thanks so much for taking the time and for speaking to us on NDTV Profit.
Thanks, Alex. Always a pleasure.
All right, so beta and standard deviation are most important to pay attention to when you're looking at actively managed funds. And let's drill that down to large cap actively managed funds. One of the interesting takeaways from the year 2024 was that a lot of actively managed funds managed to beat the benchmark. This is not something that they've been able to do over long periods of time. And indeed, over the last 1 year, they haven't managed to do it again. The question that we're asking is one that has been asked repeatedly. Should you opt for passive? But we'll go one step further. Should you opt for smart beta in the large cap space? And is that better than passive and active? Rishabh Desai, founder of Rupee with Rishabh Investment, joining me right now. Rishabh, thanks so much for taking the time and happy 2026 to you. First, the actively managed large cap funds, how many have actually managed to beat the benchmark of the last 1 year?
Alex, thanks so much for having me on the show. Happy 2026 to you and your team as well. See, the data looks very interesting. what you clearly said was in 2024, active large cap funds outperformed. The answer is a yes, because 2024 was the year where we saw a phenomenal bull run in the Indian equity markets, right? But this wasn't the case in 2025, Alex. So I pulled out some very interesting data. Point-to-point returns on 1 year, 3 year, 5 year, and 10 years, Alex. And I compared the returns of all actively managed large cap funds versus Nifty 100 TRI index, which is the benchmark. So on a 1 year returns basis, which is from 1st Jan 2025 to 31st December 2025, 97% of actively managed funds have actually underperformed Nifty 100 TRI index. Now we look at the 3 year returns. The 3 year returns have been quite good. Only 37% of the actively managed large cap funds have underperformed. But again, on a 5 year and 10 year returns basis, the scenario looks really very bad. On a 5 year returns basis, 67% of the funds have underperformed Nifty 100 TRI. And on a 10 year returns basis, 87% of the actively managed large cap funds have underperformed the Nifty 100 TRI index. So from short to medium term perspective, it is understandable for active funds to underperform, but it is absolutely unacceptable for funds to underperform on a long term basis, which is the 10 year segment, which is the 10 year returns basis.
And why is that? In certain time frames, Rishabh, the argument has been made that it was concentrated stocks that have done well, right? Index heavyweights. You had those periods of Rithik stocks that did particularly well. But it's not necessarily always the case, is it?
No, absolutely, you're right, Alex. See, there are two specific reasons for this why I feel that the funds have underperformed. One is that lack of appropriate allocation towards outperforming stocks and sectors. This is number one. And second, most importantly, is that lack of portfolio churn in this dynamic market cycles. So it's very important for fund managers to be little more aggressive in taking buying and selling calls in the active large cap space, mainly because the universe is limited. The universe is only 100 stocks, Alex. And number two is that the portfolio turnover ratio doesn't seem to be that aggressive. So gone are the days where fund managers could just buy right and just sit tight. The fund managers need to be really very dynamic in taking buy and sell calls. So portfolio churn has to be also quite aggressive in different market cycles. And I'm sure you will also agree that market cycles have shortened initially. Earlier and initially the market cycles were quite long, but now market cycles are quite short and very dynamic. So fund managers really need to pull up their socks and churn portfolios quite well.
Yeah, absolutely. And that cost aspect also comes into play, where passive funds are significantly cheaper, and so that reflects in the return profile as well. And so therefore, simply put, if you had put money in the Nifty 100 or a combination of Nifty 50, Nifty Next 50, you would have actually beaten most large cap actively managed funds over the course of the last 10 years. But what about smart beta funds in the large cap space? What are the options, first of all, Rishabh, and have these done better?
Alex, number one, to answer the second part of your question, smart beta large cap funds have definitely done way better than active funds. There are 13 smart beta indices, Alex. Namely, like one is alpha, second is low volatility, third is quality, equal weight, value next 50. Then comes top 10, top 15, top 50. Top 20, and then lastly comes the 100 equal weight. So if I pull out the data on 1, 3, 5, if I pull out the data on 1, 3, 5 and 10 year return spaces, similar to what we did, the exercise what we did for active large cap funds, you will be quite shocked that on a 1 year returns basis, 40% of the smart beta indices have outperformed Nifty 100 TRI index. 3 year has been 80% outperformance. 5 year has been again 80% outperformance, and 10 year return basis, 90% of the smart beta large cap indices have outperformed Nifty 100 TRI index. So if I compare smart beta indices to active large cap funds, smart beta indices has outperformed hands down, Alex.
Yeah, and there are some that have outperformed in practically all time frames. And let's be very clear, we are not talking about the broader market, relatively speaking, smart beta funds. We're talking about specific large cap smart beta funds, and something like a low volatility fund, the Nifty 100, something like an equal weight Nifty 50, which removes the effect of the heavyweights, something like a top 15 equal weight or a top 20 equal weight have all managed to beat. So what is your suggestion here to this point, Rishabh? The predominant view has been that for your large cap allocation in your core portfolio, you should anyway look at passive because it's difficult to beat passive in the active space, right? Are you going to change that to say that you can do a combination of passive plus smart beta?
Let's keep it very simple. If someone who does not understand smart beta quite well and is getting confused which product to select, then just stick with the simple traditional index fund, which is either the Sensex plan or the Nifty 50 or the Nifty 100. Okay, and if someone understands how to cherry pick the right smart beta product, then my inclination is towards the smart beta segment, because the data clearly says that smart beta has actually managed to outperform the Nifty 100 TRI, which is the traditional large cap index. I'll give you one more very interesting data point, Alex. The active large cap funds have outperformed anywhere between say 0.7% to 1.5%. This is the alpha or the outperforms active funds have generated. Okay. Now, if I compare this with the large cap smart beta indices have outperformed anywhere between 1.1% to 3.5%. So the outperformance rate, the outperformance range of the smart beta indices has been much more higher compared to the active large cap funds. So if your portfolio is skewed towards value style, then you should go for a growth oriented smart beta product. And if your portfolio is skewed towards growth oriented products, then your smart beta should be a value index, Alex.
Okay. It's been something of a mistake on my part. I've, at this point, Rishabh, assumed that everybody understands what smart beta is. But if our viewers have stayed to this point, and if some of them have not understood what smart beta is, let me take a moment to explain it to you. You have these passive funds, right? Or you have these indexes, something like the Nifty 100 that Rishabh has been speaking about. And then what you do is you layer a factor on that. So in this case, for example, if I look at low volatility as a factor, then you will rank the scheme and you will say the top 30 based on this factor out of 100 based on low volatility. That means that the least volatile stocks out of these 100 will form a part of the index. And then the scheme actually allows you to invest in those 30 stocks. This is something that gets reviewed generally every 6 months, and it is something that therefore gets cycled every 6 months. So it's not something that has an active intervention, but it is a mid-step between actively managing a fund portfolio and a passive, where an index allows you to invest in a select number of stocks. It's basically putting one or more factors onto an index and allows you to have a certain bent to your investing style. Rishabh, I hope that has answered any questions that people might have had, but a very quick last point. We've talked about the relative outperformance, and that kind of captures the cost as well. But is it true that broadly smart beta funds are relatively costlier than passive and less costly than active?
The active funds will be comparatively more costlier in terms of expense ratio. Depending on the AUM, the expense ratio will differ. But if I compare, smart beta expense ratio will be 1% and less than 1%. It's not going to go more than 1%. But on the other side, actively managed large cap funds will have expense ratio in a regular plan anywhere between say 1.5% or say up to 2 or 2.25%. But smart beta index funds will definitely be much lower, which will be 1% or less than 1%.
Okay, all right, that covers it. Rishabh, thanks so much for taking the time and for speaking to us today. Fascinating conversation.
Thank you so much, Alex.
That brings us to the end of this edition of Your Money Matters. Tell us what you think and what you'd like to hear about. This is NDTV Profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma. I am your automate.
The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar.
Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots. What is it that Warren truly did to impact my life? My top learnings from the deadly duo: invert, always invert. That success often comes from eliminating the big mistakes. Read voraciously and commit to a lifetime of learning. Build a lattice work of mental models from multiple disciplines. The titans of industry have always bowed to the Oracle.
Shaking hands with him and getting a sign done on a dollar bill. Still I can feel the hands of his in my hand. My hand is so small and his hand was so big.
In the wake of Donald Trump's armed intervention in Venezuela, global shockwaves continue as to what next, where next, and even who's next. Few people are better placed to understand and interpret this new normal than Dr. Jeffrey Sachs, the world's most well-regarded public policy analyst, renowned American economist, university professor at Columbia University, an outspoken critic of American foreign policy. He made headlines yesterday with an explosive briefing at the UN Security Council, blisteringly condemning the US military operation that captured the Venezuelan president Nicolas Maduro as an illegal act of aggression and a violation of the UN Charter. Welcome to NDTV, Professor Sachs. Thanks for being here.
Thank you very much. Great to be with you.
My first question to you, sir. In your United Nations Security Council briefing, you highlighted a pattern of US regime change operations since 1989. How much of an escalation, Dr. Sachs, do you view the Venezuela operation as?
Well, by itself, it's not an escalation because, as I pointed out, regime change is an addiction of the U.S. security state. And we have had probably 100 attempted regime change operations by the U.S. security state since the end of World War II. They come in many forms: wars, coups, deliberate instigated unrest to overthrow governments, stringent economic sanctions to crush the economy, assassinations, bribing militaries to take over governments, arresting officials or encouraging the arrest of officials. So there are many ways that the United States operates, but it's not unusual for the U.S. to overthrow or to try to overthrow another government. It's repulsive in my mind. One of the reasons is it's against international law and U.S. law, but it also almost never works in the sense of delivering some kind of stable government, much less a government good for the people. Most of the time it leads to chaos. Now, Trump is different. He is more vulgar. He has taken his foot off the brake of this security state, because part of what presidents normally have to do is to tell this mega military machine, no, you can't do this, no, you can't do that. Trump is saying, no, we're going to do it all. We're going to overthrow Venezuela. We're going to run Venezuela. We're going to take Greenland, Canada's our 51st state. Mexico better watch out. Iran, we're locked and loaded, ready to go after you. So he's making threats left and right. He's personally, in my opinion, an unstable individual psychologically. He's an old man, he doesn't understand very much, and he doesn't look ahead very far, that's for sure. But the deeper point is the underlying U.S. foreign policy is based on regime change, and here's a president who is stoking it, not discouraging it.
Since you spoke about Greenland, and we've seen it mentioned 3 or 4 times since the Venezuela operation, Dr. Sachs, he's spoken openly about wanting Greenland from an American national security requirement. Do you think he's going to do something? It is true that Trump is temperamental and unpredictable, but with Venezuela, he's shown that he is willing to do what he talks about.
I've been saying for many months that one day he will say, we have spotted Chinese submarines off the coast of Greenland. We must move for our national security. And then he will land another 10,000 U.S. troops and he will declare that Greenland is part of the United States. I think it's odds on. It's not certain, but it is quite a realistic prospect. And I was bemused, if I could use that strange word, that Trump actually said yesterday, there are Chinese and Russian ships all over the place. So he actually used almost exactly the language that I have been predicting that he would use. And I think that he means it. Again, he's filled with the kind of megalomania and grandiosity. And it's an interesting mix, because the deep state has its vision. This is not driven by Trump, this agenda. The arrogance and hubris of a wannabe global hegemon is pretty deep in the U.S. system. Even when you have a nice president, very mild like Barack Obama, after all, he launched a war against, to overthrow the Libyan government. He assigned the CIA the task of overthrowing the Syrian government. He oversaw the U.S. participation in the overthrow of the Ukrainian government. So again, deep state. But Trump, he dances on this. The other ones would hide it, but Trump is almost in a joyous state of mind right now.
Very true. Dr. Sachs, the Trump administration has justified its Venezuela intervention, on humanitarian and democratic grounds. There's a lot of grandiose statements that have been made about how you cannot let something in your backyard be a platform for your adversaries, and America has to establish itself as the preeminent power in this hemisphere, etc. Is this any different from past interventions?
Yes, in a couple of senses, one should say that when you hear this kind of patter, this is the normal blah, blah, blah that we Americans listen to day in, day out, month in, month out, year in, year out. They make up whatever excuses they want. It's a storyline. The storyline for a couple weeks was about narco trafficking. Then it's about Russian and Chinese intervention. Then Trump lets out, because he can't help himself, it's really about oil. It's about oil. We got to get all that oil. So this is patter. As I pointed out in my testimony to the UN Security Council yesterday, we've been at attempted regime change against Venezuela back to at least 2002, when the CIA was in one way or another, not completely known, involved or pre-notified of a coup attempt against Maduro's predecessor, Hugo Chavez. One of the things that keeps the U.S. especially interested is oil, of course. This is the largest proved reserves on the official data in the whole world, larger than Saudi Arabia's. And definitely this is one of the reasons why this regime change has been pursued so assiduously for more than 20 years.
Yeah.
And especially when this leftist government of Chavez and Maduro semi-nationalized the industry, or effectively nationalized it around 2007, that raised the temperature and the ire of the United States. And one of the things that's happening right now, Trump knows that America's fossil fuel reserves from fracking have basically peaked. And the U.S. Doesn't have such a long future on its fossil fuels. Now, if we had any kind of sanity, we would say, good, we need to move to renewables anyway. That's the whole point. But Trump is in love with oil, and so he wants to grab Venezuela's. And so this is definitely a core motive for what's happening.
India and Trump are having a long conversation over oil, which I'll come to in just a bit, Dr. Sachs. But how do you interpret, to move from the United States now to Europe, the very tame responses by the UK and several EU leaders to Trump's actions in Venezuela and these stated intentions on Greenland, which is a part of NATO? How do you see that?
Well,
they don't have a choice.
Europe, the European politics are pathetic. And this is a whole nother matter. But Europe basically became a vassal region of the United States already decades ago. And they can't shake that. Yeah. And the whole generation of European leaders have been long vetted by the United States. You know, it's been a kind of pattern from decades that if you're a young rising politician and you're anti-American, well, you're not going to rise very far in Germany or France or other parts of Europe. In the UK, believe me, it's just, they think that they're the British Empire till this day. So Britain loves imperial daring do, so they don't even oppose in any way, even privately, what's happening. Now, what's interesting is their response to Venezuela was, well, that's a bad guy, Maduro. You know, we're not going to say anything about that. But then when Trump said, yeah, and I'm going to take Greenland, oh, then they got excited. No, that's against international law. So it's sad. I actually like Europe a lot. You know, I like European, I like the culture and the quality of life. But the political class right now is just unable to say a coherent sentence that makes sense. They're so afraid of the Russians, who are not going to invade, that they're opening themselves up to a U.S. which is likely to invade.
No, I completely agree with you. It's pathetic. And in fact, just as we began doing this interview, Dr. Sachs, a bunch of European leaders have put out a joint statement, which doesn't make things any better. It's still a very tame sort of joint comment that they've made on the Greenland issue. But staying with that particular aspect, the Prime Minister of Denmark has said that if Trump carries out this threat of taking Greenland, it would essentially mean the end of NATO. In your view, is that a very real possibility under Trump, the end of NATO?
Yes. I think Trump himself, given the superficiality anyway, given the proclivities that Trump has, given the simplistic ideas of the U.S. that we need to pivot to Asia because China's the great threat. End of NATO, he wouldn't bat an eye, bat an eyelash. So it's a real possibility. That warning does not frighten Trump. In fact, it could encourage him.
Yeah. In your view, Dr. Sachs, what role should emerging powers like the BRICS nations, and I know that's a touchy topic with Trump, but what role could they possibly play in countering, what you term US hegemonic power grabs? Is there a role that they should be playing at all?
Yes, crucial. And the BRICS represent the vast majority of the world population.
Yeah.
The emerging economies are about 85% of the world population. They actually want quiet. They don't want an American would-be hegemon running around making wars, grabbing territory, stoking big crises. And just to quickly say, the most dangerous war on the horizon is Iran, where it really seems very realistic that Israel will attack and the U.S. will always support Israel, and that could be a complete global disaster. Iran is a BRICS nation, by the way. So I think the BRICS is extremely important to say we do not accept this kind of approach to the world. We want multilateralism. We want international law. This is actually crucial anyway for economic development and for our survival. And the BRICS are the responsible nations in the system right now. And so I always say to my friends, both in China and India, the two giants need, especially now, to get along with each other because the real problem is the instability coming from the United States. And I've said in India for many years, don't join an anti-China approach, the Quad and so forth. The U.S. is so unstable right now that don't play that game. Rather, join together with China, with Russia, with Brazil, South Africa, the other BRICS countries to say, we will provide a basis of stability and, by the way, economic growth, because the BRICS are the fast-growing part of the world economy, and we will be a ballast, even as the U.S., sad to say, becomes rather unstable.
And we actually did see a bit of that last year, Dr. Sachs, as you well know, but the turbulence caused by Trump's tariff threats did create a situation where India and China in some ways called a bit of a diplomatic ceasefire and actually improved relations with each other.
And I would say, if I might, that the events taking place right now should have the same message to the leadership of India and China. Stay closer, keep calm together, and resist the instability coming from the U.S. right now, because this actually is a problem for everybody.
I'd like to push you just a little bit further on that point, Dr. Sachs. India, prominent member of the BRICS, you talked about the China dynamic as well. But India is also currently embroiled in a fairly turbulent trade and tariff battle with the United States. There are many different layers of unpleasantness, if I may use that word, in the relationship, whether it is the ceasefire and Operation Sindoor or other things that are happening. How should India, view this entire regime change impulse that has now begun under Trump 2.0?
I said last year to Indian friends, don't expect that inside deal with the United States on trade. Don't expect that India is going to replace China in the U.S. value chains. The U.S. is too protectionist and too unstable for such an approach actually to be successful. I'm sorry to say that I was shown to be right when Trump did something even stupider than I would have imagined, putting on the penalty 25% plus the reciprocal 25%. The whole thing was completely out of control on the U.S. side. But it proved the basic point. India is not going to develop its economy and its future through some kind of alliance with the United States. I don't think many people think that way, but if they do, I would like to suggest an alternative, which is that India's place is as a leader of the 85% of the world in the emerging and developing economies outside of the US and Europe right now. And that is the fast-growing part of the world economy, and it will be just fine if the BRICS cooperate closely, bring Africa into this, bring the Western Asian region into this. Then there's a real prospect for not only weathering the U.S. instability, but actually having a very dynamic, positive economic future and geopolitical stability, despite what the U.S. might be doing. It's just the U.S. Doesn't call the shots and shouldn't be, the bluster shouldn't make countries afraid of that.
My final question, Dr. Sachs, and this comes back to my introduction of you and the statement that you made in the United Nations Security Council has exploded everywhere. Everyone's watching your words, listening to them very carefully. You've urged the Security Council to stand up to these great power violations. Do you see any realistic path for the Security Council to take any concrete action against a permanent member like the US? Is that even possible? Is the UN even relevant anymore given what we're seeing now?
Well, the Security Council itself certainly cannot take real action against the United States because the U.S. will literally veto that, and that's the structure of the Security Council. But the UN is relevant in an overwhelming sense that it is the one place where the world's governments speak. And it makes a difference if 170 or 180 countries say, we don't want to go this way of lawlessness and anarchy. We want the UN Charter. The UN was made because of disaster in the world, and we can't afford another such disaster. Will that make a difference? Absolutely, for two reasons. One is if the rest of the world adheres to the standards of the UN Charter, even if the United States is blustering and breaking Chinaware, I was going to say, not to be confused, but just breaking the dishes everywhere. Let me state it better. Then the rest of the world will say, well, the U.S. is having a tantrum, but it's not really affecting the whole world. Let everybody remember the U.S. is only 4% of the world population, so it can't break the world through its tantrums alone. So this is one point. But second, it's also important to understand what's happening with American foreign policy is not the policy of the American people. It's not even the policy resulting from a political process. It is a deep state and a president who has certain proclivities that don't ask anything. They don't ask the Congress. They certainly don't ask anything of the American public. And the American public is not in favor of this. So if the rest of the world says, no, this has to stop, that's actually helpful for the American people also to tell their own government, no, we are not going to go on in this unconstitutional manner. And that can make a difference too. So I think the UN remains very significant, very weak in the actual ability to stop this, but extremely important if the world stands up and says, we want law, not anarchy, and not hegemony.
I'm going to leave it there for the moment, but Dr. Sachs, I can tell you that many of the things that you've said will fly in the face of popular wisdom here in India when it comes to India-US relations, and I think that's the best possible kind of interview that we could have done at this turbulent time at NDTV. So I thank you for your time. This has been very illuminating as always. We've learned a lot, and I'm sure NDTV's viewers will as well. Thank you so much, sir, for joining.
Great to be with you. I appreciate it. Thanks a lot.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The Nerve Center. of the maximum city, the BMC. A contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of
We are at the Keynes Semicon facility in Sanand, and it's a high-tech facility. But the more important thing is that on the conversation over the next 10 to 15 minutes, we have with us the CEO of Keynes Semicon, Raghu Panikkar, and the founder and CEO of Seal SQ, Carlos Herrera. And both the companies have entered into a partnership, a definitive agreement, whichever way you call it, for building out a cutting-edge semicon facility, if I can use that term loosely, in India. Raghu, can I start with you? What is it that you are attempting to do here with Seal SQ?
Sure. Thank you. Welcome to NDTV Profit to our facility, and this is the first time that we are doing inside the plant. As much as you can see the investment that we have done, this is a $350 million project. We already invested $50 million. We intend to do all the cutting edge technologies in the semiconductor assembly and test. One such partnership with Seal SQ is what we're trying to attempt in India. The first time we are going to bring in technologies from a quantum computing standpoint, from a standpoint to see how the various certifications that are going to come in, and we are going to do such kind of a products in the assembly and test.
Okay. Carlos, as I understand, you already work in India at multiple levels, maybe B2G, B2B both. How do you see the India semiconductor ecosystem currently as it stands, and what does this partnership with Keynes Semicon bring to the table for you and for India?
So India has always been and always will be one of the powerhouse on the fourth industrial revolution, right? The assets are here. Basically what we are doing is combining them, bringing them into one place, which is this location here. Seal SQ has become one of the leading quantum companies. Quantum computers are arriving in the next 3 to 5 years. A quantum computer will break all existing semiconductor security. So we need to upgrade the legacy systems into the next generation semiconductors. So basically, traditionally, semiconductor companies are not really much concerned about security. That was another business. There was more like design and performance. Now, with the arrival of quantum computer, they need to change that mindset. That means that they need to invest in post-quantum technology. So CLSQ is with Keynes, we are building a personalization center. So it will be a center where those chips that we are manufacturing here will be injecting keys, what you call post-quantum algorithm, that will allow that chip, when it's installed into a final object, let's say a connected car, a drone, a satellite, a smart meter at home, when that chip is embedded into that device, a quantum computer will not be able to attack. So that is something that needs to happen now. In the United States, now is a new legislation with the name CNSA 2.0 that says that by the year 2027, every single object needs to be PQC ready.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The nerve center of the maximum city, the BMC. A contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
Good evening. Welcome to NDTV Profit. I'm Vikram Oza, and tonight our spotlight is on Greenland. Greenland is that vast icy island. Many of us think of it as just a giant snow cap on the world map, but actually it swung into the headlines because of what the American president is saying about it. He's actively discussing ways to acquire Greenland. It's not the first time, but now those calls have become that much more severe. According to the White House, the use of American military forces is, in their words, always an option. To many, this is not diplomatic hedging. It is not bluster. It actually amounts to audacious geopolitics. Just weeks after the American operation in Venezuela, where American forces captured the country's president Nicolas Maduro, Washington's rhetoric now has shifted from oil and sanctions, trade sanctions. Now it's moving to territorial acquisition. Remember, Greenland is a semi-autonomous Danish territory. It is part of NATO's northern flank, and its people have made it clear that Greenland is not for sale. So the question is, why Greenland? Why so much focus on Greenland? Well, for Washington, it's about geology as much as it is about geopolitics. The island sits smack between North America and Europe. It is actually at the choke point where NATO watches and tracks Russian submarines. And as the Arctic ice melts, new sea routes are opening, and Russia and China are sniffing around for influence in that region, which makes Greenland a very new, a very hot ticket in the great power game playing out there. And beneath all that ice lie vast deposits of rare earths and critical minerals, the elements that power electric vehicles and semiconductors, batteries, defense technology, and tomorrow's supply chains, as it were. So the new oil, a lot of it in the vast Greenland. the icy layers of Greenland. So the Americans, they publicly downplayed the resource angle. But analysts are saying that it is a co-driver alongside the security angle, especially in a world trying to reduce reliance on China's grip on critical minerals. Because make no mistake, if Washington openly debates military options to acquire a sovereign piece of land, the implications are massive. Not just for NATO, not just for Arctic security, but for how nations, both great nations and rising nations, how they defend interests, how resources and reputations are going to be formed in the decades to come. Which is why we're asking tonight, has the post-World War II rules-based order, the one that forbids powerful nations from swiping small territories, has that begun to crumble? And how does this ripple out from Greenland to Taiwan and China, or from Russia's moves in Ukraine? This is the big question on NDTV Profit. After Venezuela, Trump's Greenland gambit, is the US normalizing territorial ambition? Let's debate this with our panel. And joining us on the panel tonight, we have the former Indian ambassador, Deepak Bhojwani, is with us. Also, global macro strategist Arnab Das is joining us from London. And Vivek Mishra is with us. He's Deputy Director of Strategic Studies Program at ORF, Observer Research Foundation. Great to have you. And from Singapore, David Roche is also with us. He's strategist at Quantum Strategy. But let me begin by asking you, Ambassador Bhojwani, from your perspective, is this American kind of push that we are seeing? Many are touting it as the Monroe Doctrine, something that comes from the 19th century, but it's about the Americans taking control even as China is flexing muscle, Iran is. Is this an American reaction to that? How do you read it?
There's a history, to this, because it's not as if this is the first time the US has tried to acquire Greenland. You're right in saying that Greenland, as a former colony of Denmark, is a self-governing territory. It's an autonomous territory. The Danes voluntarily, in 2009, signed an agreement allowing Greenland to decide its own future. And the Greenlanders have been doing so. They held elections last year, and they're quite categorical in saying that they don't want to be part of America or anywhere else. They want to be independent. However, there is a history. Since the 19th century, the US has been making noises. Presidents, and even someone like Nelson Rockefeller, I understand, had offered to buy Greenland and make it a part of the United States. They have not succeeded. However, in 1951, actually during the Second World War, the Americans were allowed into Greenland to defend it against the Nazis and so on. And in 1951, a formal treaty was signed between the US and Denmark, which is then the colonial power for Greenland, saying that the US has the right to establish bases in Greenland. And in the northwest of that territory, they have actually one base, which was earlier a military base, but now is called a space base. There's a history to that also, because today, space tracking, orbiting satellites, etc., is important too. So what's happened is that the US has this base. It has about 150 soldiers or military people there. I understand it's been sending, people have gone there, the government representatives, they even have a special envoy. And Donald Trump his foreign minister has hinted that they could even offer to buy Greenland. And as we've seen, and as you said, President Trump has threatened that if he can't get it by hook, he'll get it by crook, by military means. But that's where it stands right now. And the Danes have become very upset. The Prime Minister of Denmark has issued a very strong statement, there's nothing doing, that this could break up NATO, of which both countries are members, and also threaten the transatlantic alliance. And very recently, I think a couple of days ago, about 5 or 6 heads of European states issued a statement saying that we need to, it was a rather bland statement considering the crisis that has developed, saying that this should be negotiated or something to that effect, I'm not sure. However, the matter has become pretty hot, as I understand.
It is. It's more than hot right now. Arnab Das, do weigh in. While we have the historical context from the ambassador, you tell us from what you are understanding with the operation in Venezuela, which turns out it is so much about oil. Is this entire move towards Greenland as well, less about ideology and more about hard economics? energy, minerals, supply chains, at a time when the great powers are scrambling for strategic assets to make the semiconductors and the defense technology of tomorrow. Is this much more about that than anything else?
Look, I think, the way it seems to me that President Trump himself operates and by extension, the administration and now the U.S. government operates is that it bundles up a whole bunch of issues together. So I think it's actually quite hard to disaggregate and disentangle the different motivations here. So I think you're absolutely right. Resources, whether it's oil, or critical minerals and rare earths are, a big part of the story here. I think in the case of Venezuela, the drug trafficking is an important part of the story, as well as, kind of the signal that countries in Latin America and indeed other parts of the world that do not have their own domestic act together are creating a source of immigration, which the president in the U.S. has characterized as an invasion of immigrants, in this case, across the southern border or, with boats across the now what's called the Gulf of America, at least according to President Trump, what has been long the Gulf of Mexico, right? So I think there are a host of different issues at work here. And I think as the ambassador has said, the U.S. has been trying to acquire Greenland in one way or another since 1867. I think, what's happening here is that they are quite concerned about incursions into the U.S. Territorial waters and near abroad from the Arctic by both Russia and China. And so I think we should take President Trump very seriously about the acquisition of Greenland. I think between Trump and Rubio, there's a kind of good cop, bad cop thing going on with the president willing to signal the use of military force and the Secretary of State willing to signal this kind of somewhat more friendly acquisition by purchase, right?
Yes.
And I think it's important to say here that the U.S. Itself grew through annexation and acquisition in the westward expansion, in its early history, right? And became a continental country and economy, and I would say even a great power and ultimately a superpower,
yes,
through annexation and purchases of territory from European powers in decline, right?
Yes.
Or at least under pressure.
Yes.
So I think that's what's going on here.
So you think that this is an extension of that strategy, but the dynamics of the world have changed to a large extent. We keep talking about the world order and how the big shifts are taking place. How much of that comes from a security perspective? Vivek Mishra, how critical is Greenland, according to you, for American defense right now? Because yes, we are talking about a whole load of minerals and the kind of resources that you require for the future, but talk to us about the security perspective, the missile early warning systems, the Arctic surveillance, the deterrents that need to be placed against Russia and China. Is that the real driving force over here? Whether America goes through with acquisition or takes on a more aggressive route, which is not a purchase, how do you think the security angle is going to come into play?
Oh, it's absolutely at the heart of what America is trying to, how America is trying to reframe its security policy. If you see the national security strategies of successive presidents culminating in the Trump presidency, the Arctic has occupied a substantive place in the strategy document. So I think it's pretty important. But what's happening now is that the High North is, of course, America's realization that they are behind the curve when compared to China and Russia. Count the icebreakers, count the capacity in that region. Russia is ahead, and obviously Russia and China are working together on many issues. And therefore, you also have Trump administration in the past and before the national security strategy also bringing out something called the executive order for reviving the naval industry and the maritime vision of America. And I think that's more focused on the Arctic than on the Indo-Pacific. Because clearly the Indo-Pacific has fallen down the rung in terms of priority for the Trump presidency. So I think the High North, the route that is opening up, America's focus on maritime rejuvenation is, of course, geared to the Arctic region. Now, from the security perspective and from the energy perspective, I think it's going to be challenging for the United States, really, because the shipping routes to get the minerals, first is the mining and the processing. I think that's difficult in Greenland, as far as I'm informed. Plus, shipping them to any continent is going to be one of the most challenging things, because there are only counted number of days that the shipping lanes can actually be functional, given the amount of ice present. So I think it's going to be logistically challenging for America to even bring that. Now, flying it out from there could be one option, but we'll see how that pans out. But from the security angle, I think both China and Russia, how that's going to play out in terms of the sphere of influence strategy that is playing out right now is going to be my main sort of question in to put forward. Yes. In terms of America trying to recenter on Western Hemisphere and allowing tacitly China and Russia to do something in their own sphere. How that all comes together in the Arctic is something that remains to be seen.
It remains to be seen, but isn't this dangerous territory, David Roche, when President Trump is saying we have to have Greenland? Do you think it's more than strategic signaling over here? Or do you think this is now getting normalized? Territorial claims by major powers, and of course this is not a territorial claim as such, but China is making one on Taiwan. And perhaps in a sense, looking at the historical background of how the Americans have sought Greenland, both for strategic purposes, for security purposes, and the resources that it brings to the table. How important is this, according to you, the normalization right now that we're seeing of territorial claims by major powers like America here in this case?
I think it's very important. Let me put it to you this way. We had a nice, cozy system of legal behavior by great powers who guaranteed the rights of smaller powers and obeyed international law, and it's gone. And instead of that, we have a new system, which is invented by Trump, which he says goes back to the Monroe document idea, but it actually doesn't, because the Monroe document was intended to stop powers grabbing former Spanish colonies which were claiming their own independence. It has nothing to do with what we're living through. What this is Trump and his administration, including Rubio, who may have a more gentle mouth, but certainly not a more reasonable brain. Their aim is to exert total control over their sphere of influence, which is the North Pole, heading south, right down to the end of Chile. That's what they want to control. Whatever happens there, politically in smaller nations and so on, has to be in line with their desires. Now, that's what Venezuela is about. It's what Colombia is going to be about. It's what the impending fall of Cuba is going to be about. But it is not only about that sphere of influence. Trump also wants to exert dominance over global oil supplies, energy supplies, which would bring OPEC under his control and make Putin, which would, of course, have another sphere of influence, in which we lucky Europeans would probably be a part. It would make him very much a second-rank emperor within his sphere of influence. And then you have China. Okay, now what is the meaning for China and for Russia? Well, the first thing is, if people like Trump, wannabe dictators like Trump, can go around the place just grabbing countries which are a part of an alliance that they are, under which they promise to defend those countries, if you can grab democracies for no apparent reason, then essentially, how do you turn around to dictators and say, well, you should not be trying to invade and conquer Ukraine. You should not have ambitions to take over Taiwan because, this is not the right thing to do. But you can't say that anymore because the United States is doing exactly the same thing for exactly the same reasons as nations did this back in the 19th century. They want the resources, they want the power, and they want the control. It's all three things.
So, Ambassador Bhojwani, this is an important piece. Now, NATO is a very strong alliance. To that extent, this kind of rhetoric, since Greenland is part of Denmark and Denmark is part of NATO, This can be very damaging to the NATO, as it were. How damaging, and what does it actually mean for countries who've gotten together to secure themselves against any attack outside of that alliance?
I think in the first place, we must recognize that NATO has been crumbling ever since Trump's first term. Late in his first term, we were told by John Bolton, who was, I think, still then his national security advisor, that Trump was threatening to quit NATO. And fortunately, says John Bolton, he didn't manage to do it before his presidency ended. He was hoping for a second term, might have left NATO. And we've seen over the past few years, especially over the issue of Ukraine, how Trump has treated NATO, the European NATO that I refer to. And the poor Europeans, I feel, but you can hardly pity them because they've been behaving pretty hypocritically, in my opinion. But the fact of the matter is that Trump is telling NATO, accept what I do and bend the knee if I ask you to. Otherwise, you're going to lose much more than what I will. I mean, he has nothing to lose anyway. And the poor Europeans, at least the ones in East Europe, former Eastern Europe, and the ones a little bit further away, like Germany and so on and so forth, are pretty petrified because they see Russia as an existential threat, although Russia has made no claims to invade Europe. Now, that being the case, what does that leave NATO with? It leaves NATO with the possibility of withdrawal of, or at least diminution. I think that's already started, of US troops from NATO countries. And it leaves a US that is saying that, look, we will dominate the Western Hemisphere, like it or not. Now, after that, whether Trump has greater plans for global domination, we don't know. But as to come back to the issue of security, what's happening is that we all know that the northern route over Russia around the Arctic is opening up. Russia has been definitely more present, its navy, etc. Even the Chinese have ambitions there. And Donald Trump has, perhaps somewhat correctly for once, stated that it's a national security threat. Naturally, it's a national security threat, but it's a threat that he is creating and to which the Russians may well react. Because if push comes to shove, you can't blame the Russians for telling the Americans where they should get off.
Right.
The Europeans do that.
Because even Russia has talked about exactly that as a reason to get into Ukraine. Isn't that right?
Absolutely. Absolutely. The Russians have legitimate security reasons to fear from Europe and, of course, further afield from the United States, although Putin and Trump have managed to establish a modus vivendi, at least on the surface.
Correct.
So the idea here is that if Russia develops its capacities beyond a point,
yes.
You see, in my opinion, if I may have just half a minute, in my opinion, what Trump and even the US, forget about Trump, it's not just Trump, it's the US, because Trump has not built up this predominant military capacity overnight or during his 2 terms. It has been built up steadily over decades by a US that has got many more bases than any other country or all the other countries put together all over the world.
Yes.
So the US dominates militarily and it wants to keep doing so. Simple.
Vivek Mishra, as we try and understand how the world order is changing, what does this moment mean for India? Our Arctic interests, our possibilities of navigation there, critical mineral security, and these kind of rights across the Indo-Pacific, how much of a bearing do these developments have for us?
I mean, with the coming of critical minerals, I think India, whatever happens in the globe and how the developments shape the supply chain of critical minerals will greatly impact India. That's for one. Now, as for Arctic, I think India's interests have increased over the past decade, I think considerably, but the amount of presence and footprints that we have still remains limited. So I think directly, if the strategic stability of Arctic suddenly goes down, I don't think it will directly impact India in the manner that it will impact other great powers. So I think we are a little buffered from that. But potentially in terms of how it impacts supply chains, how it impacts other countries and their capacity to link with the world, certainly changes. And, at a point in the Biden administration, just 2 or 3, 2-3 years back, we were talking about linking the transatlantic interest with the Indo-Pacific. Now that's all up in the air. And suddenly, we've become more distant than we ever were. So I think India right now is at a cusp where we have to reframe some of our security thinking, some of our certainly our relations with great power in a new way, perhaps.
And David, according to you, are we seeing a temporary Trump-era disruption? Because we've not even completed 1 year of the second term of President Trump in the US. Or do you think this is going to be the beginning of a permanent shift towards this kind of territorial ambition in global geopolitics?
I think the shift is permanent. And the reason why I think the shift is permanent is that Trump is in fact the symptom of America's problems, but he is not the cause. The American people elected Trump and he got them the majority of the popular vote. So the polarization of American society has produced this kind of a fertile soil of isolationism, exercise of power, and the domination of America in world politics so that they can live in peace at home and not be bothered by honoring treaties or being nice to their allies. So the reason I think this is a permanent shift is because that is a shift which will not go away. When Donald Trump goes, you may get worse, or you may get a movement, a quite dramatic movement towards dictatorship. So I would say that don't hold your breath for this to end. We are going to be living with the Americans' desire to exert certainly hemispherical dominance and possibly even worse forms of power, military power enforced global dominance. But we are not going to go back to the nice days of running the global economy on the basis of globalization, the rule of law, and free trade. That is gone.
It's a rather gloomy prediction, but what is clear from this discussion is that Greenland is clearly not just about ice and territory or even one president's audacity. That's what my big takeaway is from what David is saying. It's about a world where strategic geography and critical minerals and security anxieties, all of them are once again colliding with long-held global norms. Whether this is going to be a short-term disruption or the start of a deeper shift towards territorial power politics, now that is a picture that is unfolding, but the risks for alliances like NATO, for stability, and for several countries, including India, are very real. I want to thank my panelists for joining us, Deepak Bhojwani, Arnab Das, Vivek Mishra, David Roche. Thank you very much for joining us with your insights. We'll carry on these discussions, but this is a turning point, as it were, when it comes to geopolitics and the kind of diplomacy that has been practiced, and now this kind of aggression that we are seeing from a superpower is going to be an interesting space to watch of the kind of form it takes in the future. Thanks very much for joining us tonight. And with that, we'll wrap it up on this edition of The Big Question. I'm Vikram Oza from me and the team. Thank you indeed for joining us. Have a great evening ahead.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city. The BMC. A contest that will shape Mumbai's next decade. Its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. The World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you are doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes and travelled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots. What is it that Warren truly did to impact my life? My top learnings from the deadly duo: invert, always invert. That success often comes from eliminating the big mistakes. Read voraciously and commit to a lifetime of learning. Build a lattice work of mental models from multiple disciplines. The titans of industry have always bowed to the oracle.
Shaking hands with him and getting a sign done on a dollar bill. Still I can feel the hands of his in my hand. My hand is so small and his hand was so big.
I got clicked in the same frame as him by one of the local newspapers, and that was the front page photo.
Thank you, Warren, for the wealth, yes, but mostly for the wisdom.
He has been tracking markets for over a decade.
Hello, good afternoon and welcome to Market Express. I'm Himakshi Bahugna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and the global cues that could really shape tomorrow's session. Let's get you straight to the top story. So let's see how the markets have fared today first up. So it was a choppy session on Dalal Street, if I may say, as Nifty has tested the 26,100 levels. If you talk about the benchmarks, they have, however, managed to erase most of the day's losses in the last hour recovery. And broader markets have outperformed the benchmarks today as both the mid-cap and small-cap index ended the day with modest gains. Talking about the sectors, so many of the sectors have shut shop in the red with auto and oil and gas leading the losses. Meanwhile, IT and pharma have remained resilient. Now let's kickstart the show by talking about the Nifty's top losers. Cipla's Greece-based partner has come under US FDA scrutiny. So receiving a Form 483 with 9 observations, so the regulator has flagged serious issues, including contamination risk, poor manufacturing practices, and also unusually high particulate, reject limits. So another key concern was inadequate investigation into out of the specification results along with data integrity lapses. Now this development is significant as pharma manufacturers, that is, the arm, the Greece-based arm is, Cipla's biggest drug in the US market, raising questions about potential supply chain impact. Next up, we have Tata Motors passenger vehicle that was under pressure after a tepid set of Q3 numbers, and production has seen mixed trends in December. Output of the Curve and Sierra models have fallen down sharply, 78%, while Safari and Harrier have and in fact Sumo, they have surged 81%. So despite these swings, CLSA remains bullish, maintaining an outperform rating with a target of 450 rupees. The brokerage also flags near-term challenges from a recent ransomware attack and also tariff concerns impacting FY26 free cash flow. However, it expects scale revival to drive the Jaguar Land Rover margin recovery, while the new launches should boost the India business. And JP Morgan is staying positive on the IT sector, maintaining an overweight rating on KPIT Technologies with a target price of 1,400 rupees. So the brokerage is noting that demand in the auto, ER&D segment is improving. And as OEM clients prepare to restart their R&D programs, Europe is leading the recovery, followed by APAC, while the US is also expected to take a couple of more quarters to bounce back. JP Morgan believes that KPIT is well positioned to benefit from this trend. And JP Morgan has upgraded both Tata Technologies and Tata Elxsi to neutral from underweight, signaling improved confidence in the auto ER&D space. And the brokerage has raised its target price for Tata Tech to 710 rupees and Tata Elxsi to 4,800 rupees. So this comes as demand recovery gains traction, and this is also led by Europe and APAC, while the US is also expected to follow in the coming quarter. So this upgrade reflects optimism around the OEMs restarting R&D programs and also stronger outlook for engineering services. In fact, Titan has sparkled in trade after the company reported a robust business update for the third quarter, and this was driven by strong festive demand and also sustained traction across the key categories. So jewelry growth came in better than expected, aided by higher selling prices and also a healthy uptick in the studded pieces, which has seen mid 20s growth. So domestic business has surged 38% with like-to-like growth in the low 30s. And on the earnings call, Titan has outlined ambitions to lead in both the lab-grown and natural diamonds. So brokerages remain mixed. Morgan Stanley maintains overweight, while Citi stays neutral with a target of 4,125 rupees. And Senco Gold is shining bright after reporting a stellar third quarter update. Revenue has surged 51% year on year, while growth for the first 9 months stood at 31%. So same store sales has also jumped 39%, with diamond jewelry up 36%. Gold prices have also seen a sharp 65% rise year on year, boosting the overall performance. So management remains confident of achieving over 25% annual growth and also continues its aggressive expansion strategy. launching 4 new franchise showrooms in Q3 and also staying on track to open 20 new outlets in FY26. And white-collar hiring in December 2025 has rose 13% year-on-year, and this is driven largely by non-IT sectors. So insurance led the surge with a 34% jump, and this is supported by a 57% increase in the fresh hiring. So hospitality has posted 29% growth with Mumbai and NCR as key contributors. Banking, however, has seen a 7% decline while the startups continue to hire actively. Hiring of seasoned professionals grew 15%, and this was led by oil and gas and also real estate. So non-metro cities like Kochi and Jaipur have emerged as strong, fresher hiring destinations, and this is signaling broad-based recovery in the employment trends. Let's look at some brokerage notes. Citi has reiterated its buy rating on Apollo Hospitals and also raised the target price to 9,600 rupees, calling it a high conviction pick. So the brokerage believes the near-term challenges, including losses from new hospitals and flat margins, are already priced in. So Citi sees attractive risk reward and also expects a strong ramp up in facilities to drive the margin expansion by FY28. It also highlights, HealthCo's transition from being a drag to becoming a value creator, reinforcing confidence in Apollo's long-term growth story. And let's keep it going with the brokerage notes. InCred has maintained its ad rating on Camlin Fine Sciences and has raised the target price to 480 rupees from 425 rupees. So the brokerage also expects the company to benefit from the tight, vanillin markets in the US and also Europe, supported by its high-value blend portfolio. So prices for vanillin are projected to top $32 per kg by the second half of FY27, and this is reinforcing a positive outlook for Camlin Fine. Let's look at more brokerage notes. Morgan Stanley has downgraded Indian hotels to equal weight from overweight, trimming its price target to 780 rupees from 811 rupees. The brokerage says that while Indian hotels remains a well-run business, its current valuation looks fair. It also expects limited upside surprises in the industry's RevPAR cycle and also notes that the FY27 EV versus EBITDA already reflects, the risk-reward balance. And Lodha Group has reported a strong business update for the December quarter. Pre-sales surged 25% year-on-year to 5,620 crores rupees, signaling improved sales momentum. Now, however, the collections have dipped 17% to 3,560 crores. In a major development, the company has announced large project additions worth 33,800 crores in gross development value, further strengthening its growth pipeline. Now, Lodha continues to focus on expanding its portfolio while maintaining robust sales performance. And Inox Clean Energy has raised 3,100 crores through an equity funding round, diluting close to 6% stake to a mix of foreign and domestic investors. Now, the fundraise values the company at a pre-money valuation of about 50,000 crore rupees. So, the company has said that the proceeds will be used to scale the capacity across renewable power generation and also the solar manufacturing. So Inox Clean is targeting 10 gigawatts of installed power capacity by FY28, and the company is also preparing to file draft papers for its IPO for this quarter. Now on to the upcoming budget. Official sources indicate that India's finance ministry is finalizing budget 2026 proposals centered on deregulating and decriminalizing the business rules. Now, this is being done to simplify the operations and also boost the economic efficiency. Now, the key plans include streamlining registration and approval processes, scaling back routine inspections, and also adopting risk-based tech-enabled oversight. Now, the government is aiming to restrict the criminal penalties to serious offences, while procedural lapses will be decriminalized. Now, these reforms are part of a broader strategy to enhance the productivity, ease of doing business, and also India's growth trajectory. Now, the budget will be presented on February 1st with consultations underway with state finance ministers. And general insurance companies has reported healthy premium growth in December, and this was led by both private and public sector players. Now, Go Digit and ICICI Lombard have posted double-digit increases in the gross written premiums, while state-owned New India Assurance has also recorded strong growth. Now, so overall, if we talk about private sector general insurers have seen premiums rise by 15% year on year. Now, the data points to steady demand across the motor, health and other non-life segments towards the end of the year. And Elon Musk's artificial intelligence startup XAI has closed a massive $20 billion funding round with heavyweights like Nvidia, Fidelity and Qatar's sovereign wealth fund coming on board. So this funding, which has been in the works for months, will fuel XAI's infrastructure built out and also accelerate the rollout of AI products at scale. Now, what's interesting is that the deal structure, a large part of the money will be used to buy Nvidia chips, which XAI plans to rent out over 5 years, offering investors a new way to limit the risk. And it could also well become a template for future big-ticket AI financing. And staying with global expansion stories and Indian aviation first, this afternoon, now Indigo has officially made aviation history, becoming the first Indian airline to induct the Airbus A321XLR. Now, this marks a key milestone in Indigo's international expansion plans. The A321XLR will initially fly long-haul routes from Delhi and Mumbai to Athens, helping the airline tap medium-haul global markets more efficiently. Now, Indigo is planning to induct one more of these aircraft by the end of this financial year, underlining its ambition to significantly scale up its overseas footprint. Now, from expansion to a caution, a major global recall now grabbing attention here. Nestle has announced a precautionary recall of select infant formula products across multiple countries after detecting a bacterial toxin in one of its ingredients. Now, the affected batches contain arachidonic acid, oil contaminated with cerulide, a toxin that can really cause severe vomiting and diarrhea, while Nestle says no illness have been reported so far. Parents are being advised to stop using the recall products immediately, and public recalls have been issued in several countries, including France, Germany and Hong Kong, with the company working closely with regulators and suppliers to identify the root cause. And back home now, and a big push for domestic manufacturing. Tata Power Renewable Energy set to build India's largest ingot and wafer manufacturing facility in Andhra Pradesh with an investment of over 6,600 crore rupees. So the gigawatt greenfield project at Nellore will support solar cells, modules and semiconductor manufacturing, aligning with the centre's push to cut the dependence on imports. Now, the state government has cleared the project and also allocated land along with support for a captive green energy plant. Once operational, the facility is expected to generate around 1,000 jobs and also significantly strengthen India's clean tech supply chain. In fact, China's Lenovo, the world's largest personal computer maker, has announced a partnership with US AI chip leader Nvidia to help AI cloud providers rapidly deploy the data centers. So this announcement was made in Las Vegas as Lenovo focuses more into artificial intelligence, and the company also unveiled Kira, which is a personal AI system designed to work across Lenovo and Motorola devices, including PCs and smartphones and also wearables, while running in the background. So Lenovo also showcased concept AI glasses and an AI assistant wearable under Project Maxwell, offering users real-time support. Now, turning to capital markets, another tech IPO could be lining up. Popular chat platform Discord has reportedly filed confidentially for an initial public offering, adding momentum to the growing pipeline of tech listings. So the San Francisco-based company, widely used by gamers and developers, has over 200 million monthly users. Discord is said to be working with Goldman Sachs and JP Morgan on the potential listing. Though deliberations are still ongoing, the company says that its focus remains on building sustainable business. Now, let's look at some national news. The Supreme Court has raised sharp safety concerns over the presence of stray dogs in public spaces, saying that you simply cannot read an animal's mind when it's in a mood to bite. hearing a clutch of petitions on rising dog bite incidents. The court has said that prevention is better than cure and stressed that roads, schools and institutional areas must be kept clear of stray dogs, not just because of the bites, but also because they can cause accidents. Now, the bench has rejected arguments that dogs are mostly confined to compounds, calling such information outdated. Now, the centre, meanwhile, has suggested allowing resident welfare associations to decide whether, dogs should be allowed in gated societies, underlining the need to balance animal welfare with human safety. Now, from safety on the streets to travel disruptions in the skies, Air India has issued a travel advisory for passengers flying tomorrow morning, warning that dense fog and poor visibility over Delhi and parts of North India could disrupt the flight operations. So the airline is saying that the weather conditions may have a cascading impact across its network, leading to delays, diversions or cancellations. Air India has assured passengers that ground staff will be available for assistance and also highlighted its fog care initiative, under which the travelers are informed in advance and also offered flexible options. Now, passengers are being advised to, check the flight status before heading to the airport. And that, fog is part of a broader winter chill tightening its grip. Winter has firmly set in across North India, with Delhi recording its first cold day of 2026. Snowfall continued in several hill states while temperatures dropped sharply across the region. The IMD has forecast more light rain and snowfall in Jammu and Kashmir, Himachal Pradesh and Uttarakhand. So in the national capital, maximum temperatures hovered between 13 and 16 degrees Celsius, with cold day conditions likely to persist. So the weather office, says a cold day is declared when maximum temperatures fall significantly below normal, and a trend now clearly visible across northern India. Now, from the cold weather to a worrying public health warning from central data. A stark report by Jal Jeevan Mission has revealed a serious public health concern in rural Madhya Pradesh. Now, more than 1/3 of drinking water samples in villages are unsafe for human consumption. Now, according to the government's own assessment, only 63% of the samples have passed the quality test, well below the national average. Now, the findings are even more alarming in the government hospitals, where nearly 88% of water samples have failed microbiological safety checks. Schools weren't spared either, with over a quarter of samples found contaminated. Now, the report is raising urgent questions about water safety, healthcare risk and accountability at the ground level. And India has voiced genuine concern over the unfolding crisis in Venezuela following the US military operation that led to the capture and detention of deposed President Nicolas Maduro in New York. Now, External Affairs Minister S. Jaishankar, speaking from Luxembourg, said that New Delhi is closely monitoring developments and has urged all the parties to prioritize the well-being and safety of the Venezuelan people. Now, calling for dialogue and a peaceful resolution, he also underscored India's long-standing, warm ties with Venezuela, saying that what matters most now is that Venezuelans come out of this turbulent period safely. Now, Washington's actions have sparked global debate, but India's focus remains on stability, humanitarian concerns, and peaceful engagement. In fact, Prime Minister Narendra Modi has spoken with the Israeli Prime Minister Benjamin Netanyahu, conveying New Year greetings to him and the people of Israel. In a post on X, the Prime Minister has said that two leaders have discussed ways to further strengthen the India-Israel strategic partnership in the year ahead. They also exchanged views on the evolving regional situation and reaffirmed their shared resolve to fight terrorism with greater determination. Now, the conversation underscores the continued strategic convergence between New Delhi and Tel Aviv, particularly on security cooperation and counter-terror efforts. Now, amidst upheaval in Venezuela and the arrest of President Maduro, US President Donald Trump has announced that interim Venezuelan authorities will transfer between 30 and 50 million barrels of sanctioned high-quality oil to the United States at the market price. Now, Trump has said that the proceeds will be controlled by him to ensure benefits flow to both US and Venezuelan people. Now, the oil will arrive in the US via storage ships and be unloaded directly at US docks under Energy Secretary Chris Wright's direction. Now valued at up to $2.8 billion at current benchmark prices, the deal underscores US efforts to leverage Venezuelan energy assets amid political upheaval. Now, more on this evolving story. The U.S. administration has informed Venezuela's interim leader, Delcy Rodriguez, that it must sever economic and strategic relations, with China, Russia, Iran, and also Cuba. Now, Washington also requires Venezuela to partner exclusively with the U.S. on oil production and also prioritize U.S. buyers. Now, the move follows U.S. efforts to control the Venezuelan oil output and also finance without deploying troops. Senior officials are saying that tankers are currently full, adding leverage to U.S. demands, and meetings with American oil companies on investments are expected within the week. And Trump's assertive foreign policy posture isn't limited to Venezuela. The United States has once again raised eyebrows globally by saying that the use of military force to acquire Greenland is always an option. Now, the White House said that the President Trump views control of Greenland as a national security priority to counter Russian and Chinese presence in the Arctic. European leaders and Canada have strongly rejected the idea, stressing that Greenland belongs to its people, and any U.S. attempt to seize the Danish territory would severely strain the NATO ties. Greenland's own leadership has repeatedly said that the island does not want to be part of the United States. And with that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could set the tone for the next trading session. Thanks for watching. I'm Himakshi Bhagna. Stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots. What is it that Warren truly did to impact my life? My top learnings from the deadly duo: invert, always invert. That success often comes from eliminating the big mistakes. Read voraciously and commit to a lifetime of learning. Build a lattice work of mental models from multiple disciplines. The titans of industry have always bowed to the oracle.
Shaking hands with him and getting a sign done on a dollar bill. Still I can feel the hands of his in my hand. My hand is so small and his hand was so big.
I got clicked in the same frame as him by one of the local newspapers, and that was the front page photo.
Thank you, Warren, for the wealth, yes, but mostly for the wisdom.
He has been tracking markets for over a decade.
According to DGCS, sources Centre has asked Indigo, Air India, SpiceJet to provide data on average fares charged after December aviation crisis. Civil aviation bodies action after CCI probe into the case. First advance estimates of GDP for FY 2016 at 7.4%. This is the highest level in 2 years despite trade frictions. Thriving services sector emerges as the biggest growth driver. Budget 2026 will focus on deregulation and decriminalization. Sources say Finance Ministry is examining proposals from multiple ministries and departments to simplify the rules and procedures. Market ends low for the third consecutive session. After pairing early losses, Sensex recovers over 300 points from the day's low, while Nifty closed above 26,100. Pharma closes as a top sectoral gainer. Broader markets outperform the benchmark. Gains Tech tells NDTV Profit that tariffs will not have a significant impact on the company, says the Semicon major invests in the US to avoid tariff. Assocham President calls for subsidies for the MSMEs to aid the tariff blow during the budget, stresses on the need for process simplification to reduce imports and increase domestic production. Prime Minister Modi speaks to his Israeli counterpart Benjamin Netanyahu. Both the leaders discussed ways to strengthen the strategic ties between their countries, reaffirms their shared resolve to fight terrorism with great determination. President Trump reiterates his good relationship with PM Modi but acknowledges that Modi is not happy with him over the high tariffs US has imposed on India. US President Donald Trump says Venezuela will be turning over 30 to 50 million barrels of oil to the US, announces that the Venezuelan oil will be sold at market price and will have control on the funds from the oil sales. External Affairs Minister S. Jaishankar says India is concerned about recent developments in Venezuela, urges all the involved parties to prioritize the well-being and safety of the Venezuelan people. Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gives you 360-degree perspective into the latest